News from Commerzbank's earnings. It's a buyback story, beat on almost all these sort of indexes. I mean, with my luck, though, it'll trade lower for some reason or another this morning, Critty.
Yeah, don't jinx it. I'm sure it'll do just fine. ABN AMRO is another one that we've got our eye on when it comes to the banking sector as well. But from a sectoral perspective, it's not just the DAX that we've got our eye on. It's not just the CAC ROP, for example. It's also the Swiss index. Is the index going to be responding to the fact that the Swiss president is over in the States? We are minutes away from finding out. And that does it for the opening trade. We are going to open these markets. The FTSE 100, marginal bias to the upside here. But remember, the futures picture was suggesting somewhere up to 0.4 to 0.5% of gains. Not seeing that kind of straight out momentum just seconds after the open that we traditionally do. A similar story for the Stock 600. So I wonder if some of those positive earnings stories really bubble up to the top. At the end of the day, though, it is the CAC and the DAX that have the most earnings exposure this morning. Specifically the DAX, Ollie there was mentioning Commerzbank. We have Siemens Energy as well. We, of course, have ABN AMRO in other parts of Europe as well. The IBEX and the CAC Cameron, there we go. There's that optimism that we were waiting for. The FTSE 100 also outperforming the Stock 600 at the moment. Let's see how it all shakes out, Val.
I'm just looking at the sectors, Critty, and in the first moments of opening trade, we only have one in the red, the rest in the green. At the moment, 461 stocks in the Eurostock 600 are in the green so far this morning, so fairly positive and fairly broad-based. When it does come to the sectors, energy is at the top of the basket today. Some of that led by actually the, it looks like the alternative energy space, so Vestas Wind Systems and BP dragging that basket up. We also see industrial goods, banks also outperforming as a sector. I'm keeping an eye out for Commerzbank. I don't see that share price open yet. Ollie, do you see it?
Yeah, I see it. We're actually down a hair on Commerzbank, so as predicted, I got that completely wrong. Yeah, I mean, it's interesting, actually, because you said that both the banking and renewable energy are bid up. Both this morning, Siemens Energy and Commerzbank are down ever so slightly, we should say, a third of 1% over at Commerzbank and about 0.5%, a third of 1%, call it, at Siemens Energy. And Novo Nordisk did actually open the session a little bit higher, now down, about 1.5% here, or half a percentage point. So kind of going against some of the things that we've been talking about this morning in terms of what we saw from the earnings figures.
Yeah, Glencore also one of those negative stocks, down over 2%, now 2.6%. They did come out with earnings this morning, or broadly in line, but I think investors were looking for an update on just where those cost-cutting measures are going to be hit, those cost-cutting measures that they announced last week. Maybe that uncertainty there is dragging the stock in the red, now down nearly 3%, Critty.
Yeah, it's a fascinating one as well. Let's just add a little bit more positivity to this. So focusing on the doomsday here. Novartis is one that's taking a little bit of a hit, down about 0.8%. The Swiss market has just opened and is the notable underperformer this morning. I imagine the pharmaceutical piece is one of them. Now that we've talked about those potential threats from Donald Trump on a sectoral basis, so you see the likes of Novartis and some of the other pharma companies lower in today's trade. But from a sector, or excuse me, from an index perspective, the Swiss market is flat among a sea of positivity.
All right, let's take these big questions to our guests. Joining us around the table now is Daniel Murray, the Deputy CIO and Global Head of Research at EFG Asset Management. Thanks for joining us this morning. Welcome to the show. What have you made of earnings season so far? It does seem to be fairly positive and above expectations. Do you share that sentiment?
Yeah, absolutely. And, I think in particular earnings have been very strong in the US. We've seen about 80% of companies beat earnings so far, which is an unusually high percentage. Also, there have been some strong sector messages there. So, tech's done pretty well, financials also done pretty well, and some other sectors, haven't outperformed by so much. I think we've seen, across Europe, some companies are obviously feeling the effects of tariffs and the uncertainty that goes with that. So it's been a less clear-cut message in Europe, and obviously that's been reflected in relative market performance.
Yeah, it does seem to be like in some way the AI trade is really powering the equity market forward, even though there are these overarching concerns about how tariffs will affect businesses. What do you think about the tariff story here? Do you think all of it is done and dusted? It's in the rearview mirror. We're now just concerned about the economic effect. Or are you still keeping an eye on these sectoral tariffs? Do you think they'll be meaningful?
Look, I'm absolutely keeping an eye on it, not least because we don't yet know what the outcome is going to be. And so I think it's going to be potentially an important market driver. But I think at the same time, we have to recognise that Trump's policies are not just about tariffs. Mm-hmm. Tariffs grab the headlines, but of course he's doing lots of other stuff as well. So, it's interesting to note, for example, that there's, a rough offset from tariffs, due to the oil price. So a weaker oil price tends to lower inflation and tends to provide a tailwind to growth, and that sort of works in the opposite direction to tariffs. So tariffs grab the headlines, but there's also some offsets there, and I suspect that's why markets have been relatively resilient despite all the tariff noise.
Yeah, so tariff has, of course, been sort of the animating theme. It's hard to trade very specifically, but again, we have a number of different deadlines that maybe bring some specificity to when we'll actually get. So in the next 24 hours, it's going to be about India. On Friday, we talked about sectoral sanctions on Russia, or on people who buy crude oil from Russia. Then we have a new Fed governor, potentially. There's another Trump deadline. And then the pharma chip tariffs. And then, of course, there is the still ongoing trade war with China and the United States that's on pause until next week. For you, when you look at all of those sort of deadlines coming up in the next week, what is the most significant?
That's a really good question. I think that we won't know until we know actually what the outcome is going to be. So I think if, for example, there's a much larger than expected tariff on the pharma industry, then clearly that's going to be a major market driver. If that tariff actually starts out very low and then there's a threat of higher tariffs later down the line, I suspect that'll be a positive. So I think we're just going to have to wait and see where the surprises are in terms of that news flow. And we know with Mr. Trump, he does like to surprise markets. So.
Indeed. And one of the surprises I think that maybe is under priced at the moment, I'd like to get your perspective on that, is the question of sectoral, or I should say secondary tariffs on people who buy crude oil from Russia. This is something that we've kind of priced out, but if that were to happen, that could have a massive impact on the market. Where do you see that in terms of the risk of that and what it could do for energy markets?
Well, clearly India is the main market where that's been impactful. And, India has obviously been one of the major buyers of Russian oil. So I think it will be quite country-specific. Obviously, for most parts of the developed world, we haven't really seen any purchases of Russian oil. In fact, markets have been trying to diversify away from Russian oil. And we know that's part of the trade deals. US has encouraged countries to buy more energy from the US. So I think it's going to be quite country-specific, with, in particular, India being negatively affected.
Daniel, if I was the CFO and I had all this tariff volatility to navigate, I'd be issuing more debt. I'd be building up my cash reserves. I'd be really adding on to my liquidity, whether that looks like divestments or et cetera. Is that the trick to outperforming in this market where there is so much trade uncertainty, where there is so much fund flow uncertainty, that liquidity is your best friend?
Look, I think there's a few things that are going on here. So one is you've got a certain group of companies that are benefiting from this strong structural AI trend, and I think that's something that's happening independently of tariffs. I think it's also notable that, despite this sort of slightly soggy ISM number yesterday, actually the underlying fundamentals in the US have held up relatively well. And that's, despite this tariff noise and all the other cross currents that are resulting from the Trump administration. So I think companies that have got strong structural growth, companies that actually will be able to weather the tariff storm, I think, are the ones that are likely to benefit in this sort of environment. I think that, the debt story is interesting. Obviously, with interest rates having gone up by so much over the past few years, the rates at which you can issue debt are much higher. So despite the fact that spreads are pretty tight, actually it's much more expensive at the moment.
Did last Friday's payroll revisions change your outlook on how the U.S. economy is going to handle these tariffs? I'm surprised that we haven't heard more. I mean, I know it's August and many people are on holiday, but no one's really changed their big calls for GDP growth the rest of the year. How are you thinking about those revisions?
So I think there's a couple of points to note. So obviously, this data is prone to revisions, as we've seen, and it also jumps about from one month to the next, just because that's the usual volatility that you see in economic statistics. So I wouldn't take 1 month's data as indicative of a trend. But it does, nonetheless, in conjunction with things like the underlying components of PMI data, it does suggest that there is some marginal softening in the labour market. And of course, this is something that the Fed was trying to achieve, sort of rebalancing in the US labour market. So I don't think it's necessarily a terrible thing. I think at the same time, when you look at other statistics, such as the weekly initial jobless claims, then that's suggesting that actually the underlying strength in the US labour market remains relatively robust. So I'm not panicking yet, but I would say that we've sort of moved from completely green to a little bit amber, and certainly monitoring the labour market data much more closely.
Yeah, it doesn't seem, as in Powell's words, that the labour market is as solid as he, I guess, tried to convince the markets it was before this payroll print. But more broadly on the U.S. economy, if you're thinking about the risk of stagflation, which I think is a long ball shot, right? If you have economic growth declining, it's highly unlikely you're going to get inflation. Do you share that kind of view, or do you think tariffs change the name of the game when it comes to CPI?
No, I think that's right. I think stagflation is unlikely if you get an environment where you get slowing domestic growth, and particularly if you get rising unemployment and a slightly soggier labour market. I think the sort of environment where typically you would get stagflation is one where you get a very large external shock. So now, tariffs arguably could be such a shock, but it looks like they're going to be much less of an impact than we would have thought at the beginning. As I said, there's some offset there from the oil price. Possibly there's some other shocks. Possibly there's a knock-on effect from the Russian oil tariffs. But I think usually there's something that comes that's unexpected that causes that combination of slowing growth and rising inflation. And there isn't anything yet in the works that I think would trigger that.
And bringing it back to Europe, how do you trade the German stimulus story? And critically, when do you expect that to actually start hitting the P&L for a lot of these companies?
Yeah, I think the story is a really positive one, I think, not just for Germany, but for Europe as a whole. The problem is that, with European bureaucracy being what it is, it's just going to take a long time to feed through. So I think the earliest you're really going to see the benefit is next year. So, markets obviously got rightly very excited about the stimulus story, really from the fourth quarter of last year. And now it's sort of, a question of, show me the money. And we just haven't seen that yet.
Wait and see.
Yeah.
Europeans dragging their feet. Not a new theme.
Not a new theme, but perhaps one that's less priced in. Daniel Murray, Deputy CIO and Global Head of Research over at EFG Asset Management, joining us this morning with his views. Let's get a quick check on the core six, the heavyweights, of course, that tend to move this market. My eye immediately goes to Novo Nordisk, given the earnings that we had this morning, down about 0.6% there. But the underperformer, at least of the core six, is actually Ferrari, only down about 0.6%. But perhaps that's because it was the outperformer yesterday. So just a little bit of rotation. The rest, Nestle, ASML, kind of a nothing burger this morning.
I think we were spoiled yesterday for moves in the market today.
I know,
and now
we're
disappointing despite some very interesting earnings.
I know.
We do have Glencore dragging down a lot of the FTSE this morning, down over 3%. So hey,
there's that optimism from Valerie Titel. Let's get a check on some of the individual stocks on the move. Louise Moon, how's that for us, Louise?
Hi, Christy. So the first one we're looking at is ABN AMRO Bank. This morning had their results down almost 7% despite issuing quite a big share buyback and also beating expectations this morning, but dropping down into the red. Next up, we're looking at Glencore, obviously listed in the UK, big miner. They said they're not planning to shift their primary listing to New York. So you would have thought this would be, again, a positive for the market, but down at the moment, over 3.3%, just around that level. So we'll have to see if that moves any higher through the rest of the morning. Moving on to Beiersdorf, this makes personal care products, so the likes of Eucerin and other products like that, down over 7% this morning. That's after their earnings didn't seem to impress markets too much. And then finally, moving on to Legal & General this morning, profits up about 6%, but also in the red, down almost about 3% this morning. This is as there's kind of more work to be done with their turnaround under their CEO, who's been in place for just over a year now.
Louise Moon from our equities team, thank you so much. Coming up, Novo Nordisk sales show the weakest growth in 4 years. More on why the Danish drug maker is losing ground next. This is Bloomberg.
the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to the opening trade. About 15 minutes into today's session, seeing green on screen across the board everywhere except for Switzerland. No surprise when it comes to the threat of that 39% tariff rate. The Swiss president, of course, speaking to Marco Rubio in Washington today. We'll see if that yields anything. In the meantime, the rest of these markets are throwing a little bit of a party. I want to cut a quick check on the pharmaceutical sector, though, because that's another area that's under threat when it comes to the tariff story. Two in particular catching our attention this morning. Bayer seeing some pain to the tune of about 3.5% after their earnings, and Novartis as well, down about 1.4%. A double whammy there when it comes to the pharmaceutical threat from Donald Trump, but also, of course, the fact that they are a Swiss company at the end of the day. Let's go to perhaps the largest pharmaceutical stock in Europe. Novo Nordisk sales showing the weakest growth in 4 years. This is a company loses ground to rising competition in U.S. markets for obesity drugs. Bloomberg's Copenhagen reporter, Sanna Was, joins us this morning. Sanna, just walk us through the results. What do we need to know about these numbers?
Well, what you need to know is that Novo is facing a lot of challenges, especially in the U.S., which is its biggest market. It's having to battle with compounding pharmacies, producing copycat versions of its drug, and of course also intensifying competition from rival Eli Lilly. But Novo already last week went out and guided for lower profit and sales growth this year. So the numbers today were not a massive surprise. Already last week, shares tanked on that news. In fact, Novo lost almost $100 billion in market value in just a few days. So you can say Novo's shares have probably taken the worst of the hit, and that's probably also why we're seeing shares trading rather flat today.
Talk to us also about this new CEO that they've hired to get the company back on track. When does he sit down in this seat, and how does he intend on turning this story around for Novo Nordisk?
Yes, Marcia Mike Duster is his name. He's a company insider, has been with Novo for more than 30 years. And as you say, he is tasked with getting the company back on track. He only officially takes on the role as CEO tomorrow. So it's been the outgoing CEO, Lars Gård Jansen, who's presented the earnings today. So from tomorrow onwards, definitely the market will be following Mr. Dustar's next moves. He's already hinted at cost reductions, job cuts, said that Novo needs to execute faster. But the details of the plan, we will only really probably find out more about from tomorrow onwards.
All right, thank you. That was Sanne Vass joining us from Copenhagen on those Novo Nordisk results. And don't miss our conversation with the Novo Nordisk CFO. That's at 9:20 a.m. UK time. Ollie.
Well, let's take it to renewable energy. Siemens Energy shares ever so slightly lower this morning after the German industrial firm said it expects to reach the upper end of its full-year guidance on the back of surging orders in the United States. We spoke with the chief financial officer after the results. She shrugged off a €100 million hit from tariffs on strong demand from its gas turbines and grid equipment amid a boom in global electricity demand.
But what we do know is, of course, we've indicated that we see around 100 million so far. This has impacted our figures, and that's fully embedded. Of course, with the agreement with Europe, we see an additional 5%. That also we see it perhaps around the mid-double-digit mark in terms of impact for us for the rest of the fiscal year. But Lizzie, that's taken fully into consideration for our guidance. And with that, still with that impact, we see ourselves at the upper end of our guidance range.
The Siemens Energy CFO, Maria Ferraro. I mean, listen, the shares are down about 1 percentage point today, but we should bring into focus the fact that this is a stock that has rallied 300% or somewhat from the lows that they hit not too long ago. You can see their year-to-date up 92%. I mean, they had extreme problems with Gamesa, their purchases of the wind turbine business there. That is what really created a base effect for them to gain a lot. But still, this is a very bullish story here in Germany, particularly with all of that stimulus and spending that the German government.
Yeah, and you can really attach the energy story to the AI demand to keep up with this data center usage. It does seem like that this AI trade is morphing just out of tech companies and into the energy space. We've seen a lot of consolidation in the U.S. when it comes to some of these big energy names buying nuclear reactors specifically to help these tech data centers power on.
Well, that's something we've seen in the likes of Schneider Electric as one great example. It's why Guy put it in that core 6 anyway, because it's really indicative of that AI trade. Let's talk about another major earnings story that may be juicier when it comes to its listing. Glencore scrapping plans to move its primary listing away from London, but reviewing a potential move to New York. It announced the decision as it reported a fall in its first half profit as the commodity giant continues to be weighed down by weak prices for some of its most important products. I want to talk to Alan Olsha, Bloomberg Intelligence senior analyst for metals and mining, that joins us around the table. We'll get to the earnings in a moment, but walk us through why they're saying that moving their listing is not accretive anymore.
Well, it was always going to be a pretty tough case to make, moving the listing, but the temptation was there. I mean, it was really born out of the frustration management had with the coal portfolio, the coal-heavy portfolio that they have, not being appreciated by more ESG-minded European investors. The US investors tend to be less ESG-focused, particularly in the current climate. There are publicly listed coal companies there already. So the thinking was it could potentially drive a re-rating. But the move was always fraught with risk. Firstly, significant friction costs moving a listing, but more importantly was indexation. There was no guarantee that Glencore would leave the FTSE and then enter one of the big US indices. So it could end up actually harming the valuation instead of benefiting it.
The other highlight from the Glencore earnings is the fact that we haven't necessarily seen any clarity on where this $1 billion of cost cutting is coming from. They announced this last week. It coincided with them raising their long-term profit forecast. But what do you think could be the winners and losers in terms of them cutting costs?
Yeah, well, they've mentioned a few things, but you're right. They haven't been completely clear. There will be some staff reductions. They have consolidated the nickel and zinc units into one unit. And there will be a lot of pressure on them to deliver these cost savings in the second half, because this was a pretty weak first half. It's the weakest first half they've posted in 5 years. So there's a lot resting on the second half of the year. They need to ramp up copper output in particular. pretty aggressively and reduce costs there, and they need to deliver these cost savings to satisfy the market.
And how much is resting on the geopolitics, the tariffs, the trade war, and trying to figure out kind of what to expect from Glencore in the coming months, and actually what's driving the prices of these commodities?
So the trade war is a bit of a double-edged sword. On the one hand, it's disrupting trade flows, which for Glencore can be an advantage. Just the disruption of trade flows and the increase in volatility in commodity prices is very beneficial to its trading arm, its marketing business, which is the unit that really differentiates it from peers. Now, we haven't really seen that manifest in first half results yet, but there is a possibility that as we move into the second half, if those dislocations persist or become more acute, that they could actually take advantage of it.
Talk to us a little bit about the China impact here. I mean, 6 months ago, we were around this table talking about how the Chinese market doesn't have the fiscal stimulus is the only thing backing the Chinese market. You have a major housing crisis, a slowing consumer, although growing, but slowing in terms of their spending ability, and all of that being reflected when it comes to copper prices in particular. And we saw Glencore very reactive to that narrative. What happened to the China impact when it comes to Glencore?
China is the key consumer for all the commodities that these big mining companies produce. They, unfortunately, for the companies, have disappointed in terms of the stimulus that they've been willing to push into the economy. It's been kind of largely a drip feed approach that hasn't really changed, and particularly in the face of this U.S. tariff onslaught, which has hurt exports and has had a knock-on effect on domestic production. It's really kept a lot of these metal prices back, kept them from rallying. But copper has been relatively resilient, and copper is a key commodity for Glencore. It generates about a third of its profit. But there are lingering concerns that in the second half of the year, without significant stimulus from China and with global trade headwinds, that the copper price could potentially pull back a little bit. And if you combine that with what's happening in the rest of the commodity complex, with price inertia setting in, it's not good for the earnings story for a lot of these mining companies.
Thank you for joining us this morning. That was Alan Osha, Bloomberg Intelligence Senior Analyst for Metals and Mining, on the miss on Glencore earnings. Thank you.
Yeah, I mean, looking through these sort of earnings stories this morning, going back to, so we've seen some sort of moves in what we saw. Commerzbank is finally trading in the green again, talking my book here a little bit up of almost 1 percentage point after what I thought was quite unambiguously bullish figures, but the market seemed to have taken with a bit of indifference. A different story there for Bayer, which is the big loser now on the Stocks 50, the biggest loser of the day, down almost 4%. We should say, you know, Glencore, we were just talking about, down about 3.5% this morning after they released the earnings.
Yeah, I know we just discussed pharma, but we should also talk about Swiss pharma as well. Novartis being the worst drag on the on the Eurostoxx 600 index this morning. So clearly those extra threats from Donald Trump about these pharma tariffs going all the way up to possibly 250% is seeming to rattle Swiss pharma this morning.
Moving Swiss pharma, you're seeing that underperformance show up in the benchmark index as well. Chip stocks or chip exposed stocks feeling a little less heat, which is interesting because in that pharmaceutical story, he very much mentioned chips as well. ASML at the moment is flat, and I'm sure Infineon is not exactly rallying with the rest of the market. Coming up is going to be a focus on the banking sector. Jackie Anecki, CIO of Spring Investments, joins the program. This is Bloomberg.
Welcome back to the circuit. This time, we're taking you to the frontier.
Where is
do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure bill in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang. Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
This is the opening trade. We are 30 minutes into today's session. What do we see on the screen? It is a green day overall for the markets here in Europe. The Euro Stoxx 600 up 1/3 of 1 percentage point. The DAX really the outperformer here, up about 2/3 of a percent. The CAC also catching a bit here, 0.5% up, and the FTSE also about 1/5 of a percent. I think the one that is missing on the board today is probably the Swiss index, as the president of Switzerland is in sort of dire shape. They're heading to the United States, to Washington, D.C., to try to negotiate with Donald Trump, only getting a meeting with Marco Rubio. Critty.
You can see that index is flat at the moment. When it comes to how the rest of the market is performing, I mean, from that index perspective, it looks like green on the screen. It looks like a party. But take a look at this. The volume versus the 100-day average is down about 22%. It is, at the end of the day, a summer Wednesday, we'll call it, an August Wednesday. And that really does mean that ultimately on autopilot, a lot of stocks are going to be moving to the upside. 449 in the green. When you look underneath the hood, a couple of them hitting a 52-week high as well. I want to start with what's on the left side of this board. The Hiscox story, a UK insurer at the end of the day, moving markets higher by about 8.5%. Wholesome, one of Anna's concrete favorites, trading higher by about 2.7% as well. And then one eye on Deutsche Bank, and this is one's going to be interesting. We've got some news, at least when it comes to the spending story out of Germany. They seem to be doing the lifting when it comes to some other German stocks that are under pressure. Deutsche Bank kind of moving the entire average up higher by about 1.7%. There is one German stock that is in the lows at the moment. It's a German personal products maker, down about 9.4%, hitting a 52-week low, Val.
Well, here's what else you need to know this morning. President Donald Trump is warning that he plans to impose increased tariffs on countries buying energy from Russia. He's also clarified that expected levies on semiconductor and pharmaceutical imports will be announced within, quote, the next week or so. Russia is said to be weighing options on a concession to the U.S. president that would include an air truce with Ukraine. U.S. envoy Steve Witkoff is in Moscow for talks following Donald Trump's threat of secondary sanctions. And Germany is preparing to launch a 100 billion euro investment fund to help secure strategic sectors like defense, energy, and critical raw minerals. The new flagship fund is part of efforts by Chancellor Friedrich Merz's administration to revive growth in Europe's biggest economy after 2 years of contraction. Curdy?
It's a fascinating one as we have one eye on Germany. I mean, it's fascinating to me, at least, that the German index is actually the outperformer right now, despite the fact that we talked about weakness in Siemens Energy. We talked about weakness in some of the other German makers. The 52-week low at the end of the day is a German company as well.
Yeah, I think with a lot of these German companies, though, coming into these earning numbers, you know, they are very sort of well priced. Commerzbank has rallied massively. Siemens Energy, we talked about, up 300%. But now we're seeing further into the session, we have session highs here on Commerzbank up 1 1/3 percentage points. So, you know, we're kind of getting a little bit of that bid that we were sort of anticipating coming into this session.
All right. August seems like a positive one for European equities. Shall we take away with that?
Let's take it away with that. Ollie took us nicely to the Commerzbank story. That is one of the, I would say, success stories of the German market this morning. Those shares higher by about 1.4%. The German bank posting an earnings beat and saying it plans a €1 billion buyback. That is its biggest yet. We spoke to the CEO, Bettina Orloff, as well as a few of her peers in Europe about the outlook when it comes to M&A. Take a listen.
We have very clear targets out there, a return on tangible equity of 15% up to 2028, and also a 50% cost-income ratio. So we need to be cautious. Whatever we do as acquisition needs to help us on this path.
Shrinking is not an option. UBS and Switzerland benefits from our diversification.
We look where it makes sense for things that give us scale, things that give us capability, but at the right price and with the right ability to manage and integrate.
So we are having some anecdotal evidence that some companies, particularly large companies, are delaying their investment programs. But overall, the macro backdrop remains very, very strong.
Broadly, M&A will increase as there is more stability in the macro environment. Of course, each company, each bank, each situation is very different. New technology will only facilitate that and, in fact, increase the returns to scale.
Lots going on in the M&A space, or at least some of the European banking CEOs want there to be. Let's see if it actually comes to fruition. Jackie Ineki, Chief Investment Officer over at Spring Investments, who, of course, is, I think, one of our favorite experts when it comes to the sector, joins the program. Jackie, a pleasure to have you this morning. Thank you for your time. I want to start off with an M&A story here. We've been asking every single, as you just heard, every single banking CEO that joins the program whether or not the M&A story can come to fruition as we see a massive wave of deregulation over in the States. How does Europe compete with that backdrop?
Honestly, I think we will see, good morning, first of all, thank you. I think we will see still a lot of M&A coming through Europe. You talk about deregulation in the US. I'm not sure we've seen a huge amount of that yet. Maybe it's coming, but I'm not sure the US banks actually want that, certainly the big ones. But in Europe, we are seeing areas where there's a little bit of softening of regulation, certainly in the UK. I'd say Metro Bank results this morning were great, and that's a bank that's going to really benefit from the, let's say, softening of regulations in MREL regulations in the UK. But I think more broadly, there is a push still in Europe for M&A. Banks are hugely overcapitalized, and bear in mind, I'm a credit analyst. I like banks to be overcapitalized. But at this stage, after 16 years of increasing regulations in Europe, they're overcapitalized. And I think they're going to use that capital, they're going to put it to work to buy smaller banks, to diversify away from dependency on interest income, like the ECB would like them to do. And it's a very quick way of right-sizing your capital by buying a smaller bank rather than drip-feeding share buybacks over the next 5-6 years.
Jackie, you said credit analyst, and Valerie Titel immediately smiled, so I'm going to let her pick your brain in just a moment. Before we get to that, though, I want to ask you about that consolidation story, because we saw so much regional pushback in Italy and Spain as well. Something that the folks over in Brussels are really pushing back against. They're saying, look, you can't actually stop some of these deals. How much kind of pressure does that add to a positive consolidation story? Is that really moving the needle?
Yeah, I think it is. I mean, as you say, national governments don't have specific tools to stop mergers and acquisitions. So, but what you have, like if you take Commerzbank and UniCredit, of course, UniCredit has huge operations already in Germany, HVB. So they don't want to upset the German government in any case. So, you know, there is that pressure that the government can wield against such a merger like that. You know, you've got BBVA and Sabadell as well. Again, do you want to upset the domestic government of the country you're operating in? No. What I would say is that we really are expecting a lot smaller level mergers and acquisitions within countries. Very few cross-border, I think, still now, but there's still a lot of consolidation to go within countries of the larger banks and the much smaller banks. I think BBVA and Sabadell, they're two quite large banks, to be fair. If you look at the smaller names in Spain, in France, in Portugal as well, those kind of acquisitions are going through a lot easier. Also cross-border ones at the smaller level. And I think that's where we should focus. And certainly in terms of an investment opportunity, that's where it lies.
Jackie, you mentioned as being a credit analyst, I'll ask you about the credit quality of European banks. Do you think it has peaked? Really, can it get any stronger for Europe? And is it just a factor of the fact that they're keeping too much cash on their balance sheet and they're not putting it to work in M&A, as you mentioned?
Yeah, I mean, it's... has it peaked? I'm not sure. I mean, I'm sure it can get even better each quarter. You know, especially this morning, ABN and Commerzbank both beat on provisions. You know, Commerzbank, you know, you're seeing write-backs still there. So has it peaked? No, probably not. I think we've probably got still 2-3 more quarters of very, very strong asset quality. And even then, when it starts deteriorating, and it's always a lag, it's going to take, you know, years and years to start even getting a little bit weak. I think we're at such a strong level in asset quality. It's just not a question for European banks right now. You know, ask me again in 3 years and I might be a little bit concerned about it, but now not. And we've still got...
And the tone from... The tone from management is still quite positive and upbeat on net interest income. What's your outlook on NII across Europe? Has it troughed yet?
I think it is troughing. I think what you saw from, I mean, almost everybody's actually reported now. I think that was the most conviction that we saw. It was the most surprising conviction we saw, I think, for the latest results season, that management were really quite you know, encouraging on net interest income, and even I think particularly the periphery countries gave a strong view that actually NII would trough earlier than what I think the market was expecting. I think the only kind of black spot there was in the Nordics. I think you saw about 2.5% drop in net interest income quarter on quarter. But generally, people are talking, or management are talking, pretty upbeat about NII troughing. And I think when you've got the loan growth coming through, you know, you've talked a lot about Germany this morning and what's happening there. But I think obviously growth in loans and that replicating portfolio really helps.
Yeah, and I want to talk about Germany because it's something that comes up often when I interview Deutsche Bank or Commerzbank a little bit earlier this morning. There's this sense that there's a huge amount of willingness to invest on the sidelines, a lot of hesitation around tariffs, but there is this massive initiative from the government. I think everybody's been sort of loath to give a sort of dollar or euro figure on what that means for the banks, but Deutsche Bank said that basically they'd hope to touch at least some fraction of every euro that is spent in Germany. How does that play into your thinking?
Yeah, it's absolutely positive on our thinking. I mean, Commerzbank is, I run an AT1 fund, and Commerzbank is one of the biggest positions that we have. It always trades a little bit cheap. It's still trading cheap to UniCredit, which I think makes very little sense. But yeah, looking at the loan growth going over the next 2 to 3 years, and for someone like Commerzbank, you have Poland as well, and you have the EU next-gen funds coming in there as well. So I think someone like Commerzbank with, I think 40% of its loans are corporate and Mittelstand in Germany, that's going to be a huge beneficiary of what's going into the economy there.
Yeah, and then also just sort of broadly speaking on the sector, I mean, the banks are the best performer in terms of groups in Europe over the last 12 months. They're up 60%. What is the sort of threat to the sort of vertiginous rally, if there is any?
I can imagine there's a huge amount of threats to that vertiginous rally. I focus on credit, but obviously I'm seeing what's going on in equities. And obviously the European banks, after years and years of like a terrible performance in the stock markets, that they're doing great, clearly. From a banking perspective, it's hard to see what could push that over. I think it's going to probably be more macro data and probably not directly implicating the European banks themselves, but it'll be a risk-off situation. And this is exactly what we're worried about in AT1s as well. So the bond markets have really, really rallied. I think they've not quite as much as the equity markets, but certainly we're close to all-time tights in deeply subordinated debt of European banks. Now, it's hard to think what would push that over for European bank debt at the moment. I don't think it's going to be something specific to European banks. I think it's going to be something probably US-centric, I imagine. We just feel vulnerable here at these levels. But underlying credit quality is great. European bank debt is probably still one of the best areas to be in fixed income markets right now. It just feels a little bit vulnerable. And we're telling clients to keep a bit of powder dry for a potential correction in the next couple of months.
All right, Jackie Ineke, thank you for joining us this morning with your thoughts on the European banking space. That was Jackie Ineke, the CIO at Spring Investments. Thank you. Coming up, U.S. President Donald Trump says he's readying more tariffs on Russian energy buyers, including India. We'll get the latest next. This is Bloomberg.
A number of games overseas in recent years, and in fact, you opened the season going to the opening game in Brazil. So do you expect to do more overseas games, and is that a part of your strategy?
It is. We had 5 last year. We expect to have 8 this year, which will be the highest we've ever had. Our hope would be at some stage to get to 16 games in the next few years. We think we could do that. I think it's an indication of the popularity of our game. Every time we take our game to a new market, Brazil's a great example of it, the fans go crazy for it. They sold out the tickets in less than 90 minutes. People had a wonderful time. It was the talk of the town. And I think it will be the basis and the sort of the match that lights the excitement and the popularity of the game in that market, as well as what we're doing around the world. So we're very excited by it. It's just one element of that strategy. You need to have television. You need to have activity and participation in the sport, and flag football is a big part of that. So all of those factors, I think, are going to be what we think will be a very successful formula to be a global sport.
Do you ever envision having a team that's based overseas in Mexico City or in London?
Listen, we've talked an awful lot about it, and I think there are markets that could, without question, support an NFL franchise.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. We are seeing green on the screen everywhere except for Switzerland. I think that's really important because the underperformer of Europe is that market. And of course, this comes with the overshadow of tariff stories when it comes to sectorals, rates on pharma and autos, but it also comes amid a meeting between the Swiss president and Marco Rubio at the moment. It didn't quite get that invitation from Donald Trump just yet. That's being very much reflected in these markets. Plenty to digest, though, when it comes to the actual earnings and data that we're going to get in the next 24 hours. Let me walk you through it here. 10 a.m. UK time, the Euro area retail sales is going to be hitting the wire. plus that 10-year auction at about 6 p.m. UK time as well. Is that U.S. exceptionalism story over? Is it going to show up in the bond market? 3 months ago, we were all worried about that. Maybe not today. Plus plenty of earnings. Uber, Airbnb, Disney as well. Very excited about their new shows and streaming and what they can announce there. And ultimately, Fed Speak, which I know has Valerie Teitel's special attention. Fed's Cook and Collins participating in that panel event, plus Fed's Daily over in Anchorage. What's going on there?
You make fun of me too much, but yes, excited about the Fed.
You're
Are
such
they
an
going to
easy
change
target.
their language on the labor market after all these massive revisions we got last week? That's what I'm keen to hear, and I think that's what the market is keen to hear too. But we're also keen to hear from President Trump. He's been saying that levies on semiconductor and pharmaceutical imports will be announced within, quote, the next week or so. Joining us now to discuss this is Bloomberg's Bill Ferries. Bill, thanks for joining the show this morning. Another round of threats when it comes to these sectoral tariffs. Just when will we get these studies done on the Section 232 tariffs, and when will they be implemented?
Well, officially, they had 270 days to go ahead and work on those, and that would take us to much later in the year. But we know President Trump doesn't like to wait that long, and he's signaling now it could be, really imminent at this point. At some point in August, he'll have those studies on his desk, and he'll have an ability to move forward with additional tariffs on things like pharmaceuticals, semiconductors you mentioned. He's talked about pharmaceutical tariffs going up to 250% over time if needed. He said that the administration has signaled that those could start at a much lower level, giving the manufacturers time to adjust and move production facilities into the U.S., but a year or so from now, they could hit that peak. So that's what we're waiting for, along, of course, with that deadline of Thursday at 12:01 a.m., when that whole round of reciprocal tariffs is set to go into effect.
Can you just talk us through perhaps what those tariffs might actually look like? I mean, Donald Trump has talked about a pharma rate of something like 200%. Now he's talking about chips as well. What kind of numbers might be expected on that front?
Well, on the pharma side, he has talked about phasing that in to give people time. So, a lot of the pharmaceutical production is done in Europe, imported. It's hard to imagine the president wanting to suddenly slap 200% plus tariffs on every people's everyday medicines that they need. For everything from basic illnesses to potentially very life-threatening illnesses. So he's talked about phasing it in. We've seen on semiconductors, we've seen talks going from the low 10% plus range up to 50, 100%. So it's a pretty wide range. It's not clear whether that would all come into effect right away at first too. But what is clear is that he's got his reciprocal tariffs coming in 36 hours, and his tariff agenda is really not slowing down. He's moving on to the sectoral tariffs, and at the same time, you have countries like Switzerland rushing to Washington to try to talk some of those back down again.
And Bill, I think that when we look at kind of the process that we've seen here with Donald Trump and the tariff sort of saga that we've seen over the last couple of months, the big fear for corporates, the big fear for governments was that basically no number is ever final. Do you feel that we're making actual substantive progress here, or is this going to be just kind of the same story for the next 6 and 12 months, and that's going to make it very difficult situations for policymakers and obviously for companies?
I think that implementation of the reciprocal tariffs at 12:01 a.m. on Thursday in Washington, I think that's probably best seen as the end of the beginning of this tumultuous process of tariffs. That process that started in April on Liberation Day that really shook markets and has continued. That phase may be winding down a little bit, but I think a lot of countries are going to continue to look past August 7th, August 8th, and say, there's still time for us to make a better deal with Washington. So even if Switzerland, for example, doesn't get that 39% rate reduced in the next 36 hours, they're going to keep pushing. They're going to look for deals. We know that Japan, India, a lot of other countries out there are still going to try to find ways to say, hey, if I invest a little bit more in the U.S. on this side, in this industry, could I get a cut in that tariff? Donald Trump is a deal maker, I think he's going to be willing to entertain all that. And we also know that when countries do things that he doesn't like, for instance, like Brazil going after former President Bolsonaro on charges of inciting a coup, Donald Trump uses tariffs as a tool for diplomacy on things totally unrelated to trade. So yes, I think to answer your question, I think there's still going to be a lot of volatility going forward, and I think countries are going to try to use any advantage they can to talk those tariffs down.
Well, Bloomberg senior editor Bill Ferry, thank you so much for joining us. Bring us a little bit light to the heat of the tariff conversation. Let's move it along to the Swiss market here this morning. It was trading lower a little bit earlier in the day. I think that has turned around. See a positive print there for the SMI. And there you go, dollar Swissy dead flat this morning as the Swiss president, Karin Keller-Sutter, arrived in the United States yesterday to make a last-minute effort to improve that 39% tariff deal. Let's get first now to our Bloomberg Swiss economy government reporter, Bastien Benrath. Thanks so much, Bastien. What do we know about who she's actually got to meet? We understand Marco Rubio. Is she going to get a meeting with a trade representative, which is why she's there?
This is very unclear. That's the problem. We really only know about Rubio. This has been announced in his agenda by the State Department. However, as we obviously know, Rubio has not been involved in the trade negotiations. So it's kind of a useless meeting, to say it bluntly. We still don't know if she's going to meet the president, because this is what everything's, focusing on. There was a deal on the table before, which, when she then talked to the president, was off the table again. So her trip to Washington will definitely not have proved worthwhile unless she can see Donald Trump, and there is no indication so far that she will.
Bastien, talk to us about the potential concessions she can offer. I mean, part of the issue and part of the kind of beef, basically, that Donald Trump has with Switzerland right now is that they have an SMB, a central bank, that's at zero at the moment from a rate perspective. They have actively intervened in their currency market, and they have massive pharmaceutical exposure. What more can she do to make things easier in those negotiations?
Yeah, that's a really great question, because Switzerland's trade balance is actually, or Switzerland's trade surplus with the U.S. is actually very much inflated, not least because of Donald Trump, because we've seen in the first quarter, we've seen massive gold exports going from Switzerland, which is a gold refining hub, to the U.S. But that was really just shippers moving that bullion over because they feared that tariffs could be put on it. So the numbers which Donald Trump is looking at, and which he has complained to Keller-Sutter in their call last week, are very much tainted numbers, which are not reflecting the actual common situation. So I think what she can offer, I think if we're seeing a deal, we will see a deal very much around investment or arms purchases, not really on anything which is going to change the trade balance, because it's not going to be able to be changed quickly. A possibility could be there is an F-35 fighter jet purchase in the works right now, and the Swiss could foster that, maybe symbolically buy 1 or 2 planes more, along with energy purchases. LNG has been named. So these things, I think, is what we're looking at if there is to be a deal in Washington.
All right, Bloomberg Swiss economy and government reporter Bastien Benrath there walking us through those dynamics between Switzerland and the United States. It's fascinating that he meant the defense piece of it, because this has been such a trademark pillar of all the trade deals he's negotiated. And I should mention, even with the tension with India as well, India doesn't buy most of its arms from the U.S. It buys its defense from Russia, which is another sticking point.
Yeah, and I think one of the sort of broader and longer-term stories on the defense story with the United States is there is increasing concern that people will not openly talk about within governments in Europe, that if the U.S. is an unreliable ally, all of these F-35s, all of this kit needs constant software updates, needs training, needs reliance on the United States. Longer term, is that something that they can, that they can live with? In the short term, though, everybody acknowledges there is no alternative.
All right, lots going on there. There's a pharmaceutical conversation, of course, on that Swiss story as well. We're going to get an early insight on that front. Novo Nordisk CFO will be joining the Pulse next. That does it for the opening trade. This is Bloomberg.
Welcome to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Versace in Tehran, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Donald Trump threatens higher tariffs on pharma, chips, and India, while Switzerland races to strike a deal with Washington. Trump's special envoy arrives in Moscow for a potential meeting with Vladimir Putin, with the U.S. making another push for a ceasefire in Ukraine. Plus, Novo Nordisk reports its weakest sales growth in 4 years as U.S. competition dents obesity drug sales. We'll be speaking to the Danish drug maker's chief financial officer a little bit later on in the program. Let's get straight to the markets. Happy Wednesday. There is quite a lot going on. Again, investors seem to be looking actually past President Trump's latest tariff threats, but also some disappointing economic data, really to focus on some of the earnings that we've seen overall. Now, President Trump did ramp up its tariff blitz. We'll talk about it in a second. The U.S. 10-year yield, 4.2296. You can see S&P futures gaining some 0.4%. The focus firmly on also some of the European stocks that we're watching. And then news about an hour and a half ago that Germany was also going to put this public money to work, about 10 billion euros, and then hoping that also some private investors join in. DAX gaining some 0.5%, CAC 40, 0.6% higher. Now, AMD said the chip makers return to the crucial China market is difficult to predict, overshadowing a general upbeat forecast for its AI business. That stock, you can see AMD down some 5.7%, actually in pre-market, and then Supermicro lowered its fiscal year revenue forecast, projected a quarterly profit that fell short of estimates. And you can also see 17% lower pre-market. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacroix.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London. Now, President Trump is ramping up his tariff threats once more. He says he'll impose higher tariffs on countries buying energy from Russia. He's also clarified that levies on semiconductors and pharmaceutical imports would be announced within the next week or so. At the same time, the Swiss President, Karin Keller-Sutter, has arrived in Washington for a last-ditch bid to lower the 39% tariff rate set by Donald Trump. In a moment, we'll discuss what all of this means for the markets with Kim Crawford from JP Morgan Asset Management. But first, let's discuss the turbulence of global trade and U.S. politics with Ross Matheson, our EMEA News Director, and Susan Lynch, our Brussels Bureau Chief. So thank you all for joining us. Suzanne, when you look at Switzerland, I mean, it feels a bit like a stab in the dark because we know that the Swiss president doesn't have a meeting with President Trump, that for the moment she's only seeing Marco Rubio, and it's unclear to me what she has to offer.
Yes, I mean, the problem for Switzerland is this gaping trade surplus they have with the United States. Donald Trump has made it clear that he has an issue with that. That's what he has said consistently, really. It's countries with those trade surpluses that are really in the fire from him. So it's very difficult to know what Switzerland can offer at this stage. Obviously, gold is a big part of that export, also pharmaceuticals. And we just heard more escalatory language, really, from Donald Trump in the last 24, 48 hours about pharmaceuticals. This is a big concern for him, not only the fact that a lot of U.S. companies are in Europe making and exporting back to America pharmaceuticals, but also the issue of drug prices and how he's going to deliver cuts to that to his own voters in the United States. So, look, difficult to see what's going to be achieved here. As you said there, she does have a meeting with Marco Rubio. He is the Secretary of State. Foreign policy matters are his focus. But let's see what today brings and whether she does clinch some kind of a meeting with someone in the NEC or on the trade side. And that is particularly, and this is the most important bit, close to Donald Trump.
Yeah, and Ross, at the same time, I mean, there's just a lot, right? Donald Trump saying he'd imposed increased tariffs on countries buying energy from Russia, but also he'd raise tariffs on India very substantially, his words, over the next 24 hours.
Well, that's right. And he's really targeting India in all of this, over the Russian energy side. He's not going for China on it, but he's really lasering in on India. And the question is kind of why, given his relationship with Narendra Modi has been so effusive, so positive for so long. They have a personal bond. Why is he now targeting India? I mean, pharmaceutical also would be a real hit to India potentially. And so what can India do about this? What leverage do they have? They don't have rare earths to the extent that China does. So what can they do here? Do they retaliate? Probably not. Do they stand their ground? Probably a bit. But do they do something that can offer some kind of option to Donald Trump to get him to de-escalate when it comes to specifically India? And unlike the Swiss, where the president is in town and has no particular history with Donald Trump, Narendra Modi does have that history. Can he lean on that to try and get him on the phone and try and get some kind of understanding here that will not penalize India so badly? Right now, India is saying we're continuing to buy Russian energy. Don't see why not. Indian officials are in Russia at the moment doing that. But is there something else they can do that would just offer Trump the win again, which is what really, for anyone, Switzerland, India, others, you've got to do. Give him something that is the win.
And then, Susan, of course, President Trump is also saying he's very close to deal with China to extend a trade truce. Do we know any of the details?
Yeah, as we just heard there, I mean, India is the focus here and not China, and that is raising some questions. I mean, it's interesting to point out that the EU has also hit Russia and China in terms of their support, India and China in terms of their support for Russia. So just a couple of weeks ago in a sanctions package, the EU hit a refinery in India that was importing Russian energy. And similarly, it hit 2 Chinese banks, which it accuses of facilitating Russia's war in Ukraine. So interesting here that this narrative about, punishing India in particular when it comes to Trump, but also China for helping Russia is something we're seeing now, not just in Washington, but also here in Europe. Now, the big question, of course, is, what can countries give? Will we see the Swiss today promising more investment in the United States? We saw that from the EU. When they did their deal with Donald Trump, they promised investment in terms of energy purchases, for example, as well as private sector investment, which was very nebulous, very unclear, but commitment by European companies to spend more and invest more in the United States. We're probably going to see something along those lines from the Swiss as they try and get something in exchange from the United States. But it's going to be a big ask now to get that 39% level that Donald Trump has imposed and threatened back down for Switzerland. It's a big task.
And Rosa, I mean, we're looking at trade and tariffs, of course, on a global stage. Domestically, a lot of the focus is on the Epstein case files. The Clintons have been subpoenaed by the House panel. How's it playing out internally, and actually, what do we know at this point?
Well, it's still kicking along no matter what Donald Trump wants this to go away, but it doesn't. And now we have the House Oversight Committee saying to the DOJ, you've got to release the full unredacted Epstein files. And that's, the head of that committee is a friend of Donald Trump's and probably being pushed by the committee. But there you've got rank and file Republicans and Democrats saying you've got to do this. We need to have more information. The Democrats are doing it because they obviously want to make life difficult for Donald Trump, but Republicans also, and that just shows the level of anger from both supporters and critics of Donald Trump's over this overhang with the Epstein files. What's in these files? What does it say, if anything, about Donald Trump? Separate to that, you've got the grand jury testimony, which Ghislaine Maxwell is trying to stop being released because she says hers is an active legal case. And so this is just continuing to filter through the US domestic mood, and a lot of rank and file Republicans quite angry at Donald Trump for looking to block all of this. The question is, does that roll on? Does it matter when it comes to things like the midterms, or is it just Washington noise in the end?
Ross, thank you so much. Bloomberg's Ross Matheson, and of course our bureau chief in Brussels, Susan Lynch. Now, joining us to talk about the markets, Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management. Kim, as always, thank you so much for being with us. Look, there's the latest tariff threats from Donald Trump, but there's also this disappointing economic data that we saw yesterday, weakening U.S. services, sticky price pressures. What does this give you for an outlook on the markets?
Yeah, so we've got, I think the biggest news from the tariff side is maybe there's less uncertainty now. There's still things that we need to find out, but we roughly know where the U.S. average effective tariff rate is going to be. But the biggest news, like you said, has come from the labor market, and that was material news to us. So the 3-month moving average of payroll growth, it fell from 150,000 down to 35,000. The July number was weak, but you also had these significant downward revisions. And I think it puts payroll growth closer to where the rest of the data has been. But as a first-tier data set, it is an important corroboration that the labor market is indeed slowing. So I think all the downside risks that Powell was talking to the labor market last week, they have crystallized in this print. And I think the September cut is on the table for the Fed, and it's now what the onus is on the data. Perhaps just you need some pretty big upward revisions in subsequent labor market data to actually kick that cut out.
Yeah, and I guess the labor market is one that we look at with a little bit more certainty than the rest because of the tariff turmoil, so that you're not 100% sure what you're looking at.
Yes. So yeah, the labor market is key. I mean, aside from all the noise and headlines that we've had, the actual activity data, the growth data, even if you strip out all tariff-related volatility and inventories and net trade, that's been weakening, and the U.S. economy is actually growing below potential now, and that the weakness has been led by consumption. So we know that weakening is happening, that subtrend growth narrative is pretty firmly in place, and the question for us now is, are we on the verge of tipping into recession? For us, the answer is not yet. If you look at the labor market, you still have layoffs, you still have openings still at pretty healthy levels. And now that the tariff uncertainty is less uncertain, you could actually see the labor market maybe stabilize at these levels, but hard to see it reaccelerate. But on the growth side as well, I think private investment has remained very strong, and particularly in technology. And you've got some incentives from the fiscal bill that could keep that supported. Financial conditions also still remain pretty loose. So I think there's enough offsets to keep that economy still in that subtrend narrative.
Kim, how do you look? I mean, there's just so much news, right, on tariffs and trade, but also earnings. We're right in the middle of earnings season. Some are doing much better than expected. Others, it's very clear that they're working on the margins, or at least cutting the margins. So how do you cut out, when do you get a fuller picture, actually, of what companies are doing worldwide?
Yeah, I think the challenge with the economy right now is that it's a pretty bifurcated picture when you look at corporate earnings. But we take a step back, we look at it on the whole. Profit margins are still running pretty healthily, which means companies also can absorb a bit of those tariffs, and not pass all of them through to the end consumer. But then if we look at inflation, we're still very early days in what we can see from tariffs. The last print showed us the first clear signs of tariffs, but a lot of front loading is still in place. That's going to start to wane. The new full tariff regime is going to come into place, and we're going to see that core goods inflation pick higher. But we still think it's something that the Fed's going to be able to look through, because you've still got that strong services disinflation coming.
I mean, does it impact, the president talks day in, day out about Jay Powell. He now has a new appointment with Adriana Kugler actually leaving a little bit earlier. Does it impact your thinking on rates at all, or is that something that you just put to one side?
Yeah, partly, I think it's a well-understood market narrative now that whoever Trump appoints to the Fed is going to shift the Fed more dovish. Like you said, Kugler's resigned earlier, so that brings that reality slightly closer to us. But at the end of the day, it's still a chair, it's still a board, it's still a committee. And I think, even as the data shifts towards rate cuts anyway, that tension in the appointment becomes a bit less prominent.
Do you see value in European stocks right now?
So I look at the bond market, but in terms of European stocks, we are optimistic on the economy in Europe. I think it was a pretty forceful and optimistic message from the German government in their draft budgets. That still has to go into Parliament and be confirmed. But we are optimistic that this time is different and the spending is going to come. It's just a matter of when. So if I look at European government bonds, I do lean towards more attractive opportunities elsewhere, and where you're not going to get as big a fiscal shift that we are going to see in the next decade in Europe. But I also don't think it is a case that the ECB needs to start hiking next year.
Yeah, I mean, it's incredible, actually, that we don't focus too much on fiscal spending right now. It feels like the market kind of latches on to a couple of concerns, but then they go back out. Do you worry about some kind of credit event or actually a bond market event, like an auction, not going to plan?
Yeah, I mean, we saw that earlier this year quite a lot, and with bear steepenings of the curves and term premium being built in. For us, it's still about the data at the end of the day. The debt sustainability narrative is still in the market, but it is important that we are seeing that weakening in the data, which then pulls yields lower at the same time. If you look at which parts of the bond curve to own, we lean towards the front end of the curve, so looking for steeper curves. But if the data continues to weaken, it would pull the whole curve, all yields down across the curve as well.
Bank of England tomorrow. We're excited. I mean, something could happen, right?
Yes. Another three-way vote, like we saw in May, probably. The data hasn't gotten any easier from the Bank of England. So if you look at one side, the labour market slack is continuing to emerge. That means policy is still restrictive. On the flip side, inflation is still very high. You've got core inflation still close to 4%. Services inflation within that, even above 4%. So it gives the bank still caution. But I think there has been enough weakness in the growth data, the labour market data, the weakness in private sector wage growth, at least versus the bank's forecast, that it'll help that core of the committee to still move in their gradual pace out of restrictive territory.
Do you think something happens tomorrow? Will they move tomorrow, or do they wait until September?
Yes. No, I think that they will deliver the 25 basis points cut tomorrow. And what I'll be watching more for is the shift in forward guidance, whether they take gradual out of the language. If I were on the committee, I'd be leaving it there for the moment.
Kim, I guess overall, I mean, the trade and tariff concerns were a little bit more certain, right, than we were a couple of weeks ago. But things are also moving around a lot of the times. How much does it complicate central bank thinking?
A lot. There's a lot of uncertainty out there. But I think as central bankers, what they can do is just weigh the balance of risks to where their mandates are. Look at, is it more downside risk to growth or more upside risk versus their baseline forecast, and go from there.
Who has it the most difficult? I mean, we haven't even mentioned Bank Japan. But there is a lot going on in Japan right now.
Yeah, there is a lot. I would say the Bank of England probably has it the most difficult at the moment. The ECB probably the easiest, given where they are in policy and also how their inflation data is looking. But the Bank of Japan, it's tricky. I think they're still in quite a conservative mindset in terms of when they can deliver a next hike. There was all the trade tensions, which they wanted to clear. You've got political situation as well with Ishiba. If he steps down, what does it mean for the fiscal outlook as well? And then you have the currency. But if you just take away all the noise, inflation is continuing to rise in Japan, underlying inflation. It's broadening out as well. And we do think the Bank of Japan will have to deliver more hikes than the market is currently pricing.
Does the dollar weaken from here?
Yeah, so it's been a volatile past week or two. We attribute quite a lot of that to summer markets and just heavy positioning. Our currency team, which has had a great call on the dollar so far this year, still expect further dollar weakening ahead.
Kim, as always, thank you so much for joining us. Some great insight there from Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management. Coming up, Novo Nordisk's growth slows as a Danish drug maker loses ground in the U.S. obesity drug market. We'll speak with the company's chief financial officer next. and this is Bloomberg.
Geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. A Bank of England rate cut is back on the cards this month after a pause in June in a divided vote. And markets will be listening to Governor Andrew Bailey for clues on the path ahead as the UK economy cools and uncertainty lingers.
Interest rates are not on autopilot. They cannot be.
Tune into Bloomberg for live coverage of the BOE decision and press conference. It all starts Thursday at 12:30 p.m. on Bloomberg. Context changes everything.
Welcome back, everyone. Now, still with us, Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management. Kim, we went around the world in like 10 minutes trying to figure out exactly what central banks are doing across the world. But where do you see the most value in bonds?
Yeah, I think, we started with the US, so I will start there. The market has had a big move down in yields. Yes, it is pricing kind of in line with the Fed's median dot, the long run dot at 3%. Fed cutting to 3%, and then a slightly upward cycle from there. And we still see value owning bonds in the US, though. I think the economy it's on the cusp. Recession is not our base case yet, but there's still a lot of capital gains to be made owning, say, the belly of the US curve, if those shifts do happen and the Fed has to pivot more dovishly. I can see some consolidation into next week, though. We've got the inflation data, so the classic stagflationary playbook. Into inflation data, the bond market struggles to break to lower yields. So if you are worried about that, we still see lots of good opportunities globally. So if I touch on Australia, the yield curve is still what we think is pretty steep. We look at UK, I think valuations are still pretty attractive historically. And then if you look at Europe, we talked about the ECB earlier and being optimistic on growth. But if you look at the 2026 pricing for the ECB, we see good asymmetry in the market there in case things go wrong.
Yeah, I mean, the ECB seems to have actually tackled it almost up front. Again, but then there's a lot of, loss spread in Italy is very different to what we're seeing, for example, in Germany because of all the fiscal spending. So are there countries where you see more value in Europe?
Yeah, so Spain and Italy have been great this year. Spreads have tightened in a lot. The question is how much further can they tighten? But in Europe, we think now that the ECB is close to their end of the cutting cycle, maybe they give us one more, maybe they don't. But you're in that middle of the neutral range estimate that they have. So volatility is reduced now. That creates an attractive opportunity for risk-adjusted carry again. I think the fiscal trajectory for Italy and Spain are still looking very good. So yeah, Italy is one of our favorite markets to own as well there.
Kim, as always, thank you so much for being with us. Kim Crawford, Global Rates Portfolio Manager at JP Morgan Asset Management. Now, onto a corporate, and Novo Nordisk sales have shown the weakest growth in 4 years. That's as the Danish drug maker loses ground to rising competition in the U.S. market for obesity drugs. Well, joining us now is Carsten Munk Knudsen, the Chief Financial Officer of Novo Nordisk. Thank you so much for joining us. Sir, how does Novo actually plan to respond to President Trump's demand that drug makers immediately lower what they charge Medicaid for medicines?
Good morning, and thank you for having me on your show this morning. Yeah, so we received the letter from Trump together with 17 other global pharmaceutical companies, and looking at the 4 points in the letter, I would say a lot of the ask is something that we're already doing to quite some extent. So lower prices in Medicaid. We are already providing reasonably low prices for Medicaid, which is the poor segment of the U.S. population. And establishing a cash channel for American patients for our products. That is also something we're building, as we have put in our earlier announcements. So a lot we're already doing, and then of course we'll be happy to work with the administration to ensure that patients have affordable access to our products.
There have also been reports that the U.S. is weighing some 5-year plan to boost access to GLP-1 drugs in Medicare and Medicaid. How can Novo most take advantage of this?
Well, so again, the starting point is truly the unmet need in society, and patients benefiting from the products we spent billions to develop, and including not only the primary indications within diabetes and obesity, but also indications within cardiovascular risk reduction, chronic kidney disease, and potentially also MASH benefit that we hopefully will get on label here in the third quarter. So that's really the starting point, and our focus has always been to get out to as many patients as possible that benefits from our products. So that we're very happy to work with the administration to go out broad, and that's exactly what we're doing by both working with insurance companies, PBMs, but also building a cash channel with the telehealth providers.
But can you actually avoid seeing prices drop even further because of this program?
Well, so generally speaking, then with the larger and larger reach, and we're talking about millions of patients benefiting for our products. When we look at Ozempic in the U.S., it's almost 700,000 scripts per week, and it's a 4-week script. So we're talking about some 3 million patients or something like that on Ozempic alone. So with the broader reach, then some of the channels will entail lower prices. So we have seen our pricing come down both for Ozempic and Wegovy in the U.S. in the past years, and that's also our expectation going forward. And I would say, especially in the obesity segment, where there's a larger cash portion, also what we've seen with compounders, then unlocking that part of the marketplace would entail a lower price point for some of the product presentations. So that's something we're looking into.
Mr. Knudsen, I mean, there's also, of course, price negotiations in the U.S. next year due to ERA. Some analysts are suggesting that your prices in the U.S. could almost be halved. Is that a reasonable suggestion?
It's an ongoing negotiation between us and CMS, so that I can really not speculate on at this point in time. The result and the conclusion will be available in the fourth quarter, I believe, towards the end of November is the official plan. So then we'll be able to comment more on that come November. And then it's important to note that this is a Medicare Part D negotiation IRA. Then of course the bulk of the market is for commercial, so the classic insured employer-based health plans.
Could you also give me a sense about investors' concern for your experimental pipeline? So that's a real concern that we've heard from many people that follow your stock. Could you do larger deals to plug the gap with bolt-on acquisitions?
Well, we are always looking for innovation, but of course internally, but also externally within the therapeutic categories that we operate in according to our strategy. And we have defined a corporate strategy that focuses on serious chronic diseases within cardiovascular, diabetes, obesity, etc. And that's really the space we're monitoring for innovation, because really the foundation for Novo Nordisk is innovation-based growth. So if we don't succeed on innovation, then of course future growth will be challenged, and then it'll be a different company. So it's a key priority.
How much firepower do you have, and have you had any conversations with the Novo Nordisk Foundation, and are they willing to step up and help with the deal like they did with Catalent?
Well, so I would say, looking at our firepower right now, then we have one of the lowest leverages in pharma. We have a AA rating, and our leverage is 0.5 or 0.6 if we take net debt EBITDA. So just using our balance sheet, then we have a very significant firepower. So I would say for early innovation, we would have more than sufficient firepower to access that just through our normal balance sheets without talking to the foundation. And when you look at the purpose of the foundation, part of the purpose of the foundation is to provide a solid operating base for its operating companies. So I'm convinced that if we came out with an absolute critical opportunity for the company, the foundation would be very constructive looking at that.
Mr. Knudsen, give me a sense actually of cost-cutting measures. So could potentially, hypothetically, could you actually take some of the units that do less well and sell them off, or spin them off, or get rid of them, or hive them off to make sure that it's a more simplified company?
Well, so I'd say first and foremost, we are probably one of the most focused big pharma corporations in the world. So it's not like we have a lot of side shows that we would just sell off. So I don't see any meaningful or sizable carve-outs from what we're doing. We have always been a very focused company, so limited opportunities there. But talking about cost and investments, then again, of course, we're gearing the company according to the growth prospects we have, and with our current guidance, we're still a midpoint, which is double-digit growth, more than half more than double of that of the industry. So we're still investing in growth, both in terms of supply chain and pipeline and capturing with inline products. But of course, at a lower level than perhaps what we would otherwise have been doing if we were at a different run rate on our top line.
Mr. Knudsen, what are you expecting from your new CEO?
Well, so to me, he's the new CEO, but he's an old colleague. So I've been working with Mike Dusta for many years. So what I expect from Mike is a very commercial savvy, driven person, results-oriented, that is very focused on the best for Novo Nordisk and driving long-term prospects for the company. So when I spoke about innovation-based growth, that he comes from the same school, and of course, he has a different profile compared to Lars Fruergaard, that has had an amazing ride with the company, but it's also good with different profiles at different points in time. And as we spoke about, now is really the time of commercial execution and executing on the product portfolio we have.
Thank you so much for your time. Carsten Munk Knudsen there, the Chief Financial Officer of Novo Nordisk. Now, on to other news, and Donald Trump says he will pick a new Fed governor this week to replace Adriana Kugler, who announced her resignation on Friday. Now, the president revealed there are now 4 people in the running to replace Chair Jay Powell.
Fed governor. I'll be making that decision before the end of the week, and we'll either decide on one for permanence or the 4-month period, the term. There's a term of about a number of months. We have a couple of candidates. I mean, everybody wants it, okay? It's not a couple, but we've narrowed it to a couple of candidates. And we've also, we're looking at the Fed chair, and that's down to 4 people right now.
Let's get more on the story from Bloomberg's Valerie Teitel. Val?
A lot of speculation on just what those 4 candidates are. We know 2 of them. He talked about them directly in the interview with CNBC earlier yesterday, calling them the 2 Kevins. That's the former Fed Governor Kevin Warsh and longtime economic ally Kevin Hassett that currently sits on the National Economic Council. But what are the other 2 that he mentioned? He did mention that Scott Bessent is no longer in the running. He wants to stay at the Treasury, leaving 2 in question. Now, this is something that could potentially jolt the markets this week, Francine. We know that Trump has said that he does want to make this pick by the end of the week. And we also know it's probably going to be a dovish candidate, but maybe that's enough for the markets to trade off of. We also have to keep an eye on economic data. We did have a miss when it came to ISM services yesterday. It came at very close to stagnating at a print of 50.1, below expectations. A lot of attention was also on the employment subcomponent that also came into contraction. One of the worst readings, actually, since the pandemic. So the market is very sensitive now to any news on the labor market after that big miss on payrolls last Friday and those massive revisions. We do have jobless claims coming tomorrow afternoon for the next hint on the labor market. But we're also keeping an eye on earnings. Francine, pre-market, it seems like it's a negative tone from earnings after the bell yesterday. AMD and Super Microcomputers, both 2 AI-related stocks, getting quite pummeled in the pre-market, shall I say. Advanced Micro Devices, this is the world's 2nd largest chip maker, down nearly 5%. This is after they warned that their China revenue is still in question. They seem not very convinced that they will get those export licenses from the Trump administration. And then Super Microcomputers, they sell big AI servers to a lot of the companies, a lot of the AI companies, down some 16%, Francine. They pulled back on their sales guidance, and this came after January, where they gave a whopping figure to the market, nearly 2 times what analysts had expected. So walking that back, seeming to have the stock in the red, down 17%. Francine.
Val, thanks so much. Valerie Teitel there with the very latest on some of these market moves. Now, Swiss President Karin Keller-Sutter will meet Secretary of State Marco Rubio today as she makes a last-minute bid for a deal to lower the 39% tariff imposed last week by Donald Trump. Well, joining us now is Jan-Henrik Förster, Bloomberg's Swiss bureau chief. JH, thank you for joining us. So first of all, what does the Swiss president hope to achieve?
I think she only has one hope, which is bringing the overall tariffs rate down, which is 39% at the moment. It's a disaster for the country. It was unexpected. It's higher than the rest of Europe. It's actually, in fact, it's higher than most countries. And yeah, it's a bit of an upending for, you know, for an entire business model, the business model of Switzerland, which is we are a small country open to the world, free trade, and we hammer out bilateral agreements with all sorts of blocs, and then we export our goods to everybody because they are great. And this seems not to work anymore. Trump has been very focused on the trade surplus Switzerland is running. He basically said this is stealing from us. Switzerland would probably say, oh, it's we just have more competitive products. And that's basically what we've been doing over the past decades. And that's kind of the situation. So her overall goal, which is Karin Keller-Sutter, is bringing this 39% down. Actually, I mean, I can't tell you what the floor is, but any improvement on that front would be a success at this stage.
You did make me giggle saying that you have good exports. The chocolate is pretty great. What concessions could the president offer, the Swiss president offer that aren't too politically costly?
Well, yeah, if you want to negotiate, you need to have something to offer. The honest answer, I think, at the moment, and the Swiss will probably say the same behind closed doors, there's not much they can offer at this stage. You know, there have been a few strands. One is Switzerland is buying a fighter jet, F-35, from the States. You know, they could say we buy a couple of more, or maybe 10 more, or a dozen more. This would then go to a referendum, so you kick the can further down the road. That would be one potential concession. You can, you know, one big focus has been for the trade surplus, Switzerland's gold exports which is mainly refining, so it's being processed in Switzerland. It doesn't really add much to GDP or anything, but you can say, look, we introduce an export tax on these gold refiners, so you basically sacrifice your gold refining industry. And then I guess the other answer is companies would have to say, look, we are doubling down on our investments in the US. In fact, some companies are doing that already, right? Roche and Novartis have been very vocal about it on R&D investments in the tens of billions. So that is quite significant. So I guess anything you can do to get the number up would be a potential concession. Otherwise, not that much they can do.
So interesting. Jan-Henrik, thank you so much for joining us. Bloomberg's Swiss Bureau Chief, Jan-Henrik Forster, and let's see actually if the Swiss president can also meet the president of the United States. Now, the U.S. Special Envoy Steve Witkoff has arrived in Moscow for meetings with officials, according to Russian media. Now, it comes as the Kremlin mulls an air truce with Ukraine ahead of Trump's August 8th deadline. We're now joined by Mark Champion, who covers international affairs for Bloomberg Opinion. Mark, thank you for joining us. Really great stories and columns, actually, that you've written in the last couple of weeks. What should we be expecting from meetings in Moscow today?
Well, it's a very good question. You know, it's not quite. This is Witkoff's fourth trip to Moscow, and you know, arguably, it's going to be the hardest. Previous ones, he was basically sent there to be nice, and this one, in principle, you know, the U.S. is threatening tariffs on secondary tariffs on Russian oil exports, which would be a very significant hit to the Russian economy. So, you know, it's not really clear, I think, whether, you know, Witkoff is going to come away with, you know, having delivered his tough ultimatum and, you know, then we've got a couple of days for Russia to meet it, or if what he's really looking for is something that he can go away with, that everyone can save face, and that they can either be delays to the ultimatum or some sort of renewed effort at a ceasefire. So, you know, it's hard to say really, you know, what exactly it is that the White House wants.
So President Trump also threatened to impose 100% secondary sanctions, Mark, on Russian oil, and then said he never mentioned actually a percentage. What are the implications that he might be worrying about?
Well, yeah, so the first of all is, you know, prices at the pump. He said we don't need to worry because we pump so much oil, we just pump a bit more, and, you know, so we'll be able to produce our way out of any price increase. If you take 9% of global supplies off the market, which is roughly what, you know, removing the Russian oil would do, you know, it could be a very substantial hit. So, you know, he says he's not worried about that. You know, the second problem is that the customers who are buying this oil are India and China. Both are obviously very large players, much harder to push around than, you know, a small country, for example, like Switzerland. So, you know, this is a kind of large, you know, a board game on a very large board. And, you know, what exactly advice he's getting as to, you know, what will happen with India, what will happen with China. You know, again, a lot will depend on the kinds of risks he's willing to take. And the one thing that we know is that he's annoyed by the way that Putin has ignored him, but he's not committed to the defense of Ukraine in the way that, for example, he's committed to his trade policies.
All right, Mark, thanks so much. Mark Champion there from Bloomberg Opinion. Now, coming up, Commerzbank announces plans for €1 billion buyback as second quarter net interest income beats estimates. We'll discuss the details next, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Now, Commerzbank planning a share buyback of as much as €1 billion as the chief executive, Bettina Orlopp, seeks to make good on her promise to step up payouts. Now, earlier, Orlopp spoke to Bloomberg and described investor talks with UniCredit as difficult. UniCredit took a stake in Commerzbank and is considered the takeover bid of its European rival. Well, here's some of that interview.
UniCredit is for us an investor, a large investor apparently, but it's an investor. So we have investor talks, and that is on a regular basis as we have with other investors basically every quarter. Besides that, we stay fully focused on the implementation of our momentum strategy, which is a standalone strategy. I mean, we took note of the situation. It's a difficult situation, I have to say, because it is not usual that you have a key competitor who's also a large shareholder.
And in terms of defending yourself against that sort of takeover, your share price is up 156% since that stake was originally announced by UniCredit. Is your technique here to get too expensive to buy?
Well, actually, I think we are pretty expensive to buy. And if you follow on the comments of UniCredit, I think they made it also very clear that a deal currently is not really value accretive. And clearly, our objective is to create value for our stakeholders, specifically our shareholders, and to maximize the value. And if you also see what happens to our target price, it's not only our share price, but also the target price of analysts have moved up continuously. And we indeed intend to continue the story and just focus on delivery.
Hi, Bettina. It's Valerie. You mentioned there creating value for shareholders. Is acquisitions something that you're looking at in order to create that value? You've repeatedly said that you're looking for relatively small acquisitions, but little has happened. Are there any fresh developments on that front?
No, I mean, we continuously keep looking, and it's, as you said, it's more smaller acquisitions, but we also always said that they need to fit our requirements. We have very clear targets out there. A return on tangible equity of 15% up to 2028, and also 50% cost-income ratio. So we need to be cautious. Whatever we do as acquisition needs to help us on this path, and that's the threshold every acquisition needs to take.
Well, that was Bettina Orlopp, Commerzbank chief executive, speaking to Bloomberg, and especially Oliver Crook, who joins us now. Ollie, I mean, it seems, look, she's definitely under pressure because of the UniCredit advances. Is she feeling the pressure?
I think she is feeling the pressure, but she's also delivering. You look through the earnings that they delivered a little bit earlier today. I mean, there is very difficult to find any bad news in there. There was a beat on net income, on revenue, operating profits. Even their provisions for loan losses were lower than had been anticipated. So all that is positive. And on top of that, €1 billion share buyback, which is all going to be very good news for investors at a time when she is, as you say, getting that pressure from Andrea Orcel for that bid that went in September of last year. And what I think is really interesting, Francine, is that there's a point at which the rally of the shares at 156% since Orcel bought into that. Does the company become too expensive to buy at a certain point? And for Orcel, it's kind of, there's no way to lose, because on the one hand, maybe it's too expensive to buy, you walk away too bad, you still made 156% on 10% stake in Commerzbank.
Yeah, which is what he's always said, is like there's no bad way about this. Solly Crook, thank you so much for joining us and for that great interview with Bettina Orlopp. Now, amid the ongoing trade uncertainty and currency volatility, bank stocks have led gains in Europe this year. Joining us now is Paul Davies, who covers banking and finance for Bloomberg Opinion. Paul, I mean, first of all, when you look at M&A, good morning. When you look at M&A, I mean, it's UniCredit. It's also, there's a lot of, talk in Italy, although the government is getting involved with a lot. Are we stuck, or is something actually going to happen before the end of the year?
I mean, it looks like most of these deals are kind of stuck, not going to happen. As Ollie was saying, Commerzbank has done incredibly well in its own kind of self-repair job and has become too expensive for Orchel to go through with an offer at this point. I mean, he's already kind of said in the past that that's the case. I mean, they've changed the way they are hedging their stake through all of the derivatives and so on that they have, so that they can now be protected if the shares fall, but still make some money if they continue to rise. So he kind of wins. He still wins. It's still been a great investment for them. But in terms of M&A, I don't think it's going to happen. And he's already backed away from the Banco BPM bid as well because of Italy's use of the golden power and restrictions and so on. So for them, at least, it's definitely stuck.
What happens between Mediobanca and actually Monte Paschi?
So, well, we've had some commentary on that this morning from Monte Paschi. They still are pressing ahead with that bid. I mean, I think the offer is open. I think it closes in sort of early September. They've got a lot of friendly shareholders on their side. They've said that if they can get to a minimum of like 35% acceptance or so, then they'll go ahead with the deal at that low level. I mean, that will delay some of the synergies. It stops them using their deferred tax assets, which is a big part of why they're bidding for it in the first place. But I mean, ultimately, this just looks like a politically engineered deal. And I think it's bad for, the other investors. It's bad for Italy in reputational terms, and I think it's probably bad for the banks as well.
Paul, I mean, there's a lot going on actually in the banking space, especially as the Swiss president, who was one of the architects also of this, possible huge levy on UBS for capital, is in Washington. There's a lot of rumors around UBS, and actually, if they become a takeover target.
So UBS is desperately trying to change the debate around the extra capital that some people in the government thinks it needs now that it is so huge compared to the Swiss economy. And they have spoken in on and off the record terms, or there's been kind of leaks to media about some of the more radical things that could happen if the capital regime changes in particularly harsh ways. One of those is potentially moving their headquarters elsewhere, and another one that came out last week was this idea that maybe they'd be vulnerable to a foreign takeover. One of the big U.S.
But they're so big.
They are so big, and so one of the big U.S. investor equity analyst, Mike Mayo at Wells Fargo, who's very, very well known. He wrote a note talking about who would buy them, perhaps JP Morgan. I mean, it's all kind of fantasy M&A. Maybe it's a bit silly season. It's the kind of thing that perhaps only someone like JP Morgan or Morgan Stanley could do. Does it happen? I mean, I'm like ultra skeptical.
Do you play fantasy M&A on holiday?
Not on holiday. Sometimes at my desk when I've got less to do, but yeah.
But I mean, when you look at and you've done some great pieces also on the Barclays Investment Bank, on Diamond Success, and actually what it means for JP Morgan going forward. What will you be focusing on in the next couple of months?
I guess the sort of. I mean, we're still waiting to see the revival of investment banking. Wall Street did quite well. The Europeans much less so. M&A is kind of been improving, but the whole private equity side is still very quiet. And this is partly why the Europeans didn't do quite so well, because they're much more dependent on leveraged finance business, and they're much more dependent on, with smaller businesses in general, large single deals can make a big difference. So, it all comes down to Trump, what he does with tariffs, what he does with the Fed, what happens with interest rates, and the level of confidence or fear or uncertainty that executives and private equity fund managers can deal with and decide whether to push the button on deals or not.
None of this matters. You're just focused on Son leaving Spurs.
I am, absolutely. I mean, this is.
I am.
Yeah,
I'm
no,
not even
this
a
is.
Spurs fan.
Yeah, no, this is an incredible deal. I mean, I'm going to try and write something about this. LAFC, part owned by one of the original founders of Ares, the great big, private credit firm. I mean, it's going to be a great deal for them. LA has a huge Korean population. He is such a big star in Korea, and in football in general. It's very sad as a Spurs fan to see him go, but it's a wonderful moment for LA and American soccer.
We have all the, please don't call it soccer, but we do have all the Korean T-shirts. Paul Davies, thank you so much for joining us. Now, a prominent economic think tank has warned that UK Chancellor Rachel Reeves faces a £51 billion shortfall in her autumn budget. Now, the National Institute of Economic and Social Research says Reeves will likely need to break her promise not to raise major taxes. Now, the shortfall comes amid slow growth, higher than expected borrowing, and U-turns on welfare cuts. Also, Cathay Pacific says it has ordered 14 Boeing 777 planes, confirming an earlier Bloomberg scoop. Now, it's the first time the Hong Kong-based airline has bought planes from Boeing since 2013. The announcement came as Cathay shares tumbled the most since 2008 on weaker passenger yields. And 2 Chinese nationals have been arrested on charges that they sent tens of millions of dollars worth of advanced NVIDIA AI chips to China. Now, U.S. authorities say the chips were shipped via third-party countries such as Malaysia. They include NVIDIA's H100 AI accelerators, which are restricted for export to China. Lawyers for the accused could not be immediately reached for comment. Bloomberg has also learned that OpenAI is in early talks for a secondary share sale that could value the company at around $500 billion. Now, sources say investors, including Thrive Capital, are looking to buy shares from current and former employees. Now, OpenAI was previously valued at $300 billion after a funding round led by SoftBank in April. Let's bring in Peter Elstrom, who is our executive editor for Global Technology. Peter, $500 billion. I mean, suddenly everything changes in terms of valuations for the big leaders.
Yeah, it's quite a scoop. I mean, really, this is OpenAI trying to reward some of its employees, its current employees, and its former employees. Back in the old days, startups just didn't do this sort of thing. They didn't want people to be able to cash out of their stock, partly because they thought it would maybe lose some interest in the company. Also, they didn't want them to get too rich that they were going to lose some of that hunger that they need to really build up a startup. But what we're seeing here is very, very different. So these employees would be able to sell some of their stock. They'd be able to cash in a little bit while they stay at the company. This happens amid a really ferocious talent war within Silicon Valley, where companies like Meta are trying to pick off AI researchers across the field. Meta was successful in taking some of OpenAI's researchers, and so now Sam Altman and the team there are deciding they're going to try to reward these employees in some sort of way so that they can actually have some of the money. They don't need to go someplace else. They'll be able to cash in. So it would be recognition of that value, and it's a very sharp increase in the valuation from, as you say, just March, April.
Yeah, I mean, it seems like a smart business plan, honestly, to keep your employees, right? The talent in this kind of industry must be fierce.
Absolutely. I mean, we've seen these offers from Meta, but Meta has been the most aggressive. I think Mark Zuckerberg believes that they're a little bit behind in AI, behind OpenAI and Google in particular. So he's paying up for talent to build what they call the superintelligence group. One offer came in at $1 billion for one employee. You've got hundreds of millions of dollars per year offered to some of these employees. So OpenAI has to play in that field. It's very competitive now.
Okay, AMD. Talk to me about AMD. I mean, it wasn't too bad, but actually they were underwhelming, and the share price is getting slammed.
It seems like a reflection of the AI market right now. Expectations are so high. AMD's stock is the best performing among the chip makers this year, so far this year before this report. Their shares were up about 45% this year. So expectations were very high. The numbers were actually pretty good. They beat revenue in the second quarter. They gave a forecast that was actually better for the third quarter. But there's some concerns around the China market and exactly how they're going to be able to capitalize on selling chips into the China market. AMD, of course, has seen this big growth in AI chips in competition with NVIDIA. They finally have a lineup that's pretty good that could compete with NVIDIA as they're beginning to gain some market share. But Lisa Su, the CEO, would not commit to being able to sell this chip they designed for the China market, the MI308, into China. They're just not putting it into their calculations at this point because they haven't gotten any licenses from the U.S. government so far, and they're not exactly sure how much revenue they can get from that.
Supermicro, it's like down 17% pre-market. What's going on?
Yeah, again, a reflection of the AI market. Expectations were very high. The stock's been on a pretty strong run over the past. They came in a little bit light, and that has raised more concerns that maybe they're not going to get the kind of payoff that investors had been expecting.
So interesting. Peter, thank you so much for all of that insight. Peter Elstrom there, our executive editor for Global technology, frankly, one of our busiest men here at Bloomberg. Up next, Bloomberg Brief. Of course, the focus is firmly on earnings, left, right, and center, and that's really taking a little bit of worry off what Donald Trump is doing on tariffs. We look at India, we look at China. Apparently, they're also close to a deal. And then the appointment of a new Fed governor to replace Adriana Kugler. All of that and much more coming up on Bloomberg Brief, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I am never doing that again.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this morning. The chip makers plunge. AMD says its return to China is still unknown. Supermicro shares dive after cutting its sales forecast. The big get bigger. OpenAI is said to fetch an eye-watering $500 billion valuation in its latest share sale. And bracing for a tariff blitz, President Trump says announcements on chips and pharma levies are coming soon. Another day of losses for the S&P 500 yesterday. We attempt to rebound this morning. An explanation being thrown out there was a weak services ISM. You can see S&P 500 futures up by about a third. The NASDAQ underperforms with some of those chip maker weakness. Valerie Teitel will get into that in just a moment. Meanwhile, for this bond market, perhaps the worrying thing for those services ISMs yesterday was that prices paid was higher, and you saw a tick up in yields, and that continues this morning. We're up about 1.5 basis points for your 2-year yield. Your 10-year yield, that stands at 4.2414. That's up by 3 basis points. We will be getting a 10-year auction today. Let's get you those stocks to watch. With that is Valerie. Hey, Val. Good morning, Danny. Let's start right there with AMD. This is the world's second largest chip maker, falling over 5% in pre-market. The company was very hesitant to talk about any China revenue. It seems like they are not convinced they're going to get those export licenses to sell their China-specifically made chip into that market. The market did not like that kind of news, and we're trading down 5%. Remember, AMD, though, is the outperformer when it comes to chip stocks so far this year. So a lot was baked into the earnings last night. Also moving on to Supermicro. This is a maker of AI servers. They sell it to companies like NVIDIA. That stock is getting pummeled in the pre-market, down over 16%. They have continued to rein in their sales guidance. And Danny, this comes after only back in February, they gave a sales number that was nearly twice the analyst estimate. So a bullish figure at the start of the year is being walked back. Investors seem to not like that kind of narrative. Maybe Supermicro is not in the best place to capitalize on this extra CapEx spending. Those shares are sinking in pre-market. Lastly, let's take a look at what's to come. We are hearing from Disney and Uber right before the bell in around 2 hours' time. Disney already trading strongly this morning, up 2%. There was some news overnight that Disney's ESPN is having a tie-up with NFL's media assets. It seems like the stock is liking that news. Uber is also the first of the gig economy to report this season. A lot of attention on their tie-up with Waymo, Alphabet's Waymo, and how that is going. Danny.
Valerie, thank you very much for that. We'll catch up with you later in the hour. Also in this hour, in just moments, Sharon Bell of Goldman Sachs joins us for a read on this earnings season. And later, we'll catch up with Neil Dutta of Renaissance Macro on the U.S. economy and all things Federal Reserve. Now, so far this earnings season, firms have shrugged off President Trump's rewiring of global trade. Sharon Bell of Goldman Sachs writes, quote, while U.S. companies are displaying confidence regarding their ability to weather tariff impacts on profits and earnings calls, cost pressures could increase in the second half of 2025, introducing downside risk to real revenue growth. I'm pleased to say Sharon joins us now. She's Senior Europe Equity Strategist at Goldman Sachs. Sharon, where do you expect, and good morning to you, where do you expect some of those pressures to show up most acutely in the second half of this year?
I think it's difficult to say. I mean, companies so far have been pretty confident, and the U.S. earnings seasons, both the first and second quarter, have been strong. The second quarter so far delivering, again, a very good beat, particularly amongst the biggest cap tech companies that perhaps are not totally immune, but much more immune to some of these concerns on growth and tariffs. But yeah, as you go into the second half, if companies have pulled forward a lot of inventory imported already in the first quarter of this year, they've already started to use all of those. And yes, I think that you may see a little bit more pressure on margins.
Well, to that point, SocGen's Andrew Lapthorne noted at the end of last week, 2/3 of the S&P that had reported were showing declining profit margins already. So this idea that for now they're eating the cost, but Sharon, how long can that continue on? And what happens when some of these firms start to raise prices? Are consumers going to be willing to pay more?
Yeah, I mean, this is the thing. The U.S. economy at the moment is, we describe it as being at stall speed. It's not, it is growing below potential, and we think that will be the case in the second half of this year. And we think that part of that is because of consumer real incomes being so weak, given some pass-through, some higher inflation related to the tariffs. So, and for that reason, we do think the Fed will respond as well come September and beyond in terms of cutting rates. So absolutely, I think the economy is relatively on the weaker side at the moment. The US earnings season perhaps disguises that a little bit, partly because the weaker dollar is helping the US, but also partly because of those bigger cap tech stocks that are doing well and are more immune to this. But the rest of the market, the 493, definitely you are seeing some issues. Smaller caps as well, underperforming in the US, all related, I think, to some of these pressures.
Yeah, but one of the weird things, Sharon, if you look at the bottom from April 8th and just how the sectors have been doing, all of them have advanced, save for healthcare, which has some of its own idiosyncratic and perhaps also tariff things going on in it. Does that make sense for something like consumer discretionary, for example? That's up 24% from the bottom. Can that last?
Yeah, I mean, the market's rallied a lot since the kind of Liberation Day related lows. But I guess that was on concerns that tariffs would be a lot higher than even we're seeing them come through now. And there is a lot of evidence that's come through since then that there's a lot of pragmatism when it comes to tariffs. So I think a lot of the rally, yes, that bit of it is justified. But to the extent that the rally is suggesting that growth is going to be absolutely fine, I mean, we don't agree with that. The second half of this year, I think growth will be on the weaker side. That all being said, like I said, there's a big chunk of the US market, the biggest cap tech companies that have very good balance sheets that aren't really exposed to these trends that can continue to defy some of these trends, I think. So I think it's a mixed picture. Interest rates coming down as well helps. So even if growth is relatively weak, interest rates coming down, on the other hand, supports investors and markets as well.
Yeah, and maybe that sort of is why there's this disconnect of a bond market that has really started to price in those interest rates and equities that have held up. Sharon, you say pragmatism in tariffs, but there have been threats from Trump, and the most recent of which comes yesterday, where he said that you could see something like 150 or 250% tariff on pharmaceuticals. How are you thinking about that sector and pharmaceuticals in Europe as well, if this is the sort of pressure that they could face if they don't cut costs in the US?
Yeah, absolutely. I mean, there's still uncertainty. I say there's pragmatism, but there's still a lack of certainty. The EU has done a framework deal with the US, but there's still a little bit of uncertainty with respect to the details, and there's definite uncertainty when it comes to pharmaceuticals globally, tariffs they may face given the investigation still underway. So I absolutely think that sort of overhang on the sector continues to kind of penalise the sector. And I don't see, at least in the near term, that going away. The other thing for European pharmaceuticals is they make a lot of dollar earnings, and to the extent that the dollar has been weaker in the last couple of quarters, that's a hit on their profitability as well.
Yeah, it's interesting to see where some of that is showing up. Just thinking of Pfizer yesterday, they basically said, look, our earnings, our sales themselves were weak, but we were cutting costs. We had the benefit of a weaker dollar, and at the same time, we have tax benefits. Sharon, you talk about how some of the pressures are going to show up in 2025, but they get the boost maybe from Fed cuts. But what about taxes? A more friendly tax regime come the start of 2026. How big of a boost could that be to corporate profits?
Yeah, a marginal boost, I think. And, you know, we do have 7% earnings growth for US companies next year, which would be above nominal GDP growth. A little bit of that is the impact of the biggest tech stocks still growing quite nicely, but a little bit of that as well is tax impact, etc. So I do think US earnings can continue to grow, and a little bit is related to deregulation as well. So some tax or continuation of tax cuts and some deregulation, all is in the mix and helping some of this better US earnings performance, and slightly weaker dollar, because with the Fed cutting rates, we still believe the dollar will continue to fall, and that will also be a nice tailwind for US profits too.
Yeah, a lot of cross-current forces, Sharon. Hopefully the good wins out. Thank you so much for joining us this morning, Sharon Bell of Goldman Sachs. Let's get you some other top stories now that are trending on the terminal this morning. And as we've been discussing, President Trump says that he would impose more levies, this time higher levies, on countries buying energy from Russia. Meanwhile, the president said that decisions on chips and pharma imports would come within the next week or so. Meanwhile, Swiss President Keller Sutter has been set to hold talks in Washington today on trade. Elsewhere, President Trump has also made comments on his pick for the upcoming vacancy at the Fed.
Fed governor. I'll be making that decision before the end of the week, and we'll either decide on one for permanence or the 4-month period, the term. There's a term of about a number of months. We have a couple of candidates. Everybody wants it, okay? It's not a couple, but we've narrowed it to a couple of candidates. And we've also, we're looking at the Fed chair, and that's down to 4 people right now.
And Glencore has canceled its plans to move its primary listing to New York, instead keeping its London listing. CEO Gary Nagle said that Glencore was unlikely to have gotten into the S&P 500. It's a move that would have been a blow to London, which has lost a quarter of its companies in the past decade. Coming up, AMD and Supermicro shares take a hit post-earnings. We're going to have more on that next, coming up on your brief.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Earnings season is here.
The earnings are front and center. A slew of results already out.
Are tariffs going to eat into margins?
Bloomberg is first to break the numbers.
JP Morgan, Citi, Wells Fargo, Bank of America, Goldman, Morgan Stanley.
I'm getting my spreadsheets ready.
With the smartest insights.
It's going to be a can-kicking situation.
Expectations are relatively low.
The market is looking for confirmation of that growth narrative.
Continuing coverage on Bloomberg. Context changes everything.
Earlier this quarter, we were notified by the Department of Commerce that it is moving forward with the review of our license applications to export MI308 to China. As our licenses are still under review, we are not including any MI308 revenue in our third quarter guidance.
AMD CEO Lisa Su speaking about the uncertainty that clouds the chipmaker's China business. Let's unpack those earnings and more with Bloomberg's executive editor for Global Tech, Peter Elstrom. Peter, great to see you this morning. And look, this is something that for AMD and NVIDIA was supposed to be a big boost, the fact that they would get the licenses to start selling in China again. How big of a blow is it that they don't yet have that certainty?
Well, maybe let's start with the earnings. I mean, AMD came out with their earnings, and it's a reflection of how high the expectations are for AI right now. They came out; their numbers were pretty good. Revenue grew more than 30%, up to $7.7 billion. They handily beat revenue estimates for the second quarter. They gave a forecast for the third quarter that was actually ahead of estimates too. Pretty strong growth. But as you're talking about, Lisa Su, the CEO, talked about their challenges in China. They took a write-down when the Trump administration put extra restrictions on exports to China earlier this year. Now Lisa Su is saying that this chip that they designed for the China market, MI308, will be sold into the market at some point, but they haven't been able to get any licenses from Washington so far to be able to sell those chips, so they're not including any of that revenue into the forecast for the future. Now, that does sound like there's upside there. If they do get some licenses, then maybe that revenue forecast would go even higher, but the pessimism around not being able to get those licenses really weighed on the stock, and we're seeing that in the early trading today.
And maybe that's also some of what Supermicro is suffering from, high expectations, up 88%. But Peter, I do want to ask you about OpenAI, a $500 billion valuation, definitely making it one of the most richly valued companies that are private in this world. I mean, this is a big uptick. It seems like there's no stopping OpenAI in its mammoth amounts of growth.
Right. Well, there's an important asterisk here, just to be clear. This is not a primary share sale. They're not selling new shares to new investors. What they're doing here is it's a secondary share sale. They're opening it up so that existing employees and former employees would be able to sell some of their shares, take some money off the table. Now, in the old days of Silicon Valley, this never happened. Venture capitalists did not want to give their founders, their entrepreneurs, extra money. They didn't want to give them hundreds of millions of dollars or billions of dollars because they wanted them to stay very motivated, and they also also wanted them to have all of their financial interests in making this a success. These days are a little bit different, though, for a couple of different reasons. One, companies are staying private much longer, so you need to be able to give them some cash. Number two, and this is a bigger issue, really, there's a fierce war for talent in AI right now in Silicon Valley. Companies like Meta, which perceive themselves as a little bit behind in AI, are very, very aggressively going out and recruiting AI engineers. We've talked about this a couple times before. Their superintelligence group is recruiting people with offers of $100 million a year. There's one offer of $1 billion that we've heard about that apparently was rejected. So OpenAI, by doing this, is putting some cash into the hands of their employees. They're going to hopefully be able to retain a bunch more of their employees. They did lose a couple of people to Meta in particular. So this is an effort to kind of reward some of the workforce right now so that they'll stick around. They'll be able to build the business that Sam Altman and the crew want to be able to build.
I guess the question is, Peter, if you're a private company like OpenAI and can increase the cash on hand to recruit for talent, what is there, and is there any hope for someone like Apple that continues to lag behind in their share price? They had a better performance in their earnings, but how do they catch up with this AI talent race when someone like OpenAI can hoover all of it up alongside Meta?
You're touching on one of the big questions overhanging Silicon Valley right now. Apple, of course, tremendously well-respected company, has fallen behind in AI. I mean, talking about companies that perceive themselves as behind in AI, they do need to do something aggressive here. They've talked about their AI opportunity. They just had an all-hands meeting where Tim Cook talked about the opportunities there. They certainly want to be a player here. They're determined to be a player here. It's unclear how that happens exactly. Can they recruit enough talent from the outside? Do they need to make an acquisition, perhaps? There are a lot of AI startups out there that they could look to buy. They have a huge market cap to be able to recruit employees, and they've got a great reputation. So, yeah, Apple certainly, if they really want to be a player here, they have to make some big moves.
Peter, thank you so much for joining us this morning. We'll catch up with you later. That is Peter Elstrom. Coming up, Bank of America tells junior bankers if you take a job somewhere else, you're going to be reassigned. We'll have the details for that war for talent coming up next on Your Brief.
Opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at the front pages this morning. What's leading on the top publications? First off, we have this one on the Bloomberg. OpenAI in early talks about a potential stock sale for current and former employees. It will give the company a valuation of about $500 billion. OpenAI declined to comment. Next up, the FT is leading with this, that shares of Berkshire Hathaway are underperforming the broader market by one of the biggest margins in decades. Berkshire's Class A shares have tumbled 14% since May 2nd. That is the last trading day before Warren Buffett announced his retirement. Berkshire did not respond to a request for comment from the paper. And on the Washington Post, on their front page, President Trump threatening a federal takeover of D.C. after a former Doge worker was attacked. The Elon Musk protege was injured in an attempted carjacking last weekend. The president said on Truth Social that if D.C. doesn't get its act together, the federal government will run the city. Let's now turn to the talent war on Wall Street. Lenders are pushing back on aggressive efforts to lure away junior bankers. Bank of America is now telling junior bankers to divulge any new employment opportunities, and you might face a reassignment if you've accepted that opportunity. Joining us now is Bloomberg's Tom Metcalf. Tom, what exactly is Bank of America doing?
Yeah, hi. Basically, they are trying to clamp down on what's known as this on-cycle recruitment along with other lenders. So effectively, they're getting their junior bankers to attest that they don't have any other future offers, and if they do, they're planning on moving them, one presumes, to perhaps less prestigious or high-profile roles.
And we've seen this really ramp up, but at the same time, Tom, you've heard from some of the big private capital players say, we're going to wait to start our recruitment cycles. Is that not enough? Is the pressure still on from these big banks to retain their employees?
I think so, and I think it just shows just how extensive this on-cycle recruitment has been, and how angry the banks are about it. So we see various lenders react in different ways. JP Morgan's come out and said we will fire people who accept offers within 18 months of joining us. You've got Citi and Goldman similarly getting their junior bankers to say, hey, we don't have any kind of future offers out there. And it's a big problem, right? Because you can see why the private equity firms are doing it. It's the best way to get sort of talent trained for the least cost, and so the banks are sort of fighting back, and I think we'll continue to see kind of more movement on this front as the banks again try and just dissuade their newest employees from literally jumping ship as soon as they can.
I guess, Tom, kind of the confusing thing is that the banks have always served as a pipeline for the junior bankers. Maybe in decades past, it was you work at a bank, and then you go to a hedge fund. That's changed as private capital has become the hot asset class. Why is this seeming to be an issue now? Or has it always been an issue, but just the focus of who's in the ire of the banks has changed?
I think it's two things. One is it's just become more egregious, right? One of the most extreme examples is people who literally are 2-3 days in to joining jobs at banks are then agreeing to join the private equity firms as soon as their training's done. And then the second thing is, I think, it probably has always been the case in some ways, but yeah, it's just become even more apparent how widespread it is with the growth of private equity, and it's probably reached that tipping point where, the banks could just basically take it no more, and even though these private equity firms are obviously gigantic clients for them, they're seeing their own kind of, obviously, talent pool, but also just, fundamentally how they run these firms kind of impacted by such recruitment.
Tom, thank you very much for that. That is Bloomberg's Tom Metcalf. I want to give you a quick check on oil this morning because we are rebounding up more than 1% for both Brent and WTI. It seems like the concentration is Trump's threat to Russian supplies. The threat from Donald Trump has been slapping secondary tariffs on buyers of Russian energy. He said that he could impose those higher tariffs. India has been in particular focus for the president. It could possibly include China as well, though. There's your oil price this morning. Coming up, the search for the new Fed governor. Trump says that his pick will come by the end of the week. We're going to discuss that and more with Neil Dutta of Renaissance Macro. That's coming up next. Stay with us on your Bloomberg Brief.
this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin-yang 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings of the world.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Wednesday. The chip makers plunge. AMD says its return to China is still unknown. Supermicro shares dive after cutting its sales forecast. The big get bigger. OpenAI is set to fetch an eye-watering $500 billion valuation in its latest share sale. And bracing for a tariff blitz, President Trump says announcements on chips and pharma levies are coming soon. We are rebounding after edging lower yesterday. One explanation floating around there is a miss on July ISM services that weighed on the S&P, but we're up by about a third. Tech underperforms, with some of those chip stocks doing worse. And Russell 2000 futures, those outperform. Yields, though, push higher for a second day. We are still about 22 basis points lower on the front end than we were last Thursday. Still just under 90% odds of a Fed cut. Perhaps also pressuring this bond market was also the ISM data showing heightened price pressures, up by a basis point for your 2-year yield, your 10-year yield at 423.55, up 2 basis points. We will get a 10-year auction today. Let's look at some stocks moving in the pre-market. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start why maybe perhaps those NASDAQ futures are underperforming, and it's because of some weak results from AMD. This is the world's second largest chip maker, really reluctant to give any guidance on China revenue. They're asked repeatedly on the conference call, but unwilling to put a number. It seems like they're just unconvinced that they will get these export licenses in order to sell its China-specific chip into that market. So AMD down over 5% so far in pre-market trades. Staying with tech, let's move on to Supermicro. They sell AI servers and hardware to the likes of NVIDIA. This stock getting absolutely torched in the pre-market, down over 16%. Danny, they are continuing to pull back their sales guidance, and they're having issues with margins being under pressure. Now, remember, Supermicro gave quite a bullish outlook back in the first quarter with sales guidance nearly twice of what analysts had assumed, and they're continuing to walk that back to the share's demise. Let's move on to things that we can look forward to today. Danny, we have two big companies reporting before the bell in around an hour and a half's time. The first one being Disney. Those shares are up already, up 2.7% in pre-market. There was news overnight about a tie-up with Disney's ESPN and NFL's media assets. We also have Uber reporting, the first one of the gig economy to report. Danny.
Valerie, thank you very much. Now, elsewhere, President Trump is ramping up his tariff rhetoric, warning of higher levies for countries buying energy from Russia, also hinting at announcements to come on chips and pharmaceuticals within the next week or so. Joining us now is Bloomberg's Suzanne Lynch. Suzanne, what could we expect from the president?
Yes, more ratcheting up of rhetoric by the president about tariffs. And there are a couple of countries of trading partners who are in the firing line here. Number one is India. He's already threatened a 25% tariff on India and now is threatening more, accusing India of facilitating the purchase of Russian energy exports. And then we also have Switzerland, not a member of the European Union, but the Swiss were hit with a really huge tariff of 39%. And we have seen that the Swiss president is now in Washington. She is due to meet with the Secretary of State, Marco Rubio, today, but no news of any other further meetings with anyone more in the economic or trade space that may be close to President Trump on these issues. So a lot of nervousness around the world about this continuously changing and developing trade strategy coming from the White House.
Elsewhere, Suzanne, the other thing we might get this week is a Fed replacement for Adriana Kugler. The president commented on that. Let's take a listen.
Fed governor. I'll be making that decision before the end of the week, and we'll either decide on one for permanence or the 4-month period, the term. There's a term of about a number of months. We have a couple of candidates. Everybody wants it, okay? It's not a couple, but we've narrowed it to a couple of candidates. And we've also, we're looking at the Fed chair, and that's down to 4 people right now.
Suzanne, what you looking out for?
Well, what's interesting is that the White House has announced there will be some announcement by President Trump at 4:30 p.m. Eastern time today. So let's see, will it be that or may it be something else on trade? But look, I think the key question is, will Donald Trump appoint someone for this kind of surprise vacancy that could go on and be replacement for Jerome Powell? That's a kind of a key thing to watch there. Obviously, the president has been very critical of current Fed policy when it comes to interest rates and has made no secret of the fact that he's not happy with Jerome Powell there. So that will be one thing to watch on that. Len, we'll be looking at market reaction. Obviously, anything that is seen as interfering, shaping the independence of the Fed is something the markets will be watching closely, even though I think expectations of an interest rate cut next month have increased since last week's jobs report.
All right, Suzanne, thank you very much for that. That is Bloomberg's Suzanne Lynch. Now, earlier this week, I asked former New York Fed President Bill Dudley about the potential surrounding Trump's appointments at the Fed.
If you have 4 governors all lined up on one side, that gives the chair quite a bit of momentum to get his or her way. But I think the Federal Reserve presidents are going to continue to vote their conscience in terms of what's right for the macroeconomy.
Let's add another expert voice to the conversation. Joining us now is Neil Dutta, head of U.S. economic research at Renaissance Macro. Neil, really wonderful to see you this morning. And there was Dudley earlier this week saying the Fed is under siege, but it's going to be just fine. What are you looking out for with President Trump saying that he's going to make an announcement of Kugler's replacement this week?
Well, I think it's interesting. It's that he's basically willing to sort of appoint someone for a matter of months. I'm curious to see whether they're actually able to speed up the process quickly enough to get someone seated in time for the September meeting. But it's important to know that there still remains a pretty strong well of participants on the FOMC that are not actually lined up in favor of a cut right now. So whoever President Trump puts in is going to have a lot of convincing to do of their new colleagues. And I think that's what's important. You can't just go in there and exert your will. You have to persuade people to your side. It's a deliberative body. It's a consensus-building institution. And so, it's important to know that just because the president's able to fill the seat quickly, it's not immediately clear, that person will be able to actually affect the change that he wants.
So does the person itself overall, Neil, make a difference? If it's one of the Kevins, if it's someone else, if it's someone outright political, are you able to just brush it off regardless of who it is?
Well, I think that, we don't know who this person, is this person going to be a Kugler replacement, right? That term is up again in January, so you have to go through this process again. And Powell's term is up in May, and, he may well decide to stay on and continue the remaining term as governor. I mean, that's something that's possible. So there's a little bit of a logistical hurdle here. But I would just say that if it looks like it's someone that's just going in there to do the president's bidding, that person is not going to be able to actually affect the change that he wants, because that person won't be able to convince anybody about their position.
Do you assume, Neil, if I can just jump in, do you assume, though, that the same resilience will hold true with an appointment at the head of the BLS, too?
Well, I mean, this is part of the challenge. I mean, the timing was somewhat suspect, and as a result, the person that they end up putting in, what if Danny, the data stay weak? What if the employment numbers don't improve? Typically, believe it or not, July, over the last number of years, excluding the pandemic, July tends to get revised down. So what if you put someone in there and they tell you sort of the same thing about the jobs market, right? I mean, it's the people aren't exactly enthusiastic about the jobs market when you poll consumers. So now you have your own handpicked person telling you that things are bad. That opens you up to some kind of political attack from the other side that gives it a lot more salience now. So, we'll see. They're trying to pivot to making this about improving the statistics, improving the collection. We'll see whether that sort of line of argument can stick. But I do think that at the margin it undercuts confidence a little bit.
Yeah, it's fair enough. They have been trying to change their message from what President Trump said, although he repeated that it was rigged yesterday on CNBC. Neil, if we could just talk about the data itself, and considering that we could get another downward revision in July, there's been this narrative floating around that you've pushed back on, and it goes something like it's a post-Liberation Day fallout, the weaker jobs numbers that we've seen, and considering things have settled down in tariff rates, we'll get a rebound in August. Why are you pushing back against that?
Well, that assumes that it's the uncertainty around the tariffs as opposed to the tariffs themselves that matter, right? The uncertainty around tariffs have been coming down at the margin. I mean, I think that your own reporter just talked about how there's additional skirmishes out in front of us with a number of countries. But again, that assumes that the uncertainty around the tariffs rather than the tariffs themselves are what matter. And we know that the effective tariff rate continues to go higher over the summer as the customs agencies align collections to what's actually been announced by the president. So that means that there's more revenue going into the Treasury, which means ultimately that there's more potential for pass-through to businesses and consumers from tariffs. So, ultimately that, if that's not passed on to consumers, it's just going to mean a margin squeeze for the companies, and then companies will have to deal with the margin squeeze somehow.
Well, this is part of the question. Is the labor market data poor enough, Neil? Is that impact enough to kind of just look through what we might get on inflation? Something like we saw in the ISM's data where you saw weak services, but prices paid was higher. Is the weakness in terms of the labor market enough to look through some of the inflationary threat and get those cuts from the Federal Reserve this year?
Well, I think so. That's why I've been advocating for cuts. I mean, to me, it's just nominal income growth. Nominal growth is slowing, right? I mean, so if you basically have a nominal environment of, barely 4% on a good day, then it's very difficult to see how companies can pass on price increases without finding increasing resistance to the volume of the goods that they're selling. So the risk is that if they end up deciding to pass the price increases on because they think the consumer is in much better shape than it actually is, then you'll see volumes of goods sold come down. So whatever goes into P, price, because of tariffs will come out of Q, quantity. That'll mean that real growth comes under significant pressure in the back half of the year.
Neil, you've also been so excellent talking about some of the AI impact, specifically on what it does to utilities and most people if they have to pay more money. I find this so fascinating because if this is happening at a time when there's a booming stock market alongside an AI boom, you're going to have normal people having to pay more for energy. Is this just like the most regressive economic event that we're about to witness, this AI boom?
Well, some have said that may well be. I will say this is not like the 90s tech boom, obviously. I mean, back then you had a bunch of companies that were trying to IPO. a lot of new companies, and they basically went out and hired a lot of people to show Wall Street, like, hey, we're good to IPO. And now what you have are more mature companies spending a lot of money on AI and not necessarily hiring all that much. I mean, ultimately, if investment spending is going to be good, it's going to ultimately lift productivity and real wages, which will help consumer spending. That hasn't really happened as of yet. So in the short run, I mean, you just have to follow the data. I mean, in the short run, there are some costs that are likely to go up as a result of what's happening, and energy is chief among them. So I think it's you can say, I mean, I think that it's, people have talked about this, but it is kind of crowding out certain areas of the economy, and consumer spending was very weak in the first half of the year, and AI actually added more to GDP growth than consumption in the first half of the year. It's a highly unusual situation.
I wanted to ask you about the risk of crowding out, Neil, but also the risk that the AI boom itself could prevent the Fed from lowering interest rates, given some of the forces that you're talking about and some of the inflationary growth that AI could have given its build out.
Well, I mean, look, there's clearly a wealth effect that's associated with AI. I mean, there's no doubt about that, because every time a company announces that they're spending more on AI, what happens? Their stock pops, and because the tech companies have such an outsized impact on the S&P, the benchmark indexes surge. So there is a wealth effect. But hey, guess what? Stock markets have been going up for a while. That hasn't stopped the housing market from being very, very weak. That hasn't stopped increasing slack in the jobs market. If you look at prime age employment rates, they're down. That hasn't stopped commercial real estate outside of data center construction from contracting. So if financial conditions are so loose, why are all these areas of the economy that are sensitive to monetary and financial conditions so weak? So I think there's a distinction here between financial market conditions and the financial conditions that people feel. I mean, if you look at even the Fed Senior Loan Officer Survey released earlier this week, on net, banks continue to report that they're tightening lending standards modestly on CNI loans, CRE loans, credit card loans, and they're also noting that demand for some of these things is also weakening. So I sort of reject the idea that just because stocks are high, financial conditions are easy. That's just one part of it, and again, it's not widely spread. I mean, in terms of the equity wealth growth.
Neil, it's a great point, and maybe one of many reasons why your name has been floated around in the Fed sweepstakes. Are we going to have to address you as Governor Dutta next time we talk?
I highly doubt that.
Neil, we should.
Yeah, I would tend to lean against the possibility, but stranger things have happened in time.
Neil, we'd all be so lucky if that is the fate that the cards dealt. Neil, thank you so much for joining us this morning. We really appreciate your time. Neil Dutta of Renaissance Macro. All right, let's get you some other top stories trending on the terminal this morning. U.S. Special Envoy Steve Witkoff has arrived in Moscow for talks with officials today. It comes as the White House is racing to beat another self-imposed deadline of August 8th to resolve Russia's war in Ukraine. Bloomberg sources say the Kremlin might offer Washington concessions that could include halting airstrikes in a bid to avert new economic penalties. Shares of Novo Nordisk declining after its sales showed the weakest growth in 4 years. The Danish drug maker is losing ground to Eli Lilly in the U.S. market for obesity medicines. Its revenue growth at 13% in the second quarter is the smallest gain since 2021. The company had posted a profit warning last week. And Glencore has canceled its plans to move its primary listing to New York, staying in London instead. CEO Gary Nagle said that Glencore was unlikely to have gotten into the S&P 500. A move would have been a blow to London, which has lost a quarter of its companies in the past decade. Coming up, $500 billion. That would be the valuation for OpenAI after a potential share sale. More on that Bloomberg scoop coming up next. Stay with us. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing. Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5. Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
You're watching Bloomberg Brief. I'm Danny Berger in New York. The AI sector continuing to heat up. Bloomberg has learned that OpenAI is in early talks for a secondary share sale that could value the company at around $500 billion. Let's bring back Peter Elstrom, our executive editor for Global Technology. Peter, it is some wild growth that continues over at OpenAI.
Yeah, very interesting story. Bloomberg exclusive, as you said. The company is looking at doing this secondary share sale where they will let some current and former employees sell some of their stock. The valuation that they're targeting is $500 billion. That's up from $300 billion just back in March, April of this year when they raised $40 billion in the record fundraising round that they had at the time. So it is a sign that certainly inside the company, they're anticipating that that valuation is going to climb quite sharply. We've seen that in the rest of the market too with some of the other startups. And it's a chance for them to reward some of these employees who are, in the middle of a very serious talent war right now, where other companies like Meta are aggressively trying to recruit them. It's a way to kind of keep some of those employees inside the house.
And meanwhile, we had earnings after the bell yesterday from AMD. We are looking at shares falling this morning. Peter, I just want to take a listen to what Lisa Su, the CEO over at AMD, said on that. Take a listen.
Earlier this quarter, we were notified by the Department of Commerce that it is moving forward with the review of our license applications to export MI308 to China. As our licenses are still under review, we are not including any MI308 revenue in our third quarter guidance.
Peter, to what degree did that overshadow the other results at AMD?
Well, that was the real concern from investors after the call yesterday. And as you mentioned, we'll have Lisa Su on later on. She can talk more about this. The numbers that AMD reported were actually very good. They beat estimates in revenue for their second quarter. They gave a forecast that was very strong, too. On top of that, now Lisa Su is saying this MI308, which they designed for the China market, hasn't gotten any licenses from Washington so far, so they don't want to count any revenues before they find out exactly whether they're going to be able to sell into that China market. But mostly, I would think that sounds like upside for the company. If they're able to sell some of those chips into China, that would add to the revenues that they've got. This is very similar to the situation with NVIDIA, where its H20 chip had been banned. Now it's allowed to be sold into China. But you need to get a license from Washington before you can actually make those sales. So NVIDIA and AMD, both competitors in this very hot AI chip market, need those licenses from Washington before they can sell into China. Of course, there's a caveat here. China has raised some concerns about whether they want to get those chips. Both the H20 chip, they focused on that really with NVIDIA, but it could affect AMD also. They've said they're not so crazy about getting these chips if they have the conditions that Washington is talking about, where you could track those chips, or there may be some sort of security issues with those chips.
Hey, Peter, really appreciate your coverage this morning. Peter Elstrom there on the chip makers. Now, shares of Disney are rising in the pre-market. Its subsidiary ESPN has announced that it will acquire the NFL network and other media assets in exchange for a 10% equity stake in ESPN. Disney also reports today. Joining us now is Geetha Raghunathan of Bloomberg Intelligence. Geetha, perhaps something that's been in the works for a while, but what is the logic behind this arrangement between the NFL network and ESPN?
Yeah, thanks, Danny. So this has been, as you just said, has been going on for a while. What this really does, and why this is so good strategically from Disney's standpoint, is it really kind of future-proofs ESPN's business. So obviously, ESPN is the dominant sports property, but there is so much of competition that it faces right now, not just from other media houses like, a Comcast, NBC, but also from the tech players. Think an Amazon, think Netflix, think Apple. And so really what this does is, the NFL obviously has media deals right now with all of these players, including Disney, including CBS, Fox, but they do have this, opt-out clause that is this huge overhang, which allows them to get out of their deals after the 2029-2030 season. What this really does is it ensures that ESPN, will probably have, first pick, or it definitely protects their rights in the event that the NFL decides to opt out of those deals with any of their other media partners. I think it's a really good way for Disney to definitely future-proof their business with one of the most well-known and the most popular franchises in terms of sports.
And all of that ahead of their results before the market opened, Geetha. What are you looking for there?
Yes, I think one of the big things, there's definitely been a turn in sentiment, Danny. So, the big things I think that we are definitely looking for are the park segments. So there's been some concern about obviously macro fears, but I think the bigger concern was the opening of Comcast Universal's Epic Universe in Florida, and whether that would have any adverse impact on, Disney theme park attendance. I think it has been much less than feared. I think if there was any decline in attendance, I think it was very, very modest. Generally, what we've heard is that, it's been more additive. More people have actually come into Florida, and it's actually been good for Disney parks. So we're expecting to see strong operating income growth in the parks, high single digits for sure. And then the other big thing has obviously been the streaming business. And, this is the narrative going around all over in the media industry, which is the emphasis on streaming profitability. And we expect Disney to outperform there as well, especially now that they have integrated Hulu, or they completely own Hulu after purchasing the stake from Comcast.
Geetha, really looking forward to hearing you break down the earnings once we get them. Geetha Raghunathan of Bloomberg Intelligence. Again, those come before the bell. Now, here's what else we're looking out for today. Again, we'll get Disney results, but also McDonald's and Uber. Then Fed speak coming from Governor Cook and President Collins and Daley throughout the afternoon. And on the official White House schedule, President Trump is expected to make an announcement at 4:30 p.m. Eastern time from the Oval Office. No further details have been noted, but he said that this week he would announce everything from the Fed pick to the BLS chief. Will we get that? All right, a quick check on markets. As we head to the end of the hour, S&P 500 futures are higher. Higher NYMEX crude with Trump threatening secondary sanctions on buyers of Russian oil. Is that part of what's sending yields higher this morning, too, by 2.5 basis points? 423.55 is where your 10-year yield stands this morning after ISM services were weak with higher prices paid. All right, that's it for Bloomberg Brief Surveillance. We'll take things here, and you're watching Bloomberg TV.
much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Leadership is clearly still coming from the top.
Markets are showing historically high levels of concentration.
It's all about tech earnings. All eyes are on tech.
There's a lot of high expectations in big tech.
At the end of the day, what's going to matter for this equity market is the earnings growth.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance on this August Wednesday. John still cruising around the Norwegian fjords. Anne-Marie and I are holding down the fort. A huge week of S&P 500 earnings grinding on Uber, McDonald's, and Disney all on deck. As traders show little patience for any sign of uncertainty or weakness. U.S. economic data building on this, showing just a hint of stagflation. And President Trump ratcheting up tariff threats with his eye on India, pharmaceuticals, and the chip sector. Traders are rewarding companies for having certainty, but the policy backdrop, Anne-Marie, is getting just a bit more uncertain at the moment.
Absolutely. Whether it's you looking at earnings like AMD, as you mentioned, or the ISM services data yesterday, what you see is the policy uncertainty now baking into the earnings. AMD, they basically can't answer a question on when they're going to start to put chips back into China that they had to take out and not send anymore because of the basically export controls from Washington and the reversal of that policy, or ISM services, some of that tariff uncertainty, even bleeding into services sector, which should be immune to that. You could see the policy uncertainty taking shape. What's so interesting, Lisa, is that this is just the uncertainty of the tariffs, not the actual high tariffs rates which we're going to get Thursday.
Well, this is the reason why I think the ISM services data spooked a lot of people. This idea that a lot of people have shrugged off the ramifications, saying artificial intelligence, the natural strength of the U.S. consumer, could power through anything that we get from tariffs or the uncertainty of the economic climate. The fact that services stagnated on the headline number and that the employment component fell and that the inflationary inputs really rose to some of the highest levels since 2022, raised another potential risk that traders are grappling with.
Right, and this is the Fed's conundrum, according to Kevin Krice. In a nutshell, he says this is their problem. Essentially, when you look at what's happening with ISM services, this is stagflationary outcome. All of this is happening at a time when the president is also saying he is prepared to name a name to go to the Fed, whether that person is going to be a short-term name just to get through to what was supposed to be the end of Kugler's term, or someone they're actually thinking that could leave the Federal Reserve when Fed Chair Jay Powell's chairmanship ends.
Yeah, there's also this question about how much more uncertainty is going to be baked in when it comes to future tariffs. We've heard about India. We've talked about that extensively. Yesterday, raising the specter of pharmaceutical tariffs coming on, albeit small at first and then building. But chip sector, really going after that area. How much do we really have a sense of what the contours of trade policy really look like under President Trump.
Well, we do know when it comes to reciprocal tariff rates, 10, 15% minimum for all of these countries. And some countries are still trying to, as Jamison Greer, the USTR representative, said, Ambassador Greer, trying to manifest the last-minute deal. And I think we've seen that overnight with the Swiss president coming to Washington without an actual formal invite. But then it's the sectoral tariffs that could potentially bite. And they've been doing these 232 investigations. I'm actually surprised we haven't seen them just yet, probably because they're still trying to deal with the reciprocal tariffs. But this is going to be things like semiconductors, pharmaceutical space, and even other industries that this administration say is critical and more manufacturing needs to be done in the United States.
Yeah, right now you're seeing stocks trying to bounce back after 6 of 7 days in the red to close the day. And this really is notable after reaching record highs, not led by big tech. Why? AMD, we'll be getting to that in just 1 second. Led by the Russell 2000, this goes directly to Fed bets as well as some of the more underpriced sectors, up 0.4% in pre-market trading. Coming up this hour, Macro Risk Advisors CEO Dean Kernot amid a slew of Wall Street warnings. Heidi Krebo-Rediker of the Council on Foreign Relations, with President Trump ramping up tariff threats on pharmaceuticals and chips, and frankly of HSBC with China market concerns weighing on AMD's earnings report. We begin this hour with our top story. AMD earnings overshadowed by uncertainty in its China market. You can see those shares lower by about 6% in pre-market trading. Joining us now, Bloomberg's Peter Elstrom. They beat expectations. They even beat some of the forecasts. What went so wrong here?
Yeah, Lisa, this is a very good example of what you were talking about before. The expectations are so high in the AI sector that you really need blowout numbers all across the board to be able to satisfy investors at this point. As you mentioned, revenue was up quite sharply. It was up more than 30% for the quarter. They beat expectations in the second quarter. They gave a forecast of $8.7 million in the third quarter. It all sounded good, but Lisa Su, the CEO, said they don't know exactly when they're going to be able to sell this chip you were referring to earlier, the MI308, into the China market. This is a chip that they used to be able to sell. Now they need to be able to get licenses from Washington to be able to sell that chip. Lisa said that they don't have any licenses so far. They're not exactly sure when they're going to be able to get them, and they don't want to count any of that revenue in the third quarter or count on getting that revenue until they get those licenses. So it sounds like mostly upside for the company if they're able to get some licenses and then sell those chips. But that uncertainty is really weighing on investors' mentality now and on the share price.
Peter Elstrom, thank you so much. And it really is this incredible irony that everyone is looking for certainty as we look at more policy uncertainty ahead. Joining us now to continue the conversation, Macro Risk Advisors CEO Dean Kernot of Wall Street. Dean, I'm just curious, Wall Street analysts keep warning traders to look out for the tariff-induced slowdown. We keep talking about that. We saw what happened with AMD. Can you square the uncertainty that's baked into policy with the certainty that traders are looking for from companies?
Right. So if we go back a couple of months when we were amidst the tariff tantrum, as some people have called it, those bad early days of April where the VIX got to the 50s and you had a lot of unwelcome movements in asset prices. I think that was the shock of understanding that Trump's, the foray into tariffs was going to be more substantial than folks by any stretch thought it was going to be. A little bit of seasoning of that. Now we're at, kind of 18%. And so now the question is, okay, what next, right? What are the ultimate implications from a growth and inflation standpoint for tariffs? Meaning the market shock is over. But like monetary policy, I'd just suggest that tariffs we have to think about in terms of, as they say, long and variable lags. We really don't know. We don't know if they're going to hit now, are they going to hit later? Are the impacts more on the price and inflation side? Are they more on the growth side? Are they a little bit of both? You've been talking a little bit about stagflationary impulse. And then, of course, ultimately the dance between markets and the Fed. Powell was pretty resolute in saying he needs more time. The market's already gotten to that full cut post that bad data on Friday. And so I think it's going to be super interesting, I think, to listen to Jackson Hole, for example, to see, if he really starts to, sort of tell the markets, hey, we're going to go in September, and the extent to which that cycle gets underway.
Before we get to actually the policy or potentially a Fed response, I want to talk about market technicals, since you're so good at looking at volatility and understanding hedging risk and opportunity. I'm noting that the VIX is pretty low. It's not showing the volatility in policy, but I am noting that the after earnings moves in a lot of names have been incredibly large. I'm looking yesterday, AMD down 6% on what? A slight disappointment on the forecast because it didn't beat enough. We saw a similar kind of move in some of the other big tech. Supermicro computers also down by a significant amount. What's the message in that?
Yeah, that's a super interesting trend, and that's something that's been occurring for the last, I would say, decade, which is clearly you've got this special day 4 times a year. It's called earnings. And the realized vol of a stock on earnings day is going to be 3 to 5 times that of a non-earnings day, except that premium is going up. So what you're noticing is happening. It's been happening for a while. What are the implications for that? I think, number one, it makes hedging harder when you've got a burst of movement on a specific day. You know, everything's positioned into that number. And as you're saying, the number didn't seem bad. However, it's very easy to disappoint when maybe crowding in of positioning gets to a certain level. And so, you know, I think that's something we have to be very mindful of, which is just this crowding, especially in things like supercap tech. Of course, it's been, you know, the juggernaut that leads the market higher. As you sort of step back and think about the market risk as a whole, there's so much riding on this CapEx AI story, you know, embedded in supercap tech that, again, these are the things I think about from a risk management standpoint. And it does become hard when you get these big, you know, one-off 10% type moves in earnings days.
But in a morning like today, would you want to be buying the dip of AMD?
You know, I don't know enough about the stock. I would say for me, when I step back and I look at the market dynamics, and I just think about, you know, the economy, the level of uncertainty in markets, and then the behavior of asset prices, there are times when there is just a disconnect. And I'd say that you can make the case right now that there is a disconnect between the low level of realized volatility in markets, which has been extraordinarily low. The triple Q had a realized volatility of 8% over the last month until Friday. Of course, that popped it up a little bit. And so as Lisa says, the VIX is low. It is low nominally, but it's not that low relative to the movements. The movements are very small. It makes hedging complicated when there's this big spread between the implied volatility of the VIX and then the low levels of movement in the markets. And then just from an uncertainty standpoint, I just step back and I just try to think about the derailers. What are the things that can go wrong? Again, you know, the tech AI spending is the juggernaut that's empowering this market higher, but the chaos of tariffs and just the start-stop, the on-again, off-again, the broadsides on the Fed, I think, are very damaging to the backdrop for markets. And of course, the firing of the BLS secretary, I don't think that was a very good thing to do either.
So how do you hedge in a Trump world?
Yeah, so I try to keep it as simple as possible. I love acronyms, and I've gotten to know ChatGPT. I've been ChatGPTing acronyms. And so I've got an acronym for surveillance, so maybe I can come back to that. Believe it or not, surveillance is an acronym. But the GOAT portfolio for me is great opportunities and threats. Okay, stay long the S&P. It's the most unbelievable benchmark the world's ever seen. It's almost impossible to beat. I won't try. But I do like hedging. And I think owning some very simple, what they call put spreads on the S&P, it's a really simple insurance strategy. You buy an out-of-the-money put, you sell a further out-of-the-money put to reduce the cost a little bit, and it's going to get you some downside protection. It would have been a nice thing to have in your back pocket through April. And then I've got two, what I just call FOMO diversifiers, gold and Bitcoin. I'm not Michael Saylor. I don't believe in all the hype. I do believe that Bitcoin is an asset that's different, and it has this characteristic where it can rise fast, and so it can get more volatile on the way up. And then gold, you know, is different than Bitcoin. They call it digital gold and gold, but gold is clearly long the idea that Fed independence is going to be compromised. If we look at the two days where that got heated, it was in April and then about 2 weeks ago, Gold was up about 2% on both of those days. So I do think you need these asset diversifiers, or the S&P diversifiers as well, along with some basic hedges.
If you want more on this, the After Hours special, Speaking in Acronyms with ChatGPT, will be coming to a podcast provider near you. So what's the acronym?
Okay, are you ready?
I don't know if I am, but maybe go ahead.
Surveillance, systematic uncovering of risk through vigilant examination, information, liquidity, leverage, activity, news flow, cross currents, and economics.
Love it.
And that took 1 second to generate.
Absolutely riveting and memorable. Thank you so much, Dean Kernan of Macro Risk Advisors. Thank you. I can't say I'm going to be able to repeat that, Emery. Can you repeat any of it?
No.
Systematic risk.
Economics.
That's exactly, something like that. Dean, thank you for that. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Good morning, Lisa. Swiss President Karine Keller-Sutter will meet with Secretary of State Marco Rubio on her emergency trip to lower the U.S.'s 39% tariff on Switzerland. The meeting is scheduled for this morning in Washington, but the Secretary of State's department does not lead negotiations for bilateral deals. It remains unclear if she will get to meet with President Donald Trump. Meanwhile, AMD shares are falling in the pre-market, down 6% after its earnings mostly beat expectations, but uncertainty in its China business is weighing on investor sentiment. The chipmaker declined to predict AI processor sales in China, as it said its licenses are still under review. And sticking with chips, 2 Chinese nationals were arrested on charges that they sent tens of millions of dollars worth of advanced NVIDIA chips to China in violation of export controls. The defendants allegedly used a company based in California to export the tech without getting government licenses. They could face as much as 20 years in prison. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, ramping up Trump's tariff blitz.
Do you still plan to follow through on your threat to impose 100% tariffs on all countries that purchase Russian energy, including China?
Well, I never set a percentage, but we'll be doing quite a bit of that. We'll see what happens over the next fairly short period of time. But we'll see what happens.
Heidi Krieber-Rediker of the Council of Foreign Relations joining us next as we do watch Steve Witkoff over in Russia today. This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Good morning. Welcome back. Trying to bounce a little bit after yesterday, losing some steam. We have been losing some steam after reaching record highs, with 6 of the past 7 trading days seeing losses at the close. Today, trying to break that trend, up about 0.25% on the S&P. A bit of dollar weakness. Euro rising to 116 versus the greenback, and you could see yields climbing just a touch more, up 2 basis points ahead of that 10-year auction later today at 1 p.m. Eastern. 4.23% on that 10-year yield, and you can look for that $42 billion auction at a auction site near you. Under surveillance this morning, ramping up Trump's tariff blitz.
Do you still plan to follow through on your threat to impose 100% tariffs on all countries that purchase Russian energy, including China?
Well, I never set a percentage, but we'll be doing quite a bit of that. We'll see what happens over the next fairly short period of time. But we'll see what happens. We're taking in trillions, not billions, trillions and trillions of dollars from other countries who, for years, took advantage of us. They took advantage of the United States like we were children, and that's not happening anymore.
Here's the latest. President Donald Trump touting the substantial revenue stream from his tariffs. The president also pledging to increase tariffs on countries buying energy from Russia and introduce levies on chips and pharmaceutical imports, quote, within the next week or so. Bloomberg's Tyler Kendall joins us now. Tyler, a lot of moving pieces. What's got your attention for the day ahead, in particular ahead of that 4:30 p.m. announcement?
Yeah, hey, Lisa, good morning. Well, it is clear that there is still ongoing uncertainty, but perhaps we got the most clarity yesterday on how those pharmaceutical tariffs are ultimately going to be structured, with President Trump saying that they will start at a lower rate and then get higher over time. He said after a year to a year and a half, they could reach 150%, with the end goal being 250%. And the idea here is that it's going to take time to reshore manufacturing and supply chains. And perhaps this would provide a little bit of a buffer, because we have to keep in mind, as we wait for these sector-specific tariffs, those Section 232 investigations that precede them look into the entire supply chain, which ultimately means that we could see levies on the finished pharmaceutical product, but it could also mean that there could be levies on the ingredients that go into them. So there are going to be some pretty broad-based impacts that we're bracing for. And as we wait for an announcement on those sector-specific tariffs, we're also waiting to see if we could see any sort of last-minute deals clinched for these countries ahead of Thursday's deadline for the new tariff rates to go into effect. Of course, that could mean Switzerland, which we know is trying to negotiate last minute, but also India, considering that you mentioned that President Trump is looking to impose those so-called secondary tariffs on those countries that import Russian energy supplies. But Lisa, at the end of the day, one thing is clear, that the U.S. tariff rate has trended significantly higher. The latest number from our analysts at Bloomberg Economics say that if tariffs go into effect tomorrow, as announced, the average U.S. tariff rate will reach 15.2%. That's up from 2.4% from before President Trump took office.
Bloomberg's Tyler Kendall, thank you so much, and welcome back to the show. Joining us now to continue the conversation, Heidi Kribo-Redeker of the Council on Foreign Relations. Heidi, I want to stay on the secondary tariff issue and this question of how much the United States is prioritizing some relationships over the other and trying to understand which conflicts get precedence. What is your understanding of this renewed push to get Russia to make some sort of deal?
So, I mean, we have not only the August 7th tariff deadline coming up, but we also have August 8th, where the deadline was set for Russia to really make some concessions and start on a path to a ceasefire. And in the meantime, you do have India as one of the largest buyers of Russian oil and petroleum products. So they are facing not only the tariffs from the reciprocal tariffs, but they also are facing this secondary tariff threat that Trump alluded to, and they are one of the largest buyers of Russian oil. And he mentioned in his in one of his Truth Socials that they are that they are responsible for not only buying the gas and oil, but they're also profiting from it. So the killing of Ukrainians happening, you actually see a change in the relationship and the approach to India. It's very surprising. We've worked for many, many years in the United States to actually bring India into the fold as a real anchor against to counter China in the Indo-Pacific. And this is really flipping that on its head. And we're looking at Trump now putting the conflict in Russia and India's funding of it really above, ironically, the important Indo-Pacific challenge with the geostrategic conflict with China. So I think that's just, it's an interesting aspect of this.
Heidi, sanctions don't always work. They tend to just create new markets. If Trump really wants to make sure that Putin doesn't have the profits from commodities, notably oil and gas, to continue funding this war, what steps does he have to take, given the work you've done in prior administrations when it comes to economic statecraft?
So the sanctioning of, I would take issue with the sanctioning of the shadow fleets. I think that has actually had some impact on Russia's ability to fund really in a vast market now of illicit oil that they're shipping around the world. And so if you have the sort of the 1-2 punch of actually the U.S. stepping up and continuing to sanction those shadow fleet carriers, the way that the UK and the EU have continued to do, then I think that actually does take a bite out of the profits that Russia reaps from selling these selling the commodities around the world and going after the buyers. So, really, India is in the crosshairs. China should be as well. It's the other large buyer. But India does not have the leverage that China has in terms of its rare earth magnets. And it's like it really does have that trump card over the United States when it comes to really negotiating anything these days.
Will the impact just be muted if the administration goes after some of these barrels going to India, but not the commodities going to China?
So it will be. I mean, obviously, in a world where you're going to actually impose secondary tariffs as opposed to secondary sanctions, you will have. I have a spider right there. Sorry. Yeah, great. So I think it would ideally be the going after both China and Russia on secondary tariffs, secondary sanctions, however you want to actually couch them. And the EU has taken an interesting step and has actually started to go after China as with secondary sanctions. So we'll see if those work. Obviously, with imposing sanctions, it's really the implementation. And so if you are the United States and you want sanctions to work and to bite, it is doing it together with other countries as well as really implementing them. If you're going to impose them, then you have to implement them. And that is where I think we've had a disconnect.
Heidi Kriebel-Redeker of the Council on Foreign Relations, thank you so much. And I know that spider really had a lot to say on secondary sanctions.
Well, maintaining composure, though, when you see a spider for some people could be a huge feat, especially at 6:25 in the morning.
Well, maintaining composure through a lot of volatility, I think, has been a theme. I am curious about what's going on with Switzerland. I know we talked a lot about India, but what's going on with Switzerland?
Well, they were not invited. The Swiss president was not invited by the White House, but they have managed to get this meeting with Secretary of State Marco Rubio. Potentially that is a first step in trying to, as Ambassador Greer said, manifest a deal in the final moments. Remember, a deal was on the table. This phone call between the Swiss president and Donald Trump, it did not go well.
Manifest a deal. It's sort of like manifest destiny. Coming up, we're going to be talking less about that, more about this. Frankly, of HSBC reacting to earnings from AMD, those losses just building through the morning. Plus, Danny Berger with your morning movers and a check of Disney ahead of earnings.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Trying to start the morning on a green foot, looking at some gains after yesterday's losses. 6 of 7 trading sessions have ended in the red, just coming off some of the steam that had built up some of these new record highs on the heels of AI promise. Right now, you're not seeing that outperformance in the tech sector, largely driven by what we saw from AMD, but also from super microcomputing, as well as Snap coming out with some disappointing earnings. We can see right now the gains being led by the Russell 2000 up 0.4% in futures. 3 hours away from the cash open, here are your morning movers with Danny Berger. Danny.
Hey, Lisa, let me show you some of the moves of what you mentioned. AMD being one of the biggest drags, down 6.2%. An upbeat forecast when it came to things like AI, but an issue for them, one, they've run up a lot, some 44% so far this year, and part of that run-up has been baking in the idea that they would be able to return sales to China, though Julie Su, the CEO, saying on the call that she couldn't predict when that would return, and the U.S. is still looking at their licenses, so disappointment there. For super microcomputer, the disappointment was a cut to their forecast. It really just shows how the AI servers and the pricing for these big centers has been under pressure, so those shares falling a whopping 16.33%. Meanwhile, Disney, we're going to get their earnings, should be coming in this hour. They usually report around 6:40 a.m. Shares, though, advancing ahead of that 3.6%, an announcement from them that they will be deepening the ties between ESPN and NFL Media, buying them out. NFL Media gets a 10% stake. They also announced a new streaming service just called ESPN. It will include Hulu. It will include Disney Plus. We also have the pricing on that. It starts at $30 a month and then goes to $36 a month, by far the most expensive. Just for a reference point, Netflix is $25 a month, Lisa.
Yeah, it's getting expensive, Danny. It's sort of this interesting bundling of costs that is getting to be more and more than cable. We're going to be speaking more about this with respect to Disney, what exactly they're doing with ESPN and NFL. And you asked a great question, which is this sort of the precursor to spinning it off? Or is this a solution to keep your hands in the revenue pot while still getting an infusion of cash?
Right, because we do know that they are struggling on the linear TV front, but potentially this would be a first step if you want to just take it separate. NFL, ESPN, seems like they can go their own way.
Well, Rich Greenfield will be joining us later to discuss. On our radar this morning, President Trump vowing to ramp up tariffs for countries buying Russian energy, saying levies on chips and pharmaceuticals will be announced soon. Meanwhile, the Swiss president arriving in Washington without meetings after being hit with 39% tariffs. You put it all together, there seems to be this sort of drumbeat to tomorrow when we have this deadline. Not necessarily so much clarity on where the emphasis is. What's got your attention in terms of what the priority is heading into tomorrow?
Well, what got my attention is that we actually have the Border Patrol updating their computers for the new tariff rates. So all that uncertainty actually comes into play with higher tariff rates at 12:01 a.m. Thursday. So less than 24 hours. And you have this deal with Swiss that I find interesting because they had a negotiated text, per my understanding. Ambassador Greer told us last week that was not accurate. It was overstated, and nothing is agreed until everything is agreed. But this phone call clearly didn't go well between President Trump and the Swiss president. So she decided to get on a plane, which actually a lot of Swiss executives wanted her to do. Like the Swatch CEO said, you should just get to Washington. She wasn't officially invited, but she did manage to get a meeting today with Marco Rubio. So I think the readout from that meeting will be very telling. Can they potentially get something done before midnight?
Did she bring a watch? That's what a lot of people want to know.
What kind of watch? Is it a Swatch?
Exactly.
Is it a Tech? Is it a Rolex?
Burning minds of curiosity want to know. AMD shares falling in early trading, concerns over sales in China overshadowing what was otherwise a really strong earnings report. The chipmaker declining to predict sales of its AI processor in the country, with its CEO, Lisa Su, saying its license sales still under review. Those shares down 6.3%, even with updated forecasts that exceeded expectations.
Yeah, they're adding an extra $300 million in the third quarter than analysts were expecting, but still something has spooked the market. And it likely could be what's going on with China. She was asked constantly on this call about the MI308 chip. This chip that they were selling to China, in April, export controls came on. They no longer could sell, and they still at this moment are not selling into China. They had a write-down when it came to this chip. And analysts just want to know, when are you going to get back into the Chinese market? I think it shows just how much that policy uncertainty is hitting earnings, because they couldn't forecast even when they're going to get the licenses back. And this is all analysts really cared about on this call.
Really, it seems like analysts and traders want Teflon. And Teflon can be found in artificial intelligence. It can be found in the promise and hopes and dreams of exponential growth ahead with the transformation of our workforce, as well as the way that we operate factories. OpenAI is that name. It is in early discussions to launch a major secondary stock sale that could value the artificial intelligence company at around $500 billion. Just move over the $1 trillion valuation companies. This one's on the way. Sources telling us here at Bloomberg that the deal would raise OpenAI's on-paper price tag by roughly 2/3, going from $300 billion in its current valuation to $500 billion. It just shows what a behemoth and how quickly this one really has risen.
But I wonder if they have ulterior motives. So basically, you have Meta going out there trying to Trojan horse when it comes to Apple, OpenAI, get the best talent and bring them to Meta. By doing this, can OpenAI incentivize staff to stay on board? Give them actually some equity and have this share sale? Could they actually say this is a way we can retain talent?
Yeah, basically, here's your $100 million payout as well. You get a $100 million payout. Turning back to AMD and maybe $100 million payouts, frankly, if HSBC has a buy rating on the stock and a price target of $200 from the current $163, noting a bullish AI tone and need for higher conviction to drive earnings upside. Frank joins us now for more. Frank, thank you so much for being with us. How frustrating is it to get the fundamental story right and the price action wrong?
Yeah, no, that's a good question. I think when you think about this, though, it was just really about the conviction that the management needed to give people. We had a really strong run-up into results. So I think going into these results, people were looking not only for a good number, but something tangible for analysts to be able to raise their numbers significantly after these results. And I don't think we got that. So I think that was why the shares didn't react so well. And I think the other point was China as well. There was a lot of expectations built into that the MI308 would come back, but it also shows you the complexities of the China-U.S. relationship. So I think now people are going to have to take a step back and look at whether or not how quickly these licenses can come and how quickly these revenues can come. But again, I think the market is over-focusing a bit on it, because if you look at the fundamentals, there's a lot of growth still in the hyperscalers. That's more than enough to go around to drive their growth.
So are investors just sort of looking for certainty where there is none? Are the outperformers right now just giving false promises of hope? Or are you saying that essentially there are some companies that are more fortified against some of these uncertainties and are getting rewarded for that, and these others are sort of in a wait-and-see mode from a stock performance standpoint?
Yeah, so I think, the China element certainly has become a big part of the narrative this year, not only for AMD, but also for NVIDIA. So I think that has complicated the AI story a bit. In a way, I think, that the expectations are probably a bit more bullish on that. But we also believe, though, that you don't quite need the China story for this to play out. I mean, we still see very strong demand. They highlight on the call that the MI355 is doing very well, better than expected, and the pricing outlook is better. So we do think that it can continue to work, but I think the narrative has been a little bit too narrowly focused on the China part, and we've come to a realization that it's not going to be as easy for China revenues to come back in as people previously expected.
If we could sit on China for a second, why is it so much harder for AMD than NVIDIA?
Well, we haven't seen the NVIDIA numbers yet. So I guess, over the next month, we'll see how much the NVIDIA comes back from China. I think AMD did disappoint in the fact that they haven't started their revenues. We do expect, I think NVIDIA had more inventory on hand that they could probably ship out. You also saw that AMD had a lot of work in progress inventory. So that has to be resumed. So that's going to take a bit longer versus what we saw potentially for NVIDIA, which had already built up, finished good inventory.
But NVIDIA has been, at least when it comes to the rhetoric, very bullish on getting back into China. Actually, we learned of the Trump administration's U-turn on these export controls because Jensen Huang was in Beijing and NVIDIA released a statement that they're going to put the H20s back in the Chinese market. So would you say they are months ahead of where AMD is?
I think like I said earlier, I think the way their product has been built out, they've already shipped out a lot more chips. So I think they are in that sense ahead. Whereas, AMD has admitted that they have a lot of these products are still in the building phase. So that's why it's going to take longer, as well as waiting for the licenses. So I think that's probably one of the reasons why you see, a stronger recovery for NVIDIA from the China part.
Frank, we hear a lot of noise about tariffs and ongoing discussions that are happening right now. The President of the United States has talked about semiconductor tariffs that could go on as soon as this week. How much is that already factored into a lot of the earnings? How much noise is there and how much signal?
Yeah, so I think, the semiconductor tariff is definitely something that has been on people's minds. I think for the most part, if you see a tariff that's less than 20%, I think the market will take that quite well, but it could be a lot higher than that. I think it's going to hit the actual chip makers like TSMC a lot harder. I think the companies that are leveraged to the hyperscaler growth then can pass on some of these prices increases more effectively as the hyperscalers have a lot bigger capex budgets and continue to raise them. So I think it's going to hit the consumer part of this semiconductor part a lot harder than it's going to be on the AI side.
Frank, what about some of these proposals to put tracking devices in certain high caliber chips, as well as some of the constraints without constraining the supply of chips? I'm really trying to wrap my head around what the administration is trying to do to keep the flow of commerce while clamping down on some of the more sensitive chips. Do you have a sense of how this is coming together, of what this proposal looks like?
I think it's still very difficult to have an idea of how it's going to end up. But remember, this also isn't entirely one-sided. We've had some chatter last week of China having some concerns about the NVIDIA chips as well, in terms of whether there's kind of a kill switch. So I think there's going to be a lot of back and forth when it comes to this. So I think for most people that look at the AI story, we should continue to look at outside China as an area of growth, right? I know the narrative continues to be on China, but if you look at, what's really doing well, basically, the AI companies, these chips are doing fine without the China market. I know people would like the China market, but if you take out the China market, these guys are still growing, and I think for the most part, still beating expectations.
Frank Lee of HSBC, thank you so much, as always, for your insights. Right now, we are getting some numbers from Disney. Anne-Marie, really interesting to see beats across the board. The earnings per share for the third quarter coming in at $1.61 versus the estimate of $1.46. You're looking at revenue that came in above expectations, or basically meeting expectations. A lot of positive, and yet what we're seeing right now is sort of a Okay, what have you done for me lately?
Right, Disney shares were actually much higher in pre-market based off that excitement yesterday when it came to the ESPN to buy the NFL media assets. What potentially is spooking, not spooking, but a little bit more of a concern, now it's only up 0.4%, is their third quarter sports revenue came in lighter than estimates were expecting. So it came in at $4.31 billion. Estimates was for $4.44 billion. What's interesting, Lisa, is that it's still a good report. It raised its full year profit forecast, but maybe just wasn't enough.
Yeah, and we're going to find out more. The call is in about an hour and 45 minutes. We'll be following this throughout the morning, as well as the other earnings reports that are due out any minute. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Donald Trump's special envoy, Steve Witkoff, has arrived in Moscow for high-stakes talks with Russia's President Vladimir Putin. The meeting comes just 2 days before the August 8th deadline that was set by President Trump for Russia to reach a truce with Ukraine or face potential sanctions. Meanwhile, here, President Trump has said he plans to make his decision on a replacement for outgoing Fed Governor Adriana Kugler this week. According to the president, his selection is down to 4 people, including former Fed Governor Kevin Warsh and NEC Director Kevin Hassett. And the Trump administration will end a government-wide program started by Elon Musk to summarize 5 workplace achievements from the last week. The Office of Personnel Management said it no longer plans to manage or utilize the process. Many agencies had already stopped requiring the weekly emails, but some were still sending it to the office. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. I'm still working on mine. It seems like that whole Doge program has kind of been fallowed a little bit.
Dismantled a little bit, especially when the first buddy left. Yeah. And that was a lot of excitement we saw from individuals, especially outside Washington and on Wall Street.
Read my emails, talked, woke up early. Up next, IPOs make a comeback.
I think it's fair to say that the markets are open for IPOs. What you're seeing with the reception of the companies that have come to market is that pent-up demand in the public market.
Kamran Ansari of Capital Ventures joining us next to talk about the state of play for companies looking to go public. This is Bloomberg.
Said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Seeing a bit of gains this morning after yesterday's losses. There has been a bit of a cooling off in some of the activity that we've seen in equities as a number of traders assess weaker than expected economic data, as well as reports that just aren't able to meet expectations even when they do seem to beat expectations. Right now, S&P futures up about 0.2%, seeing a bit of dollar weakness, 116 on euro versus dollar. Yields climbing, creeping higher, 10-year yields 4.23%. ahead of a $42 billion auction of 10-year notes later today. Under surveillance this morning, IPOs making a comeback.
I think it's fair to say that the markets are open for IPOs. What you're seeing with the reception of the companies that have come to market is that pent-up demand in the public markets. Now that there is more certainty around the geopolitical landscape, more certainty around the market and the trajectory of the market. That's why you're seeing these companies finally come to market.
Here's the latest. A rising number of private companies going public, buoyed by strong debuts from tech companies like Figma, as well as Circle. Kamran Ansari of Capital Ventures writing this. IPOs are starting to come back in the second half of 2025. Look for names that follow current trends. Kamran joins us now. Thank you so much for being with us. Names that follow current trends, is that code for watch tech companies come to the public market?
And not just tech, but within tech, you're seeing crypto companies in particular with Circle and eToro coming out. And I think you're going to see potentially folks like Kraken or Grayscale and some of these others follow suit, because that's been a trend that's really been developing as the Trump administration has come in. Has been more focus on kind of allowing crypto to kind of grow. But also, yes, broadly, more tech companies that have stayed private for years are now finally seeing the so-called IPO window open after kind of, I think 2-3 years of quiet time.
What does that mean? The IPO window opening, given the fact that the market has been very open, it's just that valuations haven't been what people have wanted them to be.
Exactly, and I think private companies can suffer from what I call valuation nostalgia, where you're thinking I used to be worth X and now I'm worth Y. So until you kind of have that moment where you realize, okay, we have to reset, and Klarna did that when they filed, Chime did that when they filed and came out. They have to figure out, okay, look, I may have been worth $25 billion before, like Chime was, but I came out at 10 to 12, and now I can grow from here. Because an IPO, it's like the old ad with bankruptcy. It's not an end; it's a new beginning. It's the start of a whole new life for you as a company to continue to grow from there. So then to get to that point, a lot of companies have to do a valuation reset.
What's changed recently? Because coming to 2025, everyone seemed very excited. They thought the policy backdrop in Washington was going to benefit IPOs hitting the market, but then it was crickets.
Well, one of the things that happened is we thought so too. With the new administration coming in January, February, the tariffs all of a sudden put a freeze on the market because Klarna filed, they're about to come out, and then at the last minute they pulled in and said we're going to wait. And that was because of market volatility around February, March. So I think once you've had some of these trade deals happen and the tariff situation settled down, the market's gotten better overall. You're seeing companies think, okay, well, they've been ready to go. Like when I was at Pinterest, we had the documents sitting in this room, in the conference room. It wasn't like some mystery, like all our numbers are basically public at that point. So these companies are essentially ready. Many of them are, and they've been waiting for the right moment in terms of market receptivity. And I think we're kind of there now.
What other policy risks potentially could there be? Because Trump is still negotiating trade deals at this moment.
The lack of predictability is the big issue. So anything could happen, right? Tomorrow there could be another set of trade deals or tariffs announced that puts another freeze, and which is why these companies, the IPO window, as it were, is fragile, right? It's open, but it can close quickly. So I think when companies are ready, they want to get out, do the roadshow. And also, there are only certain times of the year when it makes sense to go public. You usually don't see a lot of listings, frankly, in July and August. So Figma coming out in July is a relatively unique phenomenon. So you see kind of companies coming out in kind of Q1 and in the spring, and then again, they'll come out kind of in the fall towards November, December. But I do think there's still risk, of course. Any kind of new economic policy, or if the interest rates continue to kind of stay stable or even increase, that would be a big issue for these companies.
That's where I wanted to hone in.
Yeah.
How much is this IPO cycle predicated on 2 rate cuts this year by the Fed?
I don't think it's necessarily predicated on that, but if that does not happen, or if that policy is reversed, or the market sees any inclination that there's not going to be a rate cut, or in a worst case scenario, rate increase might be on the horizon, that would put a bit of a freeze on it. But honestly, again, these companies I think have been ready to go. There are a number of names that I think we'll look at for the second half of 2025 that we can talk about, besides Grayscale and Kraken, that I think are going to be coming out.
Somebody who might be skeptical might say a lot of companies have been waiting for some sort of valuation that looks attractive, and suddenly they're getting attractive valuations. And if it's a seller's market, that means it's not exactly a buyer's market at a time when a number of Wall Street analysts have warned about bubbles, froth, especially in some of these areas that you mentioned. How can you determine whether they're just trying to time the peak, or whether this actually does represent a durable cycle that actually is coming from strength in the capital markets and not just, a frothy blow off top?
Yeah. Well, I think it's not just about the strength in the capital markets, but these companies, the numbers are strong. I mean, Figma's numbers are remarkable, right? It's a company with almost 90% gross margin, massive retention of their client base. And so with those kinds of numbers, it doesn't matter if the economy is good or bad, or the market's good or bad. I mean, that company is durable, right? So these companies are not going public just because it's a moment in time and they have kind of, smoke and mirrors type numbers. These are durable businesses that I think are going to last. But the real moment for me is, seeing all this discussion the last week about, the stock pop, now it's back down. The moment that you really figure out what these companies are worth is 6 months in, because that's when the lockup comes off and all the early investors and employees and founders can sell their stock. And you really see, well, what is this thing worth? Until then, it's all going to be kind of a little bit of a theater.
So year end, we'll have a better picture on what this really is worth.
This time in January.
So you're focused a lot, and the market's focused a lot on all these tech companies coming to market. What other potential IPOs could we see outside technology?
Sure. Look, I mean, until the most recent cycle, one of the best companies that had come out was Kava, the retail food business. So I think Skims is one that's been reported to come out. StubHub, which is obviously the ticket site, is one. Panera Bread, I saw. Liquid Death, the water business. So there are lots of companies that I think are great businesses outside of tech that also you're going to see them turn a list.
Kamran Ansari of Capital Ventures, thank you so much. Really great to have you on the show. And I can't get over the fact that someone puts a skull on water and then sells it for $2, and people are like, yes. But that's kind of where we're at.
I think it's because it's in a can, too. I think people like the fact that it's a can, yeah.
All right, well, all I know is we're looking at some earnings this morning. We did get Disney earnings, and just parsing through all of it, they actually did increase their forecast for the year. Their forecast beat expectations, topping estimates, seeing a full year earnings per share of $5.85 from the expectation of $5.77, not doing anything for those shares. People looking at a disappointment in the third quarter. And again, what have you done for me lately seems to be the theme for all of these stocks that are coming out and performing what seem to be pretty solid earnings.
Pretty solid earnings, but it just doesn't seem enough for some of these investors. Also, potentially what you see in Disney is just some profit taking, because shares were up higher based off the fact that they came out, they had this deal with ESPN and NFL's media rights, and maybe this morning some investors are thinking, I could take some profit.
Meanwhile, we're also getting Uber numbers, seeing gross bookings for the third quarter actually beating expectations, up to $49.75 billion versus the estimate of $47.6 billion. Those shares surging in the pre-market trading. Again, how the market responds gives you a sense of where we're coming from, let alone the expectations. Coming up next, we'll look through all of this and get some earnings from McDonald's. Stephen Auth of Federated Hermes, Michael Townsend of Charles Schwab, Anastasia Amoroso of Partners Group, and Joseph Briggs of Goldman Sachs. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Right now, the market is becoming more desensitized to tariffs.
The market has pretty much gone to sleep on the tariffs.
The markets would love to put the trade war behind them.
The continuing narrative throughout the fall is going to be trade policy uncertainty.
We're all holding our breath to wait and see how bad the trade disruptions will be.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. We're getting a slew of earnings this week. This morning, already getting reports from Uber, Disney, and just crossing McDonald's. You'll learn something from the numbers. You'll learn something else from the trading action and just how much there are very high expectations. Meanwhile, tariff threats abound with talks of India, talks of semiconductors, talks of pharmaceuticals all coming to the fore with the 4:30 p.m. meeting with President Trump. Anne-Marie, I have to say, this morning, the response from traders really notable to a number of different earnings reports. What have you done for me lately seems to be the theme.
I mean, we see a lot of uncertainty that's being baked in. Earlier this week, Lori Calvasina put out a note talking about the angst returns, and she said how a lot of that is deserved, and a lot of this is coming out not just from the numbers, but the corporate commentary. And I really was fascinated by AMD last night. Consistently asked the CEO, when are you going to go back to selling in China, given we've seen the export control reversal by this administration? And they couldn't give the market a date. They couldn't give it details on when they were going to re-enter that market with this chip. At the same time, they had a great report, but it just wasn't enough.
So this to me is fascinating. It seems like traders want certainty amid an uncertain backdrop. People don't want to hear the word uncertainty or risk. They want to hear we are confident we have a bulletproof business model. We saw this morning something similar from Disney actually coming out with a forecast that beat expectations, those shares lower. Uber coming out, those shares also lower in pre-market trading, even after they beat on the bookings and increased their forward look. All of these types of actions give you a sense of people getting concerned that maybe valuations have run too far, too fast.
Right, and they don't still have the policy certainty they're looking for. And it does feel like what you see in some of these market reactions is you see investors weighing the bad news more than the good news. So in all of these reports, there's some good news, there's some bad news. I'm just looking at Disney right now. They had some really good news, but still the market is honing in the fact that pay TV troubles, that is overshadowing park streaming, and the deal they came out with last night with NFL.
Yeah, the idea of a partnership between ESPN and NFL. We'll get into all of the deal specifics as well as the McDonald's earnings in just a moment, but this comes amid a slew of future threats, particularly in the semiconductor field, as well as, of course, pharmaceuticals in India, which is the secondary tariff issue. And I just wonder how much more we're going to get and how much is priced in. We were talking to Frank Lee of HSBC, and he said anything in the semiconductor space under 20% probably will be treated as a relief when it comes to the semiconductor stocks.
But potentially we might get more than that. And we do know that the president does like to anchor the conversation to the extreme. So you could see him come out with something much higher than 20%, but then maybe it will level out at something under that. Semiconductors, pharmaceuticals, these are still the sectoral tariffs, Lisa, we are still waiting on. And then there's two countries specifically today before midnight we're going to be focused on, and that's Switzerland and India.
Meanwhile, you are seeing a bit of a gain in futures this morning after yesterday's losses, and we've seen 6 of 7 days an inability for futures to close, actually stocks to close higher on any given trading session. We see the S&P up about 0.25%. The NASDAQ underperforming here with futures up about 0.1%, Russell 2000 outperforming. What we are expecting today is also a 10-year auction, $42 billion of notes to understand exactly what people's confidence is there. Coming up, do not miss this, Stephen Auth of Federated Hermes remaining optimistic on the economy. Michael Townsend of Charles Schwab as President Trump ramps up his tariff threats. And Joseph Briggs of Goldman Sachs on potential labor market disruption from AI, one of the hot topics for policymakers and companies alike. We begin this hour with stocks rebounding just a touch as traders digest the latest batch of earnings. Stephen Auth of Federated Hermes writing this: we remain optimistic. This season has been exceptionally positive, with earnings running 8% year over year and upward revisions running higher than usual. Stephen joins us now. Stephen, wonderful to see you. Thank you so much for coming back. You're right. Earnings have been surprising to the upside. Why are stock traders not necessarily impressed?
Lisa, could you repeat that again? You're right. I love that.
Okay, all right. You're right, Stephen. This sounds like a home squabble. Stephen, you're right. So carry on.
Lisa, these stocks have had big run. Like, look at Disney. It's almost doubled over the last year. A lot of these stocks have run into earnings. And so, you know, traders are taking profit. That's pretty normal, actually. And we tend not, obviously, we're too big to trade the day. We don't really do that. But we look at the longer-term picture, the next 12 months, we see a broad rotation out into everything else. Just starting to see it already. Disney's not like on our buy list per se, but it's one of those stocks that probably is going to participate in that rotation, right? It's relatively inexpensive. It's really been in a doghouse for a long time. It's starting to come to life. It's got a long way to go to get back to where it used to be 3-4 years ago.
So the numbers allow people who like to spin narratives to spin them in any which way they want to. And so it's kind of a field day for people who have lots of creativity and some time to do so. I am curious, if you do look at the earnings, it does look like any mention of uncertainty is punished at a time where there's a lot of uncertainty. And some of the economic data has pointed to a potential stagflationary type of mix that definitely surprised markets. So which is it? Are people responding to that and penalizing that? Have people recognized those risks in valuations?
Well, yeah, I mean, the overall market's really not that expensive. Once you take out the Mag 7, which are kind of special, exceptional companies globally, right? You take them out, the rest of the market's trading around 19, 20 times. We don't think that's an unreasonable level, and we think it's the rest of the market where there's value right now in the market. So, you know, I would call it's an environment where there's short-term uncertainty and long-term less uncertainty. I mean, if you look at the pattern of what's happening right now, as an example, when I was on a few months ago, we were talking about this. The soft data is signaling a slowdown. The hard data is still good. When is it going to catch up? The hard data, by virtue of the fact that it's hard, is rear-view mirror stuff. It's what the Fed uses, as an example. I call it the cracked rear-view mirror. We're in a news cycle here that's 24/7 now, more than ever. trying to make forecasts based on hard data is you're fighting yesterday's war. So the Fed is now coming around because the hard data is finally softening up. We've been screaming that they should be cutting way back in the spring. They're now going to do that. We're entering a cutting cycle. But the soft data is starting to turn. Look at things like air travel. Boom, it's spiking. The Dallas Fed's real-time economic indicators, it's up 100 basis points in the last month. You look at consumer sentiment surveys, up 10 points in the last couple of months. You got small business confidence indicators up 10% last couple of months. You look at the market and the industrials, the cyclicals are starting to lead. You know, we do a lot of IPOs at Federated Hermes, right? I'm teasing the guys in the office. I've become the office receptionist after 5 p.m. I mean, I got these companies all showing up.
But Stephen,
right? I mean, that market has really picked up. That's not a sign that confidence is falling over amongst the people that actually make decisions in the economy. So we see all the soft indicators picking here, most of them. And, you know, we're pretty optimistic, as you know. About
For all that good news, though, what's been pricing in is the uncertainty of tariffs. They're actually going to bite, and we're going to have an average tariff rate about 15 to 20%. This time last year, it was 2.5%.
Yeah, I think you got to check the math on that, because the actual, remember that a lot of the goods that come into the U.S. come through Canada and Mexico. The goods that come in there through USMCA are 0%. Mm-hmm. So when Trump talks about these massive tariffs on Canada and Mexico, he's talking about trade that they've brought across the border that doesn't conform with USMCA, which in the case of Europe, if they were doing that, they'd throw them out of the Union. So you've got to account for that zero part of the thing. The actual tariff rate on average right now, as we know it, is about 13%. We figure about half of that's going to be paid by the foreign importers. So you're looking at 15% of the economy's imports. Half of that is not going to be. You work out the math. It's about an 80 or 90 basis point price increase, probably spread over 6 months. There's all these other things that are decreasing in price: commodities, steel, oil, regulatory costs, taxes. Another way to think about what Trump is doing here is he's increasing a consumption tax, a pretty efficient one, by the way, because it's partly paid by foreigners. And he's using it to fund an investment tax reduction with all these accelerated. The multiplier on investment spending is multiples of what it is on consumption spending. So there's a kind of shift going on in the economy. I get the tariff thing is not that positive, but it's not as big of a deal. It's the one thing everyone can hang on to, so it's a good discussion point.
You mentioned the president a few times. He thinks you have great analysis, by the way, because I follow his Truth Social, and he has tweeted about you. Right now, he has what some would say undermined market credibility when it comes to hard data releases by firing the commissioner at the BLS, continually going after the Fed, and some are saying maybe it's going to be a very overtly political individual he'll put at the Fed. Do you think he's undermining market confidence?
A little bit. My advice to him, not that he takes my advice, but I don't think it's necessary to pound the Fed chair. As an example, on that case, I would just say, look, the Fed chair is a rear-view mirror-looking guy. He simply is going, stop listening to what he says he's going to do and just think about what he's likely to do. And we've been saying for a while he's going to start cutting in September. Now that the rear-view mirror is looking like it should, he will. On the labor secretary, one reason that storm has passed, and I don't necessarily agree with the pressure there either, but one reason that storm has passed is because the reality is, let's face it, I've heard you complain on the air about the labor numbers. They've been terrible.
They have been.
There needs to be an overhaul of that department.
Well, there's a hiring freeze right now.
If he had positioned it from that perspective, it probably would have not even been a news story. But at the end of the day, people are saying, yeah, the labor numbers aren't really good. Yeah, the Fed, no, they've been a lot of bad calls here. So he's not completely off base with the pressure in these areas.
How concerned are you about inflation, given the fact that right now you look at backward-looking numbers that might constrain the economy, but the forward look is pretty rosy at a time where you do have some input pressures with prices?
Yeah. But the Fed's not looking forward, so I think they're going to cut.
So that's fine.
And the other thing is that, you know, I look at the actual ongoing inflation rate here. It's kind of stabilizing around 2.5, well, it's right at 2.6, 2.7, but it's going to stabilize by next year, 2.5. That's really the Fed's informal target. I think they figured out a long time ago 2 is too close to 0 for government work. So assuming that, right, shouldn't the Fed funds rate, if you look at history, should be about 50 basis points above that. That's 3. So we have Fed funds going to 3 over the next 18 months. I think that's where we're heading here. And so I would just say I got 6 cuts coming against a backdrop that's pretty good. We have the Fed cutting not because they need to, but because they can. And now that they think they need to, they'll start doing it. And once they realize they can, they will.
Stephen Oth, he is the receptionist at Federated Armies, where he offers lots of pigs in a blanket. Do you have your, you know, your different snacks?
Water, tea,
yeah, exactly. Stephen Oth, the CIO of Equities at Federated Armies. Thank you. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahaira and Anand. Yahaira.
Hi, Lisa. We have a flurry of earnings to get through. McDonald's shares are rising 3% after beating across the board in their second quarter results. Global sales rose nearly 4% year over year, ending 4 quarters of declining or tepid growth. The results suggest the company's focus on pop culture collabs and budget meals are helping to offset diners' concerns over the economy. Meanwhile, shares of Uber are falling nearly 3% in the pre-market after despite forecasting higher than expected gross bookings for the third quarter. It is now calling for a 17% rise in bookings from the same period last year. The company also beat estimates on total trips in the second quarter and announced a plan to buy back up to an additional $20 billion in shares. And Disney shares are also falling 1.5% as its revenue from TV networks and sports programming fell short of street expectations, overshadowing strong performance in its theme parks and streaming business. Disney raised its full-year profit forecast, and CEO Bob Iger said Disney is taking major steps in streaming with its new ESPN service and plans with the NFL. The market is playing tough this morning. That's your Bloomberg Brief. Lisa?
Thank you so much, Ira. We also got earnings from McDonald's, and they also beat expectations. Comp sales in the second quarter coming in at 3.8% versus the estimate of 2.5%, really driven by their global business and an expansion there. The shares performing a little bit better, but it is early days. Up almost 3%, 2.75%. Up next, 100% tariffs.
Do you still plan to follow through on your threat to impose 100% tariffs on all countries that purchase Russian energy, including China?
Well, I never said a percentage, but we'll be doing quite a bit of that. We'll see what happens over the next fairly short period of time. But we'll see what happens.
Michael Townsend of Charles Schwab joining us next. This is Bloomberg Surveillance.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Coming back with another day of potential gains. We've seen this movie before. Right now, getting higher on futures, up almost 0.25% on the S&P. What you're seeing is dollar weakness beginning once again, 116 on the euro-dollar cross. Yields bleeding higher, up 3 basis points now on the 10-year. 4.24% rounded up ahead of that auction later today. We are getting a slew of earnings, a lot of them beating the actual trading response, not exactly consistent. What we are hearing about, though, from the likes of McDonald's is an increase in technology spending, something that we will be talking about more going forward. Under surveillance this morning, 100% tariffs.
Do you still plan to follow through on your threat to impose 100% tariffs on all countries that purchase Russian energy, including China?
Well, I never set a percentage, but we'll be doing quite a bit of that. We'll see what happens over the next fairly short period of time. But we'll see what happens. We're taking in trillions, not billions, trillions and trillions of dollars from other countries who, for years, took advantage of us. They took advantage of the United States like we were children. And that's not happening anymore.
Here's the latest. President Donald Trump touting the substantial revenue stream from his tariffs. The president also pledging to increase tariffs on countries buying energy from Russia and introduce levies on chips and pharmaceutical imports, quote, within the next week or so. Bloomberg's Tyler Kendall joins us now. Tyler, how much are we understanding what the red lines are for President Trump to put these really more punitive tariffs on Russia?
Well, Lisa, that's one of the key questions that we're going to be looking into here, considering that President Trump did say within the next 24 hours, India, for example, could see a heightened tariff rate over its purchase of Russian energy supply. So perhaps we'll get an update later today, as the White House really does appear to be doubling down on its threat of these so-called secondary tariffs on those trading partners that import Russian oil, for example, which means that China could also be facing some higher levies. Now, the president had previously said that this rate could reach up to 100%, but as you heard him there, he sort of downplayed that idea, said he had never named that rate. So that could indicate to us that that tariff could actually come in a little bit lower than expected. But if we look at just India, for example, data shows us that India makes up about 37% of Russian oil exports, and those barrels are likely just to be diverted elsewhere. So our analysts at Bloomberg Economics say that this is really about gaining leverage in the trade talks more than anything else. But still, we know that Russia is trying to stave off any sort of economic penalty here, and our reporting indicates that there could be a few concessions that are actually on the table to try to get ahead of it. People familiar do tell Bloomberg News that the Kremlin is considering floating a potential air truce in the fighting. Now, to be sure, the understanding is that Russian President Vladimir Putin is not going to be in favor of a full ceasefire, but perhaps an air ceasefire could be on the table to try to appease or get some sort of concession from President Trump. Lisa, of course, this comes against the backdrop that Special Envoy Steve Witkoff is negotiating with Russian President Vladimir Putin. We can confirm that he is in Moscow and that those negotiations are underway.
Tyler Kendall, thank you so much for that reporting. Joining us now is Michael Townsend of Charles Schwab. Michael, tomorrow is the deadline day. It is August 7th when a lot of these tariffs do go into effect. What exactly will happen tomorrow?
Well, I think the market has already anticipated that this is going to take place, and I think what's tough for the market right now is every day seems to have 2, 3, 5 announcements about tariffs that may happen later, some number that may come up. We heard just now that the pharmaceuticals and chip tariffs, which have been threatened for a while, may come next week. We've got this idea that there'll be increased tariffs on countries dealing with Russia. So, I think the market is just trying to tread water and sort of ride this wave as these announcements continue to come, and we'll see how it plays out. But in terms of tomorrow, I don't think there's a huge market reaction, just given the lead up that the preparation time that's been already out there.
Michael, do you think Switzerland's able to get a deal done before midnight?
Yeah, it's interesting. The Switzerland thing was a little bit of a head scratcher with the 39% tariff on imports from Switzerland. And they're in a little bit of a tough spot because, of course, they already don't have very many barriers that they can lower. So it'll be interesting to see what they come up with. I think they're really eager. Obviously, there's a delegation that's traveled here to try to make a deal. So we'll all be watching to see what happens.
When it comes to other announcements, we're waiting for the president. He says we're going to get the new name of the BLS commissioner as well as who will fill Kugler's seat. Do you think the administration is looking at someone who could be elevated to the chair position, or do they want someone just to fill her term out basically till January?
Yeah, I think this is an odd situation. And of course, the key here is that Chair Powell, his term as chair ends in May of 2026, but his term as a regular governor continues on for a couple more years. Now, it would be historically really unusual for him to step down as chair and stay on as a governor, but he's been pretty evasive in answering that on whether he's going to do that. And I think that's why this sets up this kind of tricky situation with Kugler's seat, because there's a possibility that there will be no vacancy later on when Powell's term comes ending as chair. So I think the White House has to determine whether they want to put in someone to that seat who could be elevated to chair. Of course, that person would then have to go through a second confirmation hearing at the Senate. So it's a little bit of an unusual situation, and I don't think the White House has decided yet exactly how they want to approach it.
In the policy roulette that we have this week, another one has been the Bureau of Labor Statistics and exactly how things get reshuffled there, who becomes the executive director of that organization, given its importance to the entire market. There have been a lot of criticisms about how this data was collected, the integrity of the data, the fact that there haven't been as many people and the response rate's been coming down. Have you gotten a sense from the administration, anybody there, about what they plan to do to actually improve the integrity of the data versus just getting rid of the top person?
Yeah, Lisa, I think you've hit on the sort of two-headed dilemma that they have here. You know, they're going to have to replace the head of the BOS, but there's a much deeper issue that's been going on for a while. As you mentioned, the response rate has been gone down quite a bit, particularly since COVID. Really hasn't rebounded at all since COVID. So it was up in the 60+% response rate. Now we're in the low 40s. And I think that's a big factor. The staffing issue and the inability to hire and fill open positions. We saw earlier this summer that the BOS is reducing the number of cities that it's taking consideration of in its surveys. So I think there's some real honesty in there about the need to kind of look holistically at what the BOS is doing. I'm not sure firing the BOS head was necessarily the right way to go, but they're going to try to put someone in there who's going to really take a look at how this data is collected, and I think that would help give some more confidence to the data for the markets.
Michael Townsend of Charles Schwab, thank you so much for being with us as we try to parse through the landscape going forward. Look, this is going to be a serious question, and people can say it looked a little bit like shooting the messenger. That said, when you take a step back, there has been a lot of criticism and concern on Wall Street about how this data is collected. It puts a spotlight on trying to increase the ability to actually glean data in real time rather than after the fact.
When it comes to, though, the new BLS chief, Libby Cantrell of PIMCO had a great note out saying that it needs to be someone that's not overtly political, that does have market credibility, because actually it needs to get through committees in the Senate that have individuals that are not scared to speak out against Trump, like Senator Ron Paul. So it's going to have to be someone that is credible, not just for the market, but to make sure that it can get that Senate approval.
Yeah, coming up, we're going to be speaking more about that and squishmallows, which evidently Anne-Marie has become an expert in. Anastasia Amoroso of Partners Group on what she calls the long-awaited quarter of adjustment. Plus, Danny Berger with your morning movers, also Minecraft and how that is boosting Happy Meal sales. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Some heated discussion about Squishmallows and Labubus, as well as the Coca-Cola series Labubus, which we are not going to get into. Right now, we're seeing
They go for $110.
Evidently. I mean, who knew, right? Are you into that whole trend?
I think they're kind of ugly cute. I'm not going out and buying them, but if McDonald's did something with Happy Meal, maybe I'd go buy the Happy Meal to get the toy.
All right, well, this is the reason why we're talking about this to begin with, because McDonald's came out with their earnings, and Squishmallows and Minecraft-themed Happy Meals seem to really boost some of their activity. I think about when I was a child, I would have loved that. Anyway, moving on. Right now, futures are rising across the board, up 0.25% on the S&P and NASDAQ, up a bit more on the Russell 2000, 0.3%. 2 hours away from the cash open. Here are morning movers away from Squishmallows with Danny Berger.
I'm going to disappoint you, Lisa, because I am going to get to McDonald's, but let's not start there. Let's start with Disney. We got their earnings coming in, and it was a disappointment despite the fact that they did well with things like streaming and their parks business. Instead, it was their linear TV that disappointed, and shares falling 1.2%. They also announced late yesterday that they would be buying some more NFL media assets. Still, that's not enough to get us excited this morning. We also had earnings from Uber. It's been on a wild ride, shares, since they announced earnings. Truly, no pun intended. We are still down 1%. That's despite the fact that they beat and announced a $20 billion buyback. The issue maybe from them was that their beat mostly came from their delivery business, the traditional ride-hailing business not doing as well, and even a bit of a disappointment there. Okay, McDonald's, I promised you we'd get there. Here we are. Shares are higher by 3.2%. It was a sales beat for one. It's just a more value-oriented consumer, maybe liking cheaper meals from McDonald's, winning out after 4 quarters of declining or tepid growth. And it was the Minecraft and the Squishmallows of the whole thing. I'm going to be honest, guys, I don't think we're the target audience for that.
Well, maybe. It depends on how our childhoods were. Danny, thank you so much for that. And I will just say, actually, this is something that's actually quite interesting. McDonald's talking a lot about technology and how much they're investing in technology and how it's driving a number of gains across the board. Really closely watching that in all of the earnings calls. Do we see a broadening out in this AI trend to companies not considered tech companies? On our radar this morning, President Trump vowing to boost tariffs on countries buying Russian oil and saying pharma and chip tariffs will be announced soon. His comments coming as Switzerland's president heads to Washington today, hopefully has a meeting or two there. I'm just wondering how much you put this together and get something that we don't already know, or is this already baked in?
I think it's fluid in an idiosyncratic way. So we know that a number of tariffs are already baked in. The deals have come out. Already you've seen at the border, the computers have already been processed what the new rates are going to be. When it comes to India, when it comes to Switzerland, what's going on with Russian crude, this is where the situation is fluid. And I think the president even insinuated that. They have a number of options they could do when it comes to Russia and trying to squeeze Putin and make sure that he's not benefiting from shipping this oil to India or China. But there's a meeting going on right now between Steve Witkoff and President Putin. It feels like they're giving Putin one final moment to potentially do something to work towards a ceasefire agreement before they decide to go down the sanctions or tariff path.
Yeah, do something could mean some sort of air ceasefire, something of that nature. Meanwhile, there's a real focus on the chip sector, as that has been such a huge driver of all earnings and American exceptionalism. The U.S. arresting 2 Chinese nationals related to an NVIDIA chip export breach. Authorities saying the defendants have been charged with allegedly sending tens of millions of dollars worth of advanced AI chips to China in violation of U.S. export restrictions. Again, going back to this question, how do they create some sort of equilibrium where they're not sharing the crown jewels, but they are dominating the chip industry globally?
When you talk to the hawks in Washington, it's all about making sure that the tech does not leak to China. And this is why the administration has been so focused on transshipment. When you look at the data behind this company, the records and other business documents indicate they sent at least 20 shipments to shipping and freight forwarding companies in Singapore and Malaysia, but never received payments from those entities. This is according to the Justice Department. They received, instead of, quote, numerous payments from companies based in Hong Kong and in China. And this is what is so challenging about trying to figure out where all this tech is going. And this is why this administration is really focused on transshipment.
I wonder if this is why we're not hearing anything about DeepSeek anymore, if people are looking at the potential for some of these to have been used in the creation of some of those more efficient AI programs. Meanwhile, as we look forward to this question of what might actually happen with employment, the bank sector, fascinating to me. Bank of America pushing its junior bankers to disclose if they've accepted jobs elsewhere. Sources telling us here at Bloomberg, management is telling them that they face redeployment if future offers are accepted, going to this feeling that PE is going to poach some of the talent after training programs at the big banks.
John's not here, but I'm totally with Farah on this. Just have them sign some sort of contract or NDA, something where you know that you are going to stay at this company. This has become almost for all the banks, this, whether or not it's a loyalty test, et cetera. But the bank's case is that we go out, we spend a ton of money, time on recruitment, we train all these people and they leave right away. So I understand their point, but then just put something in place so they can't leave or give them better jobs.
There's a larger point here, and I think it's an important point, which is who pays for the training? At a time where there are skills that are shifting so quickly, who pays? And how do you incentivize companies to do so, especially if other companies are going to piggyback on their training programs that might not ultimately benefit them? And this is going to become an increasing question, especially with AI and how quickly people have to learn new skills. And I think that that is something that's important.
It is, especially when you look at the unemployment rate when it comes to men and women coming out of college right now. And this is something Governor Waller was talking about, 7% unemployment rate for recent graduates. To your point, who is training these individuals? And do we need to be training these individuals because more and more companies are looking to AI?
Yeah, well, turning back to markets, we are seeing stocks looking through all of this, looking to rebound after the S&P 500 posted its 5th down day in the last 6. Anastasia Amoroso of Partners Group writing this. This is a long-awaited quarter of adjustment, and the market may need to act accordingly, expecting less upside and more choppiness in Q3. Anastasia joins us now. Great to see you. Thank you for being here.
Good morning, Lisa.
All right, so this is the adjustment that everyone is expecting, that everyone's looking to buy into. How do you get an adjustment? And I asked this question yesterday. How do you get a sell-off if everyone's looking to buy the dip?
Well, I think the news flow is going to dictate that, and we need to have more Caterpillar-like reports that talk about the tariff hit that some of these companies are going to have to absorb, and some of that may be in line with consensus expectations, and some of it may not. You know, I think that could be one trigger for a potential pullback as we really do realize the tariff hit. The other trigger, of course, is inflation, and inflation expectations for next week are somewhat subdued, but could we see some potential surprises there? So, you know, maybe, Lisa, the move here in the market is not necessarily tremendous downside because I think some level of expectation is already baked in, but that's why I really kind of call it the quarter of choppiness, because on the one hand, we need to mark to market some of these tariffs, and at the same time, we also know that if the labor market weakens as a result of that, then that sets us up for a September cut, and I think that's what the markets are caught in between, and that's why we sort of get the back-to-back days of selling and buying and selling and buying, and I think that could continue.
And that's the reason why you're seeing some selling, even on the heels of earnings reports that are really positive, which we've seen increases to forecasts that beat expectations, and then the likes of AMD selling off. I'm just wondering, what do you do with the chop?
Well, I think for public market investors, if you have any sort of pullback, of course, you step in and you sort of buy your favorite names. And I would say, you know, for us, it's really about long-term investing at Partners Group and focusing on thematic investing and really aligning yourself with some of the key secular growth themes. You know, as much as we worry about the next inflation report or the next, you know, rate cut or not, what truly determines whether the company is going to outperform or not is whether it's aligned with a long-term trend of, let's say, artificial intelligence or perhaps healthcare innovation or new way of living, and whether you align with that and benefiting from that. So, you know, if there is an opportunity to buy into that in public markets, that's great. For us, I think there's a lot of deal activity that we're looking at, and given the clarity of tariffs that is emerging, I think for the private equity industry in general, the deal activity is likely to pick up.
Is it the clarity because the rates are set? Or is it the clarity that they're not as bad as some would expect?
Both. I mean, Anne-Marie, you know, we put this chart together, you know, looking at the percent of world GDP that had a deal in place. Back in April, it was 0. You know, nobody had a trade deal done with the United States. And today, you fast forward to today, and about 30%, about 28% of the world GDP has some sort of a deal in place. And there's still a big chunk of global GDP that's in negotiation. So that's the first point, is that, you know, you have predictability, you have some clarity for a growing share of GDP. The second point is the one you made, which is, you know, for most countries that are able to negotiate a deal, they're doing so at a lower tariff rate that could have been under the Liberation Day announcement. So I think it's both of those things. And then the third point is, now that we have the numbers, now that we have the certainty, we actually know how to price things. And this is why I say some of the deal activity can also move from being contemplated to actually being materialized, because we know exactly what we have to pencil into the models.
But what happens when the higher rates, which is a much higher average rate than we had last year, actually starts to get digested in this economy? 2.5% versus 15%, 20%, depending on the country.
Right. Well, that's why I call this a quarter of adjustment, and it's going to happen this quarter. If you think about, for example, the tariffs that were back in April, about 3%. Now the tariffs have ratcheted up closer to 10%, and I think most of that is being collected now. And in the next month or two, we're going to see 15 or 16% that's collected. But one thing that I will refer back to the Caterpillar report that I found interesting, they very much talk about profit margins, including the tariff hit, but also profit margins excluding the tariff hit. And that really suggests to me that companies, as well as the Fed, are treating this as a one-off adjustment that they need to take and they need to process. And I think it happens in Q3.
As you see the pipeline of opportunities in the private markets really build steam, you buying into OpenAI at $500 billion?
I will defer to our investment teams on that, but you know, I think valuation is something we take very seriously. And look, I will say, Lisa, broadly speaking, in private markets, you know, it's where can we find the most robust margins and where can we find the fastest growth rate and EPS, and how can we actually build that? That's what we're focused on.
Building rather than maybe buying into after the fact to give $100 million bonuses to all the people to have them stay in place. Although that might be the benefit for some of these strategies. Anastasia Amoroso, Partners Group, thank you. Wonderful to see you, as always. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Swiss President Karine Keller-Sutter will meet with Secretary of State Marco Rubio on her emergency trip to lower the U.S.'s 39% tariff on Switzerland. The meeting is scheduled this morning in Washington, but the Secretary of State's department does not lead negotiations for bilateral deals, and it remains unclear if she will get to meet with President Trump. Meanwhile, Novo Nordisk has reported its weakest sales growth in 4 years. The drug maker is losing ground to Eli Lilly in the U.S. market for obesity drugs. Novo Nordisk's earnings were below analyst estimates, and a new president and CEO is set to take over on Thursday after the company ousted its longtime leader. Shares are down 3.8%. And as you were discussing, OpenAI is in early talks about a potential share sale for current and former employees at a valuation of about $500 billion. People familiar with the investment discussion say existing investors have approached the company about buying some of the employee shares. If the deal goes through, it would increase OpenAI's on-paper price tag by about 2/3. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Up next, AI's threat to workers.
I'm a net optimist of AI rather than thinking that it's going to take every job. Every single job will need to get reconfigured slightly, but this is no different from any other previous technological revolution.
Joseph Briggs of Goldman Sachs joins us next after writing a report exactly on that topic. This is Bloomberg Surveillance.
In my opinion, at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. We are seeing some gains to start the trading day. A little bit of a lift under the hood as people take a look at earnings and policy. Up about 0.25% in S&P futures. Dollar weakness, 116 on the euro-dollar cross, and yields bleeding just 2 basis points higher, 4.23% on the 10-year ahead of that auction later today. Under surveillance this morning, AI's threat to workers.
I'm a net optimist of AI rather than thinking that it's going to take every job that's available for humans right now. Every single job will need to get reconfigured slightly, will need to have be adjusted, but this is no different from any other previous technological revolution that we've had. Let you have an entry-level candidate with AI as a companion, you can start to see meaningful levels of compounding of value.
Here's the latest. Goldman Sachs global economics team has published a new report suggesting artificial intelligence will displace 6 to 7% of the workforce. But the team says it's skeptical that artificial intelligence can cause large employment reductions over the next decade. Joseph Briggs of Goldman Sachs joins us now. Joseph, great to see you. Thank you for being with us. A topic that has ignited our curiosity and our imaginations for quite a while. Is 6 to 7% job loss a good number or a bad number when it comes to what it means for the overall employment picture?
So a 6 to 7% rate of displacement, following the full AI transition, once we've seen AI be deployed everywhere in the economy that we think it ultimately will, it's broadly in line with what we've seen in past technology cycles. If we look at the IT revolution, the widespread adoption of the internet of software, we saw rates of replacement in the 5 to 10% ballpark. And so generally speaking, I think that what we're expecting is roughly consistent with history, and ultimately I think it's going to be a manageable headwind for the labor market.
The words that people don't want to say in markets is this time is different, but a lot of people do mention the speed in which AI is transforming roles, businesses, and we see that in some of the earnings reports and some of the companies that are coming out and having to train workers in real time as they figure out the tools themselves. How much does that really change the picture, this sort of timing mismatch of how quickly the technology is moving and how quickly companies and workers can really adapt?
I think the speed is the most important thing to be watching when thinking about how large of an impact and how quickly and how disruptive of an impact AI has on the labor market and broader economy. Now, if our estimate for 6 to 7% displacement occurs over roughly a decade, which is what we have in mind in our baseline forecast, then that's a very manageable headwind. You're looking at roughly a half-point boost to the unemployment rate in any given year. It matters, but it's not going to be a significant macroeconomic driver. If instead, however, we're wrong, and we see that those 6 to 7% of workers be displaced over a 2 to 3 year period, all of a sudden you're talking about a 2 to 3 point increase in the unemployment rate, and that's a very different macroeconomy.
So when you say full transition to this AI new economy, that's a 10-year period?
When I say full transition, what we mean is that AI automation has been deployed in every area that it can possibly be deployed. And so the 10-year transition, I get the feedback a lot that people think that this is too bearish or too cautious of an estimate. I'm very sympathetic to the idea that there are going to be some areas of the economy that adopt sooner. We're seeing that very clearly in the tech sector today. But when we're thinking about unlocking the economic value on a macroeconomic economy-wide basis, you need to have every doctor's office in Colorado and every law office in Ohio utilizing the technology to its full capability.
What do you think we're seeing right now? There are some pretty eye-popping numbers when it comes to young men that are unemployed right now, age 20 to 24. That unemployment rate is 8.3%, and for recent college graduates, the annual rate is 5.3%. For young men, there's almost recessionary levels of unemployment.
The youth unemployment rate has definitely risen, and I think that mostly reflects that we're in a low hiring and low firing labor market right now. And so the increase in unemployment for young workers, I don't think for the most part is related to the AI impacts that we are seeing in very narrow areas of the economy today. The one area that stands out as different is the tech sector. We have seen tech sector youth unemployment rise by 3 percentage points since the start of 2024. This is a larger increase than what we've seen for young workers, broadly speaking, and a larger increase than we've seen for the tech sector overall. And so it's not surprising that it's having a bigger impact in areas like tech where adoption has started to pick up.
But to Emery's point, isn't that just a precursor of what's to come, given the fact that they can adapt a little bit more quickly to some of the AI tools?
Yeah. And we are expecting that adoption and utilization of AI is going to broaden out over the next several years, which is why we are ultimately expecting that there will be a 6 to 7% replacement and displacement of workers that need to be reallocated to new positions. Our view is that the tech sector is the first, but other industries will just take a little bit more time, and it will play out over a longer period.
How disinflationary is this? And I ask at a time where people are trying to extrapolate out tariffs and other policy changes that could be inflationary and saying AI will cure everything. Is this something that really will reduce costs in a material way?
Again, it really comes down to the speed of transition. That if you only see a half-point boost to the unemployment rate in any given year, which again is our baseline expectation, then you're only looking at a tenth or two of downward pressure on inflation from labor market slack. If instead it happens much more quickly, then the inflation impacts could be much larger.
Building on Lisa's point, this is coming at a time we're seeing a tremendous amount of changes when it comes to policy. This is an administration that is trying to bring back manufacturing to the United States. Will some of these jobs they're trying to be back even exist in 10 years?
So I think that the policy angle, when thinking about how it interacts with the macroeconomic impacts of AI, it really is going to determine how quickly we see adoption occur. The U.S., relative to other countries, has taken a lower touch approach to regulating AI. the U.S. is the leader in AI technology and AI capability right now. And so generally speaking, I think that means that it will have a more front-loaded and more significant impact on the labor market and productivity over the next 5 years than we'd be expecting in other countries. But ultimately, I think that the impact on the labor market and the speed is going to be the main effect.
When you look at other countries, specifically China, because it's like this arms race when it comes to AI between the United States and China, how far behind is China?
It's hard to have a lot of insight from a technological perspective. The DeepSeek news earlier this year already obviously highlighted that China has the ability to develop, a very powerful and very effective AI model. Earlier this year, we did pull forward our adoption timeline, for China so that it's only lagging the U.S. by about a year or two. And so we are expecting that China will not be too far behind in the U.S. in deploying the technology.
What's been the response like to this report?
It's been all over the place. Some people say we're way too optimistic. Some people say we're way too pessimistic. If you talk to tech investors, they think that the effects are going to be much larger.
What about corporate executives that are actually coming out with different training programs? And a lot of big companies, they have training programs to try to figure out how to implement artificial intelligence, large language models into everyday existence of their employees. What's their response been like to this?
I think corporate executives are generally taking a cautious approach to deploying the technology. If we look at survey evidence, concerns around privacy, concerns around figuring out how to actually integrate AI into regular production, and furthermore, just concerns about making sure that you get it right has led to a slower adoption curve. Now, we are seeing adoption pick up more among larger companies. Companies with more than 250 workers are seeing adoption in the mid-teens right now. But I think that, generally speaking, the feedback has been that we do need to take this a little bit slowly and make sure that we end up getting into the right place in the long run.
Joseph Briggs of Goldman Sachs, thank you so much for being with us. Joseph Briggs there with his report on artificial intelligence and what it will do to the labor market. You looked at that 67% number and you thought, oh my goodness, this potentially could be catastrophic, and it could if it is executed over the next couple of years.
I was depressed reading Joseph's report, and you were optimistic because you didn't think it was as bad as potentially it could be.
Well, if you looked at Anthropic, for example, where it was like Jobmageddon, right? And everyone was going to lose their job and we'd all just be subject to domineering robots telling us to just work harder and sit in a corner, that's probably a more optimistic look. Look, it does seem like there's a huge transition underway. How quickly it happens remains to be seen, as well as exactly how companies deploy that.
And I think the report does highlight that this is going to take, for full transition, a decade. So potentially this is not just going to happen overnight, which is to the job again point.
Meanwhile, we are getting earnings, and a number of these companies are mentioning just how much they are investing and using a number of these technologies. McDonald's among them, Uber reporting earnings, as well as Disney. Coming up, we'll parse through all of that and look ahead to tomorrow's jobless claims, as well as the auction at 1 p.m. today. Daryl Cronk of Wells Fargo, Rich Greenfield of Lightshed Partners on those Disney earnings, the ESPN NFL tie-up, Mark Giannone of Barclays, and Woody Caesar of Credit Sites. This is Bloomberg Surveillance.
Why is Baltimore so important to you? It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come, while we've invested in the convention center. The reason we focused on housing and getting rid of the vacant housing. The reason we focused on violent crime. And now Baltimore is having among the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing. Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The leadership is clearly still coming from the top.
Markets are showing historically high levels of concentration.
It's all about tech earnings. All eyes are on tech.
There's a lot of high expectations in big tech.
At the end of the day, what's going to matter for this equity market is the earnings growth.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance on a busy day of earnings. It's the heart of the earnings season. We've got Disney, Uber, and McDonald's, Airbnb after the bell. The message from companies, we're doing really well. The message from traders is just not good enough after having some pretty high expectations. We're squaring positive earnings forecasts with yesterday's stagflationary ISM report and plenty of uncertainty on the tariff front. John still on his jaunt through the fjords of Norway on a cruise, and Anne-Marie, you and I keeping the fort warm. I am curious, though, how much we're getting noise versus signal from how people are responding to some of these earnings reports.
Well, it's interesting because we had Uber shares actually go down, but now the market is taking them in stride and saying, actually, this report looks really good. Announced $20 billion in new stock buybacks after a better-than-expected third-quarter forecast. McDonald's, though, really interesting. The global footprint seems to be where they're getting a lot of growth. Also, who knew? Toys and budget meals driving people to want to go to McDonald's, and something you've been talking about a lot, but you can actually see if you go to any McDonald's, whether it's United States or internationally, how much they were relying on new technology and AI to basically create a more efficient environment.
Yeah, this goes to what Stephen Oth was talking about as we asked, how do you square some of these positive forecasts that we're seeing from these consumer-facing companies with the stagflationary ISM report, where you saw really stagnating top-line growth or sort of compressing employment picture as well as inflationary inputs, with a pretty rosy environment that we're seeing at companies. How do you understand what the picture is? And he said, these are forward-looking, and that was backward-looking.
Yes, he says the Fed is just backward-looking, rearview mirror. Now they're seeing the cracks in the rearview mirror, but companies are forward-looking. But what did Anastasia Amorosa say? She said this is going to be the crunch times in terms of the choppiness to figure out the uncertainty that's been baked into the market has been the uncertainty of policy out of Washington. Well, now for at least a number of countries, we have certainty what these tariffs are actually going to actually be, and companies are going to have to digest them over the next few months.
And that uncertainty, when it is represented in earnings reports like AMD, it can be problematic for their share reaction after markets. Right now, it's less problematic. You see shares, you see futures higher ahead of the open as people look through some of these more positive reports of about 0.2% on the S&P, really led by what we see in the Russell 2000. As people do price in more than an 80% chance of a rate cut next month, we do see a bit of dollar weakness, 116 on the euro-dollar cross. And yields just creeping marginally higher. We do have that 10-year auction, $42 billion of notes sold today at 1 p.m. Eastern. Coming up this hour, Daryl Kronk of Wells Fargo with stocks looking to rebound. Richard Greenfield of LightShed Partners reacting to earnings from Disney as well as that tie-up between ESPN and the NFL. And Mark Giannone of Barclays on expectations for the Fed's next rate cut. We begin this hour with stock markets digesting a rush of earnings reports. Daryl Kronk of Wells Fargo writing, with stocks seeing 32% gains over the past 80 trading days, some sort of pause and consolidation is likely warranted before the next leg higher. Daryl, you are not alone. He joins us now. Really good to see you. Thank you for being here. It does seem like this is sort of increasingly consensus. Watch for the chop. Get ready for some sort of pullback. We've seen this from Morgan Stanley's Michael Wilson. We've seen this from Bank of America's Michael Hartnett. How do you identify some sort of sell-off before it even happens and then say, it's an opportunity to buy?
Yeah, I think that's a good question. And we just literally yesterday put out a whole report about pulling money out of small cap equities, pulling and trimming large cap. We're still on the favorable side of large cap exposure because you got to be up in quality, and took that money and put it in intermediate fixed income, right? Just because we think we added to equities twice in the spring, March and April, right around Liberation Day. Better lucky than good, I guess, right? But huge move, obviously, in equities, right? At this point, at 24 times earnings, right? Yes, I love the earnings numbers, right? Remember, first quarter was 7% revenue growth or sales growth and 15% earnings growth. Right now, we're tracking 6% revenue growth and 10% earnings growth. Like, I'll take that all day long after the last couple of years we've had. So earnings are finally catching up to try to squeeze those multiples down a little bit. But look at something like small caps, which we're not a buyer of. I just told you we took money out. If you go back 3 years, small caps have underperformed money market funds, literally. Like if I got 4.1, 4.2% in a money market fund for the last 3 years, I did better than if I had small cap exposure, right? So people keep looking, waiting for Godot, right, for the time when small caps are going to come roaring back. We just don't see it.
All right, so put small caps aside. They have been sort of like the stepchild of the market over the past number of years. When you take a look at the golden child, which has been big tech, a lot of people saying it's looking a little frothy. It's gotten pretty elevated, and that's kind of what we saw from AMD yesterday. They came out with pretty good numbers, and people sold off because they can't see the future. I mean, how much is that really where some of the pullback is destined to be?
So we didn't downgrade tech, but we did downgrade comm services, which has been just rip-roaring good. And we actually downgraded energy as well and put that money into financials, right? We still see financials with a steeper yield curve. What most people don't realize is they know well that the 2 to 10 spread on the treasuries is 50 basis points, which is a nice steepness. If I look at the 2 to 30, it's 107 basis points of steepness. The roll down effect and what that does for financials is extraordinarily good. Then you add in deregulation, you add in the M&A environment picking up, you add in what will kick in here shortly with corporate buybacks. Like there's some real opportunities to do that. In tech, though, you still have to be where growth resides, right? If I look at the top, the big four, right? Alphabet, Amazon, Microsoft, Meta, 29% earnings growth this quarter. And if I take everybody else, minus those big four, 2% earnings growth, right? So you still have to be where growth resides. You can't underweight tech, especially when the top 10 names now are 40% of the index.
Would you change your allocation if we get the Fed cut in September?
No. Because the Fed cut's already priced in, basically. It's a good question, but I think where the market is wrong is not on September. It's wrong on it's got 55 to 60 basis points in the futures curve through year-end 25, so call it 2+ cuts. And then next year, it's got 3 to 4 more cuts, right? So if you look
So what's wrong about it? What do you think
too
it's
many
going
cuts.
to be?
We don't think the cuts will come to fruition, just like the bond market's been wrong. We can go back and count numerous times over the last 3 to 4 years where they priced in too many cuts, then had to walk them back out eventually. If you're going to tell me we're going to get 6 cuts in the next 15, 16 months,
then I'm going to tell you the economy is very much weaker than what we are projecting and planned.
So what are you projecting, at least for this year?
So if you get under the surface, right, the economy is close to stall speed. This second quarter, 3% GDP, right, besides 1% consumer growth, nothing in CapEx, nothing in government, and then you look at, what trade did, which is 5 points, and you subtract off the 3.2 points on inventory, you're looking at 1 to 1.5% growth at the underlying, right, for the economy. That's close to stall speed. And so we think as you go through the second half of this year, you got to be careful, right? We do think it'll pick back up in 26. I think what's interesting, so think about this for a second. In May, 70% of economists predicted that the U.S. economy would go into recession following Liberation Day, right? All the tariffs and everything. Today, it's probably 10, 15%. But if I add up all the tariffs from Liberation Day, it looks like, who knows, headlines, negotiations, about 60, 65% of those are going to actually get enacted. So if I believed...
But not at those high rates.
At the rates that were announced in Liberation Day. If you actually go back and you start pulling apart all the Liberation Day announcements and say, how much of those are still likely to happen, right? Either have already been negotiated or likely to happen, it's about 60, 65% of them. So if I thought, it probably suggests that in May, economists were way out over their skis, that 70% was too high on a recession. There is a risk today that 10 to 15% could be too low, right, on the impact and the slowing growth into the back half of this year.
What kind of retracement are you looking for in equities right now?
Hopefully, we're thinking, somewhere in that 6 to 8, maybe 7 to 10%. And if we get that, we would probably be buyers again, right? We'd take that capital and put it back in tactically, because that's really what this is about. It's not about some risk-off move that we think is the markets are going to roll back over 19, 20% like we did in April.
Will the U.S. markets be in isolation of the rest of the world? This has been sort of the debate for a lot of people this year, how much this is time to go international, right? We've heard that many times. It reminds you the rest of the world actually has companies as well, and you can invest in them. How much does that reiterate that kind of move versus we're going to get the same amount of pain, if not more, elsewhere?
I think the latter, right? They're going to get the same amount of pain, if not more, elsewhere. Like, we didn't believe in the international piece, right? And let's be honest, we've been wrong on that side of it for the first, 6, 7, 8 months of the year. You can go back and look at the last 7, 8 times international has outperformed domestic. It's usually about 6 to 9 months, and that trend rolls itself over, right? It doesn't sustain. We know it hasn't sustained. So history is on your side that it's going to take something to really, again, durably beat expectations there. A huge piece of that, as you guys know, has been the dollar's decline that's favored that. We don't see another 10% downside in the dollar. A lot of the street does, right? We think the dollar consolidates here and actually rebounds a little bit or steadies and maybe surges back higher, which isn't going to help international. Right? If anything, it's going to put a little bit of a tailwind in domestic. So we never believed in the death of U.S. exceptionalism. We think domestic over international still makes sense. We think large over small still makes sense. And then we think we got to be really selective in the sectors.
Daryl Cronk, thank you so much for being with us as always. Daryl Cronk of Wells Fargo here in New York with us. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Russian media reporting a meeting between President Donald Trump's special envoy, Steve Witkoff, and Russian President Vladimir Putin is over. Talks in Moscow went on for nearly 3 hours. The meeting comes just 2 days before the August 8th deadline that Trump set for Russia to reach a truce with Ukraine or face potential sanctions. Meanwhile, OpenAI is in early talks about a potential share sale for current and former employees at a valuation of about $500 billion. People familiar with the investment discussions say existing investors have approached the company about buying some of the employee shares. If the deal goes through, it would increase OpenAI's on-paper price tag by about 2/3. And Novo Nordisk has reported its weakest sales growth in 4 years. The drug maker is losing ground to Eli Lilly in the U.S. market for obesity drugs. Novo Nordisk's earnings were below analyst estimates. Meanwhile, a new president and CEO is set to take over on Thursday after the company ousted its longtime leader. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. I got to say, the race to make people skinny this earnings season has been fascinating. Up next, the morning calls plus Rich Greenfield of Lightshed Partners reacting to results from Disney. That's next. This is Bloomberg.
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The move here in the market is not necessarily tremendous downside because I think some level of expectation is already baked in, but that's why I really kind of call it the quarter of choppiness, because on the one hand, we need to mark to market some of these tariffs, and at the same time, we also know that if the labor market weakens as a result of that, then that sets us up for a September cut. And I think that's what the markets are caught in between, and that's why we sort of get the back-to-back days of selling and buying and selling and buying, and I think that could continue.
That was Anastasia Amoroso of Partners Group talking about that chop that we keep hearing about, and certainly we're seeing that chop yesterday, down today. Futures up as we look ahead to another day of earnings, although really off some of the earlier intraday highs, up only now at about 0.1% on S&P futures, seeing that dollar weakness gaining steam, although that has really been going nowhere. The DXY index yesterday kind of hovering around the same place, 116 on the euro-dollar cross, and you're seeing yields just marginally higher ahead of that 10-year auction later today, 30-year auction tomorrow. Time now for the morning calls. One stock very much in focus, AMD. First up, Stifel raising its price target on the stock to $190, saying it is a, quote, strong participant in artificial intelligence. Those shares were down almost as much as 7% earlier this morning in early morning trading, now down less than 5.5%. Next up, Raymond James raising its price target in AMD to $200, expecting new product launches next year to accelerate its artificial intelligence momentum. And finally, JP Morgan raising its price target in AMD to $180, saying it expects better share gain in its chip business. And this, of course, as a whole host of uncertainty swirls, given what's going on with China and their ability to penetrate that market. Turning to media, Disney shares sliding in the pre-market despite the company raising its full-year outlook. Joining us now is Geetha Ranganathan of Bloomberg Intelligence. Geetha, thank you so much for being with us. What stands out to you from this earnings report?
Yeah, thanks, Lisa. So definitely it was a beat. They delivered really strong fiscal third quarter results, and it was, guidance raised. So EPS now up, full year EPS now up 18% versus 16%. Again, on Parks, what we were expecting, a strong operating income growth. Again, they reaffirmed guidance there. I think why we're seeing shares trade off a little bit is because maybe guidance was not raised as much as people were expecting. So, they did say Parks going up 8%. I think maybe investors were looking for a little bit more. But overall, Lisa, really strong results, really kind of confirms the resilience in the business model and assuaged a lot of concerns, especially around, the competition from a new park in Florida from Epic Universe. We saw really strong growth, 22% increase in domestic park profits. So overall, really strong.
And yet the shares are lower, although after rising really quite significantly over the past 12 months. Bloomberg's Geetha Ranganathan, thank you so much. And we'll get an update with you as more earnings come out. Joining us now is Rich Greenfield of Lightshed Partners. Rich, before we get into the nitty gritty, why are shares lower after what Geetha just described was a pretty blowout report?
I mean, I think you got to sort of step back. First of all, I think blowout might be a strong word. I think the reality is Disney stock has obviously had a nice little run over the course of the last 6 months. I think the company definitely, I don't want to say was sandbagging, but, if you listen to Hugh Johnson, Disney's CFO, he certainly was keeping, he didn't raise expectations after last quarter's pretty meaningful, upside in the first, several quarters of the year. So I think there was sort of an expectation that this was going to be good, that they were going to exceed expectations and raise the guidance. And so I think it was sort of in the stock. So I think this has been a very widely owned stock. People were sort of knew that the outperformance was coming. And I think the reality is, I think the thing that surprises me is that there isn't more excitement around the WWE deal this morning or the NFL deal. But I think just sort of the, hitting what people have thought, and you're sort of seeing sell on the news more than anything else.
Well, the market initially really did like that deal when it comes to ESPN and the NFL media. What does this say to you about the direction of travel for Disney and the company writ large? Is that going to be a spinoff, Rich?
Well, I think that you got to step back. And so, the stock is trading, you've got it up on the screen right now, $115. If you go back 10 years ago, Disney reported their fiscal, Q3 earnings. The same week, 10 years ago, the stock was trading at this exact same level. So this has been sort of a lost decade for Disney in terms of the stock. Yes, it's been up and down in between, but 10 years it hasn't performed. I think it's really setting the stage for a strategic transformation. And, Iger's last year is 2026. And I think when you look at how they're positioning ESPN, if you think about sort of launching the direct-to-consumer service, having it stand on its own, adding in the NFL content, doing the big NBA deal, this morning doing the WWE WrestleMania deal, they are putting all of the pieces together to separate ESPN and probably ESPN and ABC from the rest of the Walt Disney Company at some point over the next 12 to 18 months. And I think that is going to be the next strategic catalyst for Disney. I don't know. I don't think they'll talk about it this morning, but it feels like they're setting the stage for that.
Does Bob Iger want that before he exits the company? And by the way, we should note, it's expectations he's going to exit. Some think maybe he's going to stay on.
Look, I have no insight into whether Bob actually leaves. He certainly has been telling everyone that is close to him that he's really leaving this time. The chairman of the board, Gorman, is certainly tasked with finding a replacement. I think you're going to see that replacement. And, look, I think Disney has two core challenges. Figuring out the future. If you think about youth culture, my partner, Brandon Ross, has been writing about sort of the incredible surge of engagement around Roblox. Like, if you look at where youth culture is and where kids are spending their time, it's hard not to look at something like Roblox and go, how is Disney not in this world? Like, sure, they're building something on Fortnite, but if you look at sort of the UGC growth that's happening so organically on Roblox, like, that seems more like where Disney should be than trying to figure out the future of sports streaming with ESPN and ABC. And so I think sort of whoever is Disney's CEO, I think the big task is figuring out what is the future mix of this company? What is the ideal mix of assets to be positioned so that the next decade looks a lot better than the last decade?
There's also a question of the geographic footprint, Rich. I mean, we're seeing AMD shares fall because of a lack of certainty with China, but we understand that Disney has its footprints in China as well as around the world, even though some people might see it as sort of brand Americana. How much does that threaten, or how much do you want to hear about that on today's call?
Look, I think a topic that people don't really like to talk about, right, is how are U.S. movies performing overseas? And I think if you look at a lot of the international performance, you're seeing it be relatively underwhelming. And, I do scratch my head and wonder whether there is sort of a greater sort of anti-American sentiment. Certainly China has boxed almost, even if they let U.S. movies in, they don't do any box office anymore. And so I do think that there is this growing fear I have around Hollywood and the movie exhibition business, that international, which used to be sort of the huge upside for these films, like you did a good number in the U.S. and then you blew it out overseas. We're seeing a lot of underperformance overseas that is increasingly concerning.
Rich, I'm just wondering, looking forward, the other thing that we've heard in terms of a theme from companies has been artificial intelligence. And I know that Disney and other content creators have really not wanted to talk about this because of the strikes in Hollywood and some of the other concerns around what this will do to jobs. But is that going to be something that you expect to hear about, given that it's kind of a tool that they will need to be using?
I think everyone in Hollywood is going to initially look to how do they use this to speed up creation and reduce cost. the challenge is going to be not so much how a company like Disney or Warner Brothers Discovery or Paramount uses these tools, but how the kid in their basement, who never could have created a feature film before, now can. Like, will somebody come up with Bluey in their basement, right? Like, just using all of these powerful tools. If you're a good storyteller, you don't have to be a good animator anymore. AI can do that for you. And so I think what's going to be really interesting as you look forward is how the competition or the competitive landscape, not just for Disney, but for all these media companies, changes over the course of probably the next 3 to 5 years. I mean, the pace of AI innovation is astounding. And I think what you can do is only getting cheaper and faster and easier. And so the competitive dynamic that, that currently exists, there aren't many companies that do feature-length animation. I wonder in 5 years how we're going to think about the competitive set for animation.
Rich Greenfield of Lightshed Partners, thank you so much for being with us today. And it's a really good point, and we'll have to check in with John, who's currently on an Icon of the Skis tour around Norway, and just about which Disney character is his favorite.
I highly doubt that. I'm sure he loves Disney movies, but I highly doubt he's on a Disney cruise.
In a serious note, this is a company that actually has performed really well, and you raised a great question about succession. How much can they put some sort of plan going forward of succession? And we've seen this at a number of financial companies. I am curious about what they say about that. We are seeing Uber also trading ahead of their call. They did report earnings. We also got earnings from McDonald's, all showing a lot of consumer demand. And I think that this really is the takeaway, even from Disney. People are paying more for their streaming subscriptions. They're paying more for their Icon of the Seas tours. They're paying more to go around the world to all of the theme parks. That takes money, and that takes capacity, and that takes confidence.
At the end of the day, the consumer is holding up. And this has been the big debate. Will the tariffs hit so hard, will prices have to adjust so much that consumers won't hold up? And they are holding up right now. But I go back to what Anastasia told us earlier. Now we're entering the quarter where there's going to be a lot of choppiness. And the market's really going to have to digest the actual tariffs, not the uncertainty around the tariffs.
Yeah, market's open in about 1 hour and 4 minutes, and right now futures up. As they look ahead, we get Airbnb after the bell, and of course, jobless claims tomorrow. Coming up, Mark Giannone of Barclays on risks to the U.S. economy.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Right now, we're seeing a bit of a lift in equity futures ahead of the open. We are about 1 hour ahead, and right now you can see a little bit of retracement from earlier highs, up about 0.1% on the S&P. Interesting that the Russell 2000 is erasing all of its gains, almost flat on the session after being up 0.4% earlier this morning, and the Nasdaq not doing much. 1 hour away from the cash open, as we mentioned. Here are your morning movers with Danny Berger. Danny.
Lisa, I do have the reason that tech is underperforming at least, and it's a lot of the pain in chip makers. Super micro earnings, those were poor, but also AMD. These were not poor earnings. They really showed up and were very optimistic on their sales and the future of AI. The issue for them, and the reason shares are down 5.6%, is because they couldn't get the certainty on when they'd be able to sell to China yet again. They said they wouldn't predict it, so again, those shares falling. On the other side of things, we also had Disney earnings. Those shares also falling 1.6%. Kind of the same story. Things like theme parks and streaming was good. They also announced that they are buying more of the NFL media network type assets. However, some of their linear street and normal TV channels not performing as well. That disappointment. Finally, wrapping things up with McDonald's. Those shares doing better. It was a sales beat. Some of the economic anxiety may be pushing people to cheaper options like McDonald's, up 4.3%. A lot of partnerships helping them too. Minecraft, but I'll spare us the Squishmallow conversation again, Lisa.
Thank you so much, Jenny, for reprising that conversation. Interesting with McDonald's how much they're gaining market share too, and that's something we will be looking at because we saw a different picture for Chipotle. So it's not all fast casual dining is seeing some sort of gain. It does seem like this is increasingly a winner-takes-all kind of market or stock-by-stock type of environment.
Execution, you've been totally right on McDonald's. Something that they've really been able to hone in on is how much money they're bringing from the international space, not just domestic in the United States.
Yeah, and so maybe some of those Happy Meals really gaining traction over in
Minecraft.
Europe. Yeah, Minecraft. You're learning about what Roblox are this morning. Turning now to the Fed. A slew of Fed speak scheduled for today as investors await President Trump's pick for the Fed governor. Trump saying he will make a decision before the end of the week. Bloomberg's Michael McKee joining us now. Mike, we learned yesterday that one person, Scott Besson, out of the race. 4 candidates that we understand. What's the process going to be like to get this person in that seat?
Well, the process is going to take a while because the person who goes to that seat is going to have to be confirmed by the Senate. And as we know, you've got to fill out a lot of paperwork, and then you've got to go through the hearing process. You make your rounds on Capitol Hill, shaking hands and making nice with senators. And if you get through the banking committee, then you go on to the Senate floor, which is pretty crowded with a lot of nominations these days. So nothing's a slam dunk at this point, which maybe means that for the moment, until we know who it's going to be, you should pay attention to what other Fed officials are saying about the possibility of a rate cut in September. We have several speaking this week, including Mary Daly today, and she is the one person that seems to have flipped her view, saying she's out of patience and she thinks maybe it's time to start cutting rates. We've also got Raphael Bostic tomorrow, and he has been the strongest perhaps in saying only one rate cut this year. Does he change his mind? Heading to the question, though, of who becomes the Fed chair. There are three candidates we know about at this point, the Kevins, as the president calls them, and Chris Waller, who's on the Fed board now, would not have to be nominated to the Fed board, but would have to be nominated to be chair. And then there's the mystery guest, because the president said there are 4 candidates, but he took Scott Bessent out of it. You can read all through the newspapers and wire services and stuff this morning and read a lot of different speculation on names. The question for the president, though, is how does he do this? And that's the biggest and most fascinating issue for me and for people on Wall Street. He could name his new chair in waiting to the Kugler seat, but then you end up with that shadow Fed chair issue. Who does the market listen to? Does it cause dissension on the Fed? He could name a replacement governor for Kugler, somebody who would just serve for a couple of months. But if Powell stays, it may be his only chance to name somebody to the seat. He could name a replacement now and choose a chair later, but then you get that apprentice scenario of maybe Warsh or Hassett and Bowman and Waller all auditioning for the job while they're trying to carry out monetary policy until the president makes a decision. So it's going to be very interesting. And
Mike, this is what I'm stuck on. How does he decide going forward? The president said yesterday, we either decide on one for permanence or the 4-month period. What would be the point of having someone there for 4 months, given the fact that this takes a lot of time and it's challenging potentially at times when it comes to getting the Senate confirmation?
Yeah, and the other question on the other side of that, Anne-Marie, is that you have to ask who would want that job. You would have to divest all of your financial holdings. You would have to reveal all of your financial holdings and go through the confirmation process, which can be pretty brutal. And there's no guarantee that you're going to stay on. That would be a tough ask for anyone. Plus the fact, as we mentioned, it takes a long time to get through the Senate. Even if they rushed it through, probably not ready for the September meeting, and then there are only 2 more meetings this year, so you might serve for 2 months. I'm not sure that that's worth it to anybody.
Michael McKee, thank you so much, as always, for that update. Sticking with the Fed, Mark Giannoni of Barclays writing this: we retain our baseline expectation that the FOMC will deliver a single cut this year in December, but view risks as tilting toward earlier rate cuts with payroll employment having decelerated. Mark, that was at one point sort of consensus. Now it's a pretty rogue call considering what the market is pricing in for September. Why do you stick with that view?
Well, the employment has clearly slowed, and I think that's increasing the risks that the Fed will want to cut earlier than December. But at the same time, Chair Powell has emphasized last week that the unemployment rate remains fairly low, and that's a decent measure of slack for the economy. So when we think about the labor market overall, it hasn't really changed over the past year. What we've seen in the unemployment rate basically ticking up 10th in the last print, but back to the level it was in May, back to the level it was in July of 2024. The only thing that has really changed is the very significant but gradual slowdown in the pace of payroll employment. And as we've been writing for about a little over a year now, I think I talked about it on this show, I guess a year ago, that we have been anticipating a very gradual and extended slowdown in the pace of payroll. I think we are going to be looking at very slow payroll prints over the next few months, and this is because we have this very sharp reduction in immigration. We have a very significant slowdown in the pace of labor supply.
Well, we can't help talking about all the political intrigue and how that might have ramifications for Fed policy. We've talked about that with respect to the 2 dissents from Fed governors. The first time we've seen that level of dissent going back to 1993. We've talked about that with questions around who could replace Adriana Kugler over the next 4 months, as we were just talking about. Do you just block that all out and say, la, 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 let's look at the actual data and just hope for the best?
I mean, I think this is part of the reality, of course, and the FOMC is under tremendous amount of pressure. But at the same time, the FOMC has to do whatever they think is right. And I think what they told us very clearly and loudly last week was that they are not in a rush to cut rates at present. They are seeing downside risk to the labor market, especially if the pace of payroll slows further. if we see signs in, let's say, initial claims, for instance, jumping up, if we see the unemployment rate rising further, and we'll have another labor market print before the September meeting. But it could well be that the pace of payroll stays weak and the labor market remains tight. And I think this is our baseline as well. And I think in that context, with inflation likely picking up from here on a month-to-month basis and quite significantly over the next couple of prints, we'll have a Fed that is going to be facing a trade-off shock, basically facing a stagflationary shock, and they will need to make sure that policy is well placed for that. So yes, the political environment is a consideration, but I think they are very much focused on what's happening in the real economy.
Well, that's what the services ISM really pointed to yesterday. What did you make of that data? How challenging is that specific data point going into September?
Yeah, so I think what the ISM indicates is price pressures are here. Right, and also on the services side, and they are coming. They are going to show up in the consumer prints. We expect like a 0.3% increase in the upcoming print. We expect like further acceleration from there, like a 0.4% in the following few months. We are likely going to see inflation, core inflation at about 3.5% by the end of this year. We have 3.4 on core PCE, 3.6 on core CPI. But bottom line, inflation is likely to pick up quite significantly from there. And I think ISM pointed that out, and especially on the services side as well. In terms of activity, I think what ISM says is, well, activity is slowing. And we see that. We expect the tariffs, which, yes, the tariffs have been in place since April, or at least a good part of them. Now they are going to increase starting tomorrow. But the effective tariff has not really increased very much in May and June. Because in effect, a lot of the trade that would have taken place took place in advance as businesses and households front-loaded a lot of the purchases. So we are going to really see the effect of these tariffs only in the upcoming months. And that should slow activity. ISM is telling us.
When it comes to what Lisa was talking about and the fact that we're still waiting on these appointments, whether or not it's the BLS commissioner or who the president's going to put in the Kugler seat, will the market push back if it's someone overtly political?
I do think so. Yeah, I think the FOMC is going to push back if someone is overly political. I think when the monetary policy decision is made by the whole committee, each FOMC voter has one vote. The chair is one person and does not have authority that comes just with a title. The authority comes really from the credibility, the trust that other participants give them. So I think the market and the rest of the FOMC are going to push back against.
Just real quick, though, I mean, isn't this actually something that you've been struggling with, the integrity of the data? Not necessarily that it's political interference, but the quality of it, particularly in the labor market readings, has been going down, and this is something that a lot of people have been talking about.
Right, including people from the BLS have been complaining about resources, have been complaining about because of the lack of resources, having to shrink the size of the surveys. That makes the survey naturally more noisy. The response rates have come down very significantly, and that's a challenge. That's a problem. The quality of the data has deteriorated because of that. I wouldn't call it integrity about the data, because I do think that the census and BLS and other statistical agencies have been doing a very professional job in terms of with the resources that they have.
You know, I have gotten a call, and I'd like to get a call. I'd like to give my response. Mark Giannoni of Barclays. Yesterday I got a call, and I thought maybe it was the call. It was the way to, like the census or something of that nature, but it was spam.
I don't pick up if I don't know the number.
Interesting.
So you have a better shot calling Lisa Abramowitz than my phone.
Which is probably the reason why response rates have gone down, because of all the Emory's out there. Mark Giannoni of Barclays, again, thank you so much for being here. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Swiss President Karine Keller-Sutter will meet with Secretary of State Marco Rubio on her emergency trip to lower the U.S.'s 39% tariff on Switzerland. The meeting is scheduled this morning in Washington, but the Secretary of State's department does not lead negotiations for bilateral deals, and it remains unclear if she will get to meet with President Trump. Meanwhile, Bank of America is asking its junior bankers to disclose if they've accepted jobs elsewhere. Sources telling us here at Bloomberg, individuals who accept offers will likely be moved to another area within the bank. Citi and Goldman Sachs have made similar moves to discourage employees from pursuing new jobs. And how's this for some nostalgia? Claire's, the accessory store for preteens, has filed for its second Chapter 11 bankruptcy. The once beloved mall staple is facing higher import costs for its goods and a rocky consumer spending outlook. Claire's currently has 2,750 stores across 17 countries, down from over 4,500 stores at the time of its first bankruptcy back in 2018. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Where will the tweens shop? Up next, setting you up for the day ahead. Plus, Woody Caesar of Credit Sites moving up her expectations for the Fed's next cut. That's coming up next. This is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The hard data, by virtue of the fact that it's hard, is rear view mirror stuff. It's what the Fed uses, as an example. I call it the cracked rear view mirror. Trying to make forecasts based on hard data is you're fighting yesterday's war. So the Fed is now coming around because the hard data is finally softening up. We've been screaming that they should be cutting way back in the spring. They're now going to do that. We're entering a cutting cycle. But the soft data is starting to turn.
And it's starting to turn up. That was Stephen Auth of Federated Hermes, who's talking about his optimism going forward as we look at equities, trying to start the day in the green. We have seen them claw back from some of the earlier gains, but still up 0.2% on the S&P. Yields retracing some of the earlier rise that we saw earlier, now just up a basis points, 4.22% on that 10-year yield. We are getting some news on Apple. The White House revealing that Apple is planning to boost its U.S. investment commitment by $100 billion. Those shares, futures popping in the pre-market, 1.6% gain. Emery, this looks like this might be the 4:30 p.m. meeting at the White House.
Yeah, it does sound like it, because this is going to be happening, according to the White House, this new U.S. manufacturing plan, this announcement that Trump is going to make about Apple. And then Kevin Hassett was also speaking to the press earlier and said he's likely to hear about this new factory from Apple today. So it looks like Apple is going to, I guess, outline their plans for more manufacturing, more dollars into the United States. What I find so interesting about this is the personnel, because Tim Cook did a very good job with Trump in 1.0 to be able to really maneuver his way about what he needed from the U.S. government when it comes to carve-outs, et cetera. That person has really been Jensen Huang of NVIDIA this time around, so maybe he's trying to cozy up a little bit more to the White House.
Or reprise his role as ambassador-in-chief to the tech sector. We're going to be following that throughout the day. Meanwhile, counting you down to the opening bell, here's your trading diary for the rest of the week. 1 p.m. Eastern, don't miss this. The Treasury auctioning $42 billion in 10-year notes. 4:30 p.m. We will get that announcement. We are expecting it to have to do with Apple's investment to the United States. We'll also get Fed speak from Daly, Cook, and Collins. Thursday, a rate decision from the Bank of England and another round of jobless claims. Plus, President Trump's new global tariffs will take effect. We'll also be hearing about any additional tariff discussions that we've been talking about throughout the morning. And next Tuesday, really a key data point, the CPI data, especially after yesterday's ISM services indicators, kind of pointing to a bit of an inflationary boost at the same time of stagnating activity. Turning back to the Fed, Winnie Caesar of Credit Sites pulling forward rate cut expectations for the year, writing, with the July payrolls report, we capitulated on our Fed on hold call for 2025. Winnie joins us now. Winnie, thank you so much for being with us. Let's just talk about what made you capitulate. Was it political? Was it the data? And how much do you see the Fed being able to cut?
Sure, Lisa. Good morning. Thanks for having me on. It was the data. In our Fed preview earlier in the week last week, we had noted if we saw multiple months of sub 100K job ads and a continued erosion in labor force participation, that we would expect the Fed to get a little bit more concerned around the labor aspect of its school mandate. And with the July payrolls report, we basically saw all of those milestones achieved, and of course, a not very great way. And when we look back at last September, when the Fed came out with its jumbo rate cut, we're seeing a lot of parallels in terms of the economic data, and that did cause us to pull forward some rate cutting expectations we had initially envisioned for 2026, now into 2025.
One thing that's unique about your research, Winnie, is that you're talking about where the Fed's going to set rates at the same time that you're scouring all of the corporate earnings reports for the credit universe that you oversee. How much is there a dissonance between the strength that we keep talking about in the earnings and the weakness that we keep talking about will prompt the Fed to cut rates?
Yeah, there definitely is some cognitive dissonance going on in so many ways, both in corporate earnings versus the macroeconomic data, the hard data versus the soft data. And I think that a lot of people are a little bit too focused on what has happened already. We know that corporate credit fundamentals have been in good shape because we haven't seen an intense releveraging cycle as the Fed hiked rates, as we had a lot of uncertainty. And people are really kind of hanging on their hats on those credit fundamentals remaining intact. But at the same time, we know objectively that the consumer is in a worse spot than it was at the beginning of 2022 or 2023, and that there are a number of new factors and new policy considerations that corporates are going to have to maneuver. And at the same time, we have a lot of technological developments, which we're seeing have some impact on the labor market as well. So I think it's a bit of a mistake to think, okay, Q2 earnings came in much better than anticipated. Ergo, Q3, Q4, next year will all be fine as well.
Winnie, I know you're pulling forward your rate cut expectations. What happens at the end of the year when potentially, we were just hearing from our last guest, the fact Mark was talking about, we could have 3.5% inflation at the end of the year. The ISM services basically signaling a stagflationary environment.
Yeah, it does make us nervous. And a stagflation light type scenario was our base case coming into this year. It feels like it's taking a little bit more time to play out than we had initially anticipated. Now, by the Fed's own summary of economic projections, they see room to cut rates, even if we see core PCE inflation rising a bit through year end, so long as the unemployment rate is also rising. It's a little bit trickier to get to an increased unemployment rate because of that participation dynamic, but that does, I think, leave risk assets in a little bit of a vulnerable situation if we don't have as much room for the Fed to be proactively easing, and we have these inflationary impacts and also a weakening job market. It all kind of sounds like you're setting up for some risk off and, importantly, wider spreads in credit where fundamentals finally matter again.
There's not that much weakness, and a lot of companies have a lot of positivity. The Fed cuts a couple times, and that actually gives a pretty upbeat look to some of these otherwise neutral forecasts.
Yeah, Lisa, it's a good point. And we do see a path for proactive rate cuts that result in a continued bid for risk, a continued grind tighter in corporate credit. But that's really predicated on this immaculate disinflation materializing. And so far, it seems like from the soft data that immaculate disinflation is not necessarily going to be the outcome, at least in the near term, with some of the pricing pressure reemerging in services, seeing some pricing pressure in goods again as well. So it's a lot more difficult to get to that point where the Fed can kind of gradually and proactively ease rather than having to react to weakness in the labor market while also managing some re-inflationary pressures within the system.
Winnie Caesar of Credit Sites, thank you so much for being with us. Right now, we are looking at a market that is a bit risk on, although that could change. We saw that yesterday. It's been 5 of 6 days that have been down over the past week or so. I am curious about this Apple announcement. We mentioned it earlier, and Anne-Marie, it looks like President Trump is going to announce alongside Apple some sort of commitment to increase production here in the United States.
Yeah, a new $100 billion commitment. It comes at an interesting time, too, because remember, Apple has been trying to move a lot of their manufacturing out of China into India. At a time now, Trump 2.0, there has been some serious tension between New Delhi and Washington. And I wonder if Tim Cook is going to be once again caught in the crosshairs of what is going on in the tariff story. But right now, they seem to be showing good favor with the president, saying they're going to have this commitment to build some sort of manufacturing plant factory in the United States.
So maybe the memes of people wearing Patagonia vests and building iPhones will come to fruition. We also are tracking earnings. Airbnb expected after the bell. We did already get Disney as well as Uber and McDonald's, a positive look. And yet what we have seen consistently is markets have already priced everything in. And that really has been the theme.
Markets already priced in a lot of the uncertainty. What is going to be so interesting for the rest of the year, I think, is that we're actually going to see the tariff rates hit, and what do companies do with that?
And that's what we're going to be speaking about tomorrow with Kate Moore of Citi Wealth, who has been a little bit cautious on that. Jim Bianco of Bianco Research, former NEC Deputy Director Everett Eisenstadt, and Kelsey Barrow of JP Morgan Asset Management. Have a great day. This was Bloomberg Surveillance.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin-yang 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Tim, Apple making moves 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, President Trump ramps up tariff threats with India, pharma, and chips in his sights. A mixed bag of earnings adding to worries about the impact of tariffs and a slowing economy. Plus a Bloomberg scoop. OpenAI eyes a massive share sale as the AI showdown heats up. Katie, what are you watching?
I'm keeping an eye on shares of Disney right down, only about 1% lower in the pre-market. They were higher, though, initially after they raised full-year guidance on strong activity in parks and streaming. But conventional TV revenue disappointed. It also deepened ties with the NFL. We'll get into all the details coming up, Matt.
Yeah, ESPN, a big story for a lot of people watching. President Trump will announce that Apple is going to commit to spend another $100 billion on domestic manufacturing. That's the latest pledge by the tech giant to increase U.S. production of its products as it seeks to avoid punishing tariffs on its flagship iPhones. You can see the shares up 1 2/3% in the pre-market, Katie.
Yeah, interesting movement there. Let's bring in Bloomberg Tech co-host Ed Ludlow, who joins us now from San Francisco. Ed, there is an embarrassment of riches when it comes to tech news this morning. I want to talk about Apple, but I want to talk about AMD. We think back to what we heard from the company, a little bit of disappointment, and you can see that in shares lower by about 5% right now in the pre-market.
Yeah, so in the quarter that they just reported, their data center business is the key thing to watch. It was strong, but that's in part because even if there's some volatility around GPUs, AI accelerators that go into data centers, particularly around China, their CPU business really held up. The thing that the market's nervous about is that we know the situation with China has changed. They have a specific chip for that market called the MI308. And what they did not tell us was a prediction or an outlook of the pathway for sales to resume of that product. So we know where the White House and the administration stands, but what we don't have in their outlook or any communication from the company is what happens next. Because some of the most bullish names on the street think that China can represent billions of dollars of revenue for AMD next year and go to one extreme, but the company did not communicate that.
I want to ask about Apple. The other day I asked Mark Gurman how many iPhones would be made in the U.S., and he laughed at me. So I guess that's not the goal, but it does look like Apple's going to be spending well over $500 billion in the U.S. in the next 4 years. What do we know? What's new?
So this is huge in technology, and this is what you need to know. It's a $100 billion additional spending on top of $500 billion that Apple had already announced to spend over the next 4 years. The money was very specifically targeted. There will be a server manufacturing facility. A lot of that money will go to its supply base within the country. There's also some kind of training element to it as well. Apple has been really emphasizing how much commitment it has to the United States for semiconductor production. They keep giving numbers of chips that are coming out of US fabs. That's important. But what this doesn't answer, remember, this is Bloomberg reporting citing an anonymous White House official. We think the answer will come later today. This is an expansion of a financial commitment to the United States from Apple, but it is not going as far as to say we're going to manufacture the iPhone in America. That's very separate and very distant and seems unlikely still.
Well, you think back to earlier this year when the president warned that he would hit Apple with a tariff of 25% if it didn't move manufacturing of the iPhone to the U.S. I mean, this is political in nature. I think it's pretty safe to say that openly, Ed. So even if they don't fully move all of their production of the iPhone to the U.S., which many agree would be a little bit impossible here, at least this is an olive branch which might keep them in the administration's good graces.
Yeah, since the turn of the year or the inauguration, you know, Tim Cook has not been the president's best buddy. Jensen Huang, NVIDIA CEO, has been the president's best buddy, essentially. And it's been fractious, and the stock in the first half of this year, Apple I'm talking about, traded reflecting the risk of the president's attitude towards supply chain tariffs and Apple's move or not to manufacture the iPhone in America. The vast majority of people that we speak to on Bloomberg Tech and anything that you read would suggest that that idea, manufacturing a handset in this country, is highly unlikely. Not because you can't build a facility to do it, but you have to build cities worth of supplier facilities around that. You know, that's the picture you see if you go to mainland or Greater China near a Foxconn facility. You have basically a little city with all of the core component supply base around it. And America doing that, along with a lack of skill set in tooling and that level of manufacturing, that's the main barrier right now.
By the way, Ed, speaking of $500 billion, Shirin Gaffrey, after the killer story on reverse acquihires yesterday with Kate Clark, comes out with some news last night that OpenAI is going to raise even more money at a $500 billion valuation. This just continues to grow and grow.
Yeah, OpenAI has a lot of momentum. There's a key point and key distinction here that this is a tender or secondary offering. So OpenAI is going to allow some employees and early investors to sell their shares. In other words, OpenAI doesn't raise fresh capital and doesn't issue any new equity. But this mechanism allows to, in the context of talent wars, have long-serving employees get some liquidity of their own. The jump is to $500 billion valuation from $300 billion when they did their last primary, when they did raise fresh capital and issue new equity to new investors. But that is a hell of a jump. And we have some other sort of what I would call soft data coming out of OpenAI on weekly active users for ChatGPT, their place in the enterprise market. But clearly, this creates a market. It creates liquidity on an illiquid private stock. And I imagine that people will be talking about this for quite a few days to come.
Yeah, it's an amazing story. Ed, we'll hear more about it, I'm sure, on your program. Bloomberg Tech's Ed Ludlow. Don't miss his interview, by the way, with AMD's CEO, Lisa Su. That's at 11 a.m. New York time when his show kicks off, but there will be a lot of coverage, I'm sure, on Apple. There will be a lot of coverage, I'm sure, on OpenAI. Bloomberg Tech is a show you have to watch if you invest in this sector. Let's get now to Disney. The company inked new deals with the NFL and posted a strong performance from its theme parks and streaming business. But, as Katie said earlier, it's battling a tough climate for movies and traditional television. Geetha Ranganathan, media analyst for Bloomberg Intelligence, joins us now. And Geetha, I continue to be impressed by the theme park business. Like, this is a juggernaut for Disney.
It absolutely is, Matt. I mean, it brings in 55 to 60% of the company's total profits. So it really is the bread and butter of the business. And remember, coming into this quarter and actually coming into this whole year, there were so many overhangs, right? There was this whole question about, macro uncertainty. We had a new theme park from a competitor, which is Comcast's Epic Universe, opening in Florida. And so there were concerns about whether, that would kind of cause a slowdown at Disney's theme parks. And we've seen them kind of really demonstrate some excellent resilience here. So if you just look at domestic theme park profitability, it jumped 22% in the quarter that they just reported. And again, remember, they said that they're going to have more and more attractions come on board. They have 2 more cruise ships coming a little bit later this year. So this segment is really poised for very strong growth for definitely fiscal 2026 and beyond.
Absolutely. Appreciate the context on the theme parks. It feels like everyone just wants to talk about streaming, though. Streaming overall looked very strong. You do point out in your reaction piece, though, that full-year streaming profit guidance of $1.3 billion, though, points to a modest sequential deceleration in the fourth quarter. How big of a worry is that? When you think about how Disney is positioning streaming, which seems to be the future here, how much confidence do you have in their trajectory?
A lot of confidence, Katie, and that's just because they have obviously one of the best content pipelines here with their movie studio, with all of the different TV shows that they have. Yes, we've seen a little bit of in terms of trends at the Disney Plus subscriber trends. They have been there's been a little bit of a slowdown, but I think that is stabilizing. But I think what we're really kind of looking forward now is this integration of Hulu onto the Disney Plus app. And what that's going to do is not only does it kind of position this as a one-stop shop in terms of streaming, but it also helps them kind of remove a lot of duplicative costs, whether that's, marketing, whether that's, all of this, new AI or getting more personalization features, getting more enhancements. It really kind of enables them to do that in a much more efficient way. And so, yes, they did increase profit guidance for the entire streaming unit from about $1 billion to $1.3 billion. But I think, they're being a little bit conservative. I think we can continue to see a little bit more upside as they kind of, execute on the integration of those apps.
All right, Geetha, really appreciate the context there. That is Geetha Ranganathan of Bloomberg Intelligence talking us through those results that we got from Disney. Matt, I just want to quickly meditate and look at the one-year chart of Disney because I find it really inspiring. You think about the bounce back that they've seen since April, just a roller coaster that's going up over the past year, higher by about 32%, outperforming the S&P 500. A lot of that just came in the last few months, though.
Yeah, it's pretty impressive. To me, the big takeaway from this story is that you're no longer going to need, I hope, a cable subscription to watch NFL football, right? Now, finally, their apps, their over-the-top product like Disney Plus or ESPN Plus is going to be able to show me the football that I need.
That's not huge for me, but I'm really, really happy for you. And I'm sure a lot of people watching are also psyched about that. Maybe that explains the excitement in the shares. But let's take a quick check on futures at the moment. We're about 20 minutes away from that opening bell. You can see a little bit of a lift in the S&P 500 right now, higher by about 0.2%, a little bit less if you take a look at the NASDAQ 100, higher by about 0.2%. The little guys are your laggard today, but the Russell 2000 still higher by about 0.1%, Matt.
Some more movers on our radar. Snap, as in Snapchat. Apparently the kids still use this. Reported a slowdown in advertising revenue growth due to a technical issue with its ad buying tools. Mandeep Singh told me they have 500 million daily active users. That seems impossible, but apparently
there's a lot of high schoolers out there.
Apparently they have 98 million in America, in this country.
Yeah.
Which seems like a lot.
Seems like a lot, but you can see the shares down mightily right now. When we were checking this morning, we were surprised to see the market cap is almost $16 billion. Obviously, that number is going to be chopped a little bit today. Let's talk about McDonald's, though. McDonald's sales picked up last quarter and says that they will accelerate in the current quarter. McDonald's shares up 3.4%. A lot of strength overseas as well, in the U.S., but more so internationally.
It's difficult to hear about that so early on.
Well, we have another mover for you.
Novo Nordisk sales showed the weakest growth in 4 years as the company loses ground to Eli Lilly in the U.S. market for obesity medicine. So it makes sense to see McDonald's shares up and Novo down.
There's your pair trade.
Yeah, exactly. But I guess people are just using terzepatides, as in Zepbound and Mounjaro, more often than Wegovy and Ozempic.
Yeah, absolutely. We know that Novo has a lot of idiosyncratic issues right now. They appointed their new CEO, and he has a big job ahead of him. And ahead for us, President Trump ramps up his tariff blitz. We'll bring you the latest details next. This is Open Interest.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back. And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Our applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
To the minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Get now to high interest. Look at what's making headlines around the world. Apollo is agreeing to buy a majority stake in the hyperscale data center developer Stream Data Centers. Alternative asset managers like Apollo have been spending big money on data centers as the rise of AI spurs power demand. Morgan Stanley says the capital expenditures on AI could exceed $3 trillion in the next 3 years. You can see Apollo shares after the gain yesterday up again today, but they've had a rough year. Rivian is softening its forecast and warning of mounting losses thanks to President Trump's tariffs and changes to the EV tax credit structure. The levies are expected to raise costs by a couple $1,000s per car in the second half of the year, according to the CFO, and they're only going to make 40 to 46,000 cars, like hand making them one at a time. The shares down more than 5% in the pre-market, and they have already been crushed. Health Secretary, hi Katie, Robert F. Kennedy Jr. is canceling nearly $500 million of grants and contracts for developing mRNA vaccines, the vaccines that fight respiratory viruses like COVID-19 and the flu. The changes also include the cancellation of an award to Moderna for a bird flu shot. So they're going after those vaccines just like you kind of knew that they would, Katie.
Well, to that point, Matt Miller, President Trump is ramping up his tariff threats saying that announcements on chips and pharma, to your point, those tariffs are coming soon. Let's discuss with Bloomberg's Washington correspondent Tyler Kendall. And Tyler, this is what the president has said he's going to do, but it feels like it's just very incremental at this point. That certainly seems to be the read from the markets when you take a look at the reaction function to these different announcements. So give us some context here. How imminent is coming soon in actuality?
Yeah, definitely, Katie. I mean, there is a lot of perhaps ongoing uncertainty when it comes to the timeline, because we have heard for really months now that some of these sector-specific tariffs could be imminent. And we know typically these Section 232 investigations could take an upwards of 9 months to complete. But the White House does say that they appear to be closing in on some sort of announcement. And in fact, we did get a little bit more clarity, at least on the pharmaceutical end, on how those tariffs could be structured. The most clarity that we've really gotten in recent weeks, which perhaps could point us towards an announcement. President Trump saying that those tariffs are going to start out at a lower rate and then build up from there. He said after a year to a year and a half, they could reach up to 150%, with the ultimate end goal being 250% pharmaceutical tariffs. The idea being that it's going to take time to reshore production and move those supply chains. Because Matt and Katie, we have to keep in mind here, these Section 232 investigations, they're investigations into the entire supply chain. So that means that once tariffs are announced, they could be on those finalized pharmaceutical products, but they could also include the ingredients too, which only further complicates how these private companies are looking at restructuring their supply chains.
Tyler, I found the India tariff fight particularly fascinating because, you know, when Russia invaded Ukraine, the EU and the US put sanctions on Russian oil, but we all knew they were going to keep selling it to India. India would refine those products and then sell them back to Europe because Europe needs that oil. But President Trump seems to be finally nipping that in the bud, and he's gotten help from Saudi Arabia and OPEC. As they continue to raise production, he can squeeze down on Russian oil even more. Does anybody else see it like that?
Well, Matt, actually, it was really interesting because our analysts at Bloomberg Economics put out some data which shows that India takes about 37% of Russian exports. And at the end of the day, these barrels are expected to just be dispersed elsewhere in the market. So our analyst read is that this is actually more about leverage in the trade negotiations more than anything else. At the same time, though, we know that Russia is trying to stave off any sort of economic penalty, and our own reporting indicates that there could be a potential concession put on the table here to try to back President Trump off this so-called secondary tariff threat. People familiar are telling Bloomberg News that Russia could be prepared to offer an air truce to try to get ahead of these secondary tariffs, though we should say that the understanding is that Russian President Vladimir Putin is not looking for a more definite ceasefire. This would just be an air ceasefire to try to get some sort of reprieve there, as Special Envoy Steve Witkoff is in Moscow for those negotiations. But really, when it does come to India, President Trump said that over the next 24 hours, we could see some sort of update on the so-called secondary tariffs. So it's something that we're watching closely as the White House does appear to double down on this, and what else that could potentially mean for those other importers like China, for example.
Well, just quickly here, Tyler, another thing we're watching very closely is whether or not we get a decision from President Trump on who that next Fed governor might be after Adriana Kugler vacated her seat. We heard from the president yesterday saying that his pick could come by the end of this week. What is the latest on that horse race?
Right. Well, President Trump says that he has 4 names in mind. He named the top 2 that we've already been discussing, of course, for at this point weeks, the 2 Kevins, former Fed Governor Kevin Warsh, as well as NEC Director Kevin Hassett, which would mean that there are 2 additional ones. He did appear to rule out Treasury Secretary Scott Bessent, saying that he himself has said that he is not interested in the job and he wants to stay leading the Treasury Department. Really, one of the key things that we're going to be looking for is indications on whether or not this is perhaps a more permanent appointment, since we know that Kugler leaving her seat that was originally expected to vacate in January could lead to perhaps a more longer-term appointment down the line on the FOMC.
All right, Tyler, thanks very much for your coverage. Tyler Kendall there in Washington on top of it all, and there is a lot on top of which to be. Coming up, markets are ignoring recession risks, according to a Goldman macro trader, but they just keep barreling on. We'll discuss that with Jim Caron of Morgan Stanley next. This is Open Interest.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Well, Goldman Sachs says that market momentum is getting, quote, irrational as Wall Street ignores recession risks. In a note to clients, a macro trader wrote that investors are too short-sighted due to ever-changing economic and geopolitical forces. He believes that investors are likely to disregard a possible labor market slowdown, instead focusing on strong liquidity as well as structural growth themes. Let's bring in Jim Caron. He is Chief Investment Officer of Cross Asset Solutions over at Morgan Stanley Investment Management. Great to see you in person, Jim. Let's dig into that a little bit because, you know, strong underlying growth momentum doesn't seem like necessarily a bad thing to focus on.
No, I think there are two sides of the risk. And the risk to the upside is a risk, and like any other risk, it needs to be hedged. That's my tagline. I always talk about that. So I don't think that the markets are ignoring recession risk. I believe that the markets understand that there's a healthy component of downside risk possibility, but there's also a healthy component of upside risk possibilities too. And so if we get through this patch of data that we're likely to go through in August and September, and people are going to start talking about stagflation and valuations and equities, what if we get through that? And what if that turns out that Mary Daly's correct, that inflation's not really permanent, we're going to get through this? Then what we're likely to see in the fourth quarter and into the beginning of 2026 is all of the positive benefits from that one big beautiful bill act and accelerated depreciation, CapEx, and everything else. And there could be a lot of upside. And you're starting to see hints of that in earnings data right now.
All right, Jim, we're going to keep you with us through the opening bell. Jim Caron with us this morning. A check on futures. We're looking at some gains. The opening bell at the NYSE and the NASDAQ next. This is Bloomberg.
Estava sitiada.
Isso é o começo do
não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. Quick check on futures after stocks were under pressure yesterday. We're looking at the green again today. Just about 0.2% on S&P futures, a little bit less or the same on NASDAQ futures. We had kind of a mixed bag of earnings, and I think traders are waiting to see what happens today in terms of the tariff threats that we got yesterday. You hear and see the opening bells. So exciting. Down the New York Stock Exchange, BlackBerry ringing, as if we needed another parallel to the internet bubble. BlackBerry ringing the opening bell. I miss my
I loved my
BlackBerry device.
I had a pink one in college.
They don't do that anymore. Now they provide solutions, right?
Of course.
Down at the NASDAQ, Globaterra is a SPAC, and they're looking to get into the agribusiness, brought the whole family, which is fantastic. They've only been trading for a little bit, but they're still doing better than BlackBerry. Okay. You know?
Well, let's talk a little bit about Disney. We've been watching Disney shares, but I'm actually going to talk to you about Apple. Scratch that. Apple. President Trump said that he will announce that Apple will commit to spend another $100 billion on domestic manufacturing. That is the latest pledge by the tech giant to increase U.S. production of its products as it seeks to avoid punishing tariffs on its flagship iPhones. We were talking about this with Ed Ludlow, that full manufacturing of the iPhone in the U.S. is probably a pipe dream. But in terms of staying on the administration's good side, this goes some of the way towards that. You can see the shares of Apple currently up about 2% right now. Matt Miller.
All right, watching AMD as well after it put out earnings yesterday. It came out with an upbeat forecast, but the company was unable to give a clear outlook for resuming sales in China, which is concerning analysts on the street. You can see the shares down 6%. They had been outperformers. I will say AMD was up like 46% year to date, and you know, NVIDIA was only up 36% this year to date. So they're doing a little bit better, even with today's losses. Still with us, Jim Caron, Chief Investment Officer of Cross Asset Solutions at Morgan Stanley Investment Management. Great to have a cross-asset guy in here. That's Katie's day job.
That's
you know,
true.
She works on the cross-asset
team reporter.
Desk over on the other side of the office. When you say you should be hedged for downside risk, and I don't think anyone's expecting like a 50% chance of recession, but 25, 30 doesn't seem unreasonable. How do you do that?
So, look, I mean, there's a couple of ways. Number one, your first line of defense is diversification, right? And everybody talks about that. So owning a healthy amount of, decent quality bonds alongside your equity. But what you have to understand is on your equity side, the part of the market that's generating the returns and the growth is that higher risk, higher beta component, which is mostly the tech, the Mag 7 that, that everybody discusses. So on the other side of that, what you really need to start to think about is look at things through a global lens. And that's what we do at Morgan Stanley Investment Management, is we tend to think about how do we hedge our growth exposure with value. But does it have to be value in the US? It could be value in Europe. So what we've done is we've looked at growth sectors in the US, and we've hedged that with large cap value, but in Europe. You get the benefit of an appreciating euro versus the dollar, and so far this year, the European equity markets have actually done really well. So both have actually worked. The growth component in the US has worked, and the value component within Europe has also worked. Bonds, you're getting the coupon. And bonds are doing very well on a risk-adjusted basis. There's nothing wrong with holding a decent amount of bonds in your portfolio. It's just that it doesn't seem that they're going to generate high single-digit or low double-digit returns. I think it's a coupon game that you're playing in bonds.
There's a lot to focus in on there, so let's talk a little bit more about European equities. I'm wondering how those conversations with your clients sound like, because there's so many investors out there that are trying so hard to ignore what's going on in Europe right now.
So it depends where your client is. And what I find, ironically, is that most of my European clients are the most negative on Europe. Most of the U.S. clients really just see it as, oh, we have an underweight, it's doing well, we need to get back up to market weight, how much Europe should I actually own? What I think is really being missed by the market is the power of deregulation that is likely to come through in Europe. So we talk about this stimulus and this, this trade deal that Trump has done, and the $600, billion potentially from Europe. It's not so much about an investment that just comes in from the European Union as like, here's the cash, here it is. A lot of it comes from deregulation, which doesn't cost the European policymakers anything. All they have to do is they just have to take their hands off the means of production a little bit, allow the free markets, allow the capital markets to work within Europe, and what you're likely to start to see is enterprise value creation. Enterprise value creation in Europe, that's a big deal. So that makes us positive. But within Europe, we are very specific about the mid-cap DAX because we like Germany, and also the European financials because we think that European financials are the early winners. They've been doing well. Yep. We think they're going to continue to do so.
And they're doing it, by the way. They're giving you a much lighter touch in Brussels. The Germans, of all people, are finally spending money, right? And there was a great story in the Terminal this morning about another $100 billion fund that the Germans are investing in. It's like a sea change there. I wonder about the bonds part of it, though, because are we still looking at 4.20 on the 10-year? Like, it's unbelievably low yields, at least when I think about the fact that baby boomers aren't saving money anymore. The rest of world, again, is maybe going to look at the euro instead of the dollar when they do bond issues. We don't really have as much Fed independence as maybe we had last year, and if we don't like stats, we just fire the statistician. Like, all of these things are bad news for rates, right? It's got to put upward pressure on rates.
It should, but there's a lot of money that's out there, so where does it go? So if you're going to hedge your equities, and bonds are a really good candidate to do that, there's a lot of money out there, and the supply of bonds is relatively not in government sector, and more the corporate sector, the supply is really, really low. So effectively, there's a lot of crowding into the bond market because of the high levels of cash and also the significant amount of money growth that's taken place over the last several years. This is all very supportive. The other thing, though, too, is we have to start to think about these inflation numbers. We have one coming up next week. It might be 2.8% in CPI on a year-over-year basis. But I think those numbers are pretty much peaking out somewhere around that 3% level. And if it does start to come back down, people then start to say, well, maybe I should start to add some duration to my portfolios to potentially capture some extra returns. If the Fed's going to cut, which it seems like they will, this could be a place that not only is a reasonable hedge in your portfolio, but it could also be an attribution to return as well.
All right, Jim, we got to leave it there. It's always great to speak with you. Thanks for joining us on set. That is Jim Caron of Morgan Stanley Investment Management. Let's talk a little bit more about Disney. I was really eager to do that at 9:30. We're going to do that right now, though. Disney's earnings, they beat, but the shares are falling as a tough climate for movies and traditional TV overshadowed growth at its parks and streaming business. Let's discuss with Wolfe Research analyst Peter Supino. He has an outperform rating on the stock with a price target of $139 Great to have you with us, Peter. Let's talk about what we're seeing right now, because it seemed like there was a lot of good news when it comes to streaming. We know that Disney has been positioning that as the future of the business. With that in mind, why do you see this drawdown right now in shares?
The stock price reaction today doesn't make much sense to us. Disney reported objectively good results, increased its guidance. The only real explanation we can come up with that's fundamental is that Disney withdrew its intention to continue providing subscriber results. So they're mimicking or following Netflix lead by withdrawing that form of disclosure beyond 2025. And so investors are probably uncomfortable with that. Otherwise, we think Disney was somewhat crowded before this report, and that the guidance increase that they reported was generally expected.
Well, Peter, I know you have an outperform rating on shares, but you mentioned investors are uncomfortable with the fact that they're not going to be disclosing subscribers. Are you uncomfortable with that? How much harder does that make your job of analyzing this company?
So I think it's great. And the reason I believe it's great is because the period of time when it was appropriate for Disney and the industry to be reporting granular data to Wall Street about subscribers and ARPU was the period of high growth in which valuation multiples needed to correspond to those perspectives on future growth. Today, in the United States, streaming is a very saturated, mature business for those households that receive their TV that way. There are almost 90 million U.S. subscribers to the sum of Disney Plus and Hulu. It's almost as big as Netflix in the United States. And so it makes sense to run the business differently and with an eye towards balancing units and price and margins. We're into a different era for streaming.
But Peter, you're an analyst. I mean, what other data would you like Disney to hide from investors?
It's interesting.
Why would you want less transparency? Why not every day,
It's a great quip, but you should look at the Disney earnings release and you'll see an enormous amount of information and granularity, much more than you'll see from other industries. It's our view that generally speaking, the media and telecom coverage that we have at Wolf Research reports more KPIs and more detail than most conglomerates across the S&P 500, and sometimes it can be counterproductive.
Appreciate you playing along there. It does seem a little bit unintuitive, but I hear what you're saying. Let's talk a little bit about conventional TV, because it seems like that is the weak spot here when you take a look across the business lines. I mean, it seems like this is an industry-wide issue. Is there anything that Disney can particularly do here? Any levers that they can pull, or do they just have to be content with the overall environment?
Well, it's extremely difficult to have any exposure to the linear TV bundle. We wrote recently that the only things that are certain in life are death, taxes, and the decline of linear television. And so the good news for Disney investors is that everybody who follows this stock on the buy side or the sell side has underwritten, a steady, permanent decline of linear TV in their earnings model.
We hope TV has a long, long life. And we hope you come back and join us. Peter, Wolf Research analyst Peter Supino there talking to us about Disney. A lot of moving parts here, and it's going to be a stock we're watching definitely all day long. Coming up, Brian Reynolds, ad tech company, is out with its first earnings report since the IPO. We're going to get the view from the CEO of Mountain. Mark Douglas joins us next. This is Open Interest.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appeared, immediately I asked whole corporations study how will you bring generative AI to their job.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The ad tech company Mountain is out with its first earnings report since it debuted as a public company in late May this year. The results are strong as the company reported better than expected earnings and an outlook that impressed. We see analyst after analyst raising price targets on the stock. Joining us now to discuss is Mark Douglas, Mountain CEO. And Mark, great to have you here. I do want to get your take on some of the other stuff going on in media, especially Disney. But first off, tell us about the earnings, because I see Evercore ISI raising its target, Morgan Stanley raising its target, Needham raising its target, and it goes on and on.
Yeah, well, the company had a great quarter. We definitely beat analyst expectations. Adjusted EBITDA was up 92% year over year, revenue up 35%, the performance TV revenue up 35% year over year. So great quarter. We're excited. We're very bullish on our future, and just gonna keep stringing together quarter after quarter. That's our goal.
It's worked so far. The shares are up now 82% since you went public, which was, what, May
22nd.
22nd.
Yeah, right before Memorial Day weekend. Then I went to a music festival after.
What festival?
I went to Bottle Rock, which is great music festival. I had a great weekend. You leave the New York Stock Exchange, and then you get live music.
It's a good little honeymoon. It's a good little honeymoon.
What more could you ask for?
Okay, so you're fresh off your first earnings report. I was reading through the transcript. You made the point that while others chase the top 1% of advertisers, we've gone the other way. I'd like to get a little bit more detail there. What does that look like, that strategy?
Yeah, so television advertising, and now we're focused entirely on streaming TV, and essentially the market is, that's where all the consumers are, has been this medium for the world's largest brands, and we've democratized it to make it so that any size brand, especially small and mid-sized businesses, direct-to-consumer brands, e-commerce brands, challenger brands, can now use TV to find their next customer, and can do that alongside of the other channels they've traditionally used, which are paid search and paid social. So our platform enables that. Customers just come to Mountain in order to get on television and do it in a very targeted way and be able to measure the impact.
So I mean, what's next? You just continue to execute that strategy? Is there something you're pushing, a lever you're pushing for growth? What's your plan to continue this run? Because you've already basically doubled your stock in 2 months.
Yeah, so we continue to invest in customer acquisition. We can sense that we've gone from where we're evangelizing this is something SMB business can do to where now they're aware, and so we're just opening up the door, bringing a lot more small businesses. We have new technology coming. We effectively kind of pre-announced. One of the challenges our customers have is they don't have the production budgets that you typically think about with TV commercials. So with the advent of AI, we have
and Ryan,
and of course Ryan, and we're partnered for tools around that we're going to be announcing in the not too distant future. We have a division of a company called QuickFrame, which is a marketplace of thousands of independent creators to help our customers build ads. And this is not just small businesses using this. This is larger businesses too who want to do more content and do it faster, and so they're just as interested.
So it's not just placing the ads, you're helping them find ways to produce the content at a lower cost.
Yeah, the stat about our business I'm most proud of is 97% of our customers have never advertised before on TV when they launch a campaign on Mountain. So, but that also means 97% have never produced a television commercial when we meet them. So we have to help them with both problems, and we've been doing that for a while.
Well, let's talk about the overall landscape that you're operating in. We got Disney results this morning, and it was a pretty dire read on the state of conventional TV. Their income from conventional entertainment TV fell about 28%, and we were just having the conversation with Peter Supino that it seems like linear TV is in a bad way right now, and there's not a clear light at the end of the tunnel. And just curious your read on the situation.
Well, I think that's true. I mean, essentially, people who still have cable subscriptions cancel them at the rate they move. Like, you don't move and then call the cable company anymore, right? You just, let's say your TV, you don't even play, you know, you just turn on your Samsung or LG TV or any brand, and all the apps are on there. You can watch television instantly as long as you just, you know, connected to your Wi-Fi network.
Including Bloomberg.
Yeah, and Bloomberg, of course.
Yeah.
And so, but the way to think about it, I think when mobile first came about, people thought of it as something new, but it's really the same consumers just having another way to access the internet, and streaming is the same thing. Yes, their linear businesses are declining, but at the same time, the streaming businesses are growing. Their business models are shifting a bit, but overall, people are going to want, if you give people what they want in the way they want it, they will consume more of it. It's really easy. So they're just going to watch more streaming content, and all these networks will do
Well,
fine.
is the deal with ESPN and the NFL going to make it so I don't have to have cable to watch football on the weekends? Because if you don't have to watch live sports, and the NFL must be one of the most valuable leagues in the world with F1 and whatever World Cup, you know, if you don't have to watch live sports, there's really no reason to have cable TV.
Yeah, I mean, I think on streaming, people obviously still want to watch live. And so one of the things you see ESPN doing, and Disney in particular, is bringing live sports to streaming, bringing and the ads with it. And so you'll still be able to watch live. You just won't, as you said, you won't need a cable subscription to do it. And if you look at, more consumers are coming in the streaming with ad-supported options or hybrids, subscription and ads, than are going subscription only. So consumers have clearly decided, look, if the ads are entertaining, they're targeted to me, they're broader than just the world's 1% of the world's big brands, then that's an experience I'm willing to partake in alongside my favorite shows, my favorite sports games, and so forth. So this is going to be, I think you're going to see a lot of growth in the media business in the next few years, especially as live sports really starts to find a home in streaming.
All right, Mark, great having you in the studio, especially after your first earnings day. Mountain CEO Mark Douglas, fresh out of 15,000 one-on-one analyst meetings. Coming up next hour, more earnings insight from the C-suite. We'll sit down with Stephen Yalof, the CEO of Tanger, which operates shopping centers across the United States. This is Bloomberg Open Interest.
fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Open Interest. Let's get a check on this market right now. We're just over 20 minutes into the session, and you can see it's just about an even split when it comes to the S&P 500, about 0.2% higher, 267 names in the green. Up top, this is interesting. Apple is your biggest contributor to the upside, adding 12 points to the index right now. That's after Apple recommitted and added to its commitment of how much it's going to invest in the U.S. over the next couple years. Obviously, the market liking that sign of goodwill from the company, sending shares higher by about 3.5%. Train your eyes on the downside, though. Advanced Micro Devices, AMD, is your biggest loser right now, down 5%. That's taking about almost 2 points off the index. Of course, they reported earnings last night. China still an issue for the chip maker, as it is for many of the companies in this index. Let's take a look at sectors as well. I think this is interesting, too, because you take a look, another even split, just about the same number of green bars as there are red bars. Energy up at the top. You wouldn't necessarily know it by looking at the single names here, but energy higher by about 1%. Mac, consumer discretionary, big tech, and then you take a look at the bottom. Your laggards today, industrials and healthcare. That's actually a familiar sight by now. Healthcare down about 1% as well.
Yeah, oil rallying more than $1 a barrel. But we're still only at 66.21 for Brent, 68.70. 66.21 for NYMEX, 68.70 for Brent. Not big numbers. Coming in the next hour, Ann Berry talks sky-high valuations, really big numbers for companies like OpenAI and Palantir. Plus, we're going to talk about the convergence between public and private markets, as well as outlet malls. This is Open Interest.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. We're hearing from the family of one of Jeffrey Epstein's accusers for the first time since the sex offender's co-conspirator, Ghislaine Maxwell, offered to testify before Congress in exchange for clemency.
Virginia Giuffre, one of the most vocal victims of Epstein and Maxwell, took her own life in April. Her sister-in-law, Amanda Roberts, tells CBS Mornings Ghislaine Maxwell was a monster who took part in the abuse, and she should not have been moved to a minimum security prison camp while she appeals her conviction.
It is a slap in the face, the idea that she could potentially get a pardon.
Sky Roberts says they will continue to fight for justice for his sister.
She was a powerful voice in the survivor community. She allowed survivors to have a platform.
Michael Wallace, CBS News.
CBS News has learned more about top Justice Department lawyer Todd Blanche's interview with Jeffrey Epstein's co-conspirator, correspondent Ed O'Keefe at the White House.
According to a source familiar with the exchange, she told the number 2 at the Justice Department that Trump, once a friend of the late child sex offender Jeffrey Epstein, did nothing in her presence that would implicate him. That revelation comes as sources say top administration officials are discussing whether to make public some of the transcript or recording of what Maxwell told Blanche.
U.S. envoy Steve Witkoff met with Vladimir Putin in Moscow today ahead of President Trump's Friday deadline for a ceasefire agreement with Ukraine. The BBC's Steve Rosenberg.
Russian state TV showed just a few seconds from the start of the meeting. A smiling President Putin walks up to and greets Mr. Witkoff, and the 2 men shake hands.
President Trump has warned Russia he'll impose very stiff tariffs if Moscow doesn't end the war within days. Firefighters in Southern California have rescued a woman who was trapped in a chimney at a recreation building at a park in L.A. CBS News LA's Desmond Shaw watched from the cake-cow chopper.
The woman was inside of this impossibly small chimney right now. She is very lucky to be okay. When Urban Search and Rescue from LA City Fire was able to extract that woman, they had to basically kind of yank her out. She looked like she was in a little bit of pain, and then they strapped her to a gurney and lowered her down to the ground, and they just put her in the back of an ambulance.
A 5-week-old baby girl's been hospitalized after she contracted an extremely rare virus when she was bitten by a tick during a walk with her mom on Martha's Vineyard. Dr. Shira Duran at Tufts Medical Center in Boston.
It is not common for babies who don't walk to get tick-borne illnesses in general. This was really an unfortunate situation, obviously.
There is no treatment for Powassan, which can cause brain inflammation or meningitis. Dow's up 45 in early trading. This is CBS News. Exactly 60 years after President Lyndon B. Johnson signed the Voting Rights Act, civil rights advocates are still fighting.
Last week, Senate Democrats, including Georgia's Raphael Warnock, reintroduced a bill to expand and restore protections enshrined in the original Voting Rights Act. Warnock warns Republicans are turning democracy upside down.
In Texas, they're going back into session in order to redraw the maps in the middle of the decade.
Republicans in several states are trying to change congressional maps to favor their party and make it difficult for Democrats to regain the majority in Congress. Allison Keyes, CBS News.
Turns out financial agreements aren't the only things a couple of Ivy League universities cut with the Trump administration to settle claims of violating anti-discrimination laws and tolerating anti-Semitism. In addition to paying fines, Columbia and Brown will also share all college applicants' standardized test scores, grade point averages, including info about race. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live as well on YouTube, so go check us out there. Isabel Lee and Paul Sweeney with you for the next 2 hours. This is the Bloomberg Intelligence Radio program. Coming up, we're going to check in with Enda Curran, Bloomberg Global Economy Reporter, get the latest on trade. And speaking of the latest on trade, a red headline just crossing the Bloomberg terminal. President Trump to impose additional 25% tariff on goods from India. So there you go. We'll have full reporting on that. Mira Panda joins us, Executive Director, Global Market Strategist at JP Morgan Asset Management, to get her thoughts on the markets. Damien Gardet, Bloomberg News health reporter on Novo Nordisk earnings. And then Geetha Ranganathan, she covers all the media stuff for Bloomberg Intelligence. She's going to break down these numbers out of Disney. The key takeaway from me was them doing a deal with ESPN. I think that's a pretty positive move for Disney. Kind of ties them to the NFL, which is the big sports property out there. So a lot to get to the next couple of hours on the earnings front in particular. Let's go to Lisa Mateo and get a Bloomberg Business Flash to start us off.
You got it in this Bloomberg Business Flash, brought to you by IBKR. Financial advisors, you can switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest. You can learn more at ibkr.com/RIA. Well, we have stocks. Oh, they're advancing now. This is investors' way. A couple of things. President Trump's latest tariff threats. Of course, now this just coming out, like Paul mentioned, 25% additional tariffs on goods from India. So we'll keep you posted on that. But also investors sifting through more corporate earnings. So I want to get right to that. We'll start with Disney. Their shares are down about 3%. Strong performance in their theme park streaming business, but it was overshadowed by revenue from conventional TV networks, sports programming that fell short. And it looks like budget meals, pop culture collabs, they were a big hit for McDonald's. Its shares are up about 2%. Sales picked up in the last quarter, and that ended 4 quarters of declining or basically lukewarm growth. Uber, they unveiled $20 billion in new stock buybacks. Its shares right now, they're down about 2%. And we're keeping an eye on Apple's shares. They're up about 3.5% because President Trump expected to announce that Apple's going to agree to spend another $100 billion on domestic manufacturing. CEO Tim Cook actually expected to be there for that announcement. We shall see. All right, so we go to the NASDAQ, up 0.6%, 125 points. The S&P 500 rising 0.3%, 24 points. The Dow, little changed, up about 40. And the yield space, a 2-year at 3.71%, down 1 basis point. The yield on the 10-year, 4.22%, and that is little changed. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Isabel.
All right, Lisa Mateo, thank you so much. We appreciate that, as Lisa was just reporting. We've got green on the screen here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Isabel Lee. We're joined by Bloomberg's Red Brown. Red, what are you looking at today?
First one on my list is actually in the red, is Supermicro, down around 19%. The ticker for this one is SMCI. Currently the worst performing company in the S&P 500. Prior to today, the stock was up 88% this year. Now it's looking at around 50% or so. So yeah, this move comes after the company cut its full year outlook and projected a quarterly profit that fell short of expectations. The kind of interpretation of some of of those moves is that they're coming under increased pricing pressure when it comes to the stiff competition for AI servers. Obviously, the demand is there. It now becomes a question of how much they can spend, how much can they charge their customers for those. So yeah, it looks like increased competition is taking quite a hit on their outlook. They said earlier this year they expected to generate around $40 billion in sales. They've now lowered that to at least $33 billion. So quite a pretty significant hint there for Supermicro.
What about Match Group? What's going on there?
Yes, Match Group is right now, if we're looking at the shares, are up around 13%. That's its best performance since July of last year. And that's kind of moving in the opposite direction of what Supermicro did. They give a positive outlook for this next quarter. Kind of a reverse of a lot of the trends we've seen for this company. It's been kind of, I don't know, a bit of a negative sentiment around the company. The shares are trading up this year. But this positive move coming after, besides the outlook, the company also gave or pledged to invest another $50 million into product development. That's one thing that a couple of activist investors that have taken an interest in the company have been really pushing for, trying to reinvigorate profitability, trying to reinvigorate user growth, which is the company has really struggled with the last 3 years. It shrank that figure each quarter. So yeah, probably a positive thing for Match to continue to kind of invest in how their users interact with their products. They're trying to get rid of bad actors, trying to encourage more interactions, things like that. And also we'll be going towards a marketing budget as well. And if anyone's in New York and rides the subway, they see kind of a new dating app ad on the subway pretty much weekly. So we'll probably get to see a couple more of those as well from this.
All right, Red. Appreciate that, Red Brown. Earnings reporter for Bloomberg News, bringing us the latest here. And for more conversations like this, subscribe to our new Stock Movers Report. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Tariffs right back on the front page as if they've ever left here. But we had some news coming out. President Trump going to put an additional 25% tariff on goods from India, in part retaliation for the whole buying and selling of Russian oil and that whole thing. So let's just get the latest reporting here. Enda Curran joins us, global economy reporter. Enda, what are you guys looking at here on this tariff front?
Obviously fast-moving, Paul, as you mentioned there. Now we have this new imposition of an extra 25% on Indian goods. So obviously, on the one hand, there's the economic impact of this, the trade impact from this in terms of flow of merchandise goods between both nations. But really, probably the bigger story here is just a geopolitical one, what it means for relations between India and the US. Of course, building an alliance with India, building up that Quad infrastructure has been a priority for the US government over the last several years. This would now appear to at least put significant tension into that relationship. We'll have to see exactly how India will want to respond. They are probably unlikely to want to switch off its source of energy from Russia, for example. But I think there's a lot of scrutiny on, yes, on the one hand, it's part of the tariff blitz, and you have to question what will this mean for the cost of goods and what will it mean for both economies. But the bigger story, I think, is what will it mean for relations between both governments, obviously at a very pivotal time in the geoeconomic space, and whether or not there can be an off-ramp on this in the near term. I think those are the real questions people are asking.
You said tariff blitz, and I think we're definitely seeing that. We have the president of Switzerland making her dash to Washington on Tuesday in a last-minute attempt to really prevent the U.S. from imposing higher tariffs. What is the latest on that? And if you could just tie everything together from India to Switzerland and even China, what is the latest that we should be expecting?
Well, I guess, look, clearly we're at the business end of President Trump's hawkish trade agenda now, Isabel. He's keen to get some of these measures across the line. With Switzerland, as you mentioned, the president is arriving, or has arrived in D.C. She hasn't arrived here with a formal invitation. A lot of people are making that observation. She's here for some whatever talks she can get, including with the Secretary of State, Rubio. The thinking is there will be a focus on tariffs around agricultural goods, gold, pharmaceuticals. Where can concessions be made? Where can Switzerland meet the US halfway to try and get this 39% level down? But as I say, not clear where those talks will go, given that it's not an official invite from the top principals. But to your broader point, no doubt about it, we're seeing now this flurry of moves. India today, The Swiss talks are underway. President Trump has threatened more to come on the pharmaceutical front quite soon. That will be an important one to watch. And of course, the China talks ongoing. Now, all of this just continues to add to the idea of a very hawkish trade policy. We don't yet know where it's all going to land because these talks on several fronts are ongoing. But at the very least, you would have to say clearly tariffs are rising, tariffs are here to stay, and that whatever comes out of the weeks ahead really is going to be a question of what level those tariffs will be set more than anything else.
And there seems to be a theme emerging that if you write a check big enough for the U.S. government, for this administration, whether you are a university, whether you are an individual company, and we'll see that from Apple this afternoon, or whether you're actually a country, that can buy you some goodwill, in this case, lower tariffs. Is that kind of how a lot of folks are thinking about this transactional president?
Well, clearly there's been a bilateral focus, no doubt about it, Paul, when it comes to the trade deals. Individual countries have been coming to the U.S. saying, look, what can we do here? Promising more investment, promising to buy more goods or shake up their own tariffs, like you mentioned. So there clearly is a transactional side to it. And then, of course, at the corporate level, like you mentioned, big companies have been touting big figures of capex investment into the U.S. President Trump and his team, of course, touting those figures as signs of what their trade policy is achieving. There is skepticism, of course, when it comes to capex and investment announcements by companies in terms of what's new, what's old money, what's fresh money, so to speak. But nonetheless, the figures are big, and the administration is touting it. And it does speak to the idea that President Trump goes out there with a big hawkish take. He puts some big figures on the table, and companies and countries are responding. And that does seem to be where we're at right now in terms of where this overall trade policy is headed.
To Paul's point, apart from writing a big check, what tactics are you seeing to be proving as effective when it comes to these countries? Because I feel like some countries, it's just done and smooth is better, but for some, you see it a little bit more drawn out and a little bit more in our headlines.
Yeah, that's right. I mean, I think some countries, Isabel, are just avoiding retaliation. Mm-hmm. They're just playing the Trump game. They're coming to the table. They're saying, okay, you're making these demands. What can we do? I mean, the EU was interesting. They had threatened all kinds of retaliation over the past few months on individual products and on broader measures and on investment flows and the like. But ultimately, that deal was done with 15%. That once upon a time would have been quite a shock, the US putting 15% on EU goods. Other trading partners, similar, playing that kind of waiting game, not necessarily responding with retaliation. But of course, like you say, there's underlying tensions in other relationships that are much harder to resolve. The most obvious one being China, of course. Those talks continuing, tariffs still remaining in those 40s, 50% effective average rate area. And of course, you're seeing the underlying tensions now with India as well. So on the one hand, some countries coming to the table to try and get a deal done and to move on. Others much more protracted and complex, like you mentioned.
And thanks so much for joining us there. We really appreciate your reporting here on a very fluid situation, that being global trade and tariff policy. And Curran, he's a global economy reporter for Bloomberg News. He is based down in Washington, D.C. So again, we've got the head of the president of Switzerland in D.C., presumably trying to work out a deal. We've got India that did not work out a deal, and now we have higher tariffs. And so that's kind of how it looks like it's playing out here. So we'll have to see how the next shoe drops. I guess the next shoe, as Enda mentioned, might be China. All right, coming up, Mira Pandit, Executive Director of Global Market Strategist at JP Morgan Asset Management, going to join us here to talk about the outlook for these markets. And Damien Gardet, Bloomberg News health reporter, Novo Nordisk reported some numbers, so we'll talk all things healthcare there. Again, healthcare, pharmaceuticals, that's front and center on the trade war as well. We're going to have more coming up. This is Bloomberg Intelligence. Good morning.
Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, you can see if your company qualifies at oracle.com/Bloomberg. Well, stocks, they're trying to battle back from yesterday's losses on Wall Street. Data showed weakening U.S. services, and that raised some concern about the Fed's policy challenges. Speaking of which, the Fed's Neil Kashkari tells CNBC that the slowing of the U.S. economy, well, it could make an interest rate cut appropriate in the near term. He also said he still sees 2 cuts by year's end. A pretty quiet economic calendar for today. Tomorrow, things ramp up. We have initial jobless claims and wholesale inventories. All right, let's get to the markets. We have the NASDAQ up 0.2%, 56 points. The S&P 500 up 0.1%, 10 points. The Dow, that's little change. It's down about 9 points. The 2-year yield 3.71%. That's down 1 basis point. The yield on the 10-year 4.21%, and that is little change. We have the Bloomberg Dollar Spot Index. That's down about 0.3%. And I want to point out the euro. It's up about 0.4% at 116.29 against the dollar. Shares of Advanced Micro Devices, that's the second largest maker of artificial intelligence processors. Well, they're down about 7%. The reason why for that is uncertainty about its China business. Then we go to Super Microcomputer. Its shares taking a hit, down 19% after cutting its sales forecast. And finally, sources saying OpenAI in talks for a secondary share sale, valuing the company at about $500 billion. And that is a big jump from the $300 billion valuation earlier this year. For on-demand news, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Isabel.
All right, Lisa Mateo, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. Well, Tom Keene likes to say that this market, this equity market's been, quote, grinding higher, maybe even a melt-up. Our next guest says, don't call it a melt-up here. There's some fundamentals out there that are pushing this market higher. Mira Pendit joins us. She's Executive Director, Global Market Strategist for J.P. Morgan Asset Management. Mira, how are you guys thinking about this market? Because, boy, you could argue there's some headwinds out there in terms of tariffs and maybe slower growth down the road, maybe higher inflation down the road. Yet this market, after that initial shock, is continuing to work higher.
There are certainly still risks and headwinds out there, and we don't want to ignore them. But I will reiterate, don't call it a melt-up, because we have some real drivers of overall market action here. And a big one for me is where you see growth and markets meet is profits. And what we have seen from last year was 10% profit growth, so already a pretty high bar to surpass. The first quarter, we had double-digit year-over-year profit growth. And so far in this earnings season, we are also tracking to essentially double-digit profit growth. Those are really hard signals to ignore when you look at the overall health of companies. And ultimately, we won't own equities because we want to own those future earnings streams. So that's why I think you see the market continuing to push higher.
I like your note. It said sunny side up. So if the market is no longer Fed dependent and earnings are really being driven by real fundamentals like capex and resilience when it comes to tariffs, what then could realistically derail the constructive narrative in the second half of the year?
We do still see some of the headwinds that you pointed out. Look, tariffs have gone from 2% to 10%, 15%, 20% new baseline. That's 5 or 10x what it was last year. And in that case, someone's going to pay for that. So there's going to be some challenges for those who foot the bill. You have consumers who are probably going to face higher inflation in the end of the year. And you also have companies that eventually are going to see some erosion in their profit margins. But what we also have coming into next year is the one big beautiful bill and some of those tax cuts coming into play, which will benefit both consumers and corporations directly. So even as we do see the economy still growing, but certainly slowing, you do have some buffer coming in and some guardrails into the new year.
What have you taken away from earnings so far this quarter, Mira, and some of the guidance that some of these companies have been providing?
Resilience is a big one. Look, the bar was a lot lowered coming into this quarter because essentially over the course of Q2, you saw earnings expectations cut in half. Now we have surpassed those initial expectations. So forget about that lowered bar. We already surpassed what we thought we could do even before a lot of these tariff headlines started to break. So that has been not just resilience, but pretty robust results. Now, look, 65% of that earnings growth is driven by the Mag 7. that is the anchor for our profitability, but that dominance is supposed to relinquish ever so slightly in coming quarters with a more inclusive profits environment. But what you're seeing is that companies are managing through some of these tariff risks and making some hard choices, but also consumer demand is still reasonably resilient as well, with consumers shifting their consumption patterns. We want things like toys and dining out and beauty products, some of these simple luxuries as opposed to the big ticket items or the big travel and spend. So it's about that evolution and adaptation, which certainly consumers, companies, and markets are doing.
Are investors, though, underestimating the impact of rising tariffs, especially if consumers are already absorbing some 60% of the cost?
To some extent. Look, we've been waiting to start to see tariffs show up in the data. We're starting to see it certainly in pockets within CPI when we look at things like appliances and coffee. We are seeing it in some of the ISM surveys, particularly on the services side, also on the goods side. So you are starting to see it feed in, and companies are acknowledging those risks. The key question here is still to what extent, and to what extent then coming into next year do some of the favorable fiscal policies start to buffer some of that, where inflation maybe does get a little bit higher and stay a little bit higher, but then you see a little bit of an acceleration to growth that helps the overall consumer picture from that standpoint.
Mira, thanks so much for joining us. Really appreciate it. Mira Pendant, she is an executive director, global market strategist at JP Morgan Asset Management, joining us from New York City via that Zoom thing. Is she and everybody else at JP Morgan waits to go into the new headquarters on Park Avenue, which looks just awesome. Let's go a little healthcare here on you. It's earnings season. Novo Nordisk, boy, their sales slowed to the weakest growth in 4 years as a company loses ground to Eli Lilly in the U.S. market for obesity medicines. Damien Gardet joins us, healthcare reporter for Bloomberg News. So, Damien, talk to us about Novo Nordisk. That the obesity market was such a driver for them, for Eli Lilly, for a couple of other folks. Is that starting to play out, or is it a market share game?
It seems like it's more of a market share game where, like you said, they're losing ground to Eli Lilly, but we kind of await tomorrow's earnings from Eli Lilly, where we'll see their results and have a chance to kind of ascertain whether it's a broader demand issue for these weight loss medicines that have been in such dramatically high demand for the past few years, or if it's a Novo-specific issue. There are a lot of signs that it's the latter. Novo has had trouble with compounding pharmacies here in the U.S., cutting into their market share. They are losing ground to Lilly. As we mentioned, Lilly's medicine generates more dramatic weight loss in clinical trials than theirs does. It appears to be a more potent...
What's the product for Novo?
Novo's is Wegovy, is the weight loss drug, or Ozempic is the same thing, but for diabetes. So, they're very much the originators of this market, and it's starting to feel like, through a series of corporate decisions and maybe some bad luck scientifically, that Novo might have kind of squandered that winning lottery ticket. They started here. They were the first to spotlight the weight loss effects that these GLP-1 medicines could have. But now, as you mentioned, this is their slowest growth since 2001, which predates Wegovy's launch, before the obesity kind of revolution that we've seen with these companies.
And in the story that I read, it said that Novo started the year as Europe's most valuable traded company, and now they're somewhere in the 11th ranking with a value equivalent to $212 billion. So squandered indeed, to your point. And it seems like central to their strategy is just really finding the next generation of weight loss treatments and expanding their obesity-related treatments. How are they faring with that?
They've had some trouble. So one of their next generation therapies that was meant to be kind of the, not usurper, but heir to Wegovy, had clinical trial results that people perceived as a disappointment. They helped people lose 20-odd% of their body weight, which sounds like a lot, but Wall Street was expecting more like 25%. And so Novo shares traded down on that. And there's a growing sense that they don't necessarily have in their pipeline the medicines that will allow them to compete in the next generation of obesity therapies. And I thought it was interesting, the CFO of Novo was on, I think, Bloomberg TV this morning, noting that they have significant firepower for deals, was his words. And on the one hand, that's promising because it suggests they can buy their way back into competition, but it really does stand out as a stark sign of just how things have gone for Novo, that again, the company that invented this market is saying we may need to spend money to bring things in from outside.
All right, well, in terms of the compounders, I think of Hims and Hers. They reported numbers, and company sales for them, this is a compounder, not the drug maker, the weight loss drugs, sales came in at $190 million in the second quarter compared with $230 million in the first quarter, so they're seeing weakness. So It seems like, is there still a belief that this obesity market is a growing market, or have we kind of reached some level of stasis level?
That's what we're trying to find out. I think the assumptions baked in, especially to the valuations of these companies, is that the market will continue to grow. You see numbers like $130 billion by 2030, which would be substantial growth from here. But we need to see that actually play out. And I think one of the, not dark horses, but the card we need to see turn is the oral GLP-1 from Eli Lilly.
That's what I'm talking about.
So if that succeeds in phase 3 and wins FDA approval, so these are a lot of contingencies, and launches next year, that could conceivably democratize access to these medicines. It would be cheaper to produce. Presumably, Lilly would charge less money for it. And that could conceivably goose demand such that we reach those lofty targets.
What percentage of people that are qualified from a body weight index, what percentage of those people actually use GLP-1s? Do we know that?
It's like fewer than 1 million people. And so, that's a fraction.
It's
roughly half
of
the United States qualifies.
Is it insurance? Is it a cost issue?
I think that's the biggest thing.
Okay.
It can be difficult. Employers have to opt into coverage.
Okay.
People struggle to get reimbursement. CVS has restricted access. These are expensive medicines. The list prices are in excess of $1,000 a month.
Wow.
Which for, the companies would make the argument that the long-term cardiovascular and health benefits more than make up for that cost. The payers would make the argument, yeah, okay, but there's a finite number of dollars in the world. And so, that's the push and pull that we're seeing.
And the companies now filed around 132 lawsuits in 40 states to really just stop copycats. And to your point, they were sort of the original by many metrics, and now they have a lot of copycats. How much of that is a threat to their business moving forward?
So that's the interesting thing. So the legal loophole that allowed compounding pharmacies to sell an identical version of Novo's medicine has been closed technically. Now, many of them are still doing it, and that's why Novo has been incredibly active on the lawsuit front, as you mentioned. It remains an active threat, but Novo is counting on, one, winning those suits, which they have consistently in the past, but also regulatory action in the U.S. to kind of shut down these copycat firms, which are operating outside of the law. So it's a little bit of a gray area, I think, for people trying to project Novo's revenues looking forward, is how successful will they be at stamping out that illegal competition?
Damien, thank you so much for joining us. Damien Gardet, healthcare reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio, talking about Novo Nordisk, Eli Lilly, the obesity drugs, which have been such a big driver of those businesses over the last several years, and the stock prices. But to me, it's once they get the oral drug, I don't have to give myself a shot. That'll be big. I think that'll open up the market. And then maybe if they can get the cost down so more people can afford it, that could be a driver for continued growth.
The oral thing will be a big change. And also, I feel like it's really just the access, because a lot of my friends, even back in Asia, they don't need it, but they buy it. And my dad, who needs it, is running out of supply, so they have to hop from one drugstore to another.
All right, very good. We'll stay on top of it. All right, folks, coming up later this month, join us for live coverage from Jackson Hole. We'll be on the ground in Wyoming to cover the Kansas City Fed's annual meeting and remarks from Fed Chair Jay Powell. It all starts Wednesday, August 20th, and finishes up with a special edition of Bloomberg Surveillance. Tom Keene, Lisa Bronwitz, and Michael McKee will all be part of that special starting at 9 a.m. Eastern Time on Friday. Plus, watch for a special episode of Odd Lots Podcast. Joe Weisenthal and Tracy Alloway will be taping several segments from the event as well.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have stocks. Well, they're advancing. This is after yesterday's losses. We'll start with the NASDAQ that's riding the gains right now, up 0.3%, 81 points. We have the S&P 500 up 0.3%, 18 points. And the Dow, that's little change. It's up about 41 points. The two-year yield, 3.71%. That's down 1 basis point. The yield on the 10-year, 4.21%, and that is little changed. We go to oil. It's ticking higher after a 4-day drop. We'll start with Brent crude up more than 1% at $68 a barrel. Gold lower. We have COMEX gold down 0.1% at $3,431 an ounce. The Bloomberg Dollar Spot Index, that's down about 0.3%. Want to point out the euro, it's up about 0.4% at 116.32 against the dollar. And finally, Bitcoin up about 0.5% at just over 114,000. Few stocks on the move this morning. Shopify up 20%. Its revenue and third quarter outlook beat expectations. And Snap, you know them, the owner of the Snapchat social media app. Well, they announced a slowdown in advertising revenue growth, and a big part of that was from a technical issue with its ad buying tools that happened earlier this year, so its shares are taking a hit down 18%. And finally, dating app company Match Group up 12%, better than expected third quarter sales forecast. It also pledged to invest $50 million in product development. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Isabel.
All right, Lisa Mateo, thank you so much. We appreciate that. Isabel Lee. Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. One of my companies I used to cover, the Walt Disney Company, Mickey Mouse, they reported some numbers, better than expected numbers. So, of course, the stock's down 2.9%. So the Walt Disney Company reported better than expected third quarter earnings with continued growth at its parks and streaming business, overshadowing a tough climate for movies and traditional TV. Let's break it down with Geetha Ranganathan. She covers all the media stuff for Bloomberg Intelligence. Geetha, it seemed to me like on the surface a pretty good quarter for Disney. What's the street a little concerned about?
Yeah, really good quarter for Disney, Paul. The beat and raise for sure. I think expectations might have been slightly high. And the fact that they didn't necessarily give us any specific guidance for fiscal 2026, they did point to a raised guidance for EPS growth for fiscal 2025, 18% now instead of 16%, but they didn't necessarily give us anything specific for fiscal 2026. That could be a slight source of disappointment. Other than that, the only other thing that I think might be causing this reaction is that they did say that they will stop disclosing Disney Plus subscriber numbers. But again, this is not something totally unexpected. I mean, Netflix has stopped doing this. We're seeing this kind of move away from just subscriber numbers to a greater focus on profitability.
I want to zero in on parks because I'm still scarred by how expensive it was when I visited a couple of years ago as an adult. But how sustainable is their strong parks performance given the divergent domestic and international performance?
Very sustainable, Isabel. So, we saw domestic parks, and I say that because, domestic parks actually coming into this year, coming into this quarter, there were a lot of worries. One, of course, about the general macroeconomic environment, but the bigger source of worry was really the opening of Epic Universe, which is, Universal's big Florida theme park attraction. But the fact that it had absolutely no impact at all, or very, very modest impact, if at all, is really amazing. And it just kind of speaks to the resilience in Disney's business model. They reported, again, very, very strong per capita growth, in terms of food and beverages, in terms of concessions. So all of that doing really well. And the reason I'm so positive about this business going forward, first of all, it contributes about 55 to 60% of Disney's profits. So really, really important to their top line, to their bottom line, definitely. They have a lot of upcoming capacity. So the biggest source of expansion over the next few months is really going to be their cruise ships. They're launching 2 new cruise ships, their biggest ever, actually, which is going to come on board in November and December. One of them sets sail from Asia, and that basically takes the number of cruise ships to 8 cruise ships, effectively kind of doubling their capacity in a span of just maybe 2 to 3 years. So that is going to really buoy, both top line and bottom line going into 2026. And then beyond that, you really have this huge $60 billion capital expansion plan that is really going to play out over the next 5 to 10 years. So we're going to see a lot more attractions all over the world. We're going to see that new Abu Dhabi park come out. So there is really a lot of, sustained momentum that we can expect at the parks going forward.
Geetha, talk to us about that deal they just made with the NFL. It seems like a really positive development for the company.
Yeah, it's really good, I think, from a Disney, from an ESPN standpoint, that they're so closely aligned now with the NFL. I mean, the NFL is absolutely the premium property, the gold standard, Paul. You know this well when it comes to, sports properties in the U.S. And the fact now that they're going to be able to use all of this content for their upcoming ESPN streaming launch, I mean, that itself just kind of gives it a tremendous boost, I think, even before it comes on board. So it's great for the product. It's also great from a strategic standpoint because the NFL is obviously one of the most important sports properties, and this really gives them access, or it at least definitely gives them a little bit of an advantageous position compared to, let's say, an Amazon or a Netflix or an Apple if they want to ever outbid, the current media partners. So definitely, I think a strategically very, very sound move on the part of Disney.
So it seems like we had a good quarter. Runway for growth is really just long and wide. What downside risks remain then, especially around the macro uncertainty and tariff exposure, do you see?
Yeah, maybe a little bit of execution risk. So we still really don't know how this whole, obviously everybody's very excited for the ESPN product launch, but we still don't know how exactly that's going to play out. Again, a huge source of upside is going to be the streaming business. Everybody's expecting huge cost savings when it comes to the integration of Hulu and Disney Plus. But again, execution is a little bit of a risk. And then you pointed out, macro factors. Remember, Disney still obviously has huge exposure because of its parks business. And anytime we see kind of a slowdown in the economy, we do feel that in the parks as well. And of course, advertising also. So, they do have a substantial exposure to advertising because of their TV networks business. So there again, we can see a little bit of an impact. But overall, as it stands right now, the business seems to be in really good shape.
All right, here the problem childs, though, are the broadcast networks and the cable networks. What, just because of cord cutting, they're just declining businesses. What's the company saying about what they're going to do with those businesses?
They haven't said anything explicitly, Paul. So a few years ago, this idea was floated that maybe they kind of spin off ABC, their broadcast network. Maybe they spin off their linear cable channels. All of that, noise has kind of quietened down. Bob Iger basically said, no, we need these businesses. They're all kind of integral to the whole Disney story. So we haven't heard anything recently. That being said, just this whole deal with the NFL kind of taking an equity stake, it almost seems like they are prepping for ESPN and maybe ABC to kind of go solo. Remember, Bob Iger only has a few more months left. So at the end of 2026, he leaves Disney, or at least that's what he says. Yeah, we think. And I really think he kind of wants to get this deal done. So to separate ESPN, because it's not really core to the rest of the Disney properties. But again, it's a little bit of a wait and watch, but nothing explicitly, stated from Disney management about what they want to do with the linear piece of the business.
So ESPN is getting a fresh spin with an August 21 launch. It will be $30 a month for the new streaming app. What do you make of that price? Do you think people will pay up for it, or is that steep?
It's a high price point. There's no doubt about it. I think most people were kind of expecting somewhere in the $23 to $25 range. That said, we just ran a survey actually at Bloomberg Intelligence, and what we found is that there's actually a lot of interest in this product. So we think that the uptake will be fairly strong, and the uptake not so much as a standalone product, but when you bundle it with Disney Plus and Hulu. So they are running a pretty attractive promotion. So for the first year, you can get Disney Plus, Hulu, and ESPN. At a $30 price point, which seems like really good value. So I think we're going to see a lot of people come in initially through the bundles, at least.
All right, great stuff. As always, Geetha, thank you so much for chatting with us. Geetha Ranganathan, she's the media analyst at Bloomberg Intelligence, covering all those fun companies in the media space. And Disney, again, pretty good quarter, maybe not quite up to expectations. Stock trading off about 2.5%, 3% here at Mickey Mouse. And again, as Geetha was saying, when I covered Disney, theme parks were maybe 20% of operating income, 25%. Now they're 65% of operating income. They grew but the cable networks declined dramatically. And so it's a tale of two cities right there. Looking at the market, a little bit of green on the screen here. S&P 500, 21 points higher. That's 0.3%. And the NASDAQ's up about 0.4%. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Isabel Lee, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. All right, we've talked about this before. When you do the ride-hailing thing, this ride-sharing thing, you got to arbitrage between Uber and Lyft. Matt Miller and I had a very heated discussion on the air. He does not do that. He just goes Uber right away. He's got brand loyalty.
That's bougie. No, I always check Lyft and I always check Uber, and I choose which is cheaper, and they vary.
But you look at the stocks, and they're completely different stories in terms of valuation and stock price performance. Uber's won the war from a stock price perspective, that's for sure. And they reported some numbers today or last night. Stock's down a little bit. I thought they were good numbers. Let's check in with Mandeep Singh. He covers all things technology, and including Uber. So, Mandeep, talk to us about Uber here. How's the ride-sharing business going on out there?
I mean, look, they've been growing top line at high teens for the past few quarters. This was no exception. The guide implied somewhat of a deceleration in terms of trips growth. So when you look at their mobility segment growth, it was 18%. They were over 20% for the past 4 quarters. So slight deceleration. And look, they have this risk from the rollout of AVs. Now, granted, the scale at which Uber operates far supersedes, what Waymo or Tesla, for that matter, can do in the near term. But the bigger risk is what happens 3 years from now, 5 years from now in terms of the business model. And They're trying to offset it with their own investments. So they talked about investing more in AV OEMs. They already made an investment in Lucid and Neuro. And their positioning is we want to be the marketplace where we aggregate demand in terms of ride sharing, delivery, and then let the technology guys come to us. But we know that business model can be disrupted easily because at the end of the day, this is commoditized. To your point, you arbitrage, you pick the lowest price, and once anyone else develops a distribution, that could be a risk down the line. So overall, good results, but they didn't answer the AV threat question directly. Like, what is their strategy? Because they're not developing this in-house.
What is the AV? What is your AV outlook? I mean, are we going to be jumping in cars? What's going on out there?
So just to put it in perspective, Uber has about $9 billion rides annually on the mobility side. And they are at a run rate of almost $100 billion in gross bookings. So that just gives you a scale of a current ride-sharing market. And their market share is close to 55 to 60% ex-China. Compare that to AV's. Waymo is about a $15 million ride run rate. So compare that to $9 billion globally, very small. In fact, Uber does 9 to 10 billion rides a day. And Waymo's annual run rate is 15 million, and Tesla is still very, very small. So really, I mean, even if they roll out more taxis, Waymo really needs the scale to be able to compete with Uber in terms.
Waymo?
Alphabet, Google.
Yeah, that's right. Okay.
Yeah, and so keeping the regulatory aspect aside, the real problem here is how do you manufacture these AV vehicles at scale? Tesla can do it in theory. They have the scale, but they don't have the precise software that Waymo has, and Waymo's costs are way high compared to a regular vehicle. They're 3 times the cost. So all these things need to be resolved, but the AV software has made a big stride this year with the LLMs and all the technology that we've seen.
Does Uber's dominant market share, I believe it's around 2/3 of the market compared to Lyft's and maybe even to a smaller scale Waymo, translate into better earnings resilience when it comes to macro, or what if consumer spending weakens?
Yeah, I mean, Uber now is at an EBITDA run rate of $8 billion a year. So they just did a quarter with over $2 billion in EBITDA. They have an ads business now that contributes $1.6 billion run rate, which is very high margins. They have a subscription business now. So 20% of their monthly active users are subscribers of Uber One. So a lot of positives in terms of, what's driving the profitability. I mean, this is a very different company from when they IPO'd, where everyone was concerned about the cash burn. Now they are generating steady free cash flow. The question really is around the long-term sustainability of the business model, given the AV threat, and how much do they have to reinvest to really fend off that AV threat. But overall, as it stands now, you will see a steady, 25 to 30% free cash flow growth.
30 seconds on Lyft reports after the close.
And their market share has been going down. So Lyft's only hope is to partner with as many companies on the AV side. They should be partnering with Waymo. They did announce a partnership with Baidu, but Lyft really has to go out there and position themselves as the platform where the AV companies can launch on. Yeah.
All right, you're the man. You understand all the stuff. I'll get in a car without a driver. I mean, I get in a car with some dude I don't even know.
Try it. You're going to love that.
Where do I try it? I don't see it down at the Jersey Shore.
Well, they're trying to get a permit here in New York very soon. Yeah.
Oh, good luck with that.
Yeah.
Hopping in there. All right, Mandeep Singh, he's senior tech analyst for Bloomberg Intelligence. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research in just a moment. We're coming up looking at these markets, holding on to some gains here. The S&P up 29 points, the Dow up 112 points, and the NASDAQ up 120 points. That's about 0.6% for the NASDAQ. So a little bit of a lift here this morning. I was looking at we don't import a lot of stuff from India. It's like 25% extra on India. It's not that big.
But I think it's more symbolic. That's what it is.
Yeah, just you got to cut deals, and that's the bottom line. All right, next hour of Bloomberg Intelligence. It starts right now.
This is Bloomberg Intelligence with Paul Sweeney.
The semiconductor business is a really cyclical business. The market's telling me, here's another AI play. Just bid it, buy it. Is the market over their skis? Are people just too exuberant out there?
Breaking market headlines and corporate news from across the globe.
This was a big success story for Apple.
We like bonds. We think bonds are attractive.
Private markets have become very diverse.
What we're telling people is be cautious here.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Lisa Mateo, Paul Sweeney, Isabel Lee, we're all here. Denitza Sakova, she's here. I'm surrounded here in the Bloomberg Interactive Broker Studio. We're going hard on the technology side here in this hour. Woo Jin Ho, Bloomberg Intelligence Senior Tech Analyst, talks to us about super micro devices. That stock trading off hard after a big run up. And around 11:10 a.m., it's a soft time. Lisa Su, AMD CEO, is going to speak with anchors Caroline Hyde and Ed Ludlow. We'll simulcast that with Bloomberg Television when that runs. Sylvia Jablonski, CEO of Defiance ETFs, to discuss the outlook for markets and for ETFs. And then Anurag Rana, Bloomberg Intelligence Technology Analyst. He's going to talk to us about Apple investment, Shopify earnings, lots to go on because Apple says they're going to invest an additional $100 billion in the U.S. And there'll be a presumably announcement later this afternoon with President Trump. Tim Cook reportedly will be there as well. So we'll bring all that stuff to you there. Right now, let's go to Lisa Mateo and get a Bloomberg Business Flash. Lisa.
You got it. We have stocks advancing. This is investors weigh President Trump's latest tariff threats. Also working through more corporate earnings. Bloomberg Intelligence says earnings for S&P 500 companies, well, they're crushing second quarter expectations, up 9.1%, triple the preseason forecast, and the strongest beat rate since 2021. We're starting with the S&P 500 because it's hovering just above the 6,300 mark right now at 6,327. It's up about 0.4%, 28 points. We go to the Dow, up 0.2%, 94 points at 44,208. And the NASDAQ up 0.5%, 116 points at 21,032. The two-year yield, 3.71%. That's down 1 basis point. And the yield on the 10-year, 4.21%. That's little change. And the Bloomberg Dollar Spot Index down 0.2%. Quick look of earnings. Disney shares, they're down 3%. Strong performance from its theme parks and streaming business, but investors just didn't like its revenue from conventional TV networks and sports programming. Consumers love a deal. They love McDonald's budget meals. McDonald's shares up nearly 3%. Sales picked up in the latest quarter. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Isabel.
Lisa Mateo, when was the last time you were in a McDonald's for yourself?
For myself, I don't know, college.
Jesus.
I don't.
I mean, there's one literally right on the corner, dude, on 3rd Avenue and 58th Street.
I know.
Just pop in there. You'll survive. You'll survive. All right, right now, let's get a look at some of the stocks on the move today. I'm Paul Sweeney along with Isabel Lee, and we're joined by Bloomberg's Denitza Sakova. Denitza, what are you looking at today?
We just cannot stop talking about McDonald's.
There you go.
Sales picked up in the latest quarter. The collaboration and the budget meals are working. I don't know if you're following, but they have a launch of a Minecraft movie. And I don't know what's your take on Squishmallows, but they're definitely helping. Wow. The stock is up 3% today. The ticker is MCD. Global sales at restaurants open at least 13 months rose about 4%. That's higher than what analysts on the street expected. The company is now up 6% year to date, so this was a much needed boost. International markets led the company growth. The U.S. is still doing well as Americans are spending more per trip, and that's definitely bringing. That said, the company has been under a lot of pressure. There has been an E. coli outbreak. There has been backlash against American brands in the Middle East, and obviously there is a consumer unease. So this is very welcome news, and all the pop culture collaboration are paying off, and we're excited to see where that goes.
All right, Denitza, Isabel, same question to you. Last time at McDonald's?
Maybe 5 years ago.
I don't eat McDonald's, but when I was in India, I tried one because they have more vegetarian options, and I'm vegetarian.
Oh,
you see,
it was good.
We need more veggie options in the U.S.
Jeez, kids. Snap, what's going on there?
Snap, it's having a pretty tough day. The stock is down 18%. It obviously started yesterday after the earnings. We say the owner of Snapchat acknowledged a slowdown in advertising revenue. The company on Tuesday reported second quarter sales that were lower than what Wall Street expected. Revenue in the June quarter was down. The company shipped an update to its advertising auction that eventually allowed marketers to buy ads at a substantially reduced price. It's all about the ads. The company gets about 90% of its revenue from advertising. So that's definitely a big hit. If we look at the stock year to date, 30% down, really big hit to a company that had quite a few good years, but this year it's under a lot of pressure, and it's all about ads.
All right, finally, Lucid.
Electric vehicles, that's another theme that has seen a lot of pressure. We saw what happened to Tesla. Lucid trimmed its full-year production outlook, making electric vehicles the latest car maker to temper expectation for the year. Stock is down 8%. Ticker is LCID. The company now expects to produce 18 to 20,000 vehicles in the year. That is lower than what we previously had. There has been so much pressure on EV makers. Obviously, the credit has been taken, and we saw what happened to Tesla. That said, they're launching a self-driving taxis in 2026, and that's the big hope now. So let's see if that helps.
All right, Denitsa Sokova, thank you so much. We appreciate that. Denitsa Sokova, cross-asset reporter for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Well, big story that just broke on the Bloomberg terminal. Donald Trump's advisors are encouraging him to nominate a temporary Federal Reserve governor to fill the soon-to-be vacant seat on the central bank's board. Now, that's according to people familiar with discussions. Let's go find somebody who's familiar with those discussions. That's Laura Davison, Bloomberg Deputy Washington Bureau Chief. Laura, was this expected, and are there any front runners for a temporary Fed governor?
So this was not expected. The initial thought when Adriana Kugler last week said that she would be vacating her seat early is that Trump would fill the seat with the person he would ultimately elevate to be Fed chair when Powell's term is up next year. Now that thinking has changed, and there's a contingent pushing Trump to just pick someone to fill the seat now, get them on the board as soon as possible, and then when this term ends in January, he can pick someone who he ultimately will elevate to the chair later next year. There's been a lot of discussion and a lot of interviews that have already begun happening within the White House, but they're not at the point where they're ready to pick someone who they think can be the long-term Fed chair. It's a 14-year seat, and they want to take their time on the decision.
Is there a timeline we're expecting? We know that Trump is slated to meet with advisors on Wednesday, and of course, there still needs to be a Senate confirmation, a vetting process, and all of that.
Trump has said he plans to announce a name this week. That could be, just in the next coming days here. Well, the next step with that, it does need to go to the Senate for confirmation. The Senate is out on recess, so it's likely that they won't actually pick that up until early September. Typically, this is a process that takes many months, but Trump has put a lot of pressure on lawmakers recently, both on moving the tax bill, moving other political appointees through the process. So this is something that, if the Senate moves quickly, they could do this in just a couple weeks.
A short-term governor presumably would, I guess, need to be somebody already in government, somebody who's already approved by the Senate. Is that correct?
Yeah, so the thinking here is that they want someone who they can just quickly get through the process, someone who's already, been tested and is, viewed as confirmable by the Senate. There's also a bunch of financial restrictions, too, for Fed governors that they need to, have a lot of their assets, in a very safe and boring investments, mutual funds and the like. So, having someone who, hasn't already sort of done some of those government ethics, kind of fit in that box, it would be very difficult for them to get through that process in the timeline, to potentially be on the board by the time for the September Fed meeting, which is September 16th and 17th.
Oh.
And a short-term governor is someone likely to have already a position in government and who's been previously confirmed by the Senate for a federal job. So then who else is the shortlist after Scott Bessent said that he didn't want the post? We have Kevin Warsh, according to reports, or Kevin Hassett?
Yeah, so those are names that have been thrown out, as potentially folks who could be for the chair position. Trump yesterday, he said he has the two Kevins, and he's also looking at two other names, but ruled Scott Bessent out. Chris Waller, who's already on the Fed board, is someone who's been thrown out as also a potential chair contender. For this temporary pick, for the short-term pick, is likely to be a name that is a little bit more boring and may not be as widely known. This is essentially someone who will be a placeholder, just sitting in the seat seat for the next 4 or 5 months. So there's a lot of people who would be unwilling to leave their their big powerful day job, whether it be in government or even in the private sector, and come to do this just because of all the restrictions. Just what will essentially be a 4 or 5 month gig.
All right, Laura Davison, thank you so much. We appreciate that, Laura. She covers all the Washington, D.C. stuff for us, and she's a go-to voice when we need some color on breaking news. Coming up in just moments, we're going to bring you a conversation with Lisa Su. She is the CEO of AMD, the chip company, speaking with anchors Caroline Hyde and Ed Ludlow. They reported some earnings, stock trading off 8.4% this year. Today. The stock is up 32% year to date, so a little bit of a misstep here. We'll get the color on that from Lisa Su, so we'll bring that to you in just moments. But again, you think about this market, it continues to be a market that we've been talking all morning on surveillance about how technology continues to be a driver of the performance of these indices. So let's go to the discussion with Lisa Su, AMD CEO with Ed Ludlow.
Strong AI outlook on accelerators, gaming, PC, and then some concern about the future of the China business. But Caroline and I, Lisa, have talked for quite a while now about AMD as the best performing chip stock so far this year. I wondered if we start by just asking what in the quarter changed for AMD, what the kind of biggest move forward was, do you think?
Yeah, absolutely. So first of all, Ed and Caroline, great to be here with you. We always look at these things and say, when we have a business where all of our businesses are actually performing extremely well, it's a good place to be. So we had a very strong first half of the year. Second quarter up 32% year over year. We're guiding to a third quarter, up 28%. And underneath that, what you see is, first of all, data center business is doing extremely well. Our server CPUs are continuing to gain share in cloud and in enterprise. One of the things that we're seeing with AI is the AI investments from the largest hyperscalers are actually pulling, both GPU and CPU revenue, which is good for us overall. Agentic AI actually requires lots and lots of compute going forward. We're also seeing strength in PCs as well as gaming. Our products are extremely well positioned, whether you're talking about consumer or commercial. And then we're also seeing some improvement in the embedded side of our business, as that is also going to I would say return to growth in the second half of the year. So we've seen a lot of positive signals over the last 90 days in terms of what the market needs from computing and sort of the investment things. There are some questions about China, of course, which we can certainly talk about.
Well, let's talk first about the AI accelerator outlook, because actually from analysts to investors to the developer community, when we say that you're coming on the show, we get questions from all quarters. You had said that the AI accelerator business will grow to the tens of billions. And what I'm kind of seeing is people just want granularity from you, Lisa, a little bit. Like, when does that happen and where does it happen? And you talked about the hyperscalers, but what's the growth pathway to tens of billions in accelerator revenue?
Yeah, absolutely, Ed. So let me give you a few important markers. So what we said is the second half of the year, our growth would be primarily driven in the data center by accelerators. We launched a new product just in June, MI355 product. It's extremely competitive. We really like how we stack up in terms of total cost of ownership for inferencing and training workloads. Customers really like that product. That's driving some of our second half growth. And certainly when we talk about our sequential growth into Q3, that's being primarily driven by that accelerator capability. And now when you extend forward, I've said that the AI TAM for accelerators in data center will be over $500 billion over the next couple of years. We expect to get a large portion of that new accelerator TAM, and that's how we get to tens of billions of dollars. Very key is also, we've accelerated our roadmap, and so we are on an annual cadence. And next year, we'll have yet a new capability with our MI400 series, which will bring full rack level solutions, which will be another giant step forward in terms of capability for AI solutions. So I think that's the roadmap and path for the next couple of years. We're really excited about the traction. We're getting lots of customer validation saying, hey, you're on absolutely the right path. And we're making strong progress towards those goals.
Lisa, the granularity that was demanded time and time again on that earnings call with analysts was around China, though. And I know it's so hard to give because in many ways, this MI308 is dependent on the licenses from the US government. How are those discussions going with the US government? How quickly do you think they can get through the backlog?
Yeah, Caroline, definitely. Look, you know, I know people always want precision, and what I will give you is exactly how things are playing out from our standpoint. I think we've seen an improvement over the last 90 days. You know, 90 days ago, you know, we did not expect to be able to ship to China because of some of the regulations. I think this administration, you know, the Department of Commerce, the government has actually been very open to trying to find the right balance between national security and ensuring that we have U.S. AI technologies proliferated across the world. So we think that's a great balance. We now know that we have a number of licenses that are under review. We've been given good indications that those are moving through the review process. And you know, we will certainly inform everyone when the licenses are granted. But given that it's hard to predict exact timing, just given all of the things that are in front of the government at the moment, we thought the right thing to do right now is just say, hey, let's not include that in the third quarter revenue. But even with that, we're growing 28% year over year, which is, you know, fantastic growth rate. And if you asked me, you know, what we've learned in the last 90 days, we've learned that the demand is even stronger in the second half of the year than we necessarily, you know, thought maybe just a few months ago.
And analysts really cooperated and thought it was right that we should see such caution perhaps and not show up in the numbers. But Lisa, I'm interested in the inventory that you had been very clear about, the $800 million knock on the fact that you couldn't access China for a while. I know that most of those manufacturing hadn't been complete, but do you think you can unwind that $800 million? How much do you think can you bring that back to bear?
Well, we certainly expect that once licenses are approved, that we will, you know, restart our supply chain and, you know, get those in place. We do have, you know, a bit of time that it takes to complete those, but we would expect to be able, you know, to ship some of those products as licenses are approved. And, you know, again, the exact timing will depend on when licenses are approved. But I, again, would hope that we don't get caught up in, you know, something that I would say is moving actually in the right direction, and really see like the overall business is doing extremely well, right? When I look at data center growth, when I look at client and gaming growth, and really the return to growth in the embedded, those are the key aspects to really, you know, understand about where the business is today.
Lisa, the final question that we have on China, if I may, is something that we've also discussed quite often with NVIDIA and Jensen Huang, which is the idea that in the interim period you just outlined, China's domestic chip makers have made some progress on their own accelerators. Does AMD make an assessment of that, of how performant a comparable Huawei or other Chinese accelerator is relative to the MI300 family?
Ed, of course. I mean, look, it's a very competitive market out there. At the end of the day, everybody wants AI computing. Like, AI computing is the foundation for, you know, all the great things that we know that AI can add to, you know, businesses and, you know, sort of the overall, you know, capabilities. So yes, we're always looking at the competitive environment. That being the case, you know, I think we are well positioned. Overall, our roadmap for the rest of the world is very strong, and we think it's just getting stronger as we go forward. And as it relates to China, it's something that we have to work through with the administration. But as I said, we've had very close conversations, and we're making good progress there. So from that standpoint, you know, I think the overall competitiveness of our AI roadmap has never been stronger. And we're excited about what we can deliver across, you know, AI GPUs, as well as, you know, our CPU franchise and all of the rest of our portfolio.
This is Bloomberg Tech, live on Bloomberg Television and Bloomberg Radio, and we're speaking with AMD's CEO, Lisa Su. Strong in PC, strong in server, particularly CPU. Is that an AMD capturing market share story, or is that just a rebound in demand generally story, Lisa?
Well, I think it's both, Ed. I think the demand is good. I think the demand patterns are better, but clearly we're very competitive with our products. I think we have leadership CPUs in both server and client. We've shown significant traction in cloud as well as enterprise. And I think going forward, you're going to see enterprise customers want the best solution out there, and that is AMD for computing.
And gaming, Lisa, so strong. I'm interested into the nuance of pull forward, because you said on the call that you didn't see a whole lot of pull forward, of people trying to get ahead of tariffs and price increases. But did you see any?
Very little, Caroline. I think what we look at mostly is not just what we're selling in to customers, but we actually look at what's being sold out at end customers. And what we're seeing being really transferred to end customers is good demand. I mean, people are refreshing their data centers, which is very positive, right? We're in a place where computing is important, and so we're seeing strong refresh cycles on the data center side. We're seeing strong pull through of our solutions in the enterprise, in PC, and then from a gaming standpoint, again, we have a very strong product cycle. So it's always hard to tell exactly what the impact of the current tariffs are, but I would say that that's the smaller part of the impact on our business. The larger part is just strong products, very good traction from customers, and looking at a stronger second half of the year.
A stronger second half of the year where you take some market share from NVIDIA. Lisa, how are you seeing that grow out and the ability to compete with the next range of chips?
We are very bullish on our overall roadmap capability. I think the second half of the year has a number of customers really broadly adopting AMD.
Lisa, I have a question from our audience, if that's okay, a viewer of Bloomberg Tech. And as you know, like loads of AMD employees, your peers, technology industry people want to hear what you have to say. I'm just going to read it to you. Can Lisa please explain, AMD's winning in gaming and consoles, but AI is where the margins are now. What's the plan to make AMD indispensable to the next OpenAI and not just cost-effective alternative, I think, to NVIDIA is what they're saying?
Well, Ed, the best way to say that is for those of you who know us as a company, we execute extremely well. Our roadmaps are strong. We're very excited about all of the progress that we've made. MI300 was an excellent product. MI350 is a big increase above that, and then our next generation is also. And the key for us, if you look at our history is doing what we say we're going to do, delivering to customers, delivering total cost of ownership, and with that, being a great partner. And so from that standpoint, I think you can be very confident that we have a strong roadmap and we're going to execute on it well. And, our largest customers want to have a dependable and, good partner.
It's been wonderful spending time with you, Lisa Su, AMD CEO. We thank you very much for talking us through post-earnings. Now coming up.
All right, that was Lisa Su, AMD CEO, speaking with Bloomberg Television anchors Caroline Hyde and Ed Ludlow. Let's get a little bit of a reset on this market here this morning. We'll do that with Lisa Mateo and a Bloomberg Business Flash. Lisa.
You got it in this Bloomberg Business Flash, brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, stocks there battling back from yesterday's losses on Wall Street. We have the NASDAQ up 0.7%, the S&P 500 up 0.5%, the Dow up 0.2%, the two-year yield 3.70%, down 2 basis points. The yield on the 10-year 4.21%, and that is little changed. We have the Bloomberg Dollar Spot Index down about 0.3%. Shares of Rivian, they're down nearly 1%, scrapped its full-year profit goal. And then on the flip side, well, you have Honda, who raised its annual profit forecast. Shares right now, they are up about 1.5% in Tokyo. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Isabel.
All right, Lisa Mateo, thank you so much. We appreciate that. Isabel Lee and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio in Midtown Manhattan. We are streaming live on YouTube, kind of all over that internet thing, so you can find us there, here, and everywhere. Want to take a look at these markets here, because it seems like we've gotten to a point after that initial shock of tariffs and what it might mean for the economy, inflation, things like that, that for by and large, the market's kind of looking through it as some of the language gets softened along the way. Sylvia Jablonski joins us, Chief Executive Officer and Chief Investment Officer for Defiance ETFs. Sylvia, how are you and your clients thinking about, risk assets, stocks and bonds and commodities in a world where we have higher trade barriers, but it seems like the world's moving on?
Yeah, good morning, Paul. I think it's been a very interesting market, right? Because you've had all of this kind of macro noise that hasn't come to fruition, meaning that, largely the macroeconomy is held up and corporations have held up. Their balance sheets are strong. Earnings are looking good. I think what happened is that, the proof came in the pudding, right? Like all the corporations came out and said that they essentially figured out how to deal with tariffs while they expressed uncertainty earlier on in the year. They kind of dealt with it. And if anything, some of the cash that, they've held back because of that is now going to go into CapEx and go into spending and things like that. So I do think that there's still a really good, prospect for equities into the year versus, say, bonds, as long as, inflation remains at bay. I think risk assets are still a good place to be.
And given the strong macro backdrop from GDP to labor to earnings, do you think that there's a risk that investors are becoming more complacent when it comes to structural headwinds like maybe trade fragmentation or even inflation persistence?
That's a great question. And I think that those are kind of the risks to the market, right? If inflation, kind of starts heading in the wrong direction. We already have a Fed that's hesitant to cut. We have a market that wants a cut and a president, as we know, that wants a cut. And if inflation starts going the other way, it kind of throws a wrench in that. Geopolitics and additional kind of tariff wars are a problem. But this is kind of also the status quo in a way. So I feel like the market had already priced this in April. It kind of got itself out of it, not, shortly after. And all of the data remains pretty strong. So jobs is something that looked a little bit softer for this last print. But again, like one print does not a narrative make, right? So I think it's just going to be par for the course. And I think investors and investor sentiment is still pretty good in the markets right now.
Is that reflected in the flow of funds into your ETFs? Where are you seeing the most interest?
It's really interesting, but there's been a lot of data out there by different corporations that, retail investors are engaged in the market and liquidity is kind of higher than ever, and everything from options and ETFs and single stocks. And so we're certainly seeing that. We're seeing flows into thematic funds. We're seeing flows into single name levered ETFs by, kind of those tactical traders. But just ETFs overall have gotten a huge boost. You're talking about hundreds of billions of dollars that have come into ETFs in recent time. And I think that those numbers are set to grow in the trillions in coming years. I mean, ETFs have just been the vehicle of choice for investors.
And in your trade ideas, you said that quantum computing stocks is one of those. So how should investors be thinking about allocating to quantum, the sector itself? Are ETFs better, like your ETF QTUM, or are early single stage companies going to be a better when it comes to a payoff profile?
So I think it depends on the investor, and I think the answer is sometimes both, right? If you have really high conviction on a single stock and you're kind of an expert in the space, and then I think it's reasonable to buy a single stock. But when you have a fairly nascent space like quantum computing, and you're kind of pre-profits and pre-revenues and pre-full-on commercialization, I think the reason we put an ETF out there is we thought it would give investors the opportunity to really gain exposure to that space, but to diversify their risk and diversify their exposure to the different quantum companies. And so as this matures and develops, potentially they all get a headwind if quantum grows, but you have a ballast there with some of the larger companies like the NVIDIAs of the world that have strong balance sheets, and they'll withstand a pullback. And so, your risk reward profile is a lot better with ETFs in these nascent sectors.
Sylvia, I know in the past one of the names you've talked about is Hims & Hers, a direct-to-consumer digital health platform. They reported some earnings that disappointed the street here. Stocks off 7% today, but it's still up over 100% this year. What did you learn from the earnings, and did that change your view?
It doesn't really change my view. I think with a lot of these, again, kind of forward-looking technologies, this fourth industrial revolution, if you just think about the future of healthcare, particularly for a company like Hims & Hers, where a lot of what they do is geared around, privacy and somebody wanting their own catered, personalized care from their home, anonymity, things like this. I just think that you're going to see a lot of growth there, particularly around some of these hotter topics like the weight loss drugs and things like this. But they have a massive TAM. It's growing. The amount of users they have are growing. Men's health health is like 60% of the overall men's healthcare is in the HIMSS network. And so I just think that this is a story that could be very interesting for years to come. And it's really up to the investor, right? You can invest in classic pharmaceutical companies, or you can invest in the idea that, medicine and pharmaceuticals are also going to become a commercialized technology. And I think that gives them the option there.
Sylvia, thanks so much for your time. Always appreciate getting a few thoughts from you. Sylvia Jablonski, CEO and CIO of Defiance ETFs. All right, one piece of news that is making the rounds here today, very interesting. President Donald Trump will announce that Apple will commit to spend another $100 billion on domestic manufacturing. Let's break it down with Anurag Rana, technology analyst at Bloomberg Intelligence. He's followed Apple for decades. Anurag, what do you make of this news? It looks like Tim Cook is coming to D.C. We'll be there at the announcement. So what does this mean to Wall Street and when they think about Apple?
Yeah, you could say it's one of the first few good news for Apple in a while, because President Trump's been very unhappy with his actions over the last few months. It's publicly complained about Apple making more phones in India rather than the US, and so that is, it lifts a little bit of an overhang. I'm happy that Tim Cook is doing what he's doing to make sure that the administration is not unhappy with him and the company, and is not going to put any additional tariffs, because as we have seen even today, President Trump's not happy with what's happening in India and is putting additional tariffs on it. So far, smartphones are exempt from a lot of this stuff, but that doesn't mean, things cannot change.
So Apple's promise is substantial, but it stops short of the full shift to US-based production. But do you still think that this will be enough to soften Trump's view towards Apple?
At least for the part-time. Remember, Apple's supply chain in China took over 20, 30 years to build. You really can't undo that over a period of a few years. I think Apple's going to talk about a lot of new investments that they're doing, such as, building AI labs or silicon engineering or higher-end Apple products. I think it's very difficult to make lower-end smartphones in the US. And to be very honest, you don't even want them to be made in the US. You want more engineering jobs. You want more knowledge-based work. So I think that's going to be the focus. But again, we'll find out more later today about it.
All right, let's shift gears to Shopify. Boy, the stock's up like 19% here today. Company reported earnings. What's the street like about this print?
Yeah, the revenue accelerating to 31%. This company has been growing faster than the e-commerce industry for a while. And, whenever a company accelerates revenue in any quarter, I think investors see, they take that with extreme optimism, especially when there is so much talk about consumer being, potentially getting weaker in the second half, or looking at tariff-related, headwinds out there. So they're not seeing any of that stuff. They talked about Starbucks using theirs, so that's another big win. Shopify is a company over the last, I would say, decade plus. They have focused on smaller and entrepreneurs. But now we are seeing larger merchants embracing that platform. And I think it's very good news for them going forward, their growth potential, as well as their expansion into international areas.
Yeah, the stock's up 20% today. 52-week high. I'm going to guess it's an all-time high as well. It's got a market cap of let's call it 200 billion. Just extraordinary.
And Europe was a particular source of strength. Can you talk to us about what's happening over there? Is it because larger merchants are joining in Europe, or it's more smaller merchants?
So I think it's a little bit of both, but also remember that, just like any other area, when you have a smaller base and you are expanding aggressively, the payment volume that goes across your system is larger. So I think it's a little bit of that on a relative basis, that's a smaller contributor to overall sales. But one thing is for sure, when you look at this market, I think they are taking market share away from their major competitors, whether that's Salesforce or SAP. And I think that just shows the focus of their founder and CEO on AI-related, products. I think this is an area where they're going to differentiate themselves compared to everybody else out there.
Who do they compete against?
Well, Salesforce has a product. There used to be a company called Demandware that was out there, and then Salesforce bought them. SAP has an inbuilt product. There are a lot of homegrown solutions where, let's say you are a legacy retailer and you're using their software to create your e-commerce platform. They're basically saying, buy our cloud-based platform, right up, out of the box, and go out and, do things in a way that you have not been able to do before.
All right. I'm just eyeballing the chart here, folks. I'm calling an all-time high here. It was back in 2021 It was also right around $152, but we're calling an all-time high here. So 52-week high for sure. Anurag Rana, technology analyst, Bloomberg Intelligence, bringing us up to date on Apple. They're going to have an announcement at 4 p.m., presumably with President Trump. In Washington, D.C., Tim Cook, the CEO of Apple, will be there. And again, the story out is Apple is making a new $100 billion investment in the United States. So we broke that down, as well as Shopify. Just one of those stocks that just extraordinary performance. Kind of not necessarily an AI story per se, but it's just a great play on e-commerce. Again, up 43% this year to an all-time high. S&P 500 holding on to the gains here, up 42 points. That's 0.6%. Even extending gains. The Dow up 131 points. That's 0.3%. And Nasdaq up, let's call it 180 points, about 0.9%. Tom Keen's VIX, it is down a full stick. We're now below 17, and we got the 10-year Treasury yielding 4.21%, pretty much unched on the day. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks advancing after yesterday's losses. Tech shares a big part of that, especially Apple. Their shares up 5%. President Trump expected to announce that it's going to agree to spend another $100 billion on domestic manufacturing. So let's start with the NASDAQ, up 0.7%, 157 points. We have the S&P 500 rising 0.5%, 32 points, and the Dow up 0.1% or 44 points. The two-year yield, 3.73%. That's little change, and the yield on the 10-year, 4.26%. That's up about 5 basis points. Oil ticking higher. This is after a 4-day drop. We have Brent crude up more than 1% at $68 a barrel. And gold, COMEX gold, up down about 0.1%, $3,428 an ounce. Over to currencies, the Bloomberg Dollar Spot Index down about 0.2%. Few companies making news. That's Uber. It unveiled $20 billion in new stock buybacks. It also reported better than expected third quarter forecasts and quarterly results. Some good news for Boeing. Cathay Pacific says it's going to place an $8.1 billion order for 14 more Boeing 777-9 jets. Now, it's the airline's first deal with the company in 12 years. And finally, teen accessories retailer Claire's. It's a mall staple. It's filed for its second Chapter 11 bankruptcy. Some action after the close today from the likes of DoorDash, Lyft, and Airbnb. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Isabel.
All right, Lisa, thank you so much. We appreciate that. Lisa Mateo with the Bloomberg Business Flash. Isabel Lee, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. We've been reporting all morning on the McDonald's print here. I look at something called, which the analysts look at, something called like same-store sales at stores you've owned for, like a year, so that takes out the fluctuations of buying and selling and opening and closing stores. So global sales at restaurants open at least 13 months rose 3.8% in the second quarter, according to the company. And that's kind of one of the headlines there. Michael Halen, he looks at that stuff. He's a senior restaurant analyst at Bloomberg Intelligence. Michael, talk to us about McDonald's. It seems like whenever I see this company give me some positive same-store sales, that feels like a win.
Yeah, it's definitely a win for overall industry same-store sales because it's such a monster. It also could be bad news for some of their competitors with 14,000 stores in the United States. Listen, man, they know how to run good restaurants, right? Right now in the U.S., they're starting to lap some easier comparisons, and that's showing up in the that's helping their results. They're also doing a good job with, the menu, right? They're bringing back snack wraps. They're bringing back the McCrispy strip. They just debuted a daily double. They've been pressing on value all year. That was a big thing since the first quarter. And so, McDonald's has the scale that they can, offer products a little bit cheaper than their peers, and franchisees can still make a little bit of money off of it, right? So, they seem to really be hitting their stride, and they're lapping easy comps in the second half of the year. So, we're looking at a pretty good second half for McDonald's.
And international markets led the company's growth. What regions of the world did they really push aggressively towards?
Yeah, they mentioned some really good strength in Germany. They talked about some improvement in some markets that had been struggling, like France and Australia. And so, what they're doing overseas is similar to the U.S. playbook, right? But they're probably ahead of the game, ahead of the U.S. in terms of providing everyday value. Their value messaging has been on point, and it's really helped them grow internationally. And that's why we've seen international grow faster than U.S. for the last year or so. They also cited the fact that there's less competition overseas. So they're really, a pricing leader overseas. They can, same type of thing in the U.S. where they can offer price points that competitors just can't match. And then they're also improving the operations, improving the quality of the product, which has been an ongoing theme here. They're improving the quality of the beef, better burgers, the way they cook the burgers. They're debuting the Big Arch, which is a bigger sized burger in their lineup. They're also expanding chicken overseas. So this company's humming along right now.
What does a company say? Like when I think about McDonald's, I think a lot of folks probably feel like the low income consumers, probably it's bread and butter there, and maybe that consumer is more at risk in this economic environment. What's the company saying about some of those low income patrons?
Yeah, you know what I like about this call, Paul, is that, they're talking about what they can control. They cited the fact that low-income consumer traffic is down double digits, right, versus a small gain for middle-income consumers and steady, consistent gains with high-income consumers. So they are seeing, weakness with low-income consumers like everyone else. That's why they push so hard on value. That's why they have these, $5 meals and buy one, get one for $1, and why they put marketing dollars behind that. That's part of the, the beauty of the snack wraps. They're coming back at a $2.99 price point. We think that's going to bring some low-income consumers back into the fold, right? So they understand that people are very price sensitive right now, and they're addressing it with the price points, but they're also trying to give people better quality and better service at the same time.
They also plan to taste new beverages. This includes cold coffees and crafted sodas at more than 500 U.S. locations. How much of a pull are beverages when it comes to McDonald's offerings, or is food really still king?
Food is still king, but listen, beverages are hot. Beverages are hot everywhere, right? Dirty sodas, energy, and very high margin, right? And so we think this is a very good opportunity for McDonald's. I think this is kind of a problem for Sonic, which has long done a really good job with their drink offering. But yeah, we think this is something that can help drive sales at McDonald's. Taco Bell, this is something Taco Bell's expanding as well. But we think this is going to be more of a 2026 story for McDonald's.
For McDonald's, Mike, what percentage of the revenue comes from owned and operated stores versus franchise stores?
Oh, they're 98% franchise. So they're heavily franchised, and it's a beautiful model, man. There's not a lot of operating leverage in the model. They generate a ton of cash that they return to shareholders. It really is a beautiful thing.
So what's the royalty rate on? Does a franchisee pay McDonald's based upon revenue, based upon net income, based upon how many Big Macs they sell? How's that work?
Yeah. McDonald's is a little bit unique. They have a 5-ish% royalty rate, plus they own a lot of the real estate. So a lot of franchisees in the United States are paying a rent, which is typically, 10-ish% of sales, we'll say, and then they'll pay another 3.5% to 4% into the ad fund.
I didn't know that until I saw the movie. Yeah. And then that famous scene.
Yeah.
You're not in the hamburger business, you're in the real estate business. And that was such a great scene. I learned a lot there. All right, I can't let you go without Cracker Barrel. I need my daily update. Country Boy Breakfast, how's that company doing?
Listen, we're big fans of new CEO Julie Masino. That stock's been a bit of a roller coaster, not a surprise since it's a small cap. It rose more than 100% off its April lows. Now it's in the midst of a pretty aggressive downturn. It's probably lost about 25% of its value in the last couple weeks. But, we like it. We like Julie's plans to improve the operations, to spend more and be more efficient with their marketing spend. We think this is a chain that had been, hadn't been taken care of. It hadn't been run really well for the last decade. And so we see a lot of low-hanging fruit for the current management team to turn things around and really drive strong same-store sales through year-end 2025 and well into 2026.
All right, Mike, thanks so much for joining us. Michael Halen, Senior Restaurants Food Service Analyst for Bloomberg Intelligence. I'm guessing, Isabel, you've never been to a Cracker Barrel restaurant.
I have never been.
Okay, here's what you do when you go. You get the Country Boy Breakfast.
Okay.
I think it's like 3 eggs. Get them any way you like. I get them over medium. Get the country ham. That's the key. Okay. There'll be some hash browns. There'll be some apples. There'll be some grits. But the topper, you got to get biscuits and gravy.
Okay.
So you open the biscuit, you scoop the sausage-made gravy on there. Boom, you are set to go.
This is perfect for lunch. I'd eat that for lunch.
Yes, but I'm not sure they have a...
Oh, it's only breakfast.
No, you can get breakfast all day, all night. I mean, they're there all the time. It's all day. No, it's a great place. Big fan of that. Mike Halen knows that. He gives me all the updates when he's out there on the road. S&P 500 up 43 points. The Dow up 110. The NASDAQ is up 150 points. We'll have more coming up. This is Bloomberg. Good morning.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Isabel Lee and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Well, here's another tech company that I totally missed, had no idea it even existed until it had already skyrocketed. Super Micro Computer. I don't know, they make some hardware stuff for chips, I don't know. It's a tech thing, it got the AI bug, it ripped. The company reported some numbers, stock's down 21%. I wonder if this is a time for all the people that missed it to maybe take a look here. I'll tell you who did not miss it was Woo Jin Ho, Senior Technology Analyst for Bloomberg Intelligence. Woo, just for our audience, just really quickly tell everybody what Super Micro Computer is and what happened with their quarter.
Sure. Hey, thanks, Paul. Supermicro is a leading AI server manufacturer. They've been one of the beneficiaries from this AI boom. Companies like xAI, CoreWeave use or purchase AI servers from them. And what has happened from the AI boom is that they've seen their revenues grow from $3 billion 3 to 4 years back, and they're on track for about $33 billion in fiscal 26. So in terms of the quarter, it's a sloppy explanation in terms of they missed the guidance for the results, and their outlook came in a little bit light. Even though the $33 billion sales guidance for fiscal 26 was ahead of consensus by about 10%, one of the things is that they had a $40 billion view back in February that they pulled off the table last quarter because of trade wars. And that $33 billion fell short of that $40 billion view back in February. So, missed heightened expectations heading into the print.
What about the lowered revenue outlook? Does that really signal a deeper execution challenge and just really pessimism when it comes to meeting AI server demand? Or is it really more margin compression driven by price pressures?
Yeah, that's a good question. Like in terms of the $33 billion, if we think of it one way, right, 50% revenue growth on a really tough comps is still fairly impressive, right? And they still have to close a lot of big deals. The issue is that they raised the bar so high that meeting that would have been very, very impressive, and that's what I think drove the stock run up. Now, the margin compression question is very interesting. I will tell you, consensus has them at about 7% margins for fiscal 26 heading into the print. They're guiding to about 5 to 6% margins. I don't know if they'll get to 7% for the year. I mean, they'll need to scale up more. But the competitive landscape is pretty fierce right now, and I have a tough time getting to 7%. And EPS on lower revenues and lower margins doesn't get me above $3 per share.
So, Wooch, you mentioned competition here. Who does SMCI? Who do they really compete against here?
Dell.
Dell,
right?
That's a big one.
Dell has really been breathing down Supermicro's neck. If you think about the big deals that Tesla and xAI and CoreWeave, that Supermicro has been in, Dell has actually won their fair share. Look, they're going to report in a couple of quarters from now. They booked about $14 billion in orders last quarter, $7 billion of it that should be closed in this upcoming quarter. So they're winning monster deals at low margins, and they're going to continue to be competitive in these deals.
And given its reliance on NVIDIA chips, how exposed is Supermicro to bottlenecks or maybe just, prioritization towards NVIDIA when it comes to their own chips?
Yeah, Supermicro doesn't make their own chips. They are going to be reliant on NVIDIA chips. There is a pecking order in terms of who get those GPUs. The hyperscale guys are going to be the first ones to get those GPUs. And for a large part, Supermicro and Dell do not have that exposure to the hyperscale customers. So the second order of magnitude are going to be the tier 2 neoclouds like xAI, OpenAI, and the CoreWeaves of the world. It's all about execution in those sales. I don't think it's going to be an allocation issue. But if you win those deals, Jensen will have the GPU ready for you. So let's see, and it all comes down to a pricing war at the end of the day, which affects gross margins.
All right, Wooj, thanks so much for joining us. Always appreciate getting an update from you. Woo Jin Ho, Senior Technology Analyst, Bloomberg Intelligence, from our Princeton, New Jersey campus down there. We got a lot of BI folks down there, and Wooj is part of that global technology research team that we have at Bloomberg Intelligence, and we cover this industry from a global perspective. So anyway, we'll see how it goes. Isabel, thank you so much for sitting in here today. Now you have to get back to your real job.
It's been fun, and now we have the S&P reclaiming the 6,300 level.
Very good. I see that. Okay, we'll keep on top of that. So anyway, the markets continue to move higher here. S&P's up 47.7%. The NASDAQ up 200 points. And that's about 1%. So we're getting a little bit more strength as the day moves along here. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day here. Looking at the yield space here, I'm trying to refinance the mortgage, but the 10-year Treasury, it's pulled back a little bit, but we're still at 4.23%. That's not going to get it done. The 2 years at 3.7%, so we still got about 50 basis points of curve steepening in there, and the smart people like Lisa Bromwitz tell me that's a good thing to pay attention to. On the commodity front, WTI crude oil kind of steady here today, just below $65 per barrel, and I'm a big fan of Landman, so I know everything about the oil and gas business. Gold, steady here, $3,377 per ounce, and Bitcoin, it rallies 115,000. That's it for us. More Bloomberg coming up right now.
Thank you.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. Apple says it's going to invest an additional $100 billion in its U.S. operations over the next 4 years, adding on to a $500 billion commitment earlier. CBS's Aaron Navarro is in Washington.
They're going to expand their manufacturing in states like Michigan, Texas, and California. It also includes an increase of at least 20,000 people hired in the U.S., more manufacturing of Apple's AI, and an initiative known as the American Manufacturing Program to bring more of Apple's supply chain of critical components when it comes to smartphones and electronics to the U.S.
Family members of Jeffrey Epstein accuser Virginia Giuffre are speaking out after the Justice Department interview with Ghislaine Maxwell. Sources say the Epstein co-conspirator said nothing incriminating about President Trump.
Giuffre died by suicide in April. Her brother, Sky Roberts, tells CBS Mornings he's upset Maxwell was recently transferred to a minimum security prison camp in Texas and has said she would testify before Congress in return for clemency.
Why are we listening to a known perjurer? I think if anybody needs to be heard, it's the survivors.
Giuffre's sister-in-law, Amanda Roberts, says Maxwell needs to stay in prison.
She wasn't a victim like the narrative is trying to change right now. She was an active participant in the abuse.
Michael Wallace, CBS News.
This morning, President Trump signed an executive order to slap an additional 25% tariff on India for its purchases of Russian oil. That brings tariffs to 50% there. The Kremlin calls a meeting between U.S. envoy Steve Witkoff and President Vladimir Putin constructive. President Trump has threatened new economic measures against Moscow if there's no deal soon to end the fighting in Ukraine. CBS's Ramy Inocencio.
Does today's meeting change that ultimatum from Trump that he wants Russia to agree to a ceasefire by this Friday in the next 48 hours? That is an open question. Is the deal realistic? Let's see what Witkoff says, if anything, after he debriefs the president. That Trump deadline is this Friday.
A top UN official warns an expansion of Israeli military operations or full-scale takeover in Gaza would risk catastrophic consequences. CBS's Deborah Patta.
Israeli Prime Minister Benjamin Netanyahu wants the IDF to seize complete control of Gaza, which would involve the forced removal of the entire Palestinian population of more than 2 million to humanitarian zones. But there are tensions with the IDF's top brass, who are reportedly opposed to a full-scale takeover, fearing it could endanger the lives of the 20 living hostages still in captivity.
Parts of Fort Stewart in Georgia locked down today after an active shooter was reported. This is CBS News. 60 years ago today, a key piece of legislation was signed into law.
President Lyndon Johnson signed the Voting Rights Act of 1965, invoking the chains worn by enslaved black people as they arrived in this nation.
We strike away the last major shackle of those fierce and ancient bonds.
But last week, Senate Democrats introduced the John R. Lewis Voting Rights Act, meant to restore and expand protections enshrined in the original law. Georgia Senator Raphael Warnock.
With all of the problems that are facing our country, none is more important and none is more urgent than our voting rights.
Among other things, the bill would require states and localities with histories of discrimination to get federal approval before changing their voting laws. Allison Keyes, CBS News.
And today marks 80 years since the atomic bombing of Hiroshima, Japan, in the closing days of World War II. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump turns the screws again on India as his special envoy meets with Vladimir Putin in Moscow. Welcome to the Wednesday edition of Balance of Power. As the White House announces an extra 25% tariff on India, that just emerging this morning, and we've got new details on the meeting in Moscow. We'll talk it all out with Bloomberg's Michelle Jamrisco. There's still no quorum in Texas as Democrats in the state keep Republicans from redrawing congressional districts. Other states are now watching, and we're going to gauge the fallout coming up with Republican strategist Ashley Davis. Vice President J.D. Vance looking to turn the page on the Epstein problem. We'll have analysis on this and the rest of our top stories with our political panel. Bloomberg Politics contributors Rick Davis and Gidi Shanzano are with us for the hour. And we start, as always, by setting the baseline on Wall Street. Let's get to the Wednesday trade with Amy Morris, her update on the markets to start us off here. Amy, how's it look?
It looks green, Joe. Green on the screen. The S&P once again passing the 6,300 mark. We do check markets for you all day long at Bloomberg. The S&P 500 up 0.7%, pretty much 0.75% now. NASDAQ is up more than 1%. The Dow is up 0.3%. The 10-year Treasury yield at 4.23%. The 2-year yield at 3.72%. President Trump signed that executive order that imposes an additional 25% tariff on India over its purchase of Russian energy. Now, these accelerated tariffs will be in addition to the 25% country-specific tariffs and will take effect within 21 days. But this could just be the beginning. Sources say the Trump administration is also considering new sanctions on Moscow's covert fleet of oil tankers and the entities that enable them to operate. Disney reported better than expected third quarter earnings with continued growth at its parks and streaming business, overshadowing a tough climate for movies and traditional TV. Disney CEO Bob Iger said on the earnings call that Disney will incorporate Hulu into one app with Disney.
We are building on Disney's value proposition in streaming by combining Hulu into Disney Plus to create a unified app experience featuring branded and general entertainment, news, and sports, resulting in a one-of-a-kind entertainment destination for subscribers.
Disney CEO Bob Iger on today's earnings call, and Disney shares now nearly 3% lower. Shares of Apple are nearly 6% higher as we await President Trump to announce Apple will commit to spend another $100 billion on domestic manufacturing. That is the latest pledge by Apple to increase U.S. production of its products as it tries to avoid tariffs on its iPhones. Apple CEO Tim Cook is also expected to attend. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, great to have you aboard today as we bring you the fastest show in politics. Live from Washington, thanks for joining us on Bloomberg Radio, satellite radio, channel 121. You can watch the radio on TV if you're on Bloomberg Originals. And, of course, always on YouTube. Search Bloomberg Business News Live to catch all of our shows throughout the day from Washington to New York. It's one of the coolest things we've got going here. You can pause it. You can back it up if you want to hear something. Find us on YouTube to enjoy the program. As Amy points us to what will be the big story in the second half of the day, and that's Tim Cook's visit to the White House. Big news on a massive investment, an additional investment from Apple that the president is going to be talking about. That's scheduled for right around the time we get on the air in the late edition of Balance of Power. The president was speaking yesterday about a range of issues, kind of an impromptu press conference that brings us to the top story today on the terminal, imposing a fresh 25% tariff on India over Russian oil buys. This news on the tariff, of course, coming up against a deadline at the end of this week the president has for secondary sanctions that would be slapped on Russia if it continues its war against Ukraine. This is all colliding here into one fat story today as the president's special envoy meets with Vladimir Putin for a couple of hours. The president was asked about tariffs against Russia when he met with reporters last evening. Let's listen.
Do you still plan to follow through on your threat to impose 100% tariffs on all countries that purchase Russian energy, including China?
Well, I never said a percentage, but we'll be doing quite a bit of that. We'll see what happens over the next fairly short period of time, but we'll see what happens. We're taking in trillions, not billions, trillions and trillions of dollars from other countries who for years took advantage of us. They took advantage of the United States like we were children. And that's not happening anymore.
We'll see if the tariffs go into effect. As he calls them tariffs, it's more like sanctions, as we said, secondary sanctions, to be clear, that the market is waiting for news on. Now, we do have a couple of headlines. First of all, Steve Witkoff sat down with Vladimir Putin today for about 3 hours, trying to get to some kind of an arrangement. Remember, yesterday we talked about an air truce, whatever that is, in Ukraine. That was one idea that was floated. They started shortly before midday Moscow time and wrapped up, as I mentioned, about 3 hours later. The headlines that we're seeing now on the terminal are somewhat fascinating as we try to signal, if I can use that word, some kind of a readout on this. President Trump imposing the potential tariffs here as Vladimir Putin exchanges signals on the war in Ukraine. Let's read the quote. On our part, this is, by the way, Vladimir Putin's foreign policy aide. On our part in particular, he says, some signals were conveyed on the Ukrainian issue. Corresponding signals were also received from President Trump. I don't know what kind of signals we're talking about. Maybe Michelle Jamrisco can help us. She's with us now. Bloomberg White House national security correspondent. It's great to see you. Welcome, as always. This is a story made for you because it kind of combines all of the areas of focus that you bring to us here at Bloomberg. Should we be looking at Russia as the motivator here when it comes to India, or does India have its own problems with Donald Trump?
It's certainly a big part of it, and we have more than just one story, but stories kind of colliding here and all kind of inextricably linked under the banner of what we heard the president say yesterday is countries continuing to take advantage of the U.S. in different ways. So he's had this long running now, just weeks long beef with India that has been a complete turnabout of the relationships he's traditionally enjoyed with the Indians, including from the very top, Prime Minister Modi.
First big visit to this White House.
Yes, the first big visit. And so over the last several weeks, there have been various things that have irked him. Obviously, on the trade front, the lack of a deal there, India's continued protectionist policies toward its agricultural sector, obviously the Russian oil buys, as we will mention and continue to talk about, but also other things like, them being part of BRICS and supporting, alternatives to the dollar, which they say they're not doing, but the association with that organization is a cause for Trump's concern and his ire. So a lot of things kind of pulling at crosshairs and just giving Trump more reason to fire away on these tariffs, these 25% additional tariffs that will take the overall rate on India to 50% in a few weeks. So a lot of pressure on India right now, but again, working at cross purposes with some other priorities of the Trump administration.
What do we make of the language that we're hearing about this meeting, conveying signals, or are these smoke signals, hand signals? What's happening?
Yeah, it's funny. It's kind of Kremlin speak for, perhaps nothing happened, but they do want to put forward some sort of warm diplomatic statement because, the Russian economy is kind of in a corner, as we've portrayed in various stories. And I think Trump, as we've heard him betting that Putin will have to make a move at some point. We're all waiting for some sort of sign that maybe they will give in to Trump's demands for a ceasefire, but no expectation of that even close to it as of now, because we hear Putin continually say that they will keep up the fighting in Ukraine, and all we had yesterday, as you mentioned, was the inkling that perhaps they would offer to Witkoff and to Trump in turn as some sort of pause in airstrikes that have continually been hitting Kyiv.
So there are some headlines to add to this. Marco Rubio says that we should expect some announcements fairly soon. According to CNN, he spoke with Witkoff after his Putin meeting. When we talk about announcements, that could be good news or bad. I do see oil prices have given up gains and turned negative following these headlines. What could happen in the next 48 hours?
Yeah, this is a minute-by-minute tracking, and, it's dangerous to be sitting here with you. There might be other stuff going on. But, yes, there are many other options on the table, and we reported this morning that the U.S. administration, through people familiar, is perhaps looking at other energy options, one of them being, as first reported by the FT, the further sanctions on its so-called shadow fleet of oil tankers around the world. So there's different things that the U.S. could further do. It might not be the end of it to look at the order this morning on punishing India for its Russian oil buys, which in turn should hurt Russia. But this is a delicate calculus. As we saw in the previous administration as well, when you're trying to hit Russia on oil, you have to take into account what impact that has on the global oil market, and perhaps, as we say, friends as well as foes.
Looking at oil prices, by the way, WTI, West Texas Intermediate crude, down about 0.5% right now, just falling below $65 a barrel. This is all happening just days after President Trump went on social media and said that he had deployed 2 nuclear submarines, something we've really never heard a commander-in-chief say openly, to waters around Russia. We don't know where they are exactly, but to suggest that they are trolling waters around Russia as the president waits for news on Ukraine. He's referring to the Russian war machine in all caps in social media. This is a very different tone, and it's got to change the tone inside the room in a meeting like this.
Yeah, very heated exchange of rhetoric, especially with former leader Medvedev, last week.
That was a wild exchange.
A lot of exchange on the nuclear front, of course, that gives everyone pause. But I think, what we're hearing from defense analysts, at least, is that these submarines that he mentions, we didn't get any further details, and obviously officials don't want to talk about it for strategic reasons. But, some outsiders are thinking that maybe this was all talk, that there are submarines in place, and you kind of have to see through that threat as just, be on guard. But yeah, certainly this has not stopped, this war of words between Trump and Russian officials, especially Medvedev, and kind of a ramping up of almost Cold War era threats around that. So
isn't that right?
The tensions are high, and the stakes are high.
It's bringing you back to the 1980s here. There's one more log to throw in this fire, Michelle. The president also, headlines from Axios, the president just had a conversation, a meeting with Volodymyr Zelensky. So the lines are crossing to our previous point on all of these stories.
That's right.
What's the news from Kyiv as this is happening in Moscow?
Well, and he reportedly spoke with Trump yesterday as well, Tuesday. So, what we heard from Kyiv on the readout of that call, which the White House confirmed, it didn't offer further details on, was that it was constructive. Zelensky himself said he raised the awareness and the urgency of the continued attacks in Ukraine. So yeah, it's really kind of a turnabout from his Oval Office meeting earlier when he was quite humiliated.
Well, it feels like the ground is shifting beneath our feet on this story, and it's great to spend some time unpacking all of this with Michelle Jamrisco. You can run back to the newsroom now, where I suspect we'll have some new headlines waiting. Look for Michelle's work on the terminal and online. And we'll have much more straight ahead. Republican strategist Ashley Davis will join us as we keep our eyes on Texas. It's next on Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. We're watching a developing situation at Fort Stewart, Georgia. Parts of that base are locked down after an active shooter was reported. Officials say casualties are also being reported, and that situation is ongoing. As we learn more, of course, we're going to bring it to you right here. Let's check the markets now. We do it all day here at Bloomberg. The S&P 500 up 0.7%, the Dow up 0.25%. The 10-year Treasury yield at 4.23% and the 2-year yield at 3.72%. Crude oil inventories fell by more than 3 million barrels. Diesel and gasoline reserves also fell. Oil prices have given up gains, though, on news that President Trump is increasing tariffs on India for buying Russian oil. Brent crude right now down about 0.5%, trading at $67 per barrel. WTI now down about 0.6%, trading at less than $65 per barrel. Apollo Global Management will acquire a majority stake in Stream data centers. The deal will allow Apollo-managed funds to potentially invest billions of dollars in digital infrastructure. Apollo shares now 0.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power now with Joe Matthew.
Okay, Amy, thanks for the update. We'll get back to Amy a short time from now to update the Wednesday trade. We've got our eyes on oil prices, as Amy mentioned, with this news from the White House, an additional 25% tariff on India. Meetings underway in Moscow. In fact, they just wrapped the meeting, Steve Witkoff, 3 hours with Vladimir Putin today. Didn't seem to result in a lot, at least not yet. Marco Rubio, the Secretary of State, telling CNN that we could have some announcements soon. The deadline, of course, for secondary sanctions on Russia is going to hit on Friday. So if we get some developments between now and then, we could be hearing a lot about it. We're watching Texas once again, as always here. This has become quite the story over the past couple of weeks. You've heard it emerge right here on Balance of Power. The redistricting effort endorsed by President Trump, pursued by Republicans in Texas, now stalled by Democrats in the Lone Star State. Of course, they have fled, and if you're familiar with this program, you've probably heard from several of them, including James Talarico, who joined us before this even began to give us a sense of what we might be in for here. Democrats decided to go for it. Went to Chicago, went to Albany, went to Boston, and this thing is held up in the meantime because they have broken quorum, right? That's how this works. That's why the governor of Texas has called for their arrest. And now the feds here, by way of Senator Cornyn of Texas, Republican senator, are calling for the FBI to act and claw these Democrats back to Texas. Probably unlikely, but President Trump did address this possibility when he spoke to reporters last evening. Listen.
Well, I think they've abandoned the state. Nobody's seen anything like it, even though they've done it twice before. And in a certain way, it almost looks like they've abandoned the state. It looks very bad. Yeah, go ahead, please.
Should the FBI get involved? Should the FBI get involved?
Well, they may have to. They may have to.
They may have to. That's where we start our conversation with Ashley Davis, the Republican strategist, back with us, partner at S3 Group. Ashley, it's great to see you. This has become a national story, and we can pick away at this from a couple of different angles, because I want to ask you about what's happening in other states, potentially like Indiana, even Missouri. But to begin with Texas, you don't see the FBI going after Democrats in other states, do you?
No, I do think, though, that this is just a lot of drama. And even though there is a lot going on in August, August is usually a slow time. So this is even a bigger story. But listen, I think the broader point to this, Joe, is that there has been a politicalization, excuse me on that word, for the last decade in regards to redistricting. It started out in, let's just take recent history, 2018 in Pennsylvania, Republicans were blaming Democrats of being too political. North Carolina, 2020, Democrats were blaming Republicans. Remember, Eric Holder spent a decade of his life and raised over $1 billion on redistricting after he left Barack Obama. So this is just something, as a broader point, has just been too political. In regards to, in my opinion, in regards to Texas, Obviously, this has happened before. I think that they left in 2021 was the most recent when Democrats did this. Listen, when there's a supermajority like there is in Texas and a Republican governor that has a lot of power, this is really their only way that they can fight back, and it's by using this mechanism. But Joe, I think this ends because of one major reason. It's not just redistricting that they're not voting on. They're not voting on the flood relief for the horrible situation that happened there just a few weeks ago. And I think at some point, after maybe a couple more days of drama, a couple more days of news headlines, that they're going to have to come back and vote on that alone, just because I think politically, and you can see it kind of popping up in the social media world right now. Yeah. They're starting to get a little bit of blowback because of the flood relief.
Although I suppose Governor Abbott could isolate this special session to flood relief and get to redistricting at another time. But of course, Democrats will probably just leave then anyway. At some point, they're going to have to get to this, and we've seen this happen before. But I want to ask you about other states. You know, everyone jumps to California and what the Democrats might do here, what Gavin Newsom might have up his sleeve. But Republicans aren't stopping in Texas here, it seems. The White House is pushing this idea on other states, including Indiana, to the extent that J.D. Vance is heading to Indianapolis to sit down with Governor Mike Braun to talk about this idea. And granted, he is there for a fundraiser for the Republican National Committee. But to what extent will Republican governors embrace this around the country?
Well, it depends not just what the governors do, but also just how much control the state legislatures or a special commission on redistricting would have in every state. So it really does depend on state by state. How it can happen. Texas is just a little bit different because of the power that the governor and the legislature has on the topic. But yes, Indiana, Missouri, two states the Republicans are looking at. Democrats, obviously, you've heard it, Newsom, New York, and also in California, New York, Illinois, Minnesota, I think is another one that I'm hearing. So listen, all gloves are off, but it's not going to be as easy in these other states as it is in Texas. And you saw what happened even today with Governor Braun saying, or maybe it was actually yesterday, where he said, listen, I'm going to have a conversation. I don't know what can happen. Because he doesn't have a supermajority. So it's a little bit different.
Understood. Yeah, absolutely. Each state has its own kind of fingerprint when it comes to this story. Ashley, I want to ask you while you're with us about what's happening on Capitol Hill, or what's about to happen, maybe what's not about to happen, because you're so connected to lawmakers and their staff on the Hill. We had a bit of a breakdown between Democrats and Republicans over nominations last weekend. Everybody left town angry. There was no deal between Schumer and Thune on this, and it's leading many to believe that a government shutdown will be even more likely when lawmakers return after the August recess. Is that how you see it?
I feel that every year I hear there's going to be a shutdown, and usually 95% of the time it doesn't happen. So, but I'm not ready to say that for sure, that we're going to have a shutdown. And I'm definitely not I think we're like 50% maybe. And what I'm seeing though is just really, really bad blood in regards to Democrats and Republicans right now because of the rescission package, because of reconciliation. And by the way, this happens every time. The Republicans and Democrats were fighting when Biden did his big two reconciliation bills when he was when the Democrats had control. So this is very normal. I'm not real worked up about it right now, but I do think there's a broader issue. And the broader issue is what Senator Rounds has actually been talking about yesterday and today. And we have way too many people that have to get Senate confirmed. I believe in the institution of the Senate 100%. Think it's fantastic tradition. However, no matter what party it is, you spend so much time trying to get some of these positions through through the Senate floor, and because of the rules of the Senate, as you know, Joe, it just takes a long time. And when you have 1,100 positions that need confirmed, it probably is not necessary. So let's walk through this just very quick. We have the Supreme Court justices, we have major judges, we have cabinet secretaries, maybe even the deputy secretary, and even I would go and give it to the general counsel of each agency. But I'm not sure if the assistant secretary of HUD needs to be Senate confirmed. Or here's a perfect example, Joe. Last Trump administration, I was put up for a board appointment for the National Endowment of the Arts. It was a Senate confirmed position. There is no reason that position needs to be confirmed and take up Senate floor time. So that's what I'm saying. I think we could do some.
It sounds like
overhaul
some
on
procedures or maybe rules are going to be changing here, and maybe the way that they're even passed in the Senate. Ashley, it's great to have you, as always. Ashley Davis, S3 Group Republican strategist, who we learn a lot from on and off the air. One of the more interesting stories of the day is not from Washington at all, but from the corporate world. McDonald's helping to fill in the blanks here when it comes to anecdotal evidence over what's happening in the economy. Look no further than the headline. McDonald's says economic stress is sapping breakfast meal sales. Wanted to talk about this with Michael Halen for just a moment. Senior restaurant food service analyst, Bloomberg Intelligence. Michael, you got one of the best beats in the building here. I thought about getting an Egg McMuffin on my way this morning. I didn't, so I guess I'm part of the problem here. How do we read into the language from McDonald's about what's happening in the broader economy?
Yeah, well, I'm more of a sausage McMuffin guy personally, but
I'm with you.
Yeah, they mentioned that the low-income consumer traffic was down double digits. What I like about McDonald's is they weren't using it as an excuse. They were using it to help guide their marketing programs and their new item launches for the year. But yeah, low-income consumers continue to be strapped. That's a big part of the reason why quick service restaurants have underperformed full-service restaurants this year. Inflation is cumulative, right? And so real incomes are negative for low-income consumers, and they continue to suffer. But McDonald's is working hard to try to bring back some of those low-income consumers. They make up about a third of their transactions, right? So in January, they launched the new McValue meal, $5 meal deals. It also has a buy one, add one for $1. And a big part of that is also going to be snack wraps. Snack wraps are coming in at a $3 price point. And so, it's a beloved item coming back to the menu, but it's also one that low-income consumers can easily afford. And then at the same time, higher-income consumers can add them to their checks.
I've only got a minute, Michael. I need to do a deep dive with you, and we can clear out some time here on a number of questions that I have. But McDonald's stock's doing great today. It's up $8, almost 3%. Is that because of expectations or because if the economy slows, McDonald's benefits?
Our view isn't that the economy slows. Listen, man, restaurants are the canary in the coal mine. They had their recession last year. Restaurant sales, we expect to continue to be better than last year. We think second half can be better than the first half. McDonald's is up because it's outperforming its peers. Right now, it's a stock picker's market. Some chains are taking shares, some are not.
Sure.
McDonald's is clearly one that took share in the second quarter.
And I know it's been distressed to some extent going into the earnings. Michael, come back and let's walk through all of the different levels of the restaurant industry. We'll go from high-end down to fast food and see what that tells us about the economy. I like your style, and I want to have you back. Nobody calls me man around here other than Michael. Halen, sorry. Michael Halen, Bloomberg Intelligence. The panel's up next, only on Bloomberg Radio.
It's 12:40 on Wall Street. I'm Amy Morris. The S&P 500 reclaimed its 6,300 mark. NASDAQ 100 rose more than 1%, with Apple jumping nearly 6% after President Trump said Apple will commit to a fresh $100 billion investment on domestic manufacturing. We do check markets for you all day long here at Bloomberg. The S&P 500 up 0.75%, NASDAQ up about 1%, and the Dow is up 0.3%. The 10-year Treasury yield at 4.23%, the 2-year yield at 3.72%. President Trump signed an executive order imposing an additional 25% tariff on India over its purchase of Russian energy. The accelerated tariffs will be in addition to the 25% country-specific tariffs and will take effect within 21 days. And this could just be the beginning. Sources say the Trump administration is considering new sanctions on Moscow's covert fleet of oil tankers and the entities that enable them to operate. Advanced Micro Devices shares fell after that company failed to deliver a clear outlook for resuming sales in China, a crucial market for the second largest maker of AI processors. Chief Executive Officer Lisa Su.
Once licenses are approved, that we will, restart our supply chain and, get those in place. We do have, a bit of time that it takes to complete those, but we would expect to be able, to ship some of those products as licenses are approved.
AMD CEO Lisa Su on Bloomberg Intelligence. Shares of AMD are more than 7% lower. Minneapolis Fed President Neil Kashkari says a slowing of the U.S. economy may make an interest rate cut appropriate in the near term. He still sees 2 cuts by year's end, telling CNBC tariffs still represent a significant uncertainty. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
Full of news today. Amy, thank you so much. We'll be back with Amy Morris at the top of the hour to update the Wednesday trade, watching stocks and oil react, as always, to news here in Washington, D.C. We can add the bond market with an auction coming up at 1 o'clock here. And I, to that end, want to mention an important conversation we're going to bring you at the top of the hour. Joe Livornia is going to come sit down with us. Of course, counselor to Treasury Secretary Scott Bessent. He'll be in studio as he makes his way over from the White House with much to discuss today. The story of a fill-in Fed governor, essentially, a short-termer to fill the seat being vacated by Governor Kugler, even as some had thought the president might, in fact, tap the next Fed chair and have a Fed chair in waiting. This would fill the gap for a couple of months, allowing more time to think about it. We'll ask Joe Livornia for some insights into that whole deliberation, along with news today of an additional tariff on India as the White House creeps up on this Friday deadline to potentially impose secondary sanctions against Russia. There was a 3-hour meeting earlier today between Steve Witkoff and Vladimir Putin that apparently did not generate at least a deal immediately, though the Secretary of State Marco Rubio telling CNN that we should expect announcements soon. The next 48 hours are going to be very important along those lines. Quite the story today about J.D. Vance. If you haven't heard about this, probably not the story that the White House wanted us to be reading. Reportedly hosting a group of top administration officials at the vice president's residence tonight, the Naval Observatory, right up the street from where we sit now. New York Times says it's about Jeffrey Epstein as they huddle on how to handle the fallout from this whole saga over releasing the Epstein files and the need for a unified response. It's where we start with our panel today. They're both back together, Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Jeannie is, of course, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick is Republican strategist partner at Stone Court Capital and in the Fishbowl in New York, Rick. It's nice to see you in Manhattan. I'm glad you made it up there. Great to see both of you. Rick, is this the kind of story that you leak on purpose? So we're talking about a potential solution? And if not, how did this even get in the news if J.D. Vance wants to have a quiet huddle up at the residence tonight?
Well, anytime you have, Todd Blanche, Susie Wiles, Pam Bondi, and Kash Patel in the same room, somebody's going to leak it. And that room just happens to be the dining room of the Vice President of the United States. Wow, that's a very leakable thing. But you're right. It could have actually been a selected leak, because the reality is nobody cares more about this issue in the Trump administration than J.D. Vance. Because Donald Trump, even though he indicated otherwise in a recent interview, isn't running for re-election, but J.D. Vance is. And when J.D. Vance is worried about the base, right now that base issue is Epstein. So they got to get their hands around it, and it'll be very interesting to see what they do. Today, I would have been surprised that there was going to be any news on Epstein, but this is really something. The vice president's taking it onto his own shoulders.
Yeah, boy. So what's going to come from this, Jeannie? If the unified response is the purpose of that meeting, I don't know what we've been getting already from the White House. I thought everybody was on the same page here. What's this going to look like when we start asking questions tomorrow?
They just can't seem to get out of their own way. First of all, it is worth reflecting on that list that you and Rick were just talking about. What happened to the independence of the Justice Department? Not only are they pretending there is a wall between them, they're going to the residence of the vice president to talk strategy. That is worth noting because we are in a completely different world than we've ever been in before. The second thing is who's not on that list. And we're hearing this from Jeffrey Epstein and Ghislaine Maxwell's victims. It is a representative of the victims. The victims have been completely sidelined and shut out of this process. And that, to me, is both horrific from a humanitarian justice perspective and also from a strategic perspective. And then the third thing I would say is there is no universe in which Donald Trump would attend this meeting, but there's also no belief on my part that J.D. Vance is doing this solely for 28 reasons. He is doing this because Donald Trump knows, and everything goes through Donald Trump, that this is the story. It's like a bad fungus. It will not go away. He needs to make it go away. And that's why they're reportedly going to be talking about it, potentially somebody like Todd Blanche appearing on Joe Rogan, because their base is up in arms over this.
I want to mention a breaking headline that just crossed the terminal here. The Swiss president who got on an airplane to sit down at the White House, presumably with Donald Trump, to carve out negotiate a lower tariff, is leaving town without reaching a deal. This is a pretty important update here. Swiss President Karen Keller-Sutter, we're talking about here, the last-ditch effort to avoid what was a 39% tariff, didn't go so well. As we told you yesterday, she flew here without a formal invitation. It was unclear whether she would actually sit down with the president in the hopes of facilitating meetings with U.S. authorities, as they said, at short notice. It didn't go very well. We'll keep tabs on the story involving the Swiss. Rick, after this meeting tonight at the vice president's residence, do we see a series of interviews? Will there be outreach? What do they do with this unified front that they're going to agree on here?
Yeah, I think the presumption is that this is their effort to get on the offense. They've been on defense for a month, and it's really gone poorly. And they have been trying to, I guess, assemble information. I think the Todd Blanche interviews with Maxwell indicated the extent to which they're willing to risk some embarrassment publicly to try and understand what they really are up against. Incredibly poorly prepared to get into this topic when Pam Bondi kind of launched it and said, "Oh, I'm going to release all these documents," and then didn't wind up doing it. So I definitely think they will come out of that meeting with a administration-wide campaign to manage this issue. The idea that they can just tell everybody to shut up and go home betrays the real action on this. I mean, their base, the sort of, MAGA, QAnon folks who believe in these conspiracy theories, they want answers, and they're not going to go for a sit down and be quiet from the President of the United States.
Well, you better be ready to do it right the first time, Rick. Does a Todd Blanche news conference put this whole thing behind the administration?
Probably not. As you know, Congress has gotten into the act, and Chairman Comer has scheduled hearings on this. So it's unlikely they're going to get him to back off. Otherwise, he'd have done it already. I mean, it's embarrassing to the administration to have Congress taking their own initiative. So I think they're into a very tough time. I mean, what they can hope is that they can just change the topic and sort of ameliorate some of their base. And that's why, as Jeannie indicated, the Joe Rogan experience might be the way to solve this. But boy, Todd Blanche would be walking a tightrope on this. He's not really seen as a advocate on this side, and he would really be, taking a risk to go in there and thinking that he could somehow calm everybody down.
Yeah, high-risk proposition, no doubt. Sitting down for what would probably be a multi-hour-long interview here. Jeannie, the White House has changed the topic to a lot of different things since the Epstein story caught fire, and the most recent one involves Kristi Noem, the Secretary of the Department of Homeland Security, who of course helped to make alligator Alcatraz famous, is announcing a second detention center that's going to be going up in Indiana. They're calling it the Speedway Slammer. I don't know who's writing the headlines around here, but it is it's a new 1,000-bed space described as the worst of the worst detained immigrants inside. IndyCar didn't like this name, by the way. They're asking the administration remove Speedway from the name here, per local media. Is this enough to change the topic, Jeannie?
Yeah, I mean, I would just underscore the administration has been trying desperately to change the topic, and they haven't done so successfully. And I don't think the Speedway Slammer is going to do it. At this point, you get alligator Alcatraz, it's in the news for a couple minutes, it seems, and then we move on. So I'm not sure that this is going to work to make the Epstein saga go away. But it is reflective of the fact that you have a lot of states who have agreed with the Department of Homeland Security that they will allow for detention centers run by the state to be opened, and they're using this alligator Alcatraz as a model. What is surprising about it is that while the president normally gets very high marks for his ability to control the narrative on immigration, and in fact, he has done a very good job of shutting down the border, many people in polls also say that while he's been in office, he's gone too far. Going to get people in schools, stopping people on the roadway, going to Home Depot parking lots, and then, of course, the treatment of them. And so I am not sure why they think that this follow-up to alligator Alcatraz would work any better in these areas where they desperately need support. So I think they should think carefully, and I don't think this is going to be effective in moving Jeffrey Epstein out of the way.
Well, especially, Rick, it seems to me, since Joe Rogan himself has been openly criticizing the administration's approach to deportations and immigrant raids, calling it insane that detained migrants are being pulled off the streets, in some cases by masked men with no ID. Does this idea here that we're talking about getting people to turn attention to the Speedway Slammer actually make it worse for the administration?
Well, it could make it worse for Joe Rogan, and yet I don't think there's that much strategy going to work here as far as trying to move Epstein off the front page by announcing the Speedway Slammer. I mean, Kristi Noem is known for her daily press briefings, right? I mean, like she is going to get news whether we like it or not at the White House, for instance, and this is just one. I think her attitude was, we're ready to announce something. This is what the administration stands for, and we're going to put it out there. She didn't want to get scooped by Braun, the governor, or anybody else. And so I think you can count on her running her own press operation, and that's exactly what happened today.
Interesting. That makes plenty of sense, Rick. Jeannie, does Governor Braun warm up to this idea more than he does the idea of redrawing congressional maps? His name pops up in a bunch of stories today.
Yeah, it does. And of course, he did sign an executive order in January telling law enforcement to fully cooperate with the feds on this. I think the exception might come from the use of the term speedway, which you mentioned. But I do think overall, he will likely go along with this more than he will with the gerrymandering the districts.
Mm-hmm. Rick Davis and Jeannie Shanzano, our great panel, will be back in our second hour as we welcome our global television audience to the conversation. We have a lot more to talk about with Bloomberg Politics contributors Rick and Jeannie, following our talk with Joe Livornia, who's going to be with us here in studio in just a couple of moments with breaking news from the White House. The Swiss have gone home, it seems, empty-handed. The Swiss president, who took a flight to Washington, D.C. to try to renegotiate a 39% tariff with President Bloomberg News. is just putting this back up on the same day that President Trump moves to impose an additional 25% tariff on goods from India. The gears are turning here on a Wednesday in Washington, and you chose the right place to learn more about it. We'll have much more ahead on Bloomberg, as I mentioned. Joe Lavorgna, a live update from the White House. We'll also talk to Ed Ludlow about a massive investment in the U.S. that's being announced today by Apple here in Washington at the White House. It's next on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump considers a fill-in on the Fed. Welcome to the Wednesday edition of Balance of Power here on Bloomberg TV and radio. as the president's advisors recommend he nominate a temporary Fed governor to fill the vacancy currently on the board. We're going to get the latest coming up live from the White House with insights from Joe Livornia, the counselor to the Treasury Secretary. He'll be with us in studio just moments from now. Big announcement coming from Apple, a $100 billion investment in the U.S. That'll happen at the White House later, but Bloomberg's Ed Ludlow will join us coming up with details, and we'll have analysis from our political panel. Bloomberg Politics contributors Rick Davis, Jeannie Shanzano with us, all after we take a look at Wall Street. We get up to speed now on the Wednesday trade with Amy Morris, live from Washington. Amy, how the markets doing?
The markets are in the green right now, Joe. We check them for you all day long here at Bloomberg. The S&P 500 up 0.7%. NASDAQ up just about 1%. The Dow up 0.25%. The 10-year Treasury yield at 4.23%. The 2-year yield at 3.72%. Want to update you on what's been going on in Georgia. 5 soldiers were shot in the 2nd Armored Brigade Combat Team area at Fort Stewart, Georgia. Now, Fort Stewart was locked down for more than an hour during this active shooter emergency, but Army officials now say the shooter has been apprehended and is not a threat to the community, and those soldiers are being treated. This incident remains under investigation. Global sales at McDonald's restaurants rose 3.8% in the second quarter. The company says it is looking to bring back low-income diners in the U.S. since they eat at restaurants more often than middle and high-income diners. Shares of McDonald's right now nearly 3% higher. Novartis has reportedly made a takeover approach for rare disease-focused biotech Avidity Biosciences. The Financial Times reports Novartis has been evaluating a bid and expressed interest in an acquisition in recent weeks. Avidity is working with advisors to assess its options, but its shares right now are 24% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy Morris, thank you so much. We'll get back to Amy a bit later on this hour to update the Wednesday trade as we keep our eyes on shares of Apple today. It's going to be the big story in the second half of the day with an announcement scheduled for this afternoon at the White House. Tim Cook is expected to appear alongside President Trump to make this massive investment announcement. We're talking about $100 billion in domestic manufacturing. When we talk Apple, we have to talk to Ed Ludlow, the host of Bloomberg Tech, with his eyes on Washington. Once again, this is getting to be a habit, Ed. Is this new money that we're learning from Apple?
Well, the $100 billion is new. It's in addition to and on top of the $500 billion that Apple had already announced or disclosed they plan to invest in the United States in the context of manufacturing, but also direct investments into suppliers and training. But there's a heavier emphasis, Joe, on already disclosed. So in aggregate, it's a bigger number. But you have to ask questions of the what next, particularly around the president and the administration's, motivation. This is a great win for them. But Apple is not sort of saying, let's start building the iPhone in America. They're absolutely not saying that. What they're saying is, here's our existing supply base in America. We're going to support those suppliers to do more, and we're going to invest in training and ramp up on some already announced projects. Okay.
What does Apple make in America?
Yeah, it's a really good question, because it's the only question. The $500 billion that came before this new $100 billion was targeted quite specifically at a facility, for example, that made servers. Apple, like most technology companies, has its own big computer footprint. When I say computer, I mean data center on premises, and they make their own servers, and that was part of it. They have key suppliers here. Glass is one of them. Some electronics as well. They reinvest those, and then they have a workforce, and so like a lot of that investment was skilled workforce. They make Mac components here, but Bloomberg's reported, like, before all of this happened at the turn of the year with the new administration, Apple was also looking at some of what it manufactures in America and thinking, can I do that in Asia? Ironically, paradoxically. This is the thing. Will Apple manufacture the iPhone in the United States? There is absolutely no suggestion that the news today indicates that at all.
Really interesting. What do we know about Donald Trump's relationship with Tim Cook these days? Are they getting along?
Yeah, don't laugh at me when I repeat this line, because I know I've used it a bit on this program recently. But President Trump's best buddy right now is NVIDIA CEO Jensen Huang. He's kind of been the public poster child of what's happening with technology in America and the onshoring of industry. And NVIDIA's there with Apple, right, around the same level, $500 billion. The president has much more directly called out Tim Cook in a with negative connotations. You know, the threat has been if Apple does not shift specifically iPhone production, but more manufacturing and assembling to this country, they will face a specific ad hoc heavier tariff. Now, I would note there were other media outlets that after the White House disclosed the Apple investment this morning, reported that Apple would be spared from this additional India tariff, because remember, there is some final assembled component that comes out of India for Apple, the iPhone, in smaller volume than they do in China. But yeah, the president has spoken in the public domain about Tim Cook a lot more in negative tones than any other CEO, I would say, this year. Well, Elon, maybe.
Really interesting. What does this mean for investors? Is this an event that shareholders should be paying attention to? Is it a stock mover, or this is a Washington story, Ed?
Absolutely a stock mover. You know, Apple shares are up 5.6%, biggest jump since early May. The stock in the first half of this year traded very specifically with the psychology around tariff impact and also the administration's friction. You know, we know that January through at least June, July. Actually, the stock narrative changed for Apple after that and became much more like, why aren't you doing more in AI? But a move of almost 6% in the session is very notable. This is not a move that Apple stock makes regularly on a news item like this. And, you know, one standard deviation is a 2% move. So, yeah, it's notable. And sorry to get technical with you, but I want to fully answer the question.
No, I love it. That's why we called you. Ed, it's great to see you. This announcement set for just, 3-4 hours from now, and it'll coincide with the late edition of Balance of Power here on Bloomberg TV and radio. Watch for Ed Ludlow, not only here from time to time on Balance of Power when we're lucky, but the host of Bloomberg Tech here on Bloomberg Television. I'm Joe Matthew in Washington. Thanks for joining. We just got an update from the boss, President Trump, on Truth Social, with his eyes, of course, on the deadline for Russia at the end of this week. The deadline for secondary sanctions is Friday. President Trump writing, my special envoy, Steve Witkoff, just had a highly productive meeting with Russian President Vladimir Putin. Great progress was made, he says. Afterwards, I updated some of our European allies. Everyone agrees, he says, this war must come to a close, and we will work towards that in the days and weeks to come. Thank you for your attention to this matter. Exclamation point. This follows a 3-hour meeting, as we told you, between Steve Witkoff and Vladimir Putin earlier today. No real readout coming from either side in terms of progress, besides what I just read to you from Donald Trump. But Marco Rubio, the Secretary of State, telling CNN a short time ago that we should expect some announcements in the days ahead. So the gears are turning on this story. As we also understand, the president is adding an additional 25% tariff on goods from India, which also will have repercussions for Russia. We'll have much more on this as we work our way through the hour. And it's a real pleasure as we anticipate the announcement from Apple to bring Joe Lavorgna into the conversation. Of course, economist and counselor to Treasury Secretary Scott Bessent. Thanks for coming over from the White House, Joe. It's good to see you.
Thank you, Joe. My pleasure.
$100 billion in domestic manufacturing is a pretty big deal. And I'd like to just get inside the process for a little bit with you, because we've heard a lot of announcements from corporate officials coming to the White House to tell stories like this. How does it begin? Does the White House reach out to a Tim Cook to talk about investments that could be made? Does Apple call the White House and say, hey, we've got a plan?
What we first start with is that we have to extend the Tax Cuts and Jobs Act of 2017, and that was a priority of President Trump's, and Secretary Bessent spearheaded that operation. And then I think from there, it's like, okay, what can we do to build upon the success of the first administration, where President Trump had very strong non-inflationary growth. Growth was nearly 3% for the first 3 years, almost 3.5% in the third year, right before the pandemic. And then you sort of figure, okay, how do you build the best economy possible with pro-growth incentive tax structures, cheap and abundant energy, and friendly business regulation? And you just see what happens. So,
does the White House make the outreach there? Are you calling companies around the country saying, let's
that's not
talk?
my understanding. No, I think it's one of those things where, let me say this, from my own vantage point, I know that when I'm lucky enough to be in this position, people say, can I help? What can I do to help? And it could be both sides of the aisle. People really, they appreciate public service and want to help out. That's probably what happens at the corporate level, is that, okay, how can we make things better? And of course, the incentive structure is in place for companies to want to invest here. This is like with all these trade deals that the secretaries help broker. People want to bring foreign capital into the U.S., and they're incentivized to do it when the tax structure is friendly, the energy and business environment are friendly. Like it all becomes very additive. So I think it's probably a two-way street.
Yeah.
But the point is that people are making the commitment, Joe, and that's unprecedented.
When we talk about reshoring, that can mean a lot of different things. There was a point at which the Commerce Secretary, Howard Lutnick, suggested that we start making iPhones here in the United States, that should in fact be possible. We just talked to Ed Ludlow before you sat down with us, and he said that's not what this is about. There are going to be different incentives when it comes to domestic manufacturing. How important is it for the White House to have Tim Cook make iPhones here in the U.S., or is that never going to happen?
What matters is high value-added manufacturing jobs, whatever that might be.
Not
and these
people turning screws
technologies,
into phones.
These technologies, Joe, are changing so rapidly. But, the administration really wants to have the best high growth, low inflation, high cost, a high standard of living, high standard of living, low cost of living society possible. And those jobs take the automobile industry, very important industry, a lot of high tech, high value added type of employment. Things related to that, that's what matters most, and that's what the administration cares about. We talk about a blue-collar wage boom.
Yeah.
You want those kind of good-paying jobs, whatever they might be.
As opposed to low-end manufacturing.
As opposed to low-end manufacturing, that's right.
Making socks here in the U.S. again. Really interesting, the spend on AI that we're seeing. A fascinating piece of information that I saw research earlier, that the CapEx from AI is actually adding more to the economy than consumer spending at the moment. A lot of this has been announced inside the White House, of course. Jensen Huang, we think of the Larry Ellison OpenAI announcement. I could just keep on going here. The money from SoftBank. Do you worry that CapEx from AI is essentially single-handedly propping up the economy here, that it's a more narrow investment than we need?
No, because first of all, the AI has been very strong. That shows up in information processing and related equipment within the GDP accounts. But industrial equipment's been strong, transportation equipment's been strong. We're talking about a CapEx comeback that's not just limited to AI. Having said that, when you have an industry that's growing as rapidly and as exponentially as it is, the math is going to be more additive than, say, the consumer side. In other words, we're looking at second derivatives. If something is a small but largely growing part of the economy, its incremental growth for a quarter or two is going to be faster. But the point is, if you get this CapEx comeback, tied in with the blue-collar boom we're seeing in wages, real wages expanding, consumer spending is going to be strong, and that's going to power the economy upward.
I want to ask you about the Fed. In fact, the president was just talking about this last evening. James, I don't know if we can spin that back right now, but I want to ask you about the search, because it's a very short list based on what the president was saying yesterday in his conversation with reporters. Let's listen to President Trump from yesterday.
Fed governor, I'll be making that decision before the end of the week, and we'll either decide on one for permanence or the 4-month period, the term. There's a term of about a number of months. We have a couple of candidates. Everybody wants it, okay? It's not a couple, but we've narrowed it to a couple of candidates. And we've also, we're looking at the Fed chair, and that's down to 4 people right now.
Down to 4. Interesting, as we spend time with Joe Lavorgna here on Balance of Power. There's a story today on the Bloomberg about the idea of a temporary Fed governor filling the seat vacated by Governor Kugler. What would be the benefit of doing that? Is that an idea that you support instead of just going for it right now?
It would. My understanding, Joe, would be to have to be Senate confirmed.
That's right. It's going to
so we have to see what happens on that, and there's only so many months. So we'll see what happens. But I don't. The president wants to do it. That's great. But we'll have to see then if you have to get the Senate on board. But in terms of just general people, I know you want to ask you that. There's a really good crop of folks that could do the job.
The battle of the Kevins, it sounds like, and
the nice thing
your boss is not on the list anymore.
The nice thing, Joe, about where I sit right now, unlike my prior role, is I don't have to say who I think it's going to be. I just know whoever it will be. It'll be somebody that will be.
You're telling me Donald Trump's not going to ask you who you think should be the next?
It will be somebody good, Joe, who will have a very good relationship with the president. And that's all.
Well, name game aside, why not just name the next chair now and have them fill that seat until it's time.
Well, I guess the issue would be that, and Secretary Bessent mentioned this before, and that is if you have like a shadow person, maybe that's not the best way to go.
Okay.
And by the way, the person may not want to have that shadow role because then you're sort of in competition with who the with Jay Powell at the moment. So we'll see how that plays out. But I think the key point is that you're seeing the Fed now talk about the need for lower rates. You saw 2 governors dissent. That was kind of an historic event, hadn't happened over 30 years. You've seen some of the bank presidents now come out and think that rates need to be lowered.
Yeah.
So I think pretty soon everybody will be on the same page.
Why lower rates now if we still haven't gotten to 2%? That's the benchmark we talked about for the entire Biden administration. Does it need to change? Should it be 3% if you start cutting now?
So the reason, Joe, a couple-fold. Number one is that inflation's a lagging indicator. So if you're waiting for inflation to move lower, if you think the trajectory is down as we think it is, you're waiting too long, number one. Number two, the tax bill is written to increase the economy's supply potential. So that means you could have fast growth, and actually as you increase productive capacity, inflation can drop. And the third piece is if you look at interest-sensitive areas of the economy, autos, housing, some pockets within manufacturing, those areas are soft. And would benefit from lower rates. And besides, the Fed itself has rates well above where the committee believes that the neutral rate is. So I don't think inflation is the fear. In fact, if anything, as President Trump highlighted, the inflation was not going to be present with the tariffs. That's not shown up in the aggregate data. If any, the numbers have been weaker. And therefore, the Fed ought to take that into consideration.
When you're telling a growth story, though, since you've been here, you've talked about the way the economy is going to grow and the way wages are going to go up. So why would it be a sin to keep interest rates where they are for a minute to make sure that inflation doesn't start moving higher again?
Because the fundamental issue is growth. Growth does not cause inflation, Joe. And there are too many people within the economics profession that believe growth causes inflation.
This is what every mainstream economist comes on and tells us.
And they're completely wrong. That's why they've been wrong on many things, including the tariffs. As my old boss, Larry Kudlow, would say, that too many people working does not cause inflation. Inflation is always and everywhere a monetary phenomenon.
Can bring inflation.
No, not wage. No, just money and credit. Money and credit creation are what drive the inflation process, not wages, especially wages that are tied to the economy's productive capacity growing. In other words, you're starting a business, you're building a plant, you're paying those workers to build that plant to create more of the goods and services to be delivered to the populace. That's disinflationary, just as you saw, again, with President Trump's first term. Very supply-focused. President Trump had very strong growth and low and falling inflation. So this notion somehow you're going to have very good growth, you're going to have a boom, and this boom somehow is inflationary is not at all consistent with the data.
Is this Trump data now?
What's that?
Is this Trump data? No. It's not? It's still Biden data.
I didn't know what you meant by that.
Yeah.
No, I mean, look, here's the thing, that the one big beautiful bill was passed July 4th. Nobody thought that could be done. The president said it needed to get done. Secretary Bessent worked hard with the people on the Hill to get that done, which was a great accomplishment. You've got numerous trade deals that are really making some great progress that people didn't think was going to happen. Equity markets are strong. The outlook is very, very positive. So I think we're going to see a pretty strong economy. And people know, look at the cost of living, how much it's come down already. Yes, it's the president's economy.
It's great to spend some time with you. Don't be a stranger.
Thank you,
Come back and see you soon. That's Joe Livornia, of course, made his way over from the White House. Counselor to Treasury Secretary Scott Bessent. Our panel's up next.
It's 1:21 on Wall Street. I'm Amy Morris. Sources say Switzerland's president is leaving Washington without announcing any success in lowering the 39% tariff that President Trump has put on products from her country. That leaves Switzerland with the highest American tariff of any developed nation, set to take effect at 1 minute past midnight tonight. We do check markets for you all day long here at Bloomberg. The S&P 500 is up 0.6%, NASDAQ up 1%, the Dow up 0.2%, the 10-year Treasury yield at 4.24%, and the 2-year yield at 3.72%. Crude oil inventories fell by more than 3 million barrels. Diesel and gasoline reserves also fell. Oil prices gave up their gains on news that the president is increasing tariffs on India for buying Russian oil. Both Brent crude and WTI pretty much flat. Apollo Global Management will acquire a majority stake in Stream Data Centers. That deal will allow Apollo-managed funds to potentially invest billions of dollars in digital infrastructure. Apollo shares are 0.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back now to Balance of Power with Joe Matthew.
Amy, thank you so much watching Wall Street for us every day here on Balance of Power. I'm Joe Matthew in Washington. Thanks for being here on Bloomberg TV and radio with news coming from the White House today on Russia. If you were with us a short time ago, you heard the president on Truth Social talking about the meeting that took place a short time ago with Vladimir Putin. President Trump sent his special envoy, Steve Witkoff, to Moscow. There was a 3-hour-long conversation, the president framing it as productive, but it's very difficult to tell if anything significant will come from this session, knowing that only 2 days from now will be the deadline for secondary sanctions on Russia over its war against Ukraine. We're going to have more with our political panel on this. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us, but let's start live at the White House. Bloomberg Washington correspondent Tyler Kendall has the latest on this. Tyler, what else are we learning, and when could we hear an announcement if there is one?
Yeah, hey, Joe. Well, as you mentioned, we really just heard from President Trump moments ago saying that this meeting did make progress, but we haven't really seen many tangible deliverables beyond that, and that President Trump said that he briefed our European allies on these discussions as Steve Witkoff wraps up really what's his 5th round of negotiations with Vladimir Putin in Moscow ahead of this Friday, August 8th deadline for Russia to come to the negotiating table in perhaps a more meaningful way or face further economic penalties. And we did see the White House take at least the first step in making good on that threat earlier when President Trump imposed that 25% additional tariff on India over its imports of Russian energy supplies. About 37% of Russian oil ends up getting exported to India, so they are one of those top consumers. And this was something that we had long heard from President Trump, and it appears that he has taken this step, though that additional tariff will not go into effect for another 21 days. And it appears that could really just be the first blow in this pressure campaign, Joe, because we have a headline crossing on the terminal earlier this hour. People familiar telling us that the White House is considering new sanctions on Russia's covert fleet of oil tankers. That appears to be the next target in what has become this pressure campaign to try to get some more meaningful concessions from Vladimir Putin. And Joe, as you know, we had some pretty incredible reporting this morning that Russia might be willing to potentially suggest there be an air truce. To be sure, Vladimir Putin, the understanding is he's not going to go for a full ceasefire, but perhaps they would put on the table an air truce. So think stopping missile strikes or drone strikes that happen in the air to try to stave off some of these economic penalties.
Tell us about the Swiss, Tyler. The Swiss president got on an airplane without a formal invitation to come to Washington to renegotiate what the president deemed to be a 39% tariff. The president did sit down with the Secretary of State, Marco Rubio, who put on social media a picture of the two of them discussing the importance, he says, of a fair and balanced trade relationship between the U.S. and Switzerland, reaffirming our commitment to stronger bilateral defense cooperation, but no lower tariff. It seems the Swiss will go home empty-handed.
Right, and Marco Rubio, the Secretary of State, has a lot of roles in this administration, but he doesn't lead the bilateral trade talks, right? So, I mean, our reporting indicates that the Swiss president did come to Washington without a formal invite from this White House, but that just really shows the pressure that the government is under to try to get a lower tariff rate ahead of tomorrow's deadline of this 39% rate ultimately going into effect. And it's been really interesting to see how these talks really did seem to go off the rails here, considering our reporting had indicated that there had been positive momentum. Now, a person familiar does tell Bloomberg News it appears the Swiss president is leaving Washington without a deal, despite putting on the table a new proposal for the U.S., but it apparently was not enough. There was a few different threads that we were watching here, Joe, but important context that the Swiss really don't have tariffs on their imports. Only about 5% of their imports are tariffs, and that's really around agricultural products, which does appear to be a red line in those negotiations. We know the U.S. would like to, of course, see greater market access for U.S. agricultural goods, but there were other places where we thought perhaps there could be some agreement, such as boosting U.S. LNG purchases, boosting pharmaceutical purchases, something that we know is top of mind for this administration. And then one that I'll leave you with that we didn't hear much of an update about, but we know that the government is negotiating some purchases of some Lockheed Martin fighter jets, and some of the reporting indicated that perhaps there could be a higher purchase price for that, but at this moment it doesn't appear that any of the efforts were enough ultimately to get this White House to budge.
Tyler Kendall, full of news today. Thank you so much, Tyler, with the update live from the White House. As we mentioned, President Trump on Truth Social earlier talking about Steve Witkoff's meeting today with Vladimir Putin. He didn't have a lot to say, but he did call it a highly productive meeting. Great progress was made, says the president. Afterwards, I updated some of our European allies. We want to play it to our political panel. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, are with us. Jeannie is Senior Democracy Fellow with the Center for the Presidency, the Study of the Presidency and Congress. Rick is partner at Stone Court Capital, our Republican strategist. How does this feel to you this time, Jeannie? There have been a lot of meetings and a lot of hours spent with Steve Witkoff and Vladimir Putin that have resulted in absolutely nothing. With 2 days to go here, will we hear about a deal? Marco Rubio telling CNN we could hear an announcement within days.
Yeah, the White House is certainly heightening expectations, as you and Tyler were just talking about. But, you know, it's hard to imagine. Hopefully there is a deal, but what would this look like? I mean, Russia is winning on the battlefield. They have the advantage in terms of population. They have the advantage in terms of arms. You know, the president is talking about these secondary sanctions, secondary tariffs, and indeed putting them on India, despite the fact that the EU buys a substantial amount of energy from Russia as well. So I'm not sure exactly what this will look like, but it's hard to imagine that Vladimir Putin changes what he has been asking for so far, because one thing he has been is very, very consistent on his demands.
Mm-hmm. Rick, the language coming from the Kremlin is really something. On our part in particular, said a foreign policy aide to Vladimir Putin, some signals were conveyed on the Ukrainian issue. Corresponding signals were also received from President Trump. How do we read into this?
Not a great meeting if you're looking for a ceasefire. Look, I mean, Vladimir Putin sure has done exactly what Jeannie said. He hasn't changed his tune since day one on this thing. But the reality is it has thrust Donald Trump into the waiting arms of President Zelensky. I mean, the difference now is that the U.S. and Zelensky are unified. The U.S. and Europe are unified. There are efforts now to rearm Zelensky. There are efforts now to spend more of U.S. taxpayer dollars on Ukraine coming from the Hill. It's a complete change of positions than when Donald Trump took office in the first 60 days of his administration. And so, good job, Vlad. You've actually done something that nobody thought could happen, and that is that Donald Trump is now the biggest supporter of the Ukraine, and with that, a unified Western approach, and he can't resist that. Ultimately, he will fail if the U.S., Europe, and Ukraine are aligned.
Wow. It is something, Jeannie, the evolution that we've seen here. Donald Trump now referring to the Russian war machine in multiple social media posts, including his idea to add a 25% tariff on India. How long can we assume Donald Trump will see the world this way?
You know, it's hard to assume. I try not to with Donald Trump. Anything can happen. But, you know, let's just think this through. So he imposes this tariff on India to 50% for buying Russian oil, which the United States countenanced not that long ago because it's capped. And India sent out a pretty fervent and strong message saying the U.S. and the Europeans are being hypocritical because the Europeans are the second largest importer of LNG from Russia. And they also are talking about looking to different partners. And so what that does in terms of the BRICS and everything else is one question. The other thing is, what are we going to do? Get in a frozen conflict with Russia at this point? Because there's two ways to end a war. You negotiate it out or you arm. And listening to Rick, I think he's right. We may see the United States arming Ukraine, but the Ukraine has a big, big problem, which is population. It simply doesn't have the numbers to win. Now, is Europe and the United States going to go in with them? So I'm not sure how this gets us anywhere further than a frozen conflict with Russia, while we need to be competing with China, not to mention everything going on in the Middle East. I think Donald Trump was right instinctually when he came to office, and now he is looking very much like Joe Biden when it pertains to this conflict with the Ukraine.
He spoke to Volodymyr Zelensky today, and the president of Ukraine is speaking about that phone call. Apparently, European leaders were on the call with President Trump. Pretty remarkable. Right on my way from our brigades here, I spoke with President Trump, Zelensky writes on social media. This conversation happened after President Trump's representative, Steve Witkoff, visited Moscow. There's reporting, Rick, on the Bloomberg today that the U.S. is now also considering sanctions on Moscow's covert fleet of oil tankers, the shadow fleet, as it's called, and entities that enable them to operate. How come none of this has happened until now? We spent years in the Biden administration asking if we had done everything possible, if there were more sanctions to find, and it appears there were a lot more.
Well, we talked about that at the time, and we used to make a very clear statement that Joe Biden was trying to eke out a win, and you don't eke out a win when you're challenging Vladimir Putin. The entire approach that Joe Biden's administration took was do as little as you can for as long as you can and hope this all just goes away. And that includes the readiness for that administration to give arms to Ukraine, and also why you would not have hit Russia on day one with massive tariffs and basically roadblock their ability to sell hydrocarbons to the world. I mean, it's just, none of it made any sense at the time. We criticized the Biden administration for that. And honestly, I mean, you know, Donald Trump is looking at others who are using Russian oil. He's commanded the Secretaries of State, Commerce, and Treasury to give him a secondary sanctions list of people who are currently aiding and abetting the Russian war machine, as he likes to put it now. And I think that will include China, but that will include other users in Europe, and they're going to have to face those penalties.
The deadline is Friday as we walk our way towards deadline day. Rick Davis and Jeannie Shanzano, great analysis, and thank you both for the insights. Bloomberg Politics contributors with us on Balance of Power. Many thanks. An important conversation with regard to oil ahead. Bob McNally from Rapidan Energy is going to join us here on the fastest show in politics.
It's 1:40 on Wall Street. I'm Amy Morris. Earnings for S&P 500 companies are up 9.1%, triple the preseason forecast, and the strongest beat rate since 2021. That's according to data compiled by Bloomberg Intelligence. We do check markets for you all day long at Bloomberg. The S&P 500 up 0.7%, NASDAQ up more than 1%, the Dow up 0.25%, the 10-year Treasury yield at 4.24%, the 2-year yield at 3.72%. President Trump signed an executive order that imposes an additional 25% tariff on India over its purchase of Russian energy. The accelerated tariffs will be in addition to the 25% country-specific tariffs and will take effect within 21 days. Now, this could be just the beginning. Sources say the Trump administration is also considering new sanctions on Moscow's covert fleet of oil tankers and the entities that help them operate. Advanced Micro Devices shares fell after that company failed to deliver a clear outlook for resuming sales in China, a crucial market for the second largest maker of AI processors. Shares of AMD now more than 6% lower. Minneapolis Fed President Neil Kashkari says a slowing of the U.S. economy may make an interest rate cut appropriate in the near term. He still sees 2 cuts by the end of the year, telling CNBC tariffs still represent a significant uncertainty. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
Amy, thank you so much. And thanks for being with us on Bloomberg TV and radio. Balance of Power live from Washington as we keep our eyes on a soon-to-be empty chair on the Fed board, reporting today from Bloomberg that it could be a temporary hire, a fill-in on the Fed. The president's advisors encouraging him to nominate a temporary Federal Reserve governor here to fill the seat that will be vacated, by the way, 2 days from now by Adriana Kugler. And basically, the idea here is to buy more time. The president's going to be meeting with his advisors to play the name game for a future Fed chair, likely on Friday, raising a lot of questions about why a temporary role and why not just name the new, essentially, shadow chair now. It's a question we wanted to ask Michael McKee, Bloomberg's international economics and policy correspondent. He's at World Headquarters in New York. Trying to understand the psychology behind this, other than buying time. Mike, what would be the point of a temporary hire?
That's a very good question, and I don't have a good answer for you because I have the same questions. If you appoint somebody now, the Senate's out. They don't come back until September 2nd, and then you've got to get through the confirmation process. Now, the Bloomberg story suggests that they would put in somebody who is already confirmed and working in government, which would shorten the time period because they wouldn't have as much to fill out in terms of financial disclosure forms, and they might have sold off whatever conflicted assets they own. But still, you and I know that between then and the next Fed meeting is 10 legislative days. And for the Senate to take up a nomination, get it through committee, and get it through the floor, that we'd have to call the Guinness World Book of Record people, I think, for that.
Yeah. That would be a Christmas miracle, I guess. Does it suggest that the president is wavering on the short list that we keep hearing about? Why would he need more time? It seems like he's almost there.
Well, I'm not sure what he gets by more time as well. If the seat is vacant or if the seat is filled isn't going to make a difference to whether or not the Fed moves forward with rate cuts in September, October, December, because the majority rules there. And at this point, we don't know what the majority is going to be for in September. It looks like, given the jobs numbers we got last week, that some members are starting to now think maybe September is the time to cut rates. And if we continue to get data that suggests that, then whether or not there's somebody in the Kugler seat, the Fed will go ahead and cut rates. And if the Fed majority doesn't want to, it isn't going to make a difference either. So I don't know what the president gets out of this, more time to pick somebody, but he could leave the seat vacant and have more time to pick somebody.
Wow. Well, this is why we wanted to talk this out with Michael McKee. If they do go with the idea of a temp, Is there a short list for that role as well? Someone already in government checks all the boxes you already laid out?
There's not a short list because nobody was really anticipating this sort of thing. But if you start ruminating about who might be a possibility, you could think of somebody like Michael Faulkender, the Deputy Treasury Secretary, because he's been recently confirmed, so he wouldn't have much to do to update his paperwork, etc. And he's in a job that could be vacant for a while. And if a Fed governor is more important than the Deputy Treasury Secretary, you could leave that open. And if you weren't going to reappoint him to the Fed seat and keep him on the Fed, in theory, he would ask for his whole job back. But then he has to go through confirmation again to be Deputy Treasury Secretary again because he'd have to resign. So none of this makes a whole lot of sense. But as somebody said to me, it's Donald Trump. You just never know.
Michael McKee. You laid that out perfectly. Faulkender, fascinating. Remember that when it happens. Michael McKee said it here first. Bloomberg International Economics Policy Correspondent. Many thanks, Mike. As we keep our eyes on the White House for news about Russia, there's already been a lot. In fact, the headline on the terminal, U.S. weighing Russia oil sanctions as Trump hails envoys Putin talk. Steve Witkoff, the envoy, sat down with Vladimir Putin for 3 hours today. There's been a lot of talk here. Great progress made, according to the president, but we don't really have a sense of exactly what was discussed and whether there could be an announcement on a deal here before the Friday deadline for secondary sanctions. If you're with us on Bloomberg TV or YouTube, you see the truth from President Trump earlier. Great progress made, but we still don't know exactly what was discussed. And we also are asking a lot of questions about not only the impact of potential secondary sanctions against Russia if no deal is made, but a new 25% tariff on India, which of course is buying Russian oil. The president talking about this as well as India funds what he refers to as the Russian war machine. Add the other headline, Bloomberg reporting that the U.S. may also slap sanctions on Moscow's covert fleet of oil tankers, the shadow fleet, along with the several entities that enable them to operate. We wanted to get on the line with Bob McNally to get a sense of what this could all mean for supplies and prices. Of course, the force behind Rapidan Energy Group, Bob McNally, the founder and president, and former White House energy advisor to President George W. Bush. Bob, it's great to see you. Welcome back. Crude oil is not rising. In fact, it's lower as we have this conversation. West Texas Intermediate down just about 10 cents, not a big deal, but $65 a barrel does not sound like a market that's worried about this. Bob, how do you see it?
Hi, Joe. Good to be with you. No, you're right. The market is taking this in stride. You know, it's the old Washington saying, make them sad, make them glad. In the last few days, the administration was talking about 100% additional secondary tariffs on India, and they got 25%. And so that, in a way, is lower. I think that that made folks feel a little more comfortable. They think at 25%, India may defy the United States and continue to import Russian oil. And if they continue to import, we don't lose the supply. And if we don't lose the supply, we don't have a price increase. And, you know, this is all occurring as the oil market generally, Joe, I think is starting to transition from this tightness we've been in all summer and spring. And many barrel counters at Rapidan included. We expect as we get into the fall, balances will loosen and soften up. OPEC Plus bringing back more barrels, the end of the gasoline season, et cetera. So there's this coincidence, if you will, with this expected softening. And then the secondary sanctions so far being less severe than had been threatened.
Interesting. If, in fact, India chose to follow the president's lead here and stop buying Russian oil, could the U.S. replace it?
Absolutely not. We do not have spare production capacity. That means the ability to sort of crank up millions of barrels a day, even hundreds of thousands of barrels a day in days to weeks to months. We don't. Even if we started drilling and completing all we could as fast as we wanted to, we couldn't do that. Only Saudi Arabia, UAE, some other smaller OPEC plus countries have that spare production capacity. So we can't. The real question would be, can China or other importers to sort of take those Russian barrels? If Russia could no longer export 1.7 million barrels a day to India, would China take up the slack? And if they couldn't, if Russia couldn't find a home for those barrels, they would have to shut in. And then to your question, the only real offset would be in Saudi Arabia and the UAE.
Really interesting. Bob, we've been watching the rig count drop fairly precipitously since the beginning of spring, as a matter of fact. What does that mean when we talk about drill, baby, drill? Production levels have been at record highs for some time. In fact, it looks like the rig count most recently topped out at the beginning of September 2024. It's been falling in the past couple of months. Are we going to see a slowdown in production the second half of the year?
We will, and I think into next year as well, Joe. It's more chill, baby, chill. It's evident in the rig count data. It's evident when you go to Texas and you talk to the oil drillers, oil producers. We've seen Diamondback Energy speak publicly on this. Look, they've been under this cloud of $50 oil, right? And this mantra of get oil prices lower to beat inflation. Now, President Trump has begun to increase his definition of low oil prices. It's moved to the high 60s now recently. So there may be some relief coming on the margin. But no, this isn't. The shale sector is fearful of this oversupply that I just talked about. They're not the only ones that are looking into next year, seeing oversupplied markets, demand not strong enough, supply still coming, OPEC plus adding barrels, the prospect of lower prices. You know, and as oil prices go lower, shale oil producers are the first line of collateral damage, if you will. They're the ones who begin to restrict activity, and their investors don't want them contributing to that oversupply. So there's caution. They've seen price collapses in 2020, 2015. They haven't forgotten those, so they're very cautious, and that's why we're seeing the pullback. So I think we're looking at sort of flat lower 48 production. Now, we are bringing on some new projects in the Gulf of Mexico, and then elsewhere in Latin America, Argentina, Brazil, you're seeing Guyana, more oil, but in the U.S. sort of shale patch, it's more chill, baby, chill, Joe.
I don't know if you came up with chill, baby, chill. That's really good, Bob. But to hear you say the shale sector is fearful is not consistent with the language you're hearing from this administration. Is this what you anticipated? And what does that mean for crude oil? If that drop in production does continue, where are we in terms of prices by the end of the year?
Yeah, well, so just to be clear, the shale sector is thrilled with what President Trump, the NEDC, the Dominance Council is doing in terms of their regulatory agenda, permitting, and so forth. All this is very positive. And remember, it could have been a lot worse had the other candidate won for them. So I don't want to downplay the happiness of oil producers with this current administration when they look down the road. The problem is, as they look to the end of this year and to next year, they see oversupplied markets, they see lower oil prices, they hear a president who so far has been saying he's more interested in getting oil prices down to beat inflation and to hurt Iran and Russia, even if it means pain for the shale sector. So it's more of a near-term type of thing. Joe, we're pretty bearish unless we get a major geopolitical disruption, which isn't our base case. We see oil prices heading well into the 50s later this year and certainly into next year. And that is not going to be a fun prospect for shale producers. I hope we're wrong.
Wow, fascinating. And what that will mean for production could be really important. Lastly, Bob McNally, we've got the tariff deadline kicking in tomorrow. Kind of amazing how many deadlines we're talking about, not to confuse that with secondary sanctions against Russia. These would be the reciprocal tariffs that the president detailed at the end of last week. Does that do anything for oil or gas prices from your view?
It does. It puts them under more downward pressure. Until recently, the macro data, the jobs data, the financial market data was pretty supportive. There was a sense we had dodged a bullet after those Liberation Day tariffs and the swoon that you saw in financial markets and sentiment, really. Yeah. We sort of recovered and gathered ourselves and collected ourselves in the summer. But now, with that payroll downgrade, with concerns about these tariffs now going into effect, 10 to 15% isn't 50%, but it's not nothing. We're still at post-Smoot-Hawley highs. And so I think barrel counters, as we look into this later this year into next year, and you start to factor in this returning supply against this more fragile economic outlook, it's sort of exacerbating those concerns, those clouds that had been on the horizon about oversupply, too much oil, and downward prices. Final thing let me say, though, if President Trump is going to put Russia and Iran under pressure on oil, that could be just what the doctor ordered. In other words, it could prevent next year a price collapse that would hurt the shale sector. So there may be a silver lining on this cloud for President Trump anyway.
We learn something every time we talk to Bob McNally. Really appreciate it, Bob. Founder, President, Rapidan Energy Group. Thanks for bringing your experience, as always, to Balance of Power. We'll meet you back here on the late edition that starts at 5 p.m. Eastern Time. Big announcement, as we told you, coming from Apple at the White House. That's where we'll pick up our coverage, with Apple shares rising toward the closing bell now, up over $11, almost $6.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead. With insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Carol Masser along with Matt Miller. Matt is in for Tim, who is off this week. And I know, Matt, there is so much going on, but I've been thinking about earnings that we've been talking to a lot of CEOs. I mean, they're crushing second quarter expectations, up 9.1%, triple the preseason forecast. Mind you, those forecasts were brought down a lot. It's the strongest beat rate since 2021. That's according to our data here at Bloomberg Intelligence. So I don't know, like when you're thinking about fundamentals, that seems to be a big one.
Yeah, for sure. I mean, as we know, companies always beat, right?
Because they manage.
Usually it's, I think, 76%, and now we're looking at a bigger amount, 82, 83%.
But it was negative because people were really worried about the tariff impact.
Absolutely. So if you look at EEG, you get the earnings estimates, and you can see that they just plummeted after Liberation Day, and we were only expecting like 4% growth. Now we're looking, as you said, at about 9% growth. It's actually 8.87 of the 398 companies that have reported so far. I'm looking at the EA screen, which is a really good one as well.
Thank you very much. Getting those statistics right on the money.
Top line growth up as well, almost 6%.
Which is always important, right, in terms of what's going on in revenues. That's what we want to see. Hey, as for this hour, we're going to talk a lot about Apple stock, up as much as 6% in today's session.
Adding 20 points alone to the S&P. So Apple is, a big company, and it's really swaying. I mean, we're only up 44 points in total. So Apple's adding about half of the gains on the S&P right now.
And we're going to talk about that impact specifically on the broader market. That's going to happen our 3 o'clock hour. But this hour, we're going to talk about why it's up. Investors very much looking at some expectations about some news from the president later on about an Apple investment.
It's like opposite world. Have you noticed that?
What do you mean?
Investors, if you tell investors you're spending more money, like CapEx is up 20%, they buy the stock? What is up with that?
That's a good point.
I mean, the announcement is $100 billion extra in spending, right?
Maybe the White House, there won't be so much heat on me and my company, right? Especially a company where supply chains are so important.
But the same thing has happened with Google and other hyperscalers when they were supposed to spend $75 billion. They said, you know what, we're going to spend $85 billion this year. Investors bid up the stock.
We promise there's a show to come once we get through our teas.
Sorry.
We're going to talk Apple. We're going to talk OpenAI's valuation. We're going to talk how it's not so magic over at the Magic Kingdom. We've got a tech company that Matt talked about big time in the aftermarket yesterday. We don't necessarily, but man, it is soaring. And then we're going to talk a little distressed real estate. So
you talking about Arista? Okay.
Do you know what a tease is?
Yeah, I got you.
I try and I try. All right, let's get to the market trade on this Wednesday. Let's toss it over to a very, very, very patient Amy Morris. Take it away.
No problem at all, Carol. Thank you so much. President Trump highlighted great progress made in a meeting between his envoy and Russian President Vladimir Putin. Sources say the Trump administration is now considering new sanctions on Moscow's covert fleet of oil tankers and several entities that enable them to operate. Ukraine says the shadow tanker fleet is the backbone of Russia's ability to finance the war and avoid sanctions. Right now, WTI is down 0.4%. Brent crude is down 0.3%. Let me make a quick correction. WTI now down 0.7%. Look at that. Let's check the markets. We do it all day long here at Bloomberg. The S&P 500 up 0.75%. NASDAQ up 1%. The Dow is up 0.3%. The 10-year Treasury yield at 4.24%. The 2-year yield at 3.72%. Global sales at McDonald's restaurants rose 3.8% in the second quarter. That company says it's looking to bring back low-income diners in the U.S. since they eat at restaurants more than middle and high-income diners. Shares of McDonald's 3.6% higher. Novartis has reportedly made a takeover approach for rare disease-focused biotech Avidity Biosciences. The Financial Times reports Novartis has been evaluating a bid and expressed interest in an acquisition in recent weeks. Avidity is working with advisors to assess its options. Shares of Avidity now about 24% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Matt Miller.
All right, got it. Amy, thank you so much. All right, we're all in on tech. Older tech, new tech. We're going to talk about OpenAI's possible valuation. We're going to get to that in just a moment. We got to talk about that Apple, Matt.
Yeah, no, absolutely. I mean, look, it's a $3 trillion company.
I kind of hesitated because it's like old, new, like it's all kind of crisscrossing.
Apple is definitely high tech still.
Definitely
it's not the printing
tech.
press.
But is it old tech or is it new tech?
No. I think Apple is, as much as we sort of joke about or talk about the fact that they don't seem to be on the forefront of AI, they still are doing things that amaze us and change our lives for the better, right?
And that everybody uses as a benchmark. We're also focusing on what seems to be an announcement that's expected to come from President Trump around 4:30 p.m. Wall Street time about another big investment by Apple into the U.S. Lots of questions. We knew we needed to kind of get a reality check once more from Bloomberg News managing editor for global consumer tech. We're talking about Mark Gurman. He's out there in L.A. Mark, good to have you back. Apple shares, investors are bidding it up more than 5.5% as we speak. We've talked about these investments that Apple is doing in the United States previously. Some were already, I think, announced. But this isn't about bringing the iPhone supply chain to the U.S., is it?
Here's why the stock is up. Stock is up because investors, I think, this is just a guess, know exactly what's going on here. This is marketing. Tim Cook, the CEO of the world's greatest marketing company, is telling Donald Trump, who wants to tell his base that he's getting the biggest company based in the U.S. to do whatever he wants, that they're going to be doing more in the U.S. The reality is that Apple invests billions per year already in the U.S., right? They make glass through Corning in Kentucky for iPhone screens. They manufacture with a company called Finisar Face ID components, that's for 3D facial recognition scanning. They do some chip production in Arizona. And so Apple is earmarking another $100 billion, we're told, to a total of about $600 billion over the next half decade or so for US-based manufacturing. They're going to put a fancy name on it, right? They're calling it the Apple Manufacturing, something related to Apple Manufacturing, US Manufacturing, American Manufacturing Program, AMP, I believe Apple is going to call it. The reality is, unless they announce that they're building plants in the U.S. to do final assembly, to do mass manufacturing of iPhones and Macs and other products, they're not doing what Trump has been talking about for years. They're not doing what we've been talking about for years. As far as I'm concerned, I don't believe that's happening, but anything short of that, this is more marketing.
Do we know, I mean, $100 billion is a heck of a lot of money, but are they spending that in 1 year? Or are they spending that in 5 years? You know, are they adding that to the, haven't they already earmarked $500 billion to spend over the next 4?
Yeah, they've already earmarked $500 billion. So they're going to add to that. We don't have the exact details yet because obviously Apple has not put out an announcement yet. Trump and Cook haven't made their joint Oval Office announcement yet. But in all likelihood, this is going to be about further investments in companies in the U.S. doing manufacturing and R&D and development of components that are then flown to China, India, Vietnam, Malaysia, Thailand, to then be mass produced in Asia to be sent all around the world. Now, I want to be very clear. I'm not criticizing Apple's manufacturing strategy. Obviously, Apple's manufacturing strategy of production in India, in China, and elsewhere in that part of the world is the only way that they are able to produce the quantity that they produce today, at the fit and finish they produce today, and the cost that they produce today. There are so many reasons why mass production in the U.S. is just not feasible. But I don't want anyone to be under the belief that a change is going to be happening this afternoon, where all of a sudden iPhones and Macs and iPads and watches can be made in the U.S. If Apple is able to say that and then execute on that, I will be hugely surprised. But my belief, this is going to be a lot of spin and more of the same. And the background here is obviously tariffs. Those smartphone exemptions are running out. To date, Apple has basically said in total across last quarter and the current quarter, about a $2 billion headwind because of tariffs. That's absolutely nothing, right? That's like Tim Cook could sleep 14 hours a night knowing that they're going to get taxed $2 billion a quarter. The problem is that those exemptions are going to start running out, and Apple wants to avoid that. So how do we avoid that? We make a deal. I'll come to the Oval Office as Tim Cook and say, we're going to do more in the U.S. We're going to make Trump look good. Trump will be happy, maybe give us some exemptions. So we'll see how it all works out, but that's exactly what's going on here.
So transactional. And it's just getting some of the heat off of Tim Cook and Apple.
Textbook definition. Yeah, getting the heat off of Tim Cook and Apple. We'll see if it works, right? Donald Trump can say anything in that Oval Office meeting. Tim Cook can say anything in that Oval Office meeting. We'll see how it goes. This is a tried and true playbook. Tim Cook has done this with Trump so many times, and it's basically worked every time. Apple has never been largely impacted to any material degree by any of Donald Trump's policies or tariffs, either in the first administration or thus far in the second administration.
All right, let's talk about the fun stuff now. The products, right?
Oh,
You
go.
mentioned the Apple Watch. Obviously, we're both using iPhones. I was on an iPad this morning. I have a Mac at home. I just tried to buy a Thunder Max ECU for my Harley Davidson, and I found out it only works with Windows. And I thought, people use Windows? How much market share does Apple actually have? Because Carol and I live in this ecosystem.
Yep, Apple
We
homes.
don't even think of, Android products, but people do use those.
And like them.
Well, the U.S. is basically half and half. It tilts a little bit more to Apple when you're talking about phones, tablets. Apple is really the market leader. Smartwatches, Apple's the market leader by far. When you're talking about computers, right, in the U.S., they have pretty good market share, but on a global level, the vast majority, close to 80% of the market is still dominated by Windows. But they have made strides. And, the most important thing with the Mac is people keep buying them. People are holding on to them. People are sticking in the ecosystem. And they're buying more iPhones and iPads because of it. People get exposed to one product. They want to buy other products.
30 seconds. Does Tim Cook hate all of this?
I don't know how Tim Cook feels. I mean, if I were Tim Cook, this is kind of exciting, right? Get to go to the Oval Office, get to have a press conference with the president, regardless of who the president is. I get to usher in all these new products. Apple is dealing with some complexities right now with AI. Not everything is going well. So it's kind of exciting that he gets to kind of put his foot down right now and try to hammer people home that something needs to change. So no more coasting.
I'm guessing he loves his job, and this is
Well,
just
I have
one
no doubt about
exciting
that.
part of it.
Well, I have to say, investors pretty excited too, because as we said, this is a stock that has definitely lagged some of the other Mag 7 and big tech companies. Right now, up about just shy of 6% here in the trade.
Well, this year, second worst performer and of the Mag 7 companies, and over the past 5 years, second worst performer.
Yeah, but a little bit more positive sentiment right now. Just in this day. All right, Mark Gurman, thank you. Mark Gurman, of course, Bloomberg News Managing Editor for Global Consumer Technology. Mark mentioned AI and Apple, and that's where they have struggled, but that's not necessarily the case, not at all, when it comes to OpenAI, which is in some early talks about a potential sale of stock for current and former employees at a valuation of about $500 million. This is according to people briefed on the investment discussion. And we have another story on OpenAI. We'll get into that in just a moment. Always a lot when it comes to OpenAI and AI in general here at Bloomberg. Let's get to it with Shireen Ghaffari. She is Bloomberg News AI reporter, and she's out there in our San Francisco bureau.
And she's knocking it out of the park lately.
Shireen,
we were talking about your story yesterday with
Yes.
Kate Clark, and now I've seen your name all over the terminal. Your byline is everywhere.
Listen, the AI beat keeps us busy. There is a lot to report on these days.
We'll talk about OpenAI. It seems like the popular kid in the AI world. Tell us about this possible share sale, what it means for its valuation, why this is happening at this point.
That's right. So this, it's still early talks. Things could change, but as we reported, OpenAI is in discussions to do a secondary sale of its shares at a $500 billion valuation. This would be for current and former employees. And as we reported, Thrive Capital is in talks to participate. So, meaning to, actually buy those shares from employees potentially. So this would be a huge jump in their valuation, right? 2/3 markup, and so it's really notable and just a sign of how highly valued these foundation model companies are becoming.
I get the valuation and the expectations and the exuberance, irrational or otherwise, but I mean, is this I understand the business too, the partnerships, the Microsoft involvement and investment. Is it profitable? Will it be profitable? What do we know actually about the business fundamentals right now?
So revenue's growing, but it's still not enough to, for these foundation model companies, they are training these models that can cost billions each time, right, to put out a new GPT-4 or 5, or same with Anthropic. So it, may be a while before we see them actually reach profitability. Why? I mean, the bullish argument for this is that they will get there, and they're growing so quickly, and we're seeing revenue grow so quickly that this makes sense. But obviously this is going to have to pencil out at some point, and yeah.
I pay them like $240 a year personally. My company, I have a subscription here at work as well, Shireen. That's got to cost a similar amount, but they're offering government, federal agencies $1 a year subscriptions, which is cool. But are they doing that for market share? Are they doing that for access to data? Are they doing that for influence? What are they really after with this strategy?
Yeah, look, I mean, they want to get ChatGPT in the hands of as many people as possible. And if you think about government, that is something, those workers, right, these federal agencies, that's a way to sort of embed your technology into the day-to-day operations of the U.S. government. So this $1 a year deep discount, basically giving it nominal cost almost for free to each federal agency, is a sign of how eager companies like OpenAI are to get government workers using and relying on their tools.
We're about to get GPT-5. I'm super excited.
You are?
I'm on 4.0 right now, and
Do you
I'm
notice
hearing
a big difference when they?
Huge difference.
Okay.
And also, what you prompt is incredibly important.
I've heard that, like in terms of the questions. Yeah.
But Shireen, do we know what kind of leap it's going to be to GPT-5? When it's going to be released, roughly?
Well, I can say it's widely expected soon. There are lots of rumors, but all these companies right now are really chasing after a few things. One is coding capabilities. We've seen Anthropic really make a lot of advancements in this in the past year, and so Google, OpenAI, everyone is trying to make sure that their models have equal or better coding capabilities. The other is on the agentic front, right? These companies, they want their tools to not just be able to talk to you, but to actually do things for you, to buy things for you, to program things for you.
Yes.
And so if you make an agent and those capabilities, that requires sort of additional complexity. So that's another big area that we're expecting improvements on.
Are we going to be able to get that? Like, can I send out ChatGPT to buy me a plane ticket, say in 6 months, Shireen? What do you think?
Listen, I do something that I call the burrito test, where I go and test all these agents and see, can they just order me a burrito? And you'd be surprised. Even a simple task like that is a lot harder than you think, because it involves going to a website, putting in your information, getting credit card. There's a lot of, so even if the AI is smart enough to know how to order a burrito, can it actually interact with the real world in a way that isn't full of friction?
But isn't that where it's got to go in order for all of us to kind of be all in? I mean, this whole idea of kind of everybody having their own little assistant, AI assistant, that's where it's going, right? Just quickly.
Totally, and I think that if these things will work will depend on if they can integrate with the rest of society, if they can figure out a way to hook up to all the different apps and websites and in one day the real physical world out there, not just live in a box.
And are we okay giving up kind of all of that ability and access? Shireen Ghaffari, Bloomberg News AI reporter, joining us. Hey, coming up, we're going to take a look at some stocks on the move. Some you know, some you don't. We're talking earnings in a big way. A little Disney, a little super micro, actually. That's next.
It's 2:21 on Wall Street. I'm Amy Morris. Let's check the markets. We do it for you all day long here at Bloomberg. The S&P 500 up 0.75%, NASDAQ up 1.1%, and the Dow is up 0.3%. The 10-year Treasury yield at 4.23% and the 2-year yield at 3.71%. Supermicro computer shares are 19% lower after it lowered its fiscal year revenue forecast to at least $33 billion. The company's revised fiscal year outlook raises questions about its ability to capitalize on demand for AI equipment with the latest NVIDIA chips. Apollo Global Management will acquire a majority stake in Stream Data Centers. The deal will allow Apollo-managed funds to potentially invest billions of dollars in digital infrastructure. Apollo shares right now 0.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Matt Miller.
All right, Amy, thank you so much. I mentioned we were going to take a look at a few stocks that are on the move in today's session. Supermicro, it's down about 18% as we speak, plunging the most in about 9 months after the company lowered its fiscal year revenue forecast, raising some questions about sales and pricing pressures around powerful AI servers. And then there is, I think it is still the top performing name in the S&P 500 today, and we're talking about Arista Networks. It's up, Matt, 18%, surging following earnings. And it was a stock
Coincidence?
What do you mean?
You just said Supermicro was down 18%.
I don't know. Coinky dink? I don't think so.
Obviously.
We should point out that Arista, that stock has more than doubled since April, reaching an all-time high today, making its CEO one of the world's richest women. So let's get a wrap on both of them. Important names, important stories. We head to our Bloomberg Intelligence headquarters in Princeton, New Jersey, and to BI senior hardware and networking analyst Woo Jin Ho. Woo Jin, good to have you here. First up, Sun Micro, stock down a lot, as we mentioned, down about 18%.
Wait, Supermicro?
Supermicro, what do I keep saying?
Sun Micro, that's from the days of Cisco. Are we in the internet bubble?
I'm really sorry. What happens is when you're around all these names kind of merge together. Supermicro, ticker is SMCI. I know I keep doing that. Let's start there. So Woo Jin, what do we need to know? What's going on with this one, and why is the stock down so much? And do investors have it right?
Sure. Hey, Carol. So there is a couple of things, right? The stock's down for a couple of reasons. Number one, their $33 billion, quite frankly, is actually up 10% above consensus expectations. However, one of the fiscal 2026 markers that Supermicro laid out back in February was $40 billion. So if you think about the run-up from, I guess, a trough back in February all the way up to pre-results, we're talking about a 200%, 300% gains, and people were expecting that they would bring back that $40 billion. And, $33 billion is a big disappointment to that $40 billion. But more importantly, and you clued in on it on the lead-in, is the pricing pressure and the impact to gross margin and operating margins. Consensus had them at around 7% operating margins for the year. That seems that it might have to come down primarily because of competitive pressures. And, when I run the back of the envelope math, I don't think that they can do above $3 in EPS if they do deliver that $33 billion for the year.
And just to his point, to Woo Jin's point, stock's up about 53% year to date. So it's been on a tear.
Well, this stock was a $120 stock 2 years ago.
That's true.
And I'm really impressed that an 18% drop is the biggest since 9 months ago, because I thought it would be a stock like Open Door, where it moves up and down 18% every day. So at least there's that. Arista Networks is one that we don't talk about enough, and I'm guessing this is what you meant.
Yeah, that was my tease. I mean, you were kind of having some fun about.
I was joking about it yesterday because I think of it as a music label that Clive Davis started years ago with Aretha Franklin and the Grateful Dead eventually. But no, this is a cloud networking company, and it's up by a fifth today. Market cap $175 billion. Why do you think, Woo Jin, do you guys talk about this at your office all day long?
I talk about Arista, Jay Shri 24/7, Matt, along the lines of Aretha and Whitney.
the old Arista.
Well, tell us what it is that makes them so interesting and why you talk about them so much.
Jay Shriulal is the CEO, the chairman of the company.
Yes. So I've known this company since pre-IPO, and essentially what they specialized in is high-speed, high-performance networking. It started off from the trading floors back in New York to get every microsecond, millisecond for their trade execution, and they've moved into the cloud and high-speed networking, right? So essentially what they start to benefit from over the past year and a half or so is getting into the high-speed networks to support AI networks. And their marquee customers are Meta and Microsoft. Their newest marquee customer is Oracle. Three names that are in the thrust of what AI is going to be over the next several years, and Arista is going to benefit from that.
All right, so can it continue the kind of run that we've seen here from Arista? I mean, I look at this chart and it's gone hyperbolic this year. There was a dip, obviously, but over the last 5 years, it's up 842%.
Yeah, I mean, look, a couple of, some of the reasons why it's up 842%. And if you go back 5 years, if this is pre-AI we're talking about, Matt, this is market share gains away from larger players like Cisco and penetrating into the cloud, defending their turf against these low-margin white box vendors. And they've been growing at a fairly good clip at around 20-25% on an annual basis. There aren't many companies that's able to do that, right? And on top of that, they have software-like margins. I don't know many hardware companies that have about mid-40% operating margins, not gross margins, and continue to grow earnings faster than sales.
I mean, I love Biz Carson of Bloomberg News wrote this story. In the artificial intelligence gold rush, even pick and shovel companies like Arista Networks are seeing their fortunes swell. So, it's just so interesting.
What do you mean even?
Even.
You want to buy the picks and shovels first.
Well, I know that, but I'm just saying it's, again, going back to it's not a company, right, we talk a lot about, but it just reminds you, right, of kind of their important role in all of this.
Yeah, and Carol, if you think about it, there are a whole slew of small, mid-cap, and soon-to-be large-cap companies that are really benefiting from this this AI boom. There's this ecosystem of smaller companies. A couple of my colleagues cover companies like A-Lab, that's up, I think, 23% today. Celestica, which is a Canadian networking vendor, and that stock has tripled about 2x, 3x over the past year or so, all driven by AI.
Yeah, it's kind of fascinating. I'm taking notes here because I want to know.
I know you are. I know you are. You're giving her gainers, and A-Lab is definitely a good one.
We will continue. We will continue. We got to run. We could certainly spend more time, and we'll have you back real soon. Of course, that's Woo Jin Ho. He is Bloomberg Intelligence Senior Hardware and Networking Analyst. All right, from a tech company that we don't, but probably should be talking a lot more about, to an iconic corporate brand company and stock. It's a company that continues to kind of mesh its long-standing businesses with new ones and kind of evolve along the way. We're talking about Walt Disney. Stock is down about 2% in the trade. It was down as much as 5.2% earlier on. Let's get to what you need to know about their earnings and also some of the news that we got early this morning. Geeta Ranganathan is with us. She's Bloomberg Intelligence Senior Media Analyst. Again, out there in Princeton, New Jersey at BI headquarters. All right, Geeta, I think initially Disney was up in the pre-market on some of that ESPN news, and then earnings came out, and then it kind of shifted in another direction. Walk us through all of the news flow this morning.
Yeah, plenty of news for this morning, Carol. I actually thought that the earnings was extremely strong. I mean, if you were looking for a beat and raise, you got it. I think why we saw a little bit of that pullback in the shares after they reported was because maybe the guidance raise was not as much as people had hoped for. So they did take their EPS for the full year up to 18% growth from last year, and that compares to 16% is what they had projected earlier. I think maybe the street, the buy side, was looking for something closer to 20% or over that. But really, I mean, the big news, of course, and you spoke about this, the pre-market was, the NFL taking a 10% equity stake in ESPN, ESPN getting control of some of those NFL media assets, including NFL Network and Red Zone. And why this is important, Carol, at this point of time is because ESPN is actually going a la carte. For the very first time, in its history, they're going to offer all of the ESPN TV content on a streaming platform. That's going live in a few weeks, August 21st.
It's a big deal.
And so
it makes me so happy.
It's a huge deal.
Yeah.
Wait,
I mean, the reason, Geetha, that makes me happy and probably everyone else who pays $80 a month for a cable subscription that he doesn't use is I can now cut that cord completely because all I want from it is NFL football and I can just buy that from ESPN Plus.
Yeah, and you're going to get even more of it, Matt. So they're basically really kind of buffering up their whole lineup. Now they get additional games with the NFL Network. You're going to have Red Zone, which is, again, a huge property on Sunday afternoons. So this really kind of helps them, first of all, gives them much more content. If you're big into fantasy football, again, they're merging the NFL fantasy football with the ESPN fantasy football offering. So, there's just a lot in terms of the offering itself. And then if you look at it more from a long-term perspective, Carol and Matt, I mean, just kind of having the NFL as an investor in ESPN, I think just speaks to a much more sounder future. It kind of really is future-proofing the business for Disney and for ESPN.
Why? Can you explain that? Is it just because you're going to have that NFL franchise and you own it, basically? Or got a good friend in it?
That's a huge part of it. So NFL, of course, is the premier sports property when it comes to, TV viewing in America. So you're looking at the top 100 broadcasts every year. 80 of those or 85 of those are actually NFL football games. So again, huge. The other thing is that NFL has media deals right now with Disney, with CBS, with Fox, but they do have this opt-out clause. So they can get out of those deals in another 3 to 4 years. And what we think this does, this whole ESPN NFL, kind of equity stake and exchange of assets, is I think it really kind of secures ESPN's future. So I don't think, the NFL would ever want to opt out now with ESPN as their partner. Yeah, go ahead.
Sorry, Geetha, I always look at a stock performance over a 5-year. That's my default, mainly because it's the terminal default when I do the comp function, but also because I think it's a fair window by which to judge pretty much every stock. Now, I'll go for Disney, I'll just go 3 years because I don't think it's fair to include the pandemic. We were locked down. We couldn't go to the Magic Kingdom. But over 3 years, it's still only up 10%. And I hear from Paul Sweeney every morning that the parks business, he probably hears it from you, that the parks business is on fire. So why isn't this company doing better?
Parks is on fire, Matt. They reported 22% growth, profit growth at their domestic parks, and they have just so much more coming on board over the next year or so. So yeah, it has been kind of a roller coaster, right? Up and down with the Disney stock price. I think the really two things I think that investors are looking now in the Disney narrative is theme parks, and you just brought that up, and we're going to continue to see pretty good momentum, both domestically, internationally, cruises, all of that. You got everything going there, and then streaming, right? So streaming is kind of the big thing.
Right.
We've seen some good profit, but we need more.
Geetha, thank you. Disney is a company we just love talking about with Geetha. Geetha Ranganathan of our BI team. Shares of Disney down about 2%. Coming up, we're going to talk a little bit about distressed real estate. That's coming in on Bloomberg Business Week Daily.
2:40 on Wall Street. I'm Amy Morris. We're waiting to hear from President Trump this afternoon as he's set to announce that Apple is making a new $100 billion investment in the U.S. Apple CEO Tim Cook is expected to be there. Shares of Apple right now 5.7% higher. Let's check the markets for you. We do it all day here at Bloomberg. S&P 500 0.75% higher. NASDAQ 1.2% higher, and the Dow is now 0.3% higher. The 10-year Treasury yield at 4.22%. The 2-year yield at 3.7%. President Trump has signed an executive order that imposes an additional 25% tariff on India over its purchase of Russian energy. These accelerated tariffs will be in addition to the 25% country-specific tariffs and will take effect within 21 days. This could be just the beginning. Sources say the Trump administration is also mulling over new sanctions on Moscow's covert fleet of oil tankers and the entities that enable them to operate. Advanced Micro Devices shares fell after that company failed to deliver a clear outlook for resuming sales in China, a crucial market for the second largest maker of AI processors. Shares of AMD now more than 5% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Matt Miller.
All right, Amy, thank you so much. Amy Morris in for Charlie Pellet. Hey, a few stories with some news in the real estate space. You've got Apollo Global agreeing to acquire a majority stake in Stream Data Centers, making its first such acquisition in the alt asset manager as it really looks to diversify, I should say.
This is, I think, fascinating. Data center investments, I have so many questions.
I do too.
Yeah.
There's a lot of money going into it. A lot of money.
But how fat are margins going to be in that business? I mean, if power prices go up, who eats that? And I just don't know.
I don't know.
There are examples of companies that have done really well. Digital Bridge has really boosted its top line and has now started to turn a profit. And they do a lot of that business. So.
Everybody talks about that. We're just going to need more and more power. But you're right. I don't know. It's a good question. Our next guest, though, really focuses on distressed real estate. We kind of want to get into that, especially when it comes to mid-size multifamily sector housing. So let's get into it. Back with us is Amy Rubenstein. She's CEO of Clear Investment Group, and she comes to us from our Chicago News Bureau. Amy, good time to have you here. Last time we talked was December. There's a few things that have happened, like a new president coming in and lots of changes from the White House. Talk to us a little bit about how your market has changed. What's going on?
Yeah, we started off the year really strong. We started to see transactions pick up. And then tariffs got announced in April, and it started to slow things down again. I think people sort of took a little bit of a backseat, trying to wait and see what was going to happen. And now I think we're starting to see things normalize a little bit again. The fundamentals of affordable housing or low-income housing, workforce housing are all still really strong. Unemployment is still really low.
There is affordable housing? Where?
Well, so yes, that brings us to a great point, is we do have a massive shortage of affordable housing, which makes that market and that sector really strong.
You know, Amy, when I talk to people in the real estate world, I always get questions sent over from the reporters more knowledgeable on this space than me, and they always, well, lately, they always want me to ask, does this person have enough cash saved up to go in and make the purchases? Because now is when you want to be in your industry in distressed real estate investing. Is that true in multifamily as well? Is that true in residential as well?
Well, so the multifamily that we're dealing with, if you're talking about individuals buying housing, we are dealing with renters by necessity and not lifestyle renters that are choosing between choosing a house to purchase or an apartment to live in. And so we're never competing against that particular market. But right now, the question is for people buying multifamily is, can you get the loans? And that's, comes back to where interest rates are at right now, how banks are doing right now, and we are seeing it to be an easier market to get loans in today than we were at 12 months ago or even 6 months ago.
Well, so let's talk to you about where are the opportunities right now. Talk to us about maybe a recent deal you have done, and give us just geography, the particulars. We're always interested in that and kind of what is getting done as you work within your space.
Sure. So the last deal we bought was about 700 units in Washington, D.C. It was bought out of bankruptcy court. So there was a lot of distress in the deal in the sense that there just was not a focal point of leadership at that property for a while. Tenants were upset. The city was upset. It needed a clear focus and a path forward to get to stabilization. So we bought that deal and have since then started to stabilize, mostly stabilizing through communication with tenants, communication with the city, and really trying to then dig into where the deferred maintenance that needs to be fixed and taken care of, and how do we get to that stabilization, which is pretty straightforward when you have a property that has that type of distress on it.
You're at a shop with a great reputation, a Clear Investment Group. You have raised a ton of money, right? I think you just raised another $300 million fund, and you seem like you seem like a super nice person. So how do you avoid being a slumlord? Right? At these levels, what do you do to make sure you'll make money and have a clear conscience?
Oh, absolutely. So our model is fully aligned with our tenants and fully aligned with the other stakeholders of the property, the city, the municipality. We often are buying from slumlords, not always, but often when we do see that type of stereotype, that's the kind of property that we're actually buying. So then we're stabilizing it to get to a place where we're providing safe, habitable housing for our tenants. And so that is our business model, which aligns with what those tenants are looking for. And so we're the opposite of a slumlord. We're actually trying to fix something that would cause a property to be classified in that way.
Why does that happen? And I ask that kind of naively because I want to. Because is it just bad people? Is it just because the business dynamics don't really work? You guys are on a mission to make quality housing available to the working class. Like, is it just it doesn't work on a business level, or what? What goes wrong?
So what goes wrong is it can happen, a few things that happen, but usually what it comes down to is the seller actually being distressed. So the current owner of the property has some sort of distress in their lives, whether that's a financial distress in some other business that they have, or a financial distress that's coming from some other form. It's usually not coming from the property itself, but some things could push it over the edge, like interest rates, like COVID. Those are the types of things that could push an owner over the edge. What starts to happen is communication starts to break down between the tenants and the landlord. The landlord stops putting money into the property, and therefore tenants start to get upset and stop paying rent. Maintenance isn't taken care of because tenants aren't paying their rent, and then more tenants stop paying their rent. And it's a really bad downward spiral that starts to happen. So I don't think it's that anybody goes out trying to achieve distressed property, but it just happens, and it happens quickly.
How are renters doing? Are you seeing stress, though, in their ability to pay rent?
I think that the fundamentals right now are really strong. So for a while, we were seeing expenses rise at a very rapid pace on apartment buildings, and then also for individuals in their homes, right? Inflation was really high for a while. It has started to come down. Employment is really strong right now, so people have jobs. So where I do think it was a struggle for a little while, there was a period of time where we did see people struggling more, and I see that starting to settle and starting to stabilize now.
Amy, I want to get your take as, not as an investor necessarily in this market, but just as someone who sees what's going on and understands the industry better than anybody. New York City is like unaffordable for most people, right? $4,000 is what you need to get into a one-bedroom in Manhattan. We have self-proclaimed socialists, mayoral candidate who's doing very well. He wants to put on rent caps. What do you think about this situation? How would you assess it?
I strongly disagree with it. I think it's really, really bad for the housing market. Because what happens is now landlords are in a situation where they can't raise their income as much as their expenses are rising, and no one's capping their expenses. So when you get a rent control situation like that, what happens is the landlord usually will start to spend less in the property, especially when they weren't prepared for it in the onset. If you go and you buy a property that was not rent control, and now all of a sudden rent control is placed on it, your model was just thrown off. So you might not be able to have that sustainability or that wherewithal. And that's where you see landlords get into a lot of trouble. And what happens is that ends up negatively affecting the tenants themselves. So they're the ones that end up losing.
You always open up a window into certainly this part of the housing market, so really appreciate it. Amy Rubenstein, she is CEO of Clear Investment Group, joining us from our news bureau in Chicago. When we come back, we'll check on trading and some of the stocks on the move. Carol Massar, Matt Miller, and this is Bloomberg Business Week Daily.